we're back.
Good morning, my friend. How are you today?
Great. Monday morning.
Are you great on Monday at 6:30? I love that.
It's all right. It's raining out.
See, you're already hedging.
Yeah, it's all right. It could be better.
You're already hedging.
But I'm here with you. It's Cinco de Mayo. We're having. I guess it makes sense. We had velvet taco on Friday, which was.
Hey, when you get the choice of squirrel, possum, and what was the other one?
I don't know.
Okay,
there was a tiki masala taco, which tastes good but sounds
right, which is an exotic upper.
It's weird.
UP of Michigan squirrel.
Yeah, I don't know where they source the meat. Velvet taco, I don't think is necessarily farm to
table. Did not do the velvet taco. Couldn't get it down my gullet.
It was not great, and I guess it's making sense because I was like, man, and now we're doing a taco bar today on Monday. Traditionally, we do Taco Tuesday, but I guess this is the Cinco de Mayo
taco
celebration. But happy Cinco de Mayo to people who are actually celebrating. Did I have a good weekend?
Which
it was
Tom
actually
Cruise
pretty
movie
great.
did you watch?
Watched Top Gun Maverick last night.
Oh, look at you!
So boring. What's with that movie?
The second one?
Yeah.
The supporting characters aren't that good.
It was. I didn't really like the mustache guy. The mustache guy didn't really do it for me.
Yeah. Kind of.
It wasn't that interesting.
Yeah.
I thought the planes were super cool.
Yeah.
The planes went really fast. That's for sure. Mach 10.3. How many Machs have you gone?
I haven't gone to Mach yet.
Okay, because Pete in his free time flies planes.
Right, but
what is a Mach? I don't even know.
That's the speed of sound.
Okay.
So it can vary depending on air temperature and air density, anywhere from I believe 700 to 775 miles an hour
per Mach.
For Mach, so Mach 2 would be 1,400 miles per hour.
That can't be possible.
Then I'm wrong.
So when he goes Mach 10, he's going 7,000 miles per hour.
That would be in the thing that
at the start of the movie. Yeah.
Yes.
That's crazy.
Yes.
Wow.
Because you see him go flying around the, I want to say the Apollo missions when they orbited the Earth, orbited it at 18,000 feet per second was their velocity.
That sounds pretty fast.
Yeah, you would think, huh? Even for you.
Wow, that's crazy.
Yeah.
It was pretty good, but it was, I don't know.
It was 18,000 feet per minute. Sorry.
It was a little. I don't know if schmaltzy is the right word. It was like
it was long. Let's not get around. It was long. He was going to miss. The bombs were going to miss. I mean, you knew the bombs weren't going to miss.
But I guess at least in Mission Impossible, we don't even like pretend that he's like got a romantic interest or like, oh, here's like a 10-minute scene. The Val Kilmer thing, I understand that he was, sick at the time and all of this stuff. And it's a nice scene that they got him into the movie and everything else, even though he couldn't talk. But it's like, that's like a 10-minute scene of like, where are the planes? I thought we were supposed to be in planes this whole time.
What can I tell you? It's just considering how long they took to make it. It definitely.
It was good. It was good.
Again, if you set your expectations right, yeah. But all those young guys were just not that. Compelling.
I wasn't. They definitely like half developed them. Like the first half of the movie, you think like, oh, I'm going to care about these guys. And then then like Tom Cruise just does the mission.
Right.
And it's like, okay, I guess I don't really care. The only funny part was when he saves the guy at the end and then like he gets shot down and he's like in the snow, like in the middle of nowhere. You're both wrong about Top Gun Maverick. It's awesome. Oh, from James is mad out there. It was probably, if you saw it in theaters when it came out, maybe it was like a bigger, I remember it was a huge deal when it came out. And people were really talking about it. But me watching it on, although it's a 70-inch TV, yeah.
Well, it didn't do it for you. You're going back to Ghost Protocol.
I'm going back to, it's funny, it ended, and then Callie started doing whatever.
It's amazing how, because I watched Days of Thunder, just like the last 20 minutes of it.
I don't know what that is.
That's a Tom Cruise race car movie. It's Top Gun and NASCAR. It's the exact same thing.
Okay. Days of Thunder. Oh, from 1990. Wow. Yeah, maybe I'll watch this. Robert Duvall.
Yeah.
Nicole Kidman.
Who's,
Wait,
Robert Duvall's great at it.
was he dating Nicole?
He
Kidman
was married
at the
to her
time?
at that time.
Married, yeah.
Yeah.
So this must have been
This is
before Eyes Wide
exactly
Shut.
right after Top Gun. This is basically Top Gun with NASCAR.
But anyways, it ends,
That's creepy.
and then Eyes Wide Shut is late '90s, and
Yeah,
then
that's
they
creepy.
separate. It ends, and Callie starts. She goes off to do whatever. I don't know what she's doing, and then like I'm looking at my phone, doing something, checking email, whatever. And she comes back, and I hadn't noticed that on whatever streaming service we're watching Maverick on, they just started Mission Impossible Dead Reckoning, the most recent one that you can't get through. And so she comes back,
And she wants to watch it.
and I'm watching the submarine scene again.
That was
and
the best scene in the movie. The
"You're
first
watching-
10 minutes of the movie were really good. After that,
It's
completely
cool,
lost.
but she's like, "You're watching this again." I can't believe it. And I was like, I didn't even put it on.
Oh,
I
look,
didn't put it on.
Art. No, where you should have been over at my house helping me out.
With what?
Michelle and I go to. We had this fountain in the back of our yard, and this was 10 years old. It cracked
nice
and stuff like
fountain.
that. Yeah, but it cracked. So they had garbage cleanup this weekend. Wanted the village will haul away anything for free. So we went to get a new one at this landscape supply place, and
Oh, so you abandoned it? I thought you were going to try to fix it.
I tried, but every time I tried gluing a piece, another one would just crack. So it was like, this isn't going to work. I really thought I was going to be able to get another season out of it. So we go and we're looking at different ones, and they've got these really cool ones like big orbs where the water comes off of them. And then we found this other one that looked great. The guy goes, well, you can take this one. I said, well, do you have a new one? I don't want one that's been sitting outside. He goes, yeah, give me an hour and I'll get it uncrated. And I come back and the guys are loading it into my car with a freaking forklift.
Mm-hmm.
And I'm like, can't we just pick it up? And they go, oh, no, man. The base alone weighs 175 pounds. So it's
How do you do this
I don't
stuff?
know how I did it because I asked them how much to deliver, and they go $69. I was like, I'll just come back and pick it up rather than having them deliver it. So I get this thing in my car. There's two pieces. One weighs like 150 pounds, the other like 100 that sits on top of it. And trying to get them out of my car,
How could you even do it?
I ended up kind of MacGyvering it. I put a furniture blanket and put a wheelbarrow, so I slid it from the car into the wheelbarrow and wheelbarrowed it around back. But I could have used some help because I was like driving around. You know, it's 3 o'clock in the afternoon on Sunday, hoping there's some lawn crew somewhere who could, hey, dude, you want to make a quick 50? Give me a hand. Nobody to be had.
It couldn't be more than 70 though. If the delivery was 70, it's got to be. You've got to make some money.
At that point, I would have paid more
Yeah.
than $70. It was just you know, I've done this before where I just don't ask because it looks like they have these huge ones. I'm like, well, this one can't be that big.
Yeah.
Wrong. So that was
Well,
exciting.
hopefully with that weight, the integrity of this fountain is it doesn't crack. Hopefully,
we'll see. It'll be interesting to see.
if you need help, I don't know how like what are we like ancient Egyptians? I'm going to start like carrying freaking big slabs of stone around. How the hell are we going to figure this out?
You're going to put them on those logs and
This is
wheel them towards the back.
Not what I studied at Michigan. Studied a lot of, according to you,
You
strange things.
You never got
but-
into the advanced degree programs.
Yeah,
like
carrying
heavy thing movements.
stone fountains around. Well, I hope it works out. I'm sure it's beautiful. Market actually relatively active for some holidays in the UK. Is that what you said?
Bank holiday, yeah.
Holiday in the UK, so a little light on the volume side of things. If you were looking at futures and some other things, with that major market out, but plenty of action to kick off the week. Some U.S. dollar selling. It looks here, Pete, across the board. We're going to get into a little bit of a recap in just a second of the jobs number and what it means for U.S. rates, because I don't know if you checked Friday afternoon, but
They took a lot of those.
They took a lot out of the rate cut projections. So we'll take a look at that in a second. But when you look at this board, Pete, what is the most surprising to you? I've got something that's most surprising to me, but I want to hear if it's the same with you.
Probably, the Aussie move and the Kiwi move. So, tariff schmariff.
It's craziness with this move.
This is wrapping right around. Kiwi's through its 200-day moving average. It's 100 points above it. Aussie's rubbing up against it, are actually through it, but really not pulling away. But This is exactly what we talked about last week. We're starting the week. If you were short, you're, depending on where you set your metrics, you're out.
I'm going to try to look at this. I'm putting together a moving average for you. Can you believe that? I guess that's the 200-day moving average. I mean, it differs when you're looking at futures, whatever. But yeah, they're through them in some cases, or at least dancing around them. I'm looking here at Aussie, and you can see the moving averages for Aussie right now. Short term, looking at shade under 64. Medium term, around 63.
200-day, 64.20.
And so now we're trading close to 65 for the first time since you go back to November, start of December.
Right, and I consider that whole 65. That 65 pause was on the way down to 62 cents. I mean, I consider it relatively sloppy on the upside. In other words, if you're looking at inflection points that you want to lean against, being a contrarian on this up move, I think it gets to be a little bit harder for you at the start of this week. Why is this railing when U.S. rates are not coming down?
Yeah.
I think there's more at play here.
Mm-hmm. But also, U.S. I guess I didn't look at the global equity story this morning, but risk-off sentiment. It seems like here to start the week.
Very much so. They, that was a pretty solid rally last week. Was it 9 up days in a row in U.S. equities? I want to say 9.
Something crazy, yeah.
And they started. They opened up Sunday night at 5, relatively flat, and then the selling just emerged and accelerated. And what was interesting, and bonds first traded down with it. So it's like, okay, this is the odd thing of bonds down. Now, Friday, the finance minister of Japan just happened to mention, we own 1.3 trillion in U.S. Treasuries. We don't have any plans to sell them, but we just wanted to let you know that during these discussions. Now, why do you mention that unless you want to use that as a little bit of a
negotiating
deal? So, I think we're seeing gold on an absolute rip.
Yeah.
$75, $80 right now. Probably even higher than that last time I took a look. Gold up, copper unchanged, the commodity currencies up. You would think it'll be interesting to see what kind of print we get out of the Chinese stocks today, but I would have to guess things like FXI are going to be a little bit higher. I'm guessing. We'll see.
We'll see. I didn't check.
But this is this is why we talk about number 1, two-way management and realistic expectations. You really have to say, if we end up anywhere in this range right now, you've got pretty much a new range defined between 64 and maybe 66.5 cents.
Sure.
And we've recovered a lot of ground, but just like on the way down, where it seems so cheap, when we came off of 68.5, this level seems so cheap.
Sure.
4.5 big figures. I think you've got to be a little bit mindful of getting too aggressive on the short side here, or getting too stubborn on the short side that it can't move this fast. What we did was had a really hard shakeout to the downside, and you can argue from this longer term weekly chart, we're just on the first leg of a normalization journey. Now, that doesn't mean we just go straight up from here.
Of course.
But I think that you've got to be able to, and I always say this, I want to be able to look at both sides of the market.
Sure.
I don't want to say it's gone too far too fast. I can never buy this. Given an appropriate pullback or a little bit of downward structure, I want to be able to look at both sides of the marketplace.
Especially in the short term.
Yeah.
I mean, we have an FOMC this week. We saw from last week, multiple news stories or economic events come out, even amid however many days in a row it was higher in equities.
Right.
There were both sides to be had.
Yeah.
There were plenty of days amid the equity bullish run that we've seen recently where equities were off 1%
right.
or 1.5%. And everybody was like, okay, here's where they give back ground.
Right.
Similar story with this, especially on a Fed week like we have. this week.
But
Short
does
term,
that
plenty
mean?
of two
What does that mean to you,
sided
Fed
action.
Week wise? Because it's a 2-day meeting. It's what it just means.
Just
Wednesday's the
volatility.
announcement.
Just volatility. To me, it means nothing in terms of my brain is not shifting any gears of like, oh, this is going to happen and then this is going to happen. I just see it as, and we've looked at the data both, internally and externally, public data, everything around these Fed events. There just tends to be volatility.
Now we've had again a big rip up to 115. We're off in euro. Aussie now, Kiwi, the stronger players in the space. Do you see any froth coming off of this going into FOMC, or given the fact that they're not going to cut rates in May, it's really probably the press conference at 1:30 that's going to be more interesting.
Yeah.
And at this point, I don't know what he's going to say of anything of interest.
That's why I say I can't make a story around like, oh, I want to be long going into this or short going into this or what have you. All I can say is that you're getting plenty of these days. I mean, dollar yen again today, 100 points higher or lower before the U.S. session even comes in. And we saw this multiple times last week where already a big move before the U.S. session opens. And then a big move in one direction or the other off of that, and plenty of two-sided action in the short term. Because, Pete, I agree with you. You look at the long term of this chart, and this is the weekly here in the Aussie. You take off this blip here, and just to your point, anything in this 62 to 65 range has been the low that they've bounced off of plenty of times. And there's been plenty of trading in the 65 to 70 range. And even you go back to 2022, which at this point, is 3 years ago, but plenty of 70 plus trading in there. And you look at, I think you make a great point of the velocity that this market can carry in both directions. You see the shakeout of the pandemic, Pete, and then it's a nonstop ripper all the way up to 75 cents, and they touch 80 even a year, not even a year after the pandemic. Here you go from sub 60 cents to above 80 cents for a trading day. It looks like maybe one or two in this weekly chart here. So yes, in the long term can have extreme velocity to the upside. This could be a little bit of the mean reversion finally for a number of these currencies that have been beat up against the US dollar. But in the short term, you're seeing plenty of two-sided trade, even in the equity story. And it's just interesting that the correlation is breaking. So you're getting two sides in a bunch of uncorrelated stuff, which is even better.
Yeah, and we're seeing rotation back into the commodity currencies, which is, again, great to see. And I think that we've covered, in the last 6 months, we've covered a lot of ground.
Yeah.
From up to down. Starting now down to up a little bit. Don't get trapped in, we were struggling. 57-cent Kiwi didn't hold like it was supposed to before we traded, sub, what was it, 155 briefly. I think you need to be mindful of, as the market moves here, you keep that context around you of being able to trade both sides of the market. So, especially on that shorter term dynamic, use the stats here. We're at net change here is 40 points, 38. I think the one standard deviation is
probably settled
40.
in around there. Yeah,
40. So this is a question of, do you use that, or do you use, well, it's 40 from where I start today. That's part of what you can do.
Up to you. Just be consistent.
Absolutely.
Yeah.
So I think the consistency of what we've seen here is 5 rollovers of 30 to 40 points here, all of them never reaching the previous low. So when we go back, just if you go forward a little bit, Frankie, right to the front of the chart during May here. Yeah, we've had this move from 59, just in 59, from 59 up to 60 cents roughly.
Yeah.
There's been 20, 30 point pullbacks. They never reach a level of pullback. The low on those pullbacks never gets to be where the old low was on an intraday basis, and the high they put in gets to be a new high. Now I'm not a technician, but that's positive market structure. So you need that to play its hand a little bit. And does that mean I can't sell them up here if I really think they've gone too far, too fast? Sure you can. You just have to be mindful that structure is saying there are buyers out there who are willing to buy smaller dips that don't need to have to be major retracements.
Sure thing. Let's get into the slides really quick.
We got slides.
Yeah,
Should we save them?
We're gonna rip through them. No,
Okay.
it's pretty time sensitive, so we'll rip through
Okay.
them. Let me pull them up really quick, and I might just have a lightning round. Recapping the jobs report coming out in early May, reporting on April, stronger than expected, and huge shifts we're seeing in interest rates here in the U.S. and where they're projected to be by the end of the year. Just to recap, Pete, 177 versus 130. A lot of jittery action around this number, back and forth. Obviously, you've always got revisions, and right now it's a more complicated time than ever in terms of what a strong job market means. Is there still lingering inflation? When will, tariff stuff actually kick in and hurt these employment numbers in the U.S.? So much hedging back and forth that we didn't see too many huge reactions right off the number, Pete, but they were expecting a worse job market here with the trade war turbulence. But they got what has been relatively normal, high 100s, low 200s at the end of the day. And you did, after the shakeout, Pete, see a couple of trends, which was equities continuing higher. They continued to bounce back off of this, and they were on a hell of a run there from the lows and S&Ps around 5,000, even now getting back above 5,600. But another interesting thing I thought, Pete, was that Treasury yields almost across the board were 10 basis points higher after this strong number, which, okay, it makes sense. But you saw some huge shifts here looking at the June rate cut probabilities, because the May, at this point, it was maybe 5 to 10%. Now it's essentially nil. The chances of a rate cut in June now, Pete, are 37%. They were 67% a month ago. And the day before this jobs number were 57%. So that's a huge hit that they take here, going from more likely than not a rate cut in June to now punting further out in time. What do you think about this huge shift?
I think having 3 rate cuts baked in, given the uncertainty, we all kind of lean was a little bit much.
Okay.
Now they're taking a little bit of it out. So it's down to 2.25, 2.5, depending on if you go. Some of what they did here was move them further out into later parts of the year. There's more towards December. So,
and we could take a look here at December, because while this did change, to your point, it only shifted by about 1 rate cut. But that is still, a decent shift. But to your point, you're thinking maybe this distribution was a little bit more vulnerable than people had thought going into, because you might think, oh, it's the non-farm at the start of May. Like, of course, it's an important number, but it's 1 of 12, and like, how meaningful can it be? It took a whole rate cut out of the December projection here.
Now, when I say it's not meaningful, we see right here in the market movement, it definitely drives markets. Long term, I'm not pulling away that I'm changing my expectations on things because what non-farm payrolls tells me. Because the one thing, as I've mentioned before, you look at every previous month's revision and it's dramatically changed. And it's like, we did what on that? Now it's this? So I think what we've done is normalize expectations that there isn't going to, at this moment, be a great need for massive stimulus. And between the tax bill and possible price increases coming down, the Fed's not in a hurry to cut rates. So that was really the case when they had a much more aggressive number put into June.
Yeah.
But it was that fear. What they've done is they've baked out a little bit of fear. I think that's actually premature baking out of the fear. So we'll see how that shakes out.
Well, the funny thing is, to your point here, while the U.S. dollar has recovered from its lows, it's not necessarily ripping higher the way that equities have, or that U.S. Treasury rates have, or the way that they're baking out these projections. And you would think that would be relatively one-for-one action, because the U.S. dollar got hit, obviously, on the way down in equities, on the way down in interest rates, and on the way up in these rate cut projection odds. but you're not seeing that U.S. dollar recovery. So to your point, a little bit of hedging. Yes, they're 3% off of the lows in yen, 2% off the lows in euro, but they're still down. U.S. dollar down more than 5%, which is a huge move.
Back and forth, which what we want, but they're holding on to the lower quartile, or depending on how you look at euro, the upper quartile of a big move. So I think, I'm not so quick to move my scalping ranges in all the way to that one standard deviation level yet. I will give myself a little bit more wiggle room. What does that mean? I will miss a couple of things, but I'd rather do that.
Yeah. So we'll see where it goes from here. But yeah, strong U.S. jobs crushing the chances of rate cuts here in early summer and rallying back the stock market a little bit, but U.S. dollar not sold quite yet on the recovery here in the U.S.
We'll see. A lot of BOE coming up, FOMC, as you mentioned. And, of course, a barrage of new tariff agreements are supposed to be announced this week.
Very cool.
Just like the ones last week. So this will be exciting to see. You know what? Lots of opportunity, lots of back and forth. Stay disciplined. Don't get caught in the past. What I mean is don't get caught that at some point the euro is going to see 107 or 106 again. It may. You and I don't know that. But we're going to accept the terms and structure we have right now, move forward with it.
Live in the moment. Very zen of you. And with that, we'll pass it on to
Tom, Tony, and Vanetta.
There you go. Have a great day, everybody. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
TikTok.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
Well, I'm going to give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. And happy Monday to you both.
Hello.
Hola.
Hola.
How are you, Saznoff?
Besides the fact that I think it was about 35 degrees and rainy this whole weekend. Other than that, maybe it wasn't rainy on Saturday, just Sunday. But
it was typical spring in Chicago. Yes, it rained just about every day. It's about 40 degrees. Yeah. Don't worry, Saz. You got another week and a half of this, and then we're golden. It'll be 55 or 60.
No, it'll go straight to 80. But I got my air conditioning fixed. So after I got my air conditioning,
you're dying to use it.
Oh, no, it's on. I can't turn it off. So,
Oh, so your house is super cold.
yeah, it's my house like 40 degrees.
Awesome. I love that for you.
Yeah, once it's on, I can't turn it off. I'm either all in heat, all in air conditioning. I can't do both. So, no, I was,
You just need to move. You need to burn your place to the ground. Start fresh.
I'm going
Is it
to.
time, Sosnoff? No, I'm gonna have to carry you out of that place, aren't I?
Oh yeah, I'm never moving.
I have a solution for you. Why don't you go stay at the Sheridan's house that hasn't sold yet? Go stay there. It's in your shuffle zone.
I don't want to stay at that dump.
I can't wait to watch you get stabbed by the Six for calling her what I'm sure is beautiful abode a dump. Go ahead. Pop off.
Try it. Do it again.
Yeah, you're not all puffy chested now, are you?
Plus, his neighborhood's way too dangerous for me. Yeah.
You live a block apart. He doesn't have coyotes. You have coyotes.
No. Yeah. Well, yeah. I have coyotes. Raccoons. That's all I've seen.
You probably have possum.
I don't know.
Definitely have possums.
I don't know.
Everybody
and bunnies.
They're everywhere.
Yeah, they're everywhere.
We had bunnies, but I think the coyotes ate them all.
So you didn't do anything cool this weekend?
I did.
Oh, I did something cool this weekend. Can I say?
Yeah, sure.
Go ahead.
My wife feeds the birds and all the animals outside there. She's an animal lover, and there was a squirrel with a bad eye. Must have got into a scuffle or something like that. So we tried to trap the squirrel so that we could get the squirrel to a doctor.
And? Oh, like the episode of Seinfeld.
I don't know that episode of Seinfeld, but I got to tell you something.
Where he goes, Kramer finds the Merv Griffin set in the trash, and then he sets it up in his apartment, and then he starts just hosting shows that no one is watching, and then he has a show called Scandal and Animals. Because George almost hits a squirrel.
And what happened with the squirrel?
I did not try very hard to catch the squirrel, Sosnoff. There was no way anything I was going to do was going to catch this squirrel. But she didn't know that.
Okay. So all I can tell you is that if I was going to bet, I would have bet a lot of money that the best you did is went outside, maybe had a beer or some kind of drink with you, and said, I'm going to go catch a squirrel, and you never even looked.
I can get this for you, honey. It's 40 degrees and raining. Let me get this SOB. Sure.
Could have called me. I have traps. I have humane traps.
I'm not trying to do anything. No, thank you. Appreciate it. But I would go out there and check the trap every hour, Sosnoff.
I don't even know what a squirrel trap looks like.
Small. It's like a small cage with a pressure plate in it. Put food on the plate and it slowly goes in, and then when its weight trips the plate, then the door shuts. But it's a humane trap. It's not like a kind of trap. Like
Well, what's funny is I don't really, for some reason, there's not a lot of squirrels in my neighborhood. I think they're all eaten by coyotes too. I don't know.
When are you out?
Probably eaten by the homeless.
These squirrels. You go right to your garage. It's not like you're walking around.
I look for squirrels. Look.
You don't look for squirrels. Be so for real.
But I never seen the squirrels.
All right. Well, speaking of you two squirrels, I am giving you a I don't know, like a programming note that Mother's Day is this weekend. You dumb jamokes. So for you, Tom, listen. Are you listening to me?
Yeah.
You have to get your daughter a present now. So not only your own mom and your wife, but your daughter now. I'm giving you a heads up. This is me on video. Telling your dumb ass that you, for Mother's Day, also need to now include your daughter, who, congratulations, gave birth to your grandson. She is a mom.
This is definitely going to cut into your gift-giving purse, Sosnoff.
Can't I just take her out to brunch?
You could do that, but a nice card with
Maybe some flowers.
heartfelt message would go a long way from you. I'm just telling you because you forgot. You dead ass didn't know. You didn't think about it.
I'm all over this. I got this.
So again, your mom, hi Joan, your wife, okay, hi Corinne, and your daughter, sup Kate. You got it?
Got it.
Okay, I got it.
All right.
But
you too, Bat. Although
I'm good. I've been through this. This is my second Mother's Day doing this. I'm all right.
Okay.
I screwed up the first time. I'm not gonna have that happen again.
right. So, just,
but if it's a nice day, I might play golf.
Okay. All right. I really tried to help you. But hey, did you watch the Kentucky Derby? Congratulations to Sovereignty. And his mother was a mutter. All the horses in this year's race were descendants of Secretariat, and it was the highest watched Kentucky Derby since like the 90s or something. So that's kind of bonkers.
Yeah,
that horse came in like 4th or 5th, Sosnoff. Sandman.
Which one?
Sandman.
Yeah, no, it came in like 6th or 7th.
But did you see James Hetfield from Metallica, who the horse is named after, got to meet the horse?
Yeah, that was good.
Yeah, that's cool.
That was cool.
But it was cool, and
it's kind of anticlimactic. I'm not gonna lie. I mean, they go on for hours.
Wasn't it a close race though? And there was like a disqualification.
It was a close race. But it was a nasty day there, and I've been to.
It always rains there for some reason for Derby.
Well, I've been there twice, and one time it poured all day, and the other time it was kind of nice. But for the Derby, but the one thing that's murder about the Derby, which I don't think people realize, the Derby's on the East Coast time. The Derby's like 7:00, right? It went off like just after 7:00. Everybody gets there at like 10 in the morning because otherwise you can't get parking spots, all this kind of stuff. So you're literally there for 9 hours, and people start drinking.
Yeah, but you're drunk, so like, what is time?
Well, people start drinking. They have their first mint julep before 10:00 in the morning, and by noon they're already burnt out. By 5 in the afternoon, it's an hour between races, and the last race, or I don't even know. Yeah, it's the last race, but the Kentucky Derby, the race before, ends at like 5:30. So from 5:30 to 7, there's nothing going on there. The place is like, it's gross at that point because everybody's drunk and they're out of food. There's nothing there, and it's painful that last hour and a half. Painful.
Well, the owner of Sovereignty says he's not sure if he will run the horse in the Preakness. So I don't know when we'll ever get another Triple Crown winner, but. Also, how is Secretariat
why would he not
bothering
run?
all of these horses? What?
Well, what's funny about horse racing is that it truly is a dying sport, but for some reason the Kentucky Derby stays, is a spectacle.
Why do you say it's a dying sport? What do you base that on? I'm not disputing
just because people don't go to the racetrack anymore.
I mean, they closed Arlington here blessedly because all those animals were dying. So
it's really hard to make the numbers work, I guess. Because people if they want to bet, they'll bet on an app or something. They don't want to go to the racetrack anymore.
Well, that doesn't make the sport dying. That just makes the attendance dying. But I get it. Okay, maybe you're right. I never thought about it.
The problem is that when people don't go see it live and they're just betting on it, then it totally changes the whole sport. There's no it's a dying sport. That's all I can tell you. It's a dying sport.
Yeah.
But the Kentucky Derby, it's almost like a little like boxing. Boxing to me is like kind of a dying sport, but then occasionally you'll get a big match and everybody comes out for it. That kind of thing.
Sure.
Okay.
So you're saying we just need the Logan Paul of horses?
No.
To save it.
No.
I'm funny.
You are.
Also happening this week, Wednesday, the real ID goes into effect. So if you are flying, you're going to need to help yourself out. But I did hear on NPR this morning, if you don't quite have a real ID, you got to get to the airport 3 hours earlier and you will be subject to enhanced screening. They don't technically have to let you on the plane. But I know Todd on our trade desk is going through this right now. But good news for him, like if he just shows up early, chances are he will still be able to get on a plane. So it's happening. This week is the week, baby.
It sure is. It's happening.
Get in there. Nothing to add to that, Tom? No?
I mean,
No.
I've had a real ID for a couple of years, so I don't really think about it. But I think it's going to create.
Yeah, so because it's this concept called empathy.
I think it's going to create. I mean, I'm not opposed to it. I think it's a smart thing to do. They probably should have done a long time ago, like they wanted to. But I do think you're going to see a lot of people that are going to be. They're going to be caught off guard, and it's going to be.
People at the airport already don't know what the hell they're doing.
I know. I'm just saying. I think it's going to create a little confusion at the airport. I sure hope people that don't have a real ID have a passport on them because
I
don't have a real ID.
I have my real ID, sad enough, and I got my license updated through the mail, sad enough. That's how good I am. I'm a clean driver.
Well, you got your license updated. There's a difference between clean driver and updated license.
Be that as it may.
I've paid all my tickets, unlike other people in this room.
Yeah, I have a couple of outstanding bills.
All right. Well, good times all about. Hey, hockey was very exciting last night. I even just saw it on Twitter. Am I a Winnipeg Jets fan now? Like a last-second goal. I guess they were down 3-1 and something. They came back and tied it. What happened?
It was a great game. I watched it. It was a great game. I fell asleep in the first overtime. So, but the game itself in regulation, they scored 2 goals in probably the last like minute and a half or 2 minutes, and after they had pulled the goalie with like 3 minutes to go.
Right, there was two. They scored 2 6-on-5 goals that led to double overtime.
Yeah, they pulled the goalie with like 3 minutes. They scored 2 goals, and St. Louis just missed like 2 open nets or 3 open nets. But the crazy thing about each goal was that they were redirected by somebody in front. So the goalie for St. Louis, who had a great game, Bennington had a great game. He had no chance.
He's a great goalie. He was the goalie on the U.S. team when they played the Canadians.
Whatever. Yeah,
the four, whatever.
Yeah, the 4 teams. But
yeah,
he had no on the last 3 goals, the one in overtime and the 2 before that to tie the game. He had no chance on any of them. Like they were all redirects from a completely different direction. It was
that doesn't happen, Sosnoff. If Big Vinny Batista was out there on defense pushing those guys away from the net, you know that right now, Sosnoff. That kid's a beast out there.
The only chance.
So wait, who won the game?
The Jets.
And did they win the series then?
Yeah, it was a game 7. It was a game 7.
That's exciting! Wow.
Yeah, it was a game 7.
Oh my God, it's like a romance novel.
It was one of the most. It was one of the coolest endings
you could say that.
of a game 7 I've ever seen.
Yep.
Wow.
Sure.
Yeah, it was good.
Yeah.
It was good. Stanley Cup hockey is freaking great.
And being from Chicago, like you're supposed to like not really like St. Louis anyway.
Oh no, I don't like the Blues. I don't like the Blues anyway. Yeah. I mean, being from Chicago,
Jet fans are never going to forget this game. They'll be talking about this game 7 forever.
I did love how everyone was wearing white. I love a theme.
Yeah, everyone was white there, and they did. Winnipeg did give us the captain, Johnny Taves.
Oh, he's from Winnipeg, eh?
Hey. Yeah.
Oh, I didn't know that.
So we can't be mad about that,
No.
Yeah, he's a Winnipeg boy.
That is very exciting. And I guess the Cavs lost in their game.
Great game. Watched that too. I don't know why. It was after our show last night. Yeah. Halliburton was unbelievable down the stretch. It was a great game.
Didn't they have to ban his dad?
They did. They banned his dad. But
That's amazing.
You know,
That's fun.
I love that I know this.
I know, but you know what's weird is that, like,
But
I don't
poor
know.
Giannis, like I would not want to start chirping at Giannis. That man is a literal giant.
All we can hope for is the Bulls give him $100 million a year. That's all I can say.
Yeah, that ain't gonna happen.
I know, but he's a free agent, and if I was the Bulls, I would just give him a blank check, whatever you want.
Yeah, that ain't gonna happen though.
No,
That's the problem.
I don't think he's going to play in Chicago either, but we got a chance.
Something that is going to happen is we're going to have a great show. It's a magnificent Monday, Cinco de Mayo, here at Tasty Live. That means a lot of good content headed your way at the top of the 8 o'clock hour. We got an options jive, a little research corner with Kai. He's going to be looking forward at everything that's going to be happening for the week ahead. Then at around 8:20, we have an options jive, essential risk management for uncertain markets. Do you want to elaborate what this research piece is about?
No.
Okay. Then 9. No, I'm going to keep it moving. Then 9 o'clock market measures. Can struggles bounce back after big drop? I'm going to guess that this is supposed to be strangles. It literally says struggles. It was like, oh, my struggles.
Oh, I'm struggling.
I was like, what in the Negro spiritual is going on?
Oh, that's so good.
Someone just
Just a little.
Oh, God bless whoever drunkenly typed our show schedule today. So can strangles bounce back after big drops? Yes, that's right. Your daddy's rich and your mama's good looking. No, I don't know. And we got live from the trade desk, Big Boy Scotty S, 9:30, counting down the top trending tickers over at Tasty Trade. Did you see there was like a shooting at a Glendale steakhouse in Arizona? Very sad news, but it made me think of Scott and Frankie.
I did not see that.
Yeah, it was not. It's not.
We got our own shootings here. What do we tell them to stay? Get off our street corner.
No, it was just. I don't know. Not super great news, but hey, you guys want your daily dose?
Sure.
All right, hit me with my theme music. Let's go.
Our leading story, breaking news,
coming
across the wire. Our leading story, top story, just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a fantastic Monday, magnificent Monday, magnifico Monday. It is Cinco de Mayo Monday. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. No, I have not had any margaritas yet. I wish, girl. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings tonight, Mr. Bat?
Palantir, I believe so. I'm not bad. You have a position in it.
Yeah, small position, sure.
Hey, I will tell you this. I've been working here at Tasty for 14 years now, almost 15 years, and I'm getting used to speaking like a trader, talking like a trader, learning all of your silly rhymes and your word games and your idioms. So one of my favorite, and I forgot, we are in it now, is sell in May and go away. But why Wall Street isn't buying it this year? First of all, what does sell in May and go away mean? And what can we expect for this year?
It means absolutely nothing, and it's just a ridiculous. I mean, who knows? Doesn't mean anything.
No, but what is it? What did it used to mean?
I mean, it was just somebody came up. Somebody was sitting around one day having a couple of beers after the market closed, and they said, let's just sell in May and go away.
Before rap music, some white guy in a suit came up with "sell in May and go away," and it just kind of stuck. But it doesn't mean a thing. I mean, we've proved that it really doesn't work or mean anything.
Nothing. It's just there's a lot
of.
That was
the best we got.
People are okay. So when's the last time it was relevant? Because most people are saying the last time it was relevant was like 87. So I don't know.
Right. I don't even know if it was 87. But the point is, it's as random as anything else.
Okay. All right.
It's like a June. It's like in baseball. They love to talk about the June swoon, but it doesn't mean anything.
All right. Hey, in other news, investors sold U.S. stocks in the week ending Wednesday and bought Japanese and European shares. According to Bank of America Global Research, U.S. equities saw an $8.9 billion outflow in the week. So for every $100 that came into the U.S. stocks since the 2024 election, around $5 has been an outflow in the past 3 weeks. In other news, though, Treasury saw their biggest outflow since late 2023. Yeah, I'm right there. And nope, go back to where you were. Yep, that's it. And gold, meanwhile, had its first weekly outflow since January. Do you do anything with this information?
Vecchio talked about this last night on First Call. It's the biggest drop. I mean, it's just people around the world that used to, I think he said it used to be 83 cents of every dollar would come to the U.S. markets. Now it's 3 to 5 cents of every dollar.
That's wild, yeah.
Well, I mean, it kind of makes sense given everything that's going on. But, I mean, it's why the other markets around the world have been so strong as of late.
How sustainable is this trend?
Well, it's been going on for a decade. So it's probably, I mean, the U.S. markets have been crushing market share for the last 15 years. I mean, we know better than anybody because we're a company that's publicly listed in the UK. We're a small cap UK company. And last year, I think small caps in the UK were down 12%, and the market everywhere else was up like 20 something. So, these markets have been depressed for a long time, and they're finally coming back a little bit. There's nothing wrong with that.
Can we talk about gold real fast? What is gold doing to start the week?
It's up.
Well,
huge.
I don't know if you're allowed to talk about gold.
Yeah, it's not a good topic this morning. It's our biggest loser. Gold's up $83, and it's been up. It opened up about $10 last night, and it's just continued to rally.
Yeah, I saw it.
It's continued to rally. Actually, it opened up $6 last night. It's continued to rally the entire night, and now it's up $84.
You are
Yep.
That's a lot.
28. Reversing about a 3 or 4 day slide.
Interesting. Hey, in other news, bond traders swing to Powell's side as President Trump calls for rate cuts. FOMC is going to meet this week, but after the 15 minutes after the April employment report hit early Friday, President Trump seized on the strong job growth to ratchet up his pressure on the Fed Reserve Chair, saying that there's no reason to hold off on cutting interest rates, but bond traders seem to take the side of Powell. What are you doing in treasuries as we start the week?
We bought them we haven't done anything today. We bought them on Friday.
They're in the 114 handle, Sadnov.
Yes, I bought them in the low 115s and in 114. The lowest I paid was 114.30, I think, or 31. Mm-hmm. They all last night. They've been in about a 10 handle range. This is around the lows, and they were like 10 or 15 handles higher than this. So, I mean, they've been wrapped around 115. I think this is a very interesting entry point, and so I have bought bonds here.
Okay. How about for you, Bat? I know you don't normally dabble in the bondolinis, but
I'm the world's worst commodities trader, but I have done well in gold as of late. So I might I might stick my toe in there. 44 IV rank in bonds and 114 just under 115. Kind of an interesting area, mid-range for its most recent range. So maybe something on Tuesday for option trades today. That's right, wherever you get your podcast.
Hey, that's pretty good. Yeah, we'll skip the next story, Beth, because I kind of merged them into two. Sorry, that's on me. Tom wrote about this in the Cherry Bomb. It is the end of an era. Warren Buffett is going to ask the Berkshire board to replace him as CEO with Greg Abel. Buffett is 94. Abel was designated as a CEO successor in 2021, but it nonetheless came as a surprise to the thousands of admiring shareholders who'd gathered en masse for this year's annual meeting. What are your thoughts on Buffett's legacy?
You
wrote about him in the Cherry Bomb.
Well, I had a little fun with the Cherry Bomb. I mean, I think it's kind of like I said in there, I think it's kind of retiring at 94 right now is a little bit sus.
He's a slacker. You called him a slacker.
Yeah, well,
He was a
I
slacker,
mean,
to quote you.
the reality is, like I wrote, 94 is the new 74, so I figure he's got 20 years left at least. I mean, I thought he could make it to 100, no problem. But listen, what can you say? I mean, the guy we've always promoted. The key to success and wealth creation and business and everything else is longevity, and he's probably done it better and longer than anybody else. Last night, as a tribute to Warren Buffett, we played our famous Chasing Warren series, and it was very well received. We recorded it in 2012, I believe, and we had a few thousand people watching.
Those kids are in college now. Those kids are like full ass adults now.
No, actually, it's so funny. The little girl,
Stephanie,
the little girl Stephanie, who was the broadcaster in Chasing Warren. I don't know how old she was there, 10 or something. She is now she's an anchor in Milwaukee on network TV.
Yeah, so she's not an anchor at the age of 20. So again, she's graduated from, okay, anyway.
Whatever. Anyway, my point was we played it last night as a tribute. And in my cherry bomb, I wrote, and I think it's very important questions. My first question was, how much do you think Warren Buffett tips on an $80 steak dinner in Omaha? Tony?
$1,000.
Not a chance.
Not a chance. $20.
That's what I would say. And then my second question was, he owns Dairy Queen. Do you think he pays for Dairy Queen when he goes to Dairy Queen?
100%.
That's exactly
I think they comp him. I just think that they comp him.
I'm saying they don't. I don't think they do.
I know at Vinny's Dairy Queen, he only gets a 50% off, and he's an employee, so I don't know, Sosnoff. I think he pays full like everybody else.
Are you literally comparing your son to Warren Buffett? You stop right now.
And my third question is, do you think he ever got a speeding ticket?
Oh, it's
No,
a Cadillac?
I don't think he drives.
No, he does. He drives like a 2007 Cadillac.
Yeah, I've heard it. Yeah,
drives like a Ford Explorer
and a pickup truck. Yeah.
It's a Ford Explorer, I think that.
Whatever.
Yeah.
And then my last question was, in the day and age of NIL and everything else, why is Nebraska football so bad? Why does it, at this point in his life, why does he just step up?
That is funny.
Why does he just step up?
That's the one that hurts, Sosnoff. That's the one that hurt our viewers.
Just write a check, whatever it takes, okay, and get the best players in the whole damn country so Nebraska can win a national championship again. What has it been?
Phil Knight did, the guy that started Nike. He really wanted Oregon to be dominant.
Yeah.
So that's what, yeah.
I mean, when's the last time Nebraska won? Was it 1974? I mean, wasn't it like Johnny Rogers? Whoever it was, I don't even remember. But it was a long time ago.
I have no idea. Anyway, I got to keep it moving. Happy retirement, Warren. I hope you enjoy it. I hope he gets to spend a lot of time doing more of what he loves. Hey, massive move in crude oil overnight as oil prices fell more than 4% after OPEC Plus agrees to surge production in June. What did you guys make of the move in crude overnight?
We didn't fall for it. I thought it was all kind of bull crap, and it was. It's only down $1 right now. And I think it was, I really don't think that anybody fell for it. I think it was just kind of a little bit of.
But you didn't have to fall for it if you had a position and you got blown out, though, right?
Well, it's not. When you say 4%, it was down $2. Now it's down $1.
Okay.
So it wasn't
That's a big
like.
move.
Yeah, it moved, but
But if you had a position and you couldn't do anything,
I do have a position. I'm speaking from. I do have a position there. I'm actually short strangles in crude oil. So I was speaking.
You short struggles in crude oil.
I was speaking from my own book.
Stop it.
It actually premium in there came in because it's way worse in crude oil when it's $2 move to the upside or something. A $2 move to the downside, they kill premium in there. I also think it's just, the whole move is kind of like just OPEC, just pulling the crap that they usually pull. I wouldn't buy into it for 1 second.
Britain is set to restrict customers' use of credit cards to buy crypto and their access to crypto lending products. The UK regulator said on Friday it's a move aimed at improving protection as crypto assets are going to be regulated in the UK for the first time. What do you think of them taking this step about like, hey, we're going to allow crypto, but you can't borrow to buy crypto?
I mean, I think it's going to be really hard to enforce that because I don't know how they're going to.
No, it's not. If you just don't accept any way transactionally to let people use the credit cards to buy crypto, I don't think that's hard to enforce.
Well, it's hard to enforce when the crypto exchanges aren't actually in the UK.
That's you're saying so people using VPNs in the dark web?
I'm just saying it's not like a listed. It's not like they're not using necessarily like UK licensed, crypto for it's not the same thing as buying stock. Let's put it that way. So I just think it's, I understand not buying stock on credit cards. I got it. Futures, trading, options, crypto. I understand all that, but it is a little bit different when you're talking about decentralized exchanges. You don't really have a lot of control over that.
What is Bitcoin doing to start the week? And Coinbase going to report earnings on Thursday after the bell, I believe.
Yes, Bitcoin, the product itself, is trading at 94,700. That's down and down pretty good, almost 3% to down $2,800 or so. Coin, on the other hand, is also down. It's only down around $4 or so to just over 2001 or so. I'm sorry, 201.
Tom, what are you doing in Coinbase?
Nothing.
Okay. Well, like I said, the earnings for them on Thursday after the bell. Hey, a new report is out, and the U.S. is going to risk losing its edge as the best place in the world to work in tech, according to new reports. The difference in top AI talent entering and leaving the U.S. on a 12-month rolling average is the lowest it's been since before 2010. A recent paper from the Hoover Institution, a policy think tank, says that some of the industry's most exciting and recent advancements were made by Chinese researchers who stayed put. In fact, more than half of the researchers listed on DeepSeek's papers never left China for school or work.
Yeah, I think this is, again, one of the unintended or maybe intended consequences of a isolationist, trade policy, because we used to have U.S. higher education, like master's degrees, had a huge, huge international student base, mostly from China, India, places like that. And that's really dropped off dramatically. I'm on the board at this one university in Chicago, the master's program, and it went from like 80% Chinese to almost 2% Chinese in the last 2 years. It's crazy. And so the turnaround has been pretty wild. I think that's what this is. I'm not so sure that we're losing our edge, but the talent pool's definitely shrunk.
Yeah, right. Hey, in other news, U.S. lawmakers are urging the SEC to delist Alibaba and other Chinese companies. That's according to the Financial Times. Two Republican lawmakers have urged the SEC to delist these Chinese companies, saying that they have military links that makes them a U.S. national security risk. Be so for real. What do you think will come of this?
Nothing. They should just get rid of those two idiot senators. I mean,
oh my God.
There's nothing stupider than delisting. You want to control these companies are listed in the U.S. Every advantage goes to the U.S. All the money that's made off their listings, the market cap, the tradings. These are a big part of our economy. And if you have the two biggest Chinese tech companies listed in the U.S., it says something about U.S. markets and liquidity and stuff like that. These idiot politicians just simply do not understand how that works, and they make up these stories like, "Oh my God, Alibaba is is masquerading. It's a spy company." All this crap because it sounds good, because the optics of it, for their base or whatever it is, sound good. It's so stupid. You never want to give up listings. You would take the listings from every company everywhere in the world. How does a listing of a stock, how does that impact? Like, what's the risk there? Just think about that. If you lose the listing, then think about all the money that's lost. But the idea that, okay, you're going to make up something. There's zero proof of any of this. It's the same thing with TikTok and everything else. It's ridiculous.
What are Baba and Baidu doing this morning back?
Well, I'm sure they're down small, but I don't really know.
Baba looks pretty much unchanged, down about 50 cents. Baidu, on the other hand, looks around the same, down around 50 cents. Not
yeah, they're strong relative to the rest of the market this morning.
Temu has halted shipping direct from China as de minimis tariff loophole is cut off. Temu says it has stopped shipping products from China directly to U.S. shoppers. Items shipped directly from China, which previously blanketed the site, are now labeled as out of stock. Temu does operate some U.S.-based warehouses, so there are some items that are still available on the Temu site that have already made it to America, and they're just sitting here in a warehouse. Fun fact, your girl paid her first tariff last night. That sucked. I was ordering something from China, and then so I paid through PayPal, and then I got another PayPal notice that is like, okay, so then the tariff for this product is $25, but I was alerted to, I knew there was going to be tariffs before I bought this, so I was not surprised. And also the item I bought, I had like a coupon, so it kind of offset, but it's annoying.
Tony.
But I had to, but then I did get an email from the seller in China, was like, thank you, Miss Logan, for paying the tariff.
Tony,
we will send out your shipment and not hold it hostage.
Tony, please take note here. This is how you spell de minimis. DEMINIMIS. It's a hard stop. It's a hard word to spell.
Oh.
Minimis.
Okay, I will. The next time I use it, I'll spell it with you.
De minimis.
Minimis.
PDD is Temu. Don't know if you're trading PDD at all.
PDD. Let's see. I don't.
107 and change, down around $3. Kind of mid-range for the last month or so, but on the lower end of its range.
Yes, we have a small position in PDD. I think we're fine in there.
Okay. Mm-hmm. Apple is partnering with AI startup Anthropic, the Amazon-backed startup, on a new Vibe coding software platform that will use AI to write, edit, and test code on behalf of programmers. Vibe coding refers to a programming method where AI agents generate code. It's a concept that is gaining popularity in the AI landscape. What are you doing in Apple post-earnings?
No, post earnings, no position.
Oh, okay.
I mean, I think it's back down to the lows it made on Friday this morning, so it could be interesting here. I thought Apple.
Yeah, Apple IV rank of 33, trading 203 and change, is near the lows. The lows were 202 or so from Friday. If that's what you're looking at.
Yeah, I actually wanted to get long a little app. I thought the long Apple. I talked about it last night. Long Apple, short Microsoft here was an interesting trade.
Okay.
I did not buy Apple and I didn't sell Microsoft, so I could, but I think Microsoft's down more than Apple's up this morning.
Apple's not up, Sosnoff.
I'm sorry. Microsoft's down more than Apple today.
Microsoft down around $4 or so to $4.31, but Microsoft's at the high end of its range compared to Apple, which is more mid-range. Lower.
Yeah, I think you can buy Apple here.
What's the IV in Apple? How's it doing?
Microsoft IV is 22. Apple IV is higher at 33. I'm talking about IV rank.
Yeah, okay, pretty good.
Yep.
Hey, the literal opposite end of the spectrum, Netflix. Oh my goodness. Good golly Wally. The Netflix stock has put together 11 straight days without a decline. The new streak comes on the heels of Netflix's most recent earnings, and it's just an unprecedented win streak. What are you doing? Is it over now?
I think that win streak's going to be over this morning.
Yeah.
Netflix down around 50.
What happened?
What happened was tariffs on foreign movies is killing.
I'll get to that. I'm getting to that. Hold on, 2 seconds. But what are you doing in Netflix? Is there opportunity here in this down move?
Well,
if you remember the show from Friday, Sadnoff asked me, what do we get short here? I went and said Netflix to him. It was a lucky guess. I didn't get shorted either, but Netflix down 50.
Boom, down goes Frasier.
I don't been somebody.
I have a position on there, but it's not. I don't think it's going to matter.
I have a position on there too. Iron Condor. It isn't going to matter. I had a little short delta to it after the run up anyway.
Yeah.
American Airlines is going to debut new suites with sliding doors. They will enter service next month and will feature sliding privacy doors. The carrier is trying to compete with Delta and United for high-paying travelers. Tom, have you ever traveled in a first-class airline suite with like a closed, like a Emirates, like luxury air cabin?
No.
This looks amazing. In other aviation news, United is canceling 10% of daily flights from Newark, and an unnamed source at Newark says, if you have a family, if you value your own family, or if a family cares about you, do not fly into Newark. Oh, geez, Louise. Problems abound at one of the nation's largest airport. Technology that FAA air traffic controllers rely on has failed, resulting in dozens of diverted flights, causing a massive cascade of delays, which is a problem that does not seem to be going away. But when asked about this, Transportation Secretary Duffy just mentions his wife's tacos. I don't know what's happening.
I mean,
nobody does anymore. Mention her taco.
Newark is a United hub, but it's
yes, it is.
But I don't fly into Newark. I don't like it either.
Yeah, but at least you have there's a difference between it being like have people having a preference and it being literally like dangerous to fly into and out of. Like those are two different things, you know?
Well, they're not saying it's dangerous. They're just saying that
no, they're saying it's the FAA officials are saying it is dangerous to fly into Newark and that all people should heed warnings and stay the hell out of Newark.
It's way more dangerous to get in a cab in Newark and go under the tunnel and get in New York. That I hate worse than flying into Newark.
What are you guys doing in UAL, AAL, or Boeing? Throw that in there.
Down about 50 cents or so, but remember the market's a little bit low this morning. But even the S&P is down 48. I'm going to say it's on the lower end of its range, but it's not near its lows of $50 that it reached in April, trading 74 and change.
Hey, Disney, which I believe also has earnings this week. Disney and Marvel's Thunderbolts snared a $76 million during its domestic opening weekend, the third highest debut of 2025. Thunderbolts currently holds an 88% fresh rating on Rotten Tomatoes. Not sure what the House of Mouse is doing. And again, I believe they have earnings this week.
Down around $3, trading at 89 and change. It does have earnings May 7th. You are correct. In 2 days. Well, a day and a half because it's the morning.
In a spate of massive tweets from his Truth Social account last night, President Trump has now ordered, without any congressional authority or approval, discretion, whatever, 100% tariff on foreign-made movies. I don't know what that means. I don't know how you enforce this. Like movies like Harry Potter. They weren't made in America. They were made in the UK. Lord of the Rings, made in New Zealand. Again, I don't know. This is not just purely just like Bollywood. You'd be like, oh, who cares, Vanetta? We don't need Bollywood movies. But some of your favorite movies, like James Bond, not made here in America. A lot of movies, you would think they're made in America. Guess what? They're made in Canada because it's cheaper. So again, all jokes aside, but a lot of movies that you would think wouldn't be affected by this are straight up affected by this because even production companies are like, it's easier to film in the UK or in Ireland because they don't have unions. That's a whole other story.
A whole other story is right.
But again, Netflix is down $50 this week, and I don't know how any
$55.
Yeah, I don't know how any of this helps prices at the grocery store, but you do you.
It is up. Netflix is up $300 in the last month, so I mean, $50. I think it's probably due.
Tom, thoughts on this?
I mean, my thoughts on tariffs in general are that they're idiotic. My thoughts on tariffs on movies, I mean, it's got to be one of the dumbest things I've ever seen. But what do I know? I don't know.
What do I know? This is funny. I think you will get a kick out of this health food company, Kind Bars. Do you know what a Kind Bar is?
Yeah, sure.
They make a good ice cream bar, too.
I don't know if you saw this went viral. So they had a whole big party because they redesigned their logo, and this is the video. Let's get your thoughts, because you love logos, but watch this.
3, 2, 1.
What?
Not 3.
Do you see the difference?
2, 1.
Yeah, they moved Kind up a little bit.
Yeah.
Is
So
that
they paid millions of dollars for that somehow. And really, they just moved up the Kind like a little bit. It's still the same. Like.
That's seriously stupid. The dumbest thing I've ever seen.
It's so funny though.
But are they making a joke out of this? Was this just a joke?
No, this was real. This was sincere. And it went viral, and they are getting straight up roasted online.
Well, they should get roasted for that.
They're like this redesign could have been an email.
No, I thought they were doing it as a joke, as like a social media joke.
I know people are like, this has to be a shit post. There's no way they're having a party for this logo. I couldn't even tell the difference after rewatching it 3 times.
Yeah, like I thought it was just a joke.
Nope, it was real. It was real. They spent money on it. That's the thing. And hey, before you come for me, this was not my study, but Elite College Football online, the website, they ranked the most toxic fan bases in college football, and Ohio State came out on top. Again, this is not me. Do not come for me, Buckeyes.
I think they'll wear that as a badge of honor.
Yeah, so I thought it was funny. They had a perfect 10.0 rating as the most toxic fan base in college sports. So
I mean, Buckeye fans have been like that going back, for as long back before Woody Hayes. I mean, it's been, I think they'll wear that as a badge of honor.
Yeah, Michigan was like number 10. They had a 6.8 rating. Georgia was number 3. Get 'em Dogs. They were at 8.8 rating. Tennessee Volunteers, they came in at number 6.
Who's 2? Who's 2?
I don't have. Hold on. I don't have like the whole list in a row. Give me 1 second. But I just thought it was funny.
Yeah.
Talk amongst yourselves.
No. I'm saying it's a good toxic fan base that's a good study.
Yeah, and then it's like difference between like the most hated, fan base and like the most toxic. But I just thought it was, humorous. So congratulations to the Ohio State Buckeyes. OHIO.
Good one.
Oh, the most hated fan base will be. Most hated fan base. It's either got to be Michigan or Alabama. No, Michigan. It's got to be Michigan.
Notre Dame ranks pretty high in terms of being hated. So it depends. I mean, there's so many things. Like people's hatred is so vast.
But I would agree. Toxic fan base of big schools. I'd probably say Ohio State. Yeah, for sure.
I think somebody wrote in Florida was number 2 or something like that.
Oh, thank you. Yeah,
Florida?
I couldn't find the
possible.
list in actual
8.9. Yeah, Florida number 2.
Haters. Hey, finally today for my viral video of the day. I don't know what we ever did to deserve dogs. Dogs are just awesome. Check out this dude who has an adventure dog to the extreme. Watch this.
It's gonna be a lovely
Dude, the dog gets air.
What kind of dog is that?
Ride with Dad. What? It's
Looks
golden
like
retriever.
Look like a golden, yeah.
Yeah, it's a
Golden retrievers. That's crazy for a golden. If it was a Malinois, I would say okay, I get it. But a golden retriever.
That dog got air.
For a golden retriever.
Air Bud was a golden retriever. So
don't use logic to win an argument. How many times did I tell you this?
I'm telling you.
Anyway,
if it was a Malinois, it wouldn't surprise me.
Next.
Very good, very good. We're going to take a quick 90-second break and come back. We got more Tasty Live media fun and messages with Confirm and Send.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Who plays me, Tom? We're gonna take. Well, you know what? Before we get to Confirm and Send, let's take a look at the market. You want to?
I've been looking at it since last night at 4:55. So sure.
All right. Even the S&P is down 44. So I don't know if they opened down around 10 or 15, and they slowly went down without an uptick. You can see here they're down around $10 off of their highs, down 44. NASDAQ down 190 and change. Russell down 17, and the Dow down 243. They're all down around the same. Volatility up 52 cents, still trading 23.12, near its highs of 23.20. Bonds down 5 ticks, 114.24. So enough 10 ticks off of their lows. They've had almost a point range. That would be $1,000. Bitcoin down 2,800 to 94,665. Still in that range of around right here, 95 to around 97, 98. Oil down $1.20 to 57 and change, but you can see there the low is 55.30. Oil still down 2%, $1.20, but off of its lows, trading close to its highs, 60 cents off its highs, significantly off its lows. Gold up $86 and change to 33.30. You can see here snapping that 4 or 5 day losing streak. Nat gas down a penny and a half or so, but still near the high end of its range. Today is all about Netflix, off NFLX, which has not had a downtick in what seems like forever, is down around $55-$56. That's all I got.
Well, for me, it's not about Netflix. It's all about gold, which has never seen a downtick. So, but I'm Tom Sosnoff. He's Tony Batista. This is Confirm and Send. It's 7:56 in Chicago. Let's do it. Confirm and Send, Monday, May 5th. It's your... Oh, I couldn't figure out why we were having 5 rabanitos, 5 radishes for lunch.
Because it's Cinco de Mayo, you
Cinco de Mayo. Well, stop. If you say Cinco de Mayo, you're going to get deported. But no more Cinco de Mayo talk in America. Okay? It's grounds for deportation. What? Are
we bringing back Columbus Day?
No. Columbus Day. Are you crazy?
Oh, darn.
But no more Cinco de Mayo. It's just Monday, May 5th, but you can still eat tacos. Still. Maybe not next year. Let's go to the first slide. But that's why we're having 5 rabanitos today. I couldn't figure it out. Tori is a little bit sneaky with that.
She's sneaky. She's sneaky with the obvious, yes.
Sneaky with the obvious. But you know what? They have really good... Their pork, their El Pastor, beautiful. I'm trying to grow a smaller account of around 5K. My question is, and by the way, I got a few emails over the weekend about smaller accounts around 5K and how to build those up. So we are going to put together a really good Tasty Bite segment on this topic. But Tony, this person writes, I'm trying to grow a smaller account of around 5K. My question is, how do you decide what strategy to use for a particular trade?
Well, I mean, when you have a smaller account, I think you have to come to grips with yourself saying everything I do is going to have some sort of defined risk. I think it's just the nature of the beast. And so once you do that, it throws out strategies that are out of your buying power range. Now, I know there are some smaller $8, $9, $10 stocks, maybe $20 stocks that you could have undefined risk strategy, but they're going to be very few and far in between. And I don't think you're going to like what you see there. So defined risk trades, vertical spreads, combinations of vertical spreads like an iron condor, diagonal spreads, calendar spreads, something intra-month is where you're going to go with a smaller account like $5,000. Directional trades too. Buying a couple strikes in the money, selling a couple strikes out of the money. You're going to have to.
We always say with smaller accounts, it's good to, test out a lot of things and see what works for you, see what you like. But one of the things I've noticed, and this might be a mistake on our part, which we have to kind of think about, is sometimes you can stretch yourself a little too thin. And so what I would suggest with smaller accounts, and I've been thinking a lot about this, is maybe, test out a few strategies, very small, see what you like, and then kind of stick with just maybe a smaller number of strategies, and just so that you can kind of get really comfortable with it. Because I think it's not a question of being right or wrong. I think it's a question of being comfortable with certain strategies given the small amount of capital. So how do you decide what strategy to use? Well, you decide based on what is the most scalable and the most repeatable for you. And that's different for each person. Let's go to the next slide. We're going to do a piece on this, though. I am short a very deep in the money put. It has about 80 deltas. If the underlying continues going down, what is the maximum of deltas this position can become? And obviously it can become stock, but realistically, what is the maximum?
The max amount of delta realistically? Yeah. I mean, it'll probably never get to 100, but 99 or 98.
Yeah, I mean,
the put's going to have some sort of value, even if it doesn't have any bid to it. Just the math model.
For the most part, if you're talking about
anything, at 80 deltas, it's stock, depending on what time frame you are.
Yeah, at 80 deltas, you're essentially stock. At 90 deltas, you're stock. 95 deltas, 99 deltas, you're stock. So, once you get past 80 deltas, you got to do something, or you got to just assume you have stock.
Yep.
Let's go next slide. Do you have any guidance for how big an account should be before trading futures? My account is about 15K, and I'm wondering if that's too small to trade things like ZB.
I I mean, you got to look at I look at the buying power of the trade that you're using and go from that. That would be because you could trade Netflix $1,000 stock, $1,100 stock. You could trade Netflix in a small account with defined risk. You can get as small as basically as small as you want in there. Different strategies too. Butterflies are going to trade very cheaply. So everything is there for you, but I think you're going to have to look at the buying power for each one of those trades. Bonds are a bigger product.
Bonds are borderline because it's about 3,000, I think, for bonds. I can't remember exactly the number. Notes would be a little bit more realistic. They're about 2,000. But if you're talking about S&Ps, yeah, ES and NQ, it's too small. If you're talking about MES and MNQ, you're fine. So you can trade futures with a $15,000 account, no problem at all. But any one of the micro products in anywhere is totally fine. And then if you're talking about some of the bigger products,
so if they're just talking about trading futures here, Saz, bonds are going to be out of their ZB is going to be out of their range.
The ZB are okay. What is the requirement for a ZB contract? I don't know offhand. I thought it was around 3,500 or something, but I could be wrong.
It probably is close to that, Sadnov, but even that, you know as well as I do. I mean, it gets too big. I'm looking right now for you. A bond is about 4,000, 4,100.
Yeah,
it's too much.
If you do notes, it's about half of that. So I'd say no. I'd be fine with notes. ZN.
And it's still a 50-50 shot. You know what I mean? Like
that's okay.
I would go to instead of the E-minis, the micros would be the place to go.
Yeah, we just don't have micro bonds. But
I know.
I go to ZN. I'd be okay with that. Let's go next slide. So I've been considering adding short delta to my portfolio with short MES and long MES calls. My portfolio isn't big enough for ES. Is this reasonable? If so, how should it be managed?
Yeah, and you would it's reasonable. You could manage it with that the same way you manage everything else. Whatever, makes your delta, comfortable. If you're looking to get short delta from something, as long as your overall portfolio is where you want it, yeah, I have no problem with this. The mechanics are the same in futures options as it is in equity options.
Yeah, it's funny. If I was short an MES and I wanted to do an option against it, my preference would probably be to sell a put. But because a short future short put doesn't require any additional capital. The short future long call, same thing. I would be totally fine with that. I just prefer the short future short put over short future long call. Same thing, but neither of these. Both of us are totally fine with this. And how does it manage? Well, that's up to you. You have to pick a profit spot. I mean, I would say if you're talking about ES, you're probably looking for, between 500 and 1,000. So if you're talking to MES, you're probably looking, 50 to 150. That's my call. When you're up that, you'd close it out. Unless you want to hold it for a really long term. Let's go to the next slide. So, I like this one. What are your feelings on buzzwords? I've been watching CNBC a bit, and I swear it sounds like they have to say certain things, including buzzwords. It has me thinking the things they say are disingenuous. So my question to you is, do you ever instruct your on-air talent to use certain buzzwords or say certain things?
Well, going from backwards, no, we don't tell people on our network to say anything or do anything. They're all independent thinkers, although my Lord is always right when you have a different opinion. That is absolute. Buzzwords, I mean, listen, they're exactly what they are. I mean, to me, they're good sound bites for some networks, but they're all bullshit.
I mean, I have no idea. This person asked me, because I've been on CNBC a bunch over the years, they said, have they ever told you what to say? And the funny thing is, first of all, the answer is no. They've never said one thing. They've never told me one thing what to say.
They've told you, like, we're going to talk about a topic. We're going to talk about Netflix.
Well, they tell you the topic, which is totally fine. And
right, of course.
But what's funny is they always ask before that. They ask, "Can you send us a list can you send us a list of questions or ideas that you have, because it'll help us, it'll help us ask you questions." So I always send them a list of questions, and they never use one of them. But they never use one, never ever on any network. But no, they never ever have said, "Please say this or that," or whatever. Never. And we have never done the same thing on this network. I mean, just listen to us. Do you think anybody would do what No, it's never happened. There's no buzzwords. There's no certain things. We are a nothing's off limits network. It should be that way.
Yeah.
Let's go to the next slide. And the last one. This person writes, "I sold a short put spread that is now in the money. Can I sell a short call spread below my put spread to defend this?"
Below would mean deeper in the money?
Yeah, so the put spread's already in the money, and so now it's both sides are in the money. Can they sell a call spread below that?
Listen, you can do whatever you want, but it would be an independent trade. Now, I wouldn't, because you could lose on both trades. Again, the play is over. Sometimes the stock wins. A lot of times people will look to make their money back in that stock. I think we actually had a stock last week that moved exponentially. I forget which one it was. And it didn't have great markets. And I said to you, you know what? It's time to run from here. It's time to go. And you said the same thing. Yeah, I'll get my money someplace else. Like, you don't have to make your money back in that stock. It's not, that's not trading. So to answer your question, no, I wouldn't do anything here. I would defined risk. I'd probably sit in it as it's almost a full loser. Almost maybe good things can happen, like in Netflix today.
Yeah. So Tony's answer is right. So if I sold a short put spread where both sides are in the money, can you sell a short call spread below it? Sure. But you do realize now you can lose full on your put spread, and now you can lose also on your call spread.
Yeah. Right.
So if you're going to sell a call spread, and if you want to sell a call spread against a short put spread, you got to sell it above the short put spread, so that at least if the stock rallies back, you make your money back on the put spread. Otherwise, it doesn't really make much sense to us.
Right.
You got to use the money somewhere else.
Good job out of you, Sadnov. We're going to take a quick 90-second break and come back. Even the S&P is holding steady down 45. We'll be back in 90 seconds. We got more with Kai. A little update, Sadnov. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
It's option jive.
Tomas, that's right. It's time for a little bit of an option jive. We got Kai to bring it to us. What's up, Kai?
Not much. Happy Monday.
Happy Monday. Happy Cinco de Mayo to you, Kai.
What is that? Sorry, I don't speak Spanish.
See that? That's why it's not assimilating to America. You got to learn how to speak Spanish, okay?
A little bit.
It's time for tacos is what it means. Cinco de Mayo.
Okay. 8 a.m. in the morning?
That's right. That's what it means.
I had a breakfast taco this weekend. I got a guy makes the best damn breakfast tacos in Chicago. It's great.
It's Mexico's victory over the Second French Empire in 1862, but we celebrate it here.
Of course we do.
I never had tacos in the morning for some reason.
Breakfast tacos, quite delicious.
You never had a breakfast taco?
I think it's too heavy for me for breakfast.
Oh, let me go on a limb here. You prefer the breakfast of champions that Sosnoff likes, which is 4-day-old sushi.
I never had a sushi for my breakfast either. And by the way, I'm not Japanese.
That's horrible.
For you to think.
Well, what you got for us?
All right, so for last week, pretty much the main theme is the market rallies and the implied volatility decrease everywhere. Most of the assets. So S&P rally another 2.9%, which is pretty significant again. We already recovered 67%, exactly 2/3 from the previous 20% market pullback. So
why is that number significant? 67%?
In less than a month, yes. Do you remember we had?
I'm going to say it's a standard deviation. That's all. I'm just giving you the standard deviation.
Oh, it is. This is pretty fast for a 20% market pullback. So yes. I have some data. It only happened 3 times. And
beautiful. Go to it. I'm sorry to interrupt you.
Good. At least you didn't use the term Fibonacci retracement.
That was my favorite. I started with those technical analysis. I studied the Fibonacci. I just couldn't understand from any perspective. So VIX VIX dropped to below 25 and trading in a very narrow range last week. So this is something we need to watch. Even though we rallied 6%, maybe 6% last week and 2.9%, another 3%. Last week, total more than 10%. Definitely more than 10%. The VIX only dropped to 22. Last week, the VIX trading at between 22 and 25. Very, very narrow range, which means the market nerves still exist. we got to be careful to the downside. So for indices, 3% for SPY. Pretty much the others are very close, from 3% to 3.4%. So everything rallies up. Yeah.
Nice.
Okay.
All right. So next one, the expect move. Again, because the strong rally, the realized move is still larger than the expect move. The expect move 2.5%. Did we just broke like half of that or even more than that on day one on Monday?
Last week, yeah.
They just keep rallying all the way up. So at the end of Friday, the expect move for this Friday is 117, so which is exactly 2%, because the VIX dropped to a 22-23 handle. So let's see. I don't think 2% will hold this week.
So you're saying that
we're already down like a point. Like
I said that to you last week. I'm going to say it to you this week too. I agree with you.
Yeah, 2% is like nothing.
Mm-hmm.
Okay, so next slide. The IVR change. So equity market, bond, euro, gold, the implied volatility drops. The others in crude oil, natural gas, and Bitcoin, they actually increase, especially the crude oil, because crude oil dropped a lot, below 60 already, 58, 57. I didn't check the price this morning. And also natural gas, the price went up, so the implied volatility went up too.
Yeah, crude oil's down 93 cents. It's really made a nice comeback from last night. Natural gas has been, the last couple of days has been really strong.
Mm-hmm. So some major moves from different assets last week. The first one, next slide, definitely the next slide. Definitely the overall market. So S&P already rallied 2/3, exactly 67%. Only 3 occurrences happened before this one that dropped 20% in the past 20 years, and only one of them rallied more than 2/3 in the first 30 days. That's the beginning of 2009. The other 2 occurrences is 2008 and 2020. They actually spend more time to rally up. The mean rally time is 62 days. So roughly 2 months to get back to 2/3 of the total pullback. This is actually pretty significant.
Sadnov, what do you think about that? We're back?
Like I said Friday, I think it's a good opportunity here. Feels like we came too far too quick. Yeah, I think it's a good short.
Okay. Makes sense. Next one is the crude oil. Crude oil back to, we actually dropped below 2022 level. So we came back to the level at 2021. This is definitely below 60 right now. So just try to show some big moves.
No change to pumps. No change to pumps.
No. Probably in Wisconsin, not here.
Yeah, probably.
So the last one is gold. So this is I believe it's a 3-year total return from gold and silver. Compare the performance of gold and silver. Definitely gold outperforms silver. And in past 1 or 2 weeks, both dropped. The price both dropped. Gold actually dropped much faster than the silver. Gold dropped 7.5% and silver dropped roughly 5%, all based on the futures price. But the gold-silver ratio still trades above 100. Pretty much in the past 7 to 9 days, the gold-silver ratio trades between 99 and 100. So very, very tight. If you trade,
not making Tom happy.
How's your spread? It's actually better, right?
Yeah, I mean, it's wrapped around 100, like you said. Today, it's worse.
Yeah, exactly 100. Okay, so next slide. The top 10, top 5, and bottom 5 performance in SPY. The best one, STX, Louvre, Microsoft, Meta. Microsoft had a huge run last week, and PLTR. So bottom 5, MNCI. SMCI has earnings this week. I believe it's Tuesday.
They already announced their earnings?
Oh, so last week.
Yeah.
Yeah, Lilly had earnings last week. Qualcomm had earnings in the last week. This is probably the one you said you couldn't manage it, right? Because it was like up 8 or 9% on that day. Oh, down, sorry. And UNH down 5%. One thing we can notice is that the most of these underlines, which already have the earnings, has low implied volatility rank right now. If you see the one that has 50-60% IVR, they probably have earnings this week or in the next couple of weeks.
Palantir is interesting because it has earnings today after the close. Or tomorrow morning.
Exactly. Yep.
You brought Love to mind. It's right back to $30 where my sister bought it. So, okay, good for you. I like Love.
Okay. Earnings review. So there are many large movers last week. We have Snapchat First Solar move roughly 10%. Microsoft up 8% on that day. Qualcomm up 9%. Lilly and your favorite Fuba. Is that how you pronounce it? Fuba.
Fupa. It's Fupa. You don't speak Spanish. Fupa. It's Fupa.
Fuba. Okay. Down 16%. Did you trade Fuba? What's so funny?
Nothing. Nothing's funny.
Right. I don't know why for that. Okay.
You're doing good. Keep going.
Thank you. I'm hanging there.
Hanging in there.
Yeah. So the overall, we already have 1,400 companies announced the earnings so far. There are like more than 800 companies announced in the last week. Pretty much 1/3 of SPX, the company in the S&P 500, announced earnings last week. So pretty big week last week. Now we only 3 or 4 weeks into the earnings. Pretty much winners and losers are getting very close to 50%, 51 to 49%, and the average return is 0. We have more losers last week for sure.
So funny how that always comes out to be exactly 0.
Yeah, it's interesting. The market just balances itself. This is this week's earnings. We do have the PLTR. We have your favorite brand again, Hims and Hers, today, and Ford. And we have a lot of chips company, AMD. Oh, we have a lot of EV company. Your favorite, Lucid tomorrow after close, and Rivian, ARM, Uber, Shopify. Your favorite Crocs, Tom, and DraftKings. All these Coinbase.
Oh, see that? Good job. I didn't even see that. Ford, which has been kind of slipping these days. You said it has earnings. It has earnings on after the close. You are 100% correct. I did not see that one. Thank you so much for bringing it to my attention. I appreciate it.
Ford.
Ford?
It's
now it's a $10 stock. We usually don't trade it. But still, I mean, other people do. And Hims is another one that I missed, $42. So you added to my list. I appreciate it, Kai.
Yeah, there's not.
So one quick question for you guys.
There's not a lot of Ford.
One quick question. So last month, while the price was decreasing, the Ford has dividend yield more than 10%. Right now, dropped to below 6%. Why is that? A lot of people buy Ford just like a month ago because the yield is 12% dividend. Right now it's 5.8% or so.
Yeah, and the stock really has. I mean, it rallied, but it hasn't rallied enough to change the dividend like that. They must have come up and lowered their dividend or something. I don't really know. I mean, a dividend can change. A dividend percentage can change.
Oh, for sure.
On a big stock move, obviously, but it hasn't had that significant of a move to change the dividend. I don't know. I'd have to research it, Kai, to give you the answer. My guess is that they changed the dividend. That would be my guess.
I don't know. I could check.
Yeah, but I'll check. Thanks, Kai. Appreciate your time. We'll take a quick 90-second break. We'll come back and catch the opening bell right after this. Let's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. We have a minute for you to discuss what you did. You went to see Jack White?
No, that was a couple weeks ago. I did, but I
never mentioned it.
Yes, I did. I went and saw Jack White at Salt Shed. It was great.
You're so cool.
Okay.
He was.
You are cool.
It was a great concert. I haven't seen a lot of great concerts recently. He was great.
He's the man.
Did you have seats or did you stand?
No, I had seats. But this weekend I went and saw comedy. How's that? I'm branching out.
At Bad Coffee?
Yeah, we had a comedy show.
It was sold out. I tried to get tickets. How'd you get tickets?
I knew somebody.
Good job out of you.
They had 8 headline comedians. They were really good. I think the women were funnier than the guys, but they were good.
Shocker.
Yeah,
I know.
So there was no improv because you hate improv. You told Vanetta.
Yeah, I'm not a big improv fan. No, it wasn't improv. This was stand-up.
Sweet.
Yeah, it was good.
Well, Sadnov was set to open here in about 30 seconds or less. Even the S&Ps, there you go, are down 45 on the opening bell, Sadnov. NASDAQ down 180 and change. The Russell down 19 and the Dow down 241. We're sitting steady exactly where we've been for all morning since we've been on the show. Volatility up 40 cents to 23. Sadnov, 23.20 is the high. Let's see some of the movers out of the chute here because I've heard no dings from you, Sadnov. On the downside, you got Netflix only down 35. Sadnov was down 50.55 pre-market. MSTR down $7 and change. Lilly always leads the top of the group, whether it be up or down, is down $7.50. Meta down 5. Tesla down 3.5. Amazon down 3. Big names all to the downside. PDD down 260. ARM down $2 and change. So let's see what's moving to the upside. GLD, obviously, with gold up almost $82 and a half. GLD is up $7.76. That's a big move in GLD. Costco up $2.50. Volatility up, obviously, and then few and far in between to the upside. Sadnov, a little bit of a red opening here across the board, I would imagine, with most of the stocks that you have.
My problem this morning is singular. Singular. It's only gold. And I'm not at all happy about that. And the thing that makes me the most mad is I'm not even sure how to defend my position effectively.
I think the best thing I did was kind of
get out of gold.
Bow my head to gold. It just has too low a monthly implied volatility for the movement.
The expected move every day in gold is greater than every single day. The gold expected move is significantly less. Than what actually happens.
Yeah.
And
90%
of my losses today, 95% are gold.
Wow.
I mean, I don't have anything else.
That's not fun.
No. No, it's not fun.
I'm sorry to say it like that. I didn't mean to.
I gotta look at what stock. PLTR's earnings. So
that's correct. PLTR.
I have a 1 May position there. I have a double ratio spread. I'm trying to figure out not sure where we did this trade, but I got a feeling it's basically a non-event. Right now in PLTR, I have a double ratio spread in May. 98, 94, 147, 152 and a half, which it sounds okay. I'll leave that. And I have the 105, 145. 105, 145. Any thoughts on that? It's a little.
Do you sit for now?
I mean, it's 2 $6 options.
Yeah, you want to buy the guts and sell the wings?
Yeah, just widen it back out.
Okay.
I don't know. What else would you do for earnings? You tell me.
I mean, that's all you can do. I mean, besides wait. I mean, I don't think volatility is going to expand or contract here. It looks like volatility is going to continue to expand.
Yeah, I widened it out a little bit. So
you pay a debit. You pay a debit for that, as we talked about. You're still left with a short strangle that has positive theta decay.
Yeah.
You went from one strangle closer to the money to another strangle that's further out of the money.
Yes. And the only other trade that we've made this morning is we bought some Apple right here, and it really hasn't done anything. And I'm debating on what to do with Apple here. Buy Apple.
I'm thinking.
I don't know. Kind of want to buy a little, but I'm a little reluctant. So let me see.
Apple down $2.31. Ivy rank at 33 is pretty good. But you can see here, Apple's had quite a nice rally over the last couple of days, Sadna.
Oh, what? Apple? No, it got killed on Friday with the earnings.
Apple got killed on Friday, but the previous couple of days, it's had a very nice.
No, it had a really nice rally. Just got killed. I bought it right here at 203.
It's back near the lows for its earnings.
Yeah, I bought it at 203.
Pretty close.
I bought it at 203.16. I just bought stock. I don't usually buy stock, so we'll see. I want to see what it does, and then we'll decide. Looking at our position, we are pretty damn flat. Pretty damn flat deltas, but Microsoft is right back to where it was. Let me see anything else. Big movers, big shakers. Nothing. It's all gold today, Tony. It's all your fault. It's all
just us, Sadnov. We're the only big movers and shakers.
It's all gold. It's all gold's fault. I blame all the gold buyers.
Blame me completely.
Who buys gold? Seriously.
I don't know. You tell me. Frankie Walsh. Even the S&P is down 39, Sadnov. That's the highest they've been. Volatility still up 45 cents.
Seriously. Who buys gold? And And why would you buy gold? All right,
Frankie in the chat.
By the way, crude oil is only down 74 cents now.
You are correct, Sadanoff. Crude oil 57.54. Bonds still down 10 ticks, 114.19. Sadanoff. They're going a little bit lower.
I have not traded a one lot yet today in the bonds. I am inclined to buy them. I have not. All right, I will step up. I'll step up and bid 18.
Look at you.
I'll step up and bid on the bid, just so you know. I'll put an end to the sell-off. Now they're 20 bid. I don't care if I don't get them. But anyway, yeah, I wouldn't exactly.
You don't care if you get them. You don't care if you get them because you're already long bonds, right?
That's right.
At higher prices.
So this opening, just taking a look at my watch list on the opening.
It's pretty red.
Yeah, AMD is up. Boeing's up. UAL, which Vanetta covered this morning, is up.
I guess getting out of Newark or reducing Newark is a good thing.
Yeah, Microsoft's up. Google, but I don't know. Kind of mixed. Not much so far. No real changes to the overnight move. I guess I'm good. I'm good right now. We can move on.
All right. Well, if you're good, I'm good, Sadanoff. So let's take a quick 90-second break and come back. We've got an option jive. Sound good to you?
Yeah.
Sounds good to me. Volatility not contracting. Up 45 cents. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. Listen, there's a lot of things I want to do too.
I'll be the
time last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
Do this every time I'm here.
I just want to know what
Every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Get in the. See you later.
Nick is going to be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man. And I appreciate
Thanks.
you holding on the line to say that to us. So thank you.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
It's option. Jive.
Tomas, we are back, my friend. That's right. It's time for an option jive.
I'm watching.
The S&P is down 48, volatility up 60 cents, giving a little bit of weight to this market side, up to the downside.
Yeah. This is you ugly.
Oh, you had to say that. Now the down move's over.
Down moves over.
Sadnov he ended it. You ended it, Saz. You ended it. That's it.
Hey, I tried. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending your Monday morning of going to be a full week of trading ahead. Let's take a look at our deltas here. Mm-hmm. I don't know. What's your gut say today? Rally back or?
Well, I thought we were going to continue going lower until you said we were ugly, and now we're going to rally. I mean, it's horrible what you just did to us.
Horrible. I'm going to roll down some calls now, so this should be the end of the down move.
That's what I'm thinking. You heard it for everybody, Sadnov. Why'd you do that? I should have just hit the bid here, and I didn't. Unbelievable. Ugh. So bad, Sadnov. So bad.
Well, I'm just gonna hit a few bids here and roll down some calls just to make you feel good about yourself.
Thank you. Appreciate it.
Yeah, let's just take one more look. I think I'm ready. All right, let's do this piece here. And it's a good one. Just roll down these calls. Perfect. Essential risk management for uncertain markets.
For uncertain markets and you.
Let me ask you a question. When is there ever a certain market?
Well, we have certain markets. Like today, the certain market is lower. And some other day, yesterday, we had a certain market that was higher. But we don't have markets that we know are certain for sure that what direction they're going to go in. You're 100% certain on that.
I've always got a kick out of this industry when people write about in financial media, when they write about markets are really uncertain now.
Mm-hmm.
Can you?
Well, I mean, you could say markets are more volatile. There's certainly times when markets are a little bit more volatile. We are above the volatility level right now.
Sure. I just want somebody to send me a text when they're certain. Okay, because I don't like the term uncertain. But essential risk management. Let's take a look. You could say essential risk management for highly volatile markets. That's fair.
Yep.
So far this year, the market's experienced unprecedented high volatility that we haven't seen for many years. With more uncertainty likely emerging in the coming weeks or months, traders need to understand and control some of the most important risks in this market. Let's think about this. What do you think the most important risks are?
What do I think the most important risks are for the market itself?
Yes.
I'm actually going to say low implied volatility is probably the complacency is probably the worst thing for the market. I don't know if it's going to be one of the things they touch on here. I think they're going from the other direction here.
Let's take a look and see where the team's going. Even though the S&P 500 has recovered 66% from the March-April correction low, option traders need to pay attention to the following risks, Mr. Batista: directional risk, correlation risk, buying power and capital usage risk, and, of course, the scariest of all, the tail risk.
Yes.
Let's go to the next slide. We're going to throw a lot of information at you on this piece, so you better buckle down, get your helmet on. It's not too hard, but there's a lot of information here. Each position carries its own directional risk, which is quantified by delta. And we have it right on the platform. And you see, we highlighted here. There's lots of different, we show delta lots of different places. We show you your beta weighted delta on the top of the positions tab, on the top of the platform, no matter what. We also show your ETF delta every time you're making a trade on the trade bar at the bottom of the page. So traders can use more neutral strategies or risk-defined strategies to reduce each position's directional risk. But when you're putting on a trade, it will show you at the bottom of the page the trade delta in that particular stock, and it will show you the ETF adjusted delta, which is the SPY delta for that particular trade. It's a very cool feature. It's only on Tasty. Let's go to the next slide. An effective way to measure a whole portfolio's directional risk is by using the beta-weighted delta. And so if your portfolio is exposed to too many long or short deltas, you may need to make an adjustment according to market conditions and or your directional assumptions. So we show the actual delta, and then we show the beta-weighted delta. And they're in multiple spots on the platform. I don't think there's another platform in the world that focuses as much on beta-weighted delta or ETF delta as does Tasty. We convert all futures to ETF deltas. We convert all ETF deltas into SPY deltas. We give you the big picture view throughout the entire platform. Let's go to the next slide. So you can always see your directional risk. We also want to make everybody aware of and cognizant of their correlation risk. But it's hard for us. We can't really display correlation on the platform. It's not that easy to do. But we make everybody aware through our content, and we also have correlation throughout the platform as well on all our watch lists. So theoretically, a low or non-correlated portfolio can help weather through bad markets since the underlyings don't tend to move in the same direction. We have seen that many assets are moving with each other during the current market turmoil, and diversification becomes more critical now than ever. We have long focused from the beginning of Tasty Trade, Tasty Live until today on having non-correlated underlyings. And with the VIX, the higher the VIX goes, the more important having non-correlated underlyings is. When the VIX is very low, you can be less worried about it, because stocks do the correlation for you. When the VIX is very high, stocks don't correlate. They all move to a correlation of 1. And we showed you kind of right here how tightly correlated everything is when volatility gets high. If you see above 40, we highlighted it in orange. And look how high the correlations are relative to when it's above 20. We're above 20 right now.
Let's go
Let's go to the next slide. So when you see here, this is why balancing a portfolio with low or non-correlated assets, such as bonds and stocks or whatever it is, doesn't really matter, is highly recommended because you can see here that this is the bonds and stocks 3-month rolling correlation, and they go all over the place. And that's a good thing. They don't move together.
Yeah, it is a good thing.
Yeah, the whole key here is that they don't move together. When everything moves together, that's when you have problems. When they don't move together, that's the good thing. Let's go to the next slide. So the next one is your buying power reduction or your capital risk and optimizing. You know, the biggest issue we had on the sell-off in April and the big down move going into early May was, the big sell-off in late March going into early April was that it's very difficult in declining markets for people to allocate enough kind of dry powder or extra cash when you're trying to defend positions that are moving against you. So at the most optimal time to invest aggressively, you're actually playing the most defense because you're losing buying power in other places. So that makes this piece really important. The ideal range for capital allocation in an options portfolio is between 25 and 50% for an average size portfolio. For a bigger portfolio, it's going to be closer to, let's say, 25 or 30. For a smaller portfolio, it's going to be closer to, let's say, 60 to 75%. But in conservative conditions, that's it. Then we have a moderate, which is about 30% more. So that'd be like 37.5% to 65. And then we have aggressive, which is more like another 30% more. So let's call it 50 to 75. Okay, so we have conservative on the board, moderate, 30% higher, aggressive, 30% higher than that. Smaller accounts use more money, larger accounts use less.
Makes sense.
Let's go to the next slide. Also, the buying power reduction of existing positions may increase when they're under pressure. So many traders have experienced the surprising buying power expansion when volatility suddenly pops. If the portfolio is over-allocated during unfavorable market conditions, traders can find it challenging to maintain their desired positions, making it more difficult to defend against losses. Absolutely 100% true. And we just all experienced that in early April. Let's go to the next slide. So here's an example of a portfolio with an iron condor with an 85% pop. And we basically show how portfolio volatility varies. And then we used Monte Carlo simulations to demonstrate the volatility decreases as we reduce capital allocation, providing traders with an effective method to mitigate portfolio risk. So you can see the top line, which is portfolio allocation percentage, and then you can see how much the portfolio volatility drops with the when your allocation goes down. That's all we're saying. It's not
it makes sense.
It's not rocket science. Okay, you allocate less capital, and your portfolio volatility drops accordingly. Let's go to the next slide. Oh, the last one, tail risk. So, tail risk is something that on our platform, we have CBAR, which will show you the kind of anything 5%, something happens when there's a 5% chance. But when you get to real tail risk, which is unquantifiable, like 3 standard deviations, which is 1% or greater than that, it's very hard. So when we start to think about tail risk, does it happen often? No. But when it does happen, you got to experience it again in early April. Multiple standard deviation movements can happen, and they significantly impact portfolio. On average, there's a 5% chance of a move twice as large as expected. And these surprises are usually on the downside. Unfortunately, we've experienced multiple instances of this type of extremely large move in the past 45 days. And you can see here, we posted it on the screen. In the SPY and in the Qs, the mean rate of outliers is just about 5%. And the frequency of back-to-back outliers is 2.5%, 2.75%. That's high. Let's go next slide. So to reduce the likelihood of tail risk, traders can A, reduce the size of your positions. If you email Tony or myself and you say, hey, I'm in trouble, I need help, do you know what the first response you're going to get from us is? Almost always, it's to reduce the size of your position because that takes the pressure off.
You're 100% correct. As a matter of fact, we've answered that the last couple of days live on the show here the same exact way. Reduce size.
The utilize risk-defined strategies rather than undefined ones. Sure, going forward, but that's usually a little too late for helping with existing positions. And then consider longer duration positions. Yes, one of the things that you can do. We typically like to, use that 45-day rule. But if you're in trouble and you want to roll out and down or roll out and up, however direction it is, to reduce your risk, if you roll out in time by like at least a month or 2 months, you can take off as much as 25 to 30% of your risk, and you can also adjust the strikes accordingly. So yeah, there is an opportunity in rolling out in time.
Most definitely. Good. Next. Well, that's the last thought, I believe. Good job out of the team. Good job out of you, Sadnoff. Good job on us. We're right on the time. And you rolled those calls just in time. Even the S&P is down 40. You did buy your bonds, though, Sadnoff. You bought those back at 18. And you bought some Apple, too. What are you doing here, Sadnoff? A little nibble?
I'm going to nibble on some Apple, and I'm waiting for Microsoft to blow its brains out, and then I'm going to sell a little Microsoft.
We'll be back in 90 seconds. We got more Tasty Live after this. What we got coming up next, Sadnoff? That's right, a market measure. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hi, my name's Angeline Ong. I'm the newest member of the IGTV team. Well, I began my career at CNN Financial in London, covering everything from the financial markets to the European trading day. What I'm looking forward to working with IG is to be the best version of myself and to use all the skills that I have and help IG reach out to those clients out there who are, like me, looking to learn and are ambitious and willing to put themselves out there to learn more about a financial instrument they might not have ever used before. My philosophy is, if you're going to play, why don't you play big? Let's not settle. Let's try and learn more and become a real expert in the field that we are trading in. And that's what I hope to bring to IG in its strategy, in its content, and expand that across Asia, the US, and also Europe.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with this market measure. Even the S&P is down 40, Sadnoff. They're back under 23 for the first time since we've been open the last half an hour or so. Even the S&P is down 32.
Yeah. Nice little rally.
Nice little rally. A little sell-off in bonds, down 15 ticks, 114.14. They made a low of 114.11.
Yeah, Apple looks like crap today. Google, Microsoft, and Meta look pretty good.
Apple down 5. You are correct, Sosnoff. Upside help right now. You just mentioned it is Meta. Meta's higher. Reddit is higher also by $1.60. Crowd is up $8.
Yeah. Don't know what to make of any of this.
I don't think we rally all the way back today, Saz. I'm going to put the kibosh on that.
Maybe not. UAL up $3, Uber up $1, UNH up a couple of bucks. Got a lot of stocks higher on my board. Crazy.
We do.
But the problem child still is gold. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. And let's see, what else do we got going on? What do we got going on this week? What's going on this week?
Well,
what do you mean, what's going on?
Any big events, Beth?
you're going out, I believe. Are you sharing that with the public?
No, that's just
okay.
That's a personal thing.
You're coming out, Sosnoff?
I'm coming out. Yes.
Great song.
What world to know?
No, pretty long, normal first week of May.
If I was coming out, just so you know, it'd be a little late.
I agree. It'd be a little
I think
late.
if you're going to come out, you better do it in your 20s or teens. I don't think you want to wait till you're in your late 60s. No.
Understood. Deep conversation right there.
Are you guys ready for Atlanta?
I mean, we're as ready as
Atlanta, I'm coming back, Sosnoff.
What?
Atlanta, I'm coming back. Been a long time since I've been in Atlanta.
And they thank you. I mean, we don't have any I don't know if we've made all our Atlanta, all the plans yet, but the show's ready to go.
May 30th. Doors open at 8. Sosnoff show starts at 9. I'll make sure you're there on time.
We've tested the screens. We feel confident about our content. We're still working on Scott to give us the money. He's got to write a big check for this thing. No,
you got to reserve tickets too. If you want to reserve tickets, go to tastylive.com/events. Reserve your ticket today.
Yeah, we're gonna
free.
We're gonna have a lot of fun at this event. But what the hell? I'm just looking at some different markets. We're gonna have a lot of fun at this event. It is, let's see, May 30th. What is that? We're about 3 weeks away. And no, it's May 5th. We're 3.5.
Today's the 5th, Sosnoff. We're 25 days away. You're close enough.
Yeah, let's call it 4 weeks. Doors open at 8 a.m., okay, which just means that Tony and I will be out there. We can chat it up with anybody about anything. We've got lots of stuff to, just to talk about with everybody.
If you draw out today, Sosnoff, we're exactly the same distance away from 3 weeks and 4 weeks. Don't worry. Amongst friends here, you can say whatever you want.
We are going to cover a lot of topics in a very short period of time at this event. We are going to trade, I think, just about everything. I mean, I don't think. Well, here, let's put it this way: nothing's off limits. I don't know. I don't know that we'll necessarily trade cash crypto or spot FX. By the time we come to this event, we will have launched Spot FX on the platform. I think it's coming out. I think it's coming out either later this week or next week. So that's kind of cool. But we won't trade things like, we're not going to do T-bills. We're not going to do Spot FX probably. We're not going to do spot crypto. But stocks, options, ETF options, index options, 0DT options, futures options, all that's on the table. And there's no,
I love it.
There's no strategy that's off limits. We can do something from a naked option to a pairs trade. If you're going to do a pairs trade today, I know you didn't watch the show last night, so this is a good question for you.
Sure.
I mentioned 4 pairs trades that I liked.
Okay.
What pairs, you didn't hear it, so what pairs trade would you like?
That I think you mentioned or that I would like?
No, don't think what I would mention. What do you like?
If I had intestinal fortitude, I would think the gold-silver trade is probably one of the best trades on the board.
Sell gold.
I don't have the intestinal fortitude.
Yeah, so just to
that
give you
would be the one that I would look.
Just to give you an idea, I like that trade too. And if we were doing the show this morning, if this was Friday morning on May 30th and we were in Atlanta, we would probably be doing the gold-silver ratio right in front of you now because gold's up $80. Oh, it's up $88, and silver's up 28 cents. We'd definitely be doing the gold-silver ratio. That's one of the trades we'd make. One of the other trades we make, which I liked, I mentioned last night, was selling Microsoft, which is up 18 cents, and buying Apple, which is down 5.72. That's the second trade. Another trade that I mentioned, which we don't really do very often, but I thought it would be kind of fun, is to buy crude oil and sell natural gas. But I don't really. That trade scares me a little bit.
I think, it's a Widowmaker type event. I know Widowmaker's nat gas intra-month, but they're two almost independent futures, in my opinion, to each other.
And we are bringing a futures expert with us, and we're bringing so we have questions like this, like about the Widowmaker, we can ask them. And then also, I like buying the Russell here and selling the NASDAQ or the S&Ps. It doesn't matter to me. Those are the ones I talked about last night. So those are all the kind of pairs trades that we would do. If we're doing a futures options trade here, which, again, we're going to make them up the morning we do this, but we'll be prepared. If we're doing a futures options trade here, we may do everything from selling calls in the euro to selling puts in the Japanese yen. We may be doing strangles in crude oil this morning because it's up. We may sell a call spread in gold. These are all great things to watch because you learn from this stuff. And then if we're doing equities this morning, We might sell a put spread in Apple. Maybe we'll sell a put spread in bonds. Maybe we'll sell a naked put in bonds. Maybe we'll sell a naked put in notes. And then maybe we run right over and like sell a call spread in Microsoft. We're going to do a lot of contrarian stuff. And so, or maybe we sell a naked call. Maybe we sell some futures. I have no idea, but we'll do everything. Nothing will be held back. So anyway, if you can make it to Atlanta on May 30th, that's the first show we're going to be doing in the U.S. We won't do another one until July in the U.S. In June, we'll be in London and Milan. We'll do the same show in London at Earth on June 20th. It's Triple Witching, the night of Triple Witching. And the cool thing is the markets closed the day before for Juneteenth. So we're going to have a really weird... So I was thinking about this. How did they do it when the last time to trade, is that going to be Thursday for Friday? Wednesday night for Friday morning? I don't ever remember this happening before.
Meaning because of Juneteenth and the market?
Yeah.
Is it, you're going to make me check a calendar here?
No. Don't check the calendar. Just tell me what you think happens. I think the last time you can trade is Wednesday night for Friday opening.
Because expiration's June 20th. The last time you could, I have to be able to check SPY. Let me do that just to take a look.
Okay. Anyway, it's gonna be a lot of fun.
The last time's gonna be Wednesday, Sadnov. Mm-hmm.
So it's gonna be a lot of fun. It's gonna be a little different, but Tony and I will be in London at Earth June 20th, and we're gonna be doing the show at 6 o'clock at night.
That's gonna, you bring up an interesting point there. That's gonna keep premium bid.
Yeah,
because you're gonna have an extra day of whatever.
Yeah,
but premium's going to be fat the day before the 18th. On the close of the 18th, volatility will not go down, and maybe not for that whole week. I don't know.
Anyway, doors open at 5. The show starts at 6, which is noon here in Chicago. So it'll be the middle of the day. So we'll get plenty of stuff done. And then the following market day, which is the following Monday on June 23rd, we'll be in Milan at a place called Fabrique. And we'll be in Milan, Italy. And if you can make it to either one of those shows, it'd be awesome. If you're in the UK or you're anywhere in the EU, we'd love to see you. We get back to Chicago in July, and we'll be in Denver. The first show we do in Chicago will be the end of July. So it'll be 2 months between May and July. And we'll be at the Summit Theater in Denver. And then we'll be in Chicago, San Francisco, New York, LA, Charlotte, and Austin, Texas. We wrap up the year. And you'll be able to sign up for all those shows coming up soon. Mike and Nikki and Katie, along with Ryan, will be in Washington, D.C., Seattle, Dallas, and San Diego. And then Dr. Jim going out on his own with no help. This scares the living crap out of us here in Chicago, but maybe I can find. He's going to need some help. He doesn't know how to turn the light. He doesn't know how to turn the lights on his own. But Dr. Jim will be in Boston, Massachusetts on July 13th.
I cannot believe who made that executive decision. It must have been JJ, because I know you would not set Dr. Jim up to fail like that.
It was my call. He likes to do the shows himself. And I understand.
I know, but he has to get there by himself. He has to dress himself. He has to get there on time by himself. He has to get breakfast by himself. These are all things he cannot do. He can do the show. I'm not worried about the show. Like, if we could helicopter him in to the show, then it would be perfect. I mean, I'm not worried about the show. Show's going to be great. Dr. Jim's a wonderful speaker. He's just not a good adult.
Boston, Detroit, and Tampa, those are 3 of his stomping grounds. So Dr. Jim's going to be doing his own thing in those cities.
Yes, he's been a fan of every one of those local teams as a local.
Anyway, that's kind of the story, and thanks for humoring us, listening, and hopefully you'll make it out to one of those shows so we can shake hands and say hi and do whatever. Let's do it, Beth. This is a really interesting piece that the research team put together today. And it's funny. When I read over this piece just earlier today, I was thinking, okay, this could be a fun one. And it is. Can strangles bounce back after big drops? What do you think?
Sponsored by the CBOE, by the way. CBO. Sorry. I'm going to have to say yes, Sadnov. I mean, just look at what happened here. But now I'm going to say, if you're being mechanical, it's going to be a much more of a gray area.
Okay, I'm going to make this easier for you because that's not a fair question.
Okay.
If you were to do a strangle in an equity or you do a strangle in an index, which has a greater chance of bouncing back? That's what I meant to say.
Oh, wow. I'm going to have to say the index, Osnoff, just because of the nature of how many stocks are in there. I'm going to have to say that. Now, please don't make me look bad and make this a trick question. And you already saw the answer. You would have answered it exactly the same way I did, and we're going to be wrong.
Let's go to the first slide.
Oh, God, he's slow playing me again. It's Taiwan all over again.
For 45 days to expiration, 16 Delta short SPY strangles, the probability of a turnaround drops to roughly 50% once the P&L has reached negative 50% of the initial credit or lower. That's what our definition of when you're down. So what is the turnaround probability for strangles with different types of underlyings after incurring the same amount of a loss? So once you're down in excess of 50% of the credit that you received, what are the chances of a turnaround? And then are contracts with more extreme P&L swings more or less likely to recover? And as Tony said, he said they're less likely to recover.
Oh, boy.
You can change your answer now.
No, I'm going to stick with what I had.
Okay. All right, let's go to the next slide.
You're amazing. What's your answer?
I already know the answer. We looked at SPY, Qs, Gold, Amazon, Apple, Google for 10 years. 16 Delta short strangles. And we looked when the position had a P&L less than 50% of the initial credit and has a P&L turnaround after incurring a loss. All right, let's go to the next slide. Here we go. So strangles with more volatile underlyings tend to have greater profit potential, but they also tend to have more volatile P&Ls, and they are more likely to have a negative P&L swing larger than 50% of the initial credit. For example, Apple strangles carry the highest large loss risk, while SPY carries the lowest, making the ETFs like SPYs and Qs generally safer than individual stocks. So you were right, Mr. Batista.
Yes.
What's interesting here is that when you look at Apple, Gold, Amazon, QQQ, Google, and SPY, I never would have thought Apple has the most risk.
I wouldn't have either.
Of course, judging from today, I would say it does for sure. But I never would have guessed that. But it's significant compared to others. Apple at 22%, SPY at 13%. That's a pretty big difference. Let's go next slide. So when we analyze the profit rates and loss range, SPY offers the best risk-return profile with high profits, 74%, and the probability of low total losses, 5%, due to broad diversification. Apple demonstrated the riskiest with the highest probability of total loss, 10%, and the lowest profits. Gold showed strong profits with few losses, indicating more decisive outcomes. I have not had that experience in gold recently. But anyway, you can see right here, Apple clearly being the worst of all these stocks. 16 Delta strangle, 45 days to expiration, closed prior to 21. And the probability of having a loss, a total loss, okay, Apple obviously still the worst. Really surprising.
It is, agreed.
Let's go to the next slide. So more volatile underlyings, like individual stocks, also tend to have a lower probability of P&L turnaround after incurring a loss of 50%. This means that strangles are prone to larger negative P&L swings that are prone to larger negative P&L swings are less likely to recover, and generally loss tolerances should be more conservative with more volatile underlyings. Essentially saying there's some stocks that are fairly unlikely to come back, while other ones, they may.
Makes sense. I'm assuming the ones with higher implied volatility.
The ones with higher implied volatility just don't come back as much as the ones with lower implied volatility.
That's correct.
Yep. Let's go to the next slide. It is important to note that this study is focused within the first half of a contract's duration, as opposed to the second half when P&L swings are more dramatic. Holding a contract past 21 DT also gives a strangle more time to recover, so these probabilities will change significantly depending on management strategy. We covered everything in 21 days. Last slide, please. So here are really good takeaways. Strangles with more volatile underlyings, while they tend to deliver larger credits and greater profit potential, also tend to have more volatile P&Ls and larger negative P&L swings. Strangles that are prone to larger negative P&Ls are also less likely to recover and should generally have more conservative loss tolerances. All this totally true. However, you make 2 or 3 times as much money with the stocks that have more volatility. So especially this market, when we could trade stocks with 50 or 75% volatility when the S&P is 25, and you have 2 or 3 times the amount of money to make. So don't be just
don't be pigeonholed into this one study. Sure.
Well, don't be seduced into thinking that I shouldn't trade anything without volatility, because you make a lot more money with volatility, and you can trade smaller.
Sadna, being seduced by you was something I never thought I would hear from my own mouth. But I'm going to think about it. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with, oh, joy, somebody who can seduce me for sure. That's right. Your friend and mine, Mr. Scott Sheridan, really following these messages. Back in 90 seconds. He has a do not resuscitate. We'll be back in 90 seconds. Let's Tasty Live.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for people that don't know Chicago, which is most of you, there's a train that runs in the northwest, and then it goes up to the northern suburbs and runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
You blew stop signs?
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
that's so bad.
Only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt
streets
you.
that go east-west.
I don't go through red light, through stop.
No, just stop signs you go through, not red
You
light.
go through the meters getting on the ramp on the highway. You don't believe in those. You
Oh,
say
no, those are bullshit. You stop at those?
Yeah, it's the law.
You stop at those red lights to get on the highway?
Yeah, it's the law.
Oh my God! You're
It's so that it's because so that
only people that stop
a-holes
at those
like
are
you,
tourists.
It's like a-holes like you,
right?
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic,
Oh my God!
and it's the law.
It's only for tourists.
Beth, I need some help.
It's the same people that sit upstairs at restaurants. It should say that. I've got like 10 tickets.
Don't you notice that the cars around you slowing down? Like, that's what saves me, is like, I'll be up on like Ashland, because there's so many of those things on Ashland, and you notice the traffic around
No, I forgot
you
one on Ashland. I only get them
slows
on
down.
Western and Irving
The
Park.
same phenomenon, Mr. Pedantic. Oh,
Yeah.
God. Bat, how are you? Jeez Louise, you would not last 30 seconds in an improv class because the whole premise of improv is like, instead of just shutting everything down immediately, is to be like, yes, and. So like, you know what? I'm going to agree with what you're saying, and I'm going to add on to this to further this conversation so it doesn't grind to a halt.
You know what's funny? As much as I like comedy, improv, like Second City Improv, doesn't do it for me.
Okay, of course it doesn't. Bat, how are you?
Do you think you could name one Taiwanese food?
Yeah, Thai food, I eat it all the time. You now learned that Thai food is short for Taiwanese food. Taiwan. Yes, look at you, Sas. I'm very proud of you.
And I want to ask our producer, John, something.
Yes.
John, can you help me here just for a quick second? Just because I don't want him to yell at me. John, have you ever had Taiwanese food before?
I've had Thai food, yes.
Taiwanese food is not Thai food.
Where's Thai food from?
Thailand. Thailand and Taiwan are not the same country. They're not even
Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What are you talking about?
Oh, hold on. Oh my God. Here he is. Jason, come here.
All right.
He is our Taiwanese source. When you say Taiwanese source, there's your Taiwanese source.
You're looking at him right here.
You're looking at him.
That's right.
I will take whatever Jason says. I will take it. If I'm wrong, I will apologize.
No,
I said to him, can you name one Taiwanese food? And he started laughing at me, thinking that it was Thai food.
You know, that's a common mistake because the Thai part of Taiwan, people mix it up with Thai as.
Don't defend him.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify this.
No, you're not.
I owe you and your people an apology.
No, you're not. Hey, do you guys, you want to know what we're having for lunch today?
The Velvet Taco.
No, they switched. We're having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Enough out of you. That's right, Tasty Trade World Headquarters, your friend of mine from the Scott Sheridan Studios, Mr. Scott Sheridan. How are you, my friend?
I need the. Woo. I'm good, thank you. How are you? How was the weekend? Tom, how was your weekend?
My weekend?
Yeah.
Pretty good. I didn't really do anything.
Okay. I need your.
Oh, you're so compelling, Sosnoff.
I mean, it was the weather was crap.
It was brutal.
I worked at a coffee shop a lot.
The weather it's terrible.
Seriously, Sosnoff, time out 1 second. He worked a coffee shop. Like, what do they trust you with? A broom?
Oh, no, they don't trust me.
No, I think he's more of a greeter.
No.
I think working the coffee shop.
No, you scare people away. You
No.
kidding me? He got turned down.
There's
at
no
Costco.
way you are behind the counter making drinks.
Oh, no, I'm not allowed to.
Right. Okay, so that's working. So what's the definition of working the coffee shop?
Hey, if they need something, I'll go get it.
Like in the back?
If they need something.
No, like if they run out of milk or something.
Yeah, like
they
that.
must run out of butter every day. Like, Sosnoff, we're out of butter. Sounds like, I just bought 4 pounds yesterday.
Oh, that's how they get rid of. Oh, that's how they get.
I'll go get some.
That's how they get rid of them.
Yeah. Okay, I'll go get some.
I help them out if they need something. Sometimes they need something. They needed some stuff this weekend because they got.
Like the meaning of life or something like that?
It was
or
very
like,
busy. They were slammed. And then I was meeting people there. So I had my meetings there.
In the coffee shop?
Yes.
On the weekends?
Yeah.
So you take up paying customers' seats so that you could have a meeting there. Man, how pretentious are you?
I take all my meetings there now. So
I bet you park right out in front too, right? Like I always said to myself, if I owned an establishment, I'm parking as far away in the lot as I can. I'm not parking up. You probably pull up with your wheels on top of the sidewalk. Am I right?
We have outdoor seating now. I ran over 2 people just to park my car.
Well, where are the seats outside? Please not in the alley.
The alley.
Oh my God. Please tell me no.
We're an alley business.
Okay, I'm sorry. I'm a city person. I'm good with city. I got that. And I'm good with the alley, but you go inside and you don't see all the garbage cans when you go inside. But if you're sitting out there, people are happy to do that?
Yeah, they love it. Got rave reviews.
Yes.
And it was cold.
And wait a minute, and they probably can't say if somebody asked them where they got the coffee, they don't exist. Like the chairs don't exist.
The whole thing is that we now, it's also good for people with dogs.
Can't bring the dogs inside?
Well, we got busted.
Who complained?
Somebody complained twice.
Come on.
The health inspector.
Come on.
2 times? You got busted twice? I told you they were going to come back a second time. You don't give me anything, Sadnov. You never give me anything.
Somebody complained. Do you know who it is?
Scott, he got busted once, and he's like, so what? I'm going to get service best for the dogs, all this other bullcrap. I go, Sosnoff, if somebody busted you the first time, they're out for you. They want to get you. They're going to get you a second time. Don't do anything stupid.
And then?
He did something
Well, if you're a service dog, you just give everybody service dog vests, just throw everybody off.
What do you think we did? We bought service dog vests for everybody.
Did you?
Yeah.
See, that's the answer.
Exactly.
If you want to bring your dog and just put a service dog, and then they don't know if they're really a service dog.
We have a whole basket of service dog vests now.
Love that.
So anybody that wants one.
I love it too because I think it's ridiculous what people do, how they abuse the law. I guess it's the law. It's almost like a red light on an expressway. It's the law. People abuse those things. But I agree with you, Sadnov. It's a silly law. But I told you not to do it the second time. You're going to get caught.
Is it people are afraid of the dogs or they're afraid of hygiene?
No. The guy who complained said he's deathly allergic to. He loves the restaurant.
Got it. He's definitely.
He loves the coffee shop. Deathly allergic to dogs. He's like, and every time I'm in there's tons of dogs.
Speaking of loving the coffee shop, not sure if you've seen this one. You have a new patron. She says it's the best spot in the neighborhood. This is where she wants to do work. Can't name names. Slappy's original ex-wife.
Oh no! Oh no! Oh no! Oh no! Oh no! Oh no! Oh no!
Slappy's original ex-wife.
Original,
because there's the original, and then
it's just number one. Okay, it's number one.
All right, number one. All right,
and number 2 is not allowed back in the country, so I don't think it's a problem.
Slappy has that impact. Okay, Oh, that's bad. Anyway, apparently it's her new hangout.
It was great, but I had a bunch of meetings there, and then I helped them out, pick up some stuff for them. They ran out of everything, got eaten out of house and home.
So we're going to move to a different topic. I need your opinion on this.
Go ahead.
Is it something is weird to me about professional sports right now, where it just seems like they're giving up? Like, did you see any of the Clippers Nuggets game?
Oh no.
It's called basketball.
No, Clippers Nuggets game. I went. We had a comedy show that night.
They benched the starters with like 10 minutes to go in the fourth quarter. They were down by 30 points. It was embarrassing. Yeah. How as a professional athlete can you not show up for Game 7?
Well, I mean, listen, Harden's a great player, but he's lost every Game 7 he's ever played in. Is that amazing? He's lost.
Has he really?
Yeah. He's never shown up for games. He was great this season.
That's bad.
I mean,
I don't know.
They have players that have been great. I mean, Kawhi Leonard's been great in the clutch.
Great.
Not this time.
It's embarrassing. Now, I missed because Slappy really wanted me to watch the hockey game.
You watched that game last night? It was unbelievable.
No, I didn't. But I was Saturday night was the horrible Clippers. Well, great game if you're a Denver fan. But then also the hockey game. So Slappy's like, you got to watch the hockey game. So I put it on. And I'm watching. So
which game was Saturday night?
Colorado.
Oh, yeah.
Dallas.
That was a great game, too.
So Colorado was favored in that game. They're a goal and a half favored in that game.
No way.
Yeah,
in Dallas?
I was looking at the line. I'm like, how is Colorado favored in this game?
You might have looked at the line after the game started. There's no chance they were
I don't think I did. Maybe somebody's watching hockey game. I didn't understand. It didn't make sense to me. I looked again. I think it was anyway. They were winning 2-0 and they lost 4-2. I turned it off. I was kind of watching back and forth.
They were down by 2 goals in the third period. They came back and won.
That's good if you're Dallas. That's really bad if you're Colorado. I mean, giving up 4 goals.
Colorado was not favored in Dallas. Dallas is good. Dallas is really good.
I don't know if we can go back and pull lines, but I'm telling you, I looked at it a couple times. Maybe the game
a goal and a half.
Maybe the game they covered. Nothing.
But there's no chance they were favored. No chance.
All right.
No team. In a game 7, a home team is never going to be a goal and a half.
So we now have the Warriors play Minnesota, right?
That'd be great.
Is that the game?
Yeah.
So it's a 6-7.
Whatever. Ant-Man's covering Steph. They already worked it out. It's going to be great.
Is he?
Yeah.
That's going to be a good series.
Yep.
I'm going for Golden State. I'd like to see Jimmy Butler going. Tony, how about you? I know it's basketball. You don't like basketball.
I mean, I like basketball. I don't enjoy watching basketball. It just don't seem like it's. I don't enjoy. I wouldn't stay up to watch a basketball game. I'd stay up to watch a hockey game.
Did you watch the double overtime?
I did, but
what time that game ended?
I don't know because I fell asleep in the first overtime.
Too late.
Like after 10 o'clock?
Whoa, yeah, probably. All I will tell you was the end of that game was one of the greatest game 7s I've ever seen in my life. They scored 2 goals in the last 2 minutes.
Wow.
And they both were redirected. It's a goal they had no chance. Like it wasn't like they were redirected.
Was telling me that Colorado traded somebody to Dallas. He put up a hat trick.
Yeah, but that's a different game.
Wasn't it? So I know the other one. I'm saying the same thing, but just how hard they're playing. The game last night. So what was the score of that game? 4-3?
4-3.
4-3. All right. Maybe I'll watch as it continues on.
Oh my God. You know what? I can't stand.
I'd rather watch basketball.
I know, but I can't stand like.
Oh, here it comes. Fair weather fans.
Yeah, like it's the same. Like once a year Jews, fair weather fans. Once a year goys.
Tony, which are you? Once you're a Jew or once you're a goy?
No, he's not.
I'm gonna let Tom insert foot on this. I'm not saying anything.
He's not even a once a year. He's not even a once a year goy. But I can't stand people that watch like one hockey game a year and they think they're hockey fans.
No, I'm definitely not going to say I'm a hockey fan.
I'm trying so hard to get tickets for next year.
How hard could it be to get Hawks tickets?
There's a million Hawks tickets on the glass. It's impossible.
Okay. It's not impossible if you're willing to pay for them.
It's impossible.
It is not impossible.
Tony, tell them it's impossible.
I am in the same pool as Sosnoff. We are trying to get tickets.
We have 2 bids.
You're not paying enough. Okay, you pay enough.
They didn't even give you a quote yet, Scott. It's do you want them? And they go, oh, you do want them? Okay, we'll put you on the list. And when
anywhere
it comes
on the
available,
glass or a particular couple seats on the glass?
Anywhere on the glass.
Anywhere on the glass.
Okay.
They're not for sale. You can't get them.
Okay. No,
I'm just telling you. We've already
You can get them. You just have to pay for them. You're not willing to pay what you need to pay to get them.
No. Time out. A year.
We
want to own them.
I thought you said
season
just
tickets.
No, season tickets. Season tickets.
Don't be a Johnny. A one game, 2 games.
Yeah, of course you can buy a game.
Right.
Trying to buy season tickets.
From the Hawks.
Yeah.
Well, my guess is anybody that has them, they just sell them to a scalper and they don't give them up.
They never give them up.
Right.
I know. We're trying. We got 2
How many
bids.
games could you possibly go to?
Well, you're going to go to 5.
Doesn't matter.
I'm going to go to 5. We're all going to take 5 or 6 games. We'll split them up.
How many games in
40. They're 41.
82. So it's basketball.
It's the same as basketball. You'd go to 5 games on the glass. It's great. It's great. It's great. You'd go. It's really good.
But they're still going to be in their rebuilding phase?
Doesn't matter. It's really good. Can't get them. Doesn't matter. We tried.
It doesn't matter. He's right.
You want second row? You can have 50 seats.
Is it that much better on the glass?
Yes.
It's like at Bulls front row versus the second row. I get it. Not the same thing.
No.
I get it. All right.
And they got bottle service for Sosnoff because, in his later
bottle
years,
service, restaurants.
Kicking them back.
It's nice.
Don't they do that for the second row? It's just the first row.
Yeah, it's just the first row.
Plus, Sosnoff wants to show his shirt and stuff like that, to the players.
See, that's why they won't give them the tickets. Nobody
pressed up against the glass for sure.
Nobody wants to see that, so they're like, "Sorry, sir, you can't have the tickets." See, now
you're kind.
Now this makes sense.
I've always wanted to do that, Tony. You caught me.
I'm going to sell that.
I did too, in fairness. I give you the same.
I'm going to sell that. That never has entered your mind.
Never once.
Okay. Let me see if I get my belly and my chest.
I have never wanted to, regardless of the condition of my body, ever wanted to go to a football game and take my shirt off. Ever. Under any circumstances. Never.
There were people, talk about taking your shirt off. There were people in Lake Michigan on Friday. I just looked up. It's 42 degrees, and it was blowing. It was like in the 30s, and they're in bathing suits. It's just standing in the lake.
But what do you mean they're in Lake Michigan?
At Oak Street Beach, just standing in the lake, up to their waist.
In the water.
In bathing suits, no shirt on. Just standing.
It's a cold plunge.
Just standing, having a conversation. It wasn't like they dove in and then ran out and got blankets and threw them on. They were just standing there having a conversation.
It's crazy.
You got a blanket? You mean like a towel?
It's a what?
A towel?
Like whatever. I mean, if you go in that temperature, you better have more
unless it's 90.
You better have more than a towel when you get out of there.
I can't go into Lake Michigan in the middle of the summer when it's 100 degrees out. It's still cold.
Still cold. I mean, I think at best it gets up to the upper 60s, maybe low 70s, maybe, but it's probably upper 60s.
Freezing, no matter what.
Freezing.
I won't go in anything.
Sosnoff, my Taiwanese sources are confirming Colorado was favored over Dallas 100%. The money line was 140 over Dallas in Game 7. Mr. Sheridan with the win.
There's no way they were goal and a half favored.
Okay, my friend takes Venmo. He's willing to make a bet with you for $100.
You're telling me in a Game 7?
I'm telling you, I saw this.
Colorado was favored. I doubt it.
Okay, now you doubt it, but you're not betting anymore, right?
But they're not a goal and a half favorite, that's for sure. But 140, if you said 120, I'd be like, all right, maybe one each way.
He's hedging
I
already.
said 140. Do I stutter?
I don't think that's right.
And
just
Mr.
so you know.
Sheridan was right. Give him his props.
Yeah, I don't think he's.
I stand corrected. I'm sorry.
I don't think he's right.
Wow, Scott, it's tough. It must be the seat.
It's a rough room.
I'm just saying, at home, Game 7, it's got to be a one. No.
Could you please ask your Taiwanese source to send a screenshot of that so we can send it to Tom? We could show him here.
I'm almost willing to bet that there's, and I don't want to say this never, but I'm willing to bet like 99%, 98% of all Game 7s, the home team's favorite.
I would think that's correct, but I'm telling you they weren't.
Yeah, I don't think so.
Okay.
I need to talk to somebody who's an actual fan. Not him and his. I mean, have you ever seen his?
How good is your Taiwanese source?
Their Taiwanese sources are the worst possible.
although this one's named Jim, so it could be hard. I don't know. They always just use the name.
Have you ever seen his Taiwanese sources?
No. Do I want to?
No.
Okay.
No.
My Taiwanese sources are from Thai food.
Most of his Taiwanese.
Oh, you'll be happy to know you're missing 5 Rabanitos today. I would have made you a plate, though.
I know. I heard.
It's a good call on Cinco de Mayo.
It is a good call.
Sadnov walked in today and go, why are we having tacos on Monday?
Oh, do we get to wish birthdays? Both turned 5 yesterday, speaking of which, so there we go. My dog turned 5.
Oh, happy birthday, Bull.
Oh, Dallas.
Oh, happy birthday.
Dallas top scorer and top defenseman were out. That's why Colorado, might have been a small favorite. But I had to wait to hear it from somebody that actually understands hockey.
Oh, boy.
Or because I don't know how to read a screen when it says that.
Well, they weren't 1.5 goal favorites, that's for sure.
Okay.
I'm sorry.
Wow.
Well, in hockey, how would you ever do? What does a half a goal do? They don't have any ties. So what does a half a goal do? If you're favored, it's 1.5.
They're not one.
Well, they're not going to give you a push. So if you are favored, it has to be. How else could it? How can it be anything other than 1.5?
What if it's 1?
It can't be because then you could push. They don't want to push. So if you're favored,
hey Scott, You want a fresh one?
Okay, am I missing something here? If your favorite in hockey, it has to be 1.5. Oh, I might have them on this one.
Why can't it be a push?
Because they don't want to push. They're never playing for a push. It's a hook.
Every line in hockey is 1.5. Come on, Tom. Be smart.
I don't
about
bet
this.
hockey, but
I don't bet hockey
I know,
either.
but I mean, the man just gave you a logical reason why. Run with it. Like you.
I'm listening to the two of you.
Here it comes.
Two of you.
Now we're somehow going to be dragged through the mud because we're using logic. Don't it, Tony?
Oh my God, I'm getting the emails now. If I agree with you, we'd both be wrong.
Right? Oh, tell Daniel I said hello. Right?
Yeah, it's Daniel.
For sure. All right. Can we go to some business? Let's take the heat off of Tom because he's crumbling right now. It's only Monday. All right. Top 15 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. Tom, for you, number 15, IBIT at a 29. For everybody else, Tesla to 31, PLTR to 63. Apple to 37, GLD to 62, NVIDIA at a 33, Netflix at a 28, Amazon at a 28, AMD to 39, Meta at a 24, BRK/B at a 41, Microsoft at a 21, MSTR to 21, TQQQ at a 37, TLT at a 43, and number 15 for Tom, IBIT at a 29, rounding out the next 10, Nike at a 48, HIMS at a 67, AAL at a 41, UNH at a 56, and SQQQ at a 40. Oh boy.
What do you have to say about that?
Tom wasn't paying attention, but he's emailing somebody, and now he's smiling. So I can only imagine.
No.
I can only imagine what this exchange is.
I mean, most hockey lines are money lines.
I got the screenshot of the game,
and
it pains me to say that I might have been wrong.
I might have been wrong. Do you see him? I mean, what a narcissist. I mean, honest to God.
Pains me.
It's not that Scott was right. Okay?
No.
It was that Tom may have been wrong. I'll actually take that. Hold on. There we go. Take that.
The Avalanche were minus 1.5 because that's the only line they make in hockey. I didn't realize that. And they were minus 165. The Stars were plus 140.
I don't know about you, Tony.
My Taiwanese sources have just come up with the bow on this whole conversation. We found yet another thing that the great Tom Sadnoff is an expert at, yet has never done. Hockey odds and betting. This is good. This is good.
I don't bet on hockey.
My day, week, and possibly month have just been made.
I have never bet on a hockey game.
My work here is done.
I don't think I've ever bet on a hockey game either.
I bet on the Blackhawks to beat Philadelphia Flyers.
That's true, we did, because I had to unfold all the dollar bills.
Yeah, so I won $1,000.
We split it.
Oh, we did?
Yeah, and I had to pay my kids to help unfold because the losers went and got dollar bills and crushed them all up and threw them in a box. So, yeah.
Anyway, that was 2008, 2009?
No, didn't they win in 10, 13, 16? 10, 14?
Oh, 2010, right.
10? Yeah. I think they won 10, 13, 16, or 10, 14, 16. That was a good run. Did we lose Mr. Batista?
No. I'm still here. I'm just amazing that Sadnov didn't deny that he was wrong, even though they had pictures. I mean, my father, Bill Caddy, said, deny with pictures. Sadnov, you can deny with pictures.
I got a picture right here. I can't deny it. Somebody sent me, who is this? Dave just sent me a
Dave, thank you. I appreciate the help on air, especially because he's squirming right now.
Yeah, Dave, he took me
Thanks,
down.
Dave. Appreciate it.
He sent me the actual screenshot. So, all right, I'll give it to you.
All right, thank you. Beautiful. Hey, Tony and Beth.
Yes, sir.
Friends and Neighbors. I know you don't like my recommendations. Beth, this is more up your alley. Friends and Neighbors with John Hamm.
It's great. I love it.
Oh, you do watch it?
I love it.
Oh, I didn't think that was your show because every time I give you a recommendation, it's just the bad ones you tell me that you don't like.
How about Mobland? Have you watched that?
No, I think we saw one episode. I want to go back to it. We started The new Steve Carell. It's a little.
Oh, that.
I haven't watched that one.
Is that Black Mirror? Or, is that Steve Carell? No. 4 Seasons. It's the 4 Seasons is what it's called.
All on my list, Scott.
Yeah, the 4 Seasons. We watched 2 episodes.
Mom?
Jury's still out on that one for me.
You got to get into Mobland. Give it 2 or 3 episodes. It's great.
Which one?
Mobland.
How's your TV doing, Tom?
I don't watch.
Oh, you're gonna put Tom into the
I
conversation?
only watch sports. I stopped watching TV.
He's got other things to do like TikTok.
I got other things in my life that are more important.
TikTok.
His TV doesn't work. That's what it comes
I have a
down
TV
to.
that works.
Where is it?
It's not in the bedroom where you eat.
Yeah, there's no way. Where's your TV that works?
Big screen.
In the No, it does not.
It does.
In the living room?
Yeah.
No, sold.
Oh my God.
Sold.
How do you think I watch hockey?
On your phone, maybe.
Yes.
Maybe.
Your iPad.
Right. You probably just watch TikTok. You just get what just happened. You got to go to TikTok and get the updates.
Hey, Tom, he brought muffins today.
What? No, I brought corn muffins.
Oh.
You made corn muffins?
No, I bought them at Costco.
Hey, Saz, can I butter your muffin for you?
Of all the things to buy at Costco, corn muffins?
They're great.
They're corn muffins.
Great. Not even good. They're great.
All right.
Yeah.
But are you selling them at Bad Coffee now? Repackaging them?
No.
All right. I mean, you could have brought a chocolate cake. They have some nice cheesecakes. Oh, Tony, by the way, Dan needed me to ask you to confirm that Italian cheesecake's very different than New York cheesecake.
Yeah, sure. It's ricotta.
100%. It's ricotta cheese and not your cream cheese that you Medigans use.
All right. So you gave me the place over on 1st or 2nd that I got to go to.
Oh, yeah. The famous place. It's
like for down on the Lower East Side.
Yeah, Lower East Side on 1st or 2nd Avenue. We got it sent. One of our viewers sent us.
It's much lighter, better tasting.
It's not sweet. It's great. And you got to go to the place. It's called Joe Mama will know for sure. I'll ask him.
Daniel will know because he sent it to me. So he.
Anyway, we've had cheesecake from there sent to us. It is unbelievable.
Okay, then I'll put it on my list. I'll go.
Oh,
here it comes. Still your pay grade. You're not going to really understand.
No, it's not you. It's not that.
A guy like you is not going to appreciate
I just think a guy like you is not going to appreciate it because it's so good. It's really the best I've ever had.
I knew that.
But it's Italian cheesecake, yeah.
All right. Isn't a cannoli? Ricotta, what's in a cannoli?
Oh my God, I can't handle it.
What's in a cannoli?
What's in a cannoli?
Yeah.
Well, it's like a sweet.
But it's not
cream. It's like
is that mascarpone?
No, it's completely different.
Mascarpone.
It's something different. Like a sweet cheese or whatever.
Yeah. I'm not naming names, but somebody who's coming back today after not having been here in a while. If you ever need to get her on your good side, bring her cannoli. She's all in.
Oh,
cannolis! I go for.
She's all in on a cannoli.
Cannolis, I go to Bari. I mean, I go to not Bari.
Tomatoes.
Their cannolis are really good.
They're good. I mean, I'm not whatever. It's not.
They make chocolate cannolis, which I like.
All right. Tony, there we go.
Remember that night we were in Boston, Tony, and we went to that cannoli place, that famous cannoli place. We got a dozen cannolis. They have the craziest kind of cannolis. Like
the two of you ate a dozen cannolis?
No, Jenny was there.
No, Sadnov had 10. I had 2.
Wait, Jenny, what are you going to say? Jenny had 6? Jenny, I'm defending you right now. Okay, best Jenny had a half.
Jenny was she loves to put the cannoli down. She does.
It was me, Tony, and Jenny. We were in a suite watching a boxing match, eating a box of cannolis.
Watching a boxing match that we pirated into.
We had to get the cable to work, and eating a box of cannolis from that famous. What's the name of that place in Boston?
Making ourselves sick.
They have a famous cannoli shop. Like I forgot the name. It's famous. There's a line around the block, and they have like 100 cannolis. And you go in there, we ordered a dozen or something. And we sit in
Mike's Pastry.
Mike's, yeah. And we sat there with a box of these cannolis, like every kind imaginable. We're taking one bite off the end going, oh, this is pretty good. And I'm biting.
Tip. Sadnov was eating just the tip of the cannoli.
I'm eating one side, he's eating the other side. And Jenny's throwing up, looking at us. Going, what's wrong with you guys? What?
2 strikes for Anthony.
Sorry, man. Sorry.
Yeah, I was going to say, I'm surprised we get Omaha on there. That's way more than 2 strikes. That would be, I think I'd put him in the penalty box for the week after that
She was too busy jonesing over the cannoli. That's why.
All right, fair enough.
There we go. We're done.
All right, let's take a quick 90-second break and come back. We got more Tasty Live after this with the cannoli eater herself, Jenny. We'll be back in 90 seconds. It's the Tasty Live. Liz and Jenny.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on, take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette. In a beautiful mint green top is Miss Jenny Andrews. How you doing, Jenny?
I'm great, Liz. I'm great. I'm actually very happy. I just had, my hobby now is watching the birds. I just had a cardinal and an oriole in the feeder at the same time. The orioles are passing through on their way up north, I guess. They come through briefly.
This is for all you people in the chat. She's turning into Al Welby. He was an avid bird watcher from the SIBO floor. He was in the OEX pit, was he? Or SPX pit?
I think he was OEX, Al Welby. And he was it Al Welby or Al Wibberall? Al Welby.
Al Welby.
But he was serious. Like he knew every bird. He had binoculars. He would go on trips like down South America bird watching.
He would take his binoculars out by the horse and look for birds.
But
I was like, what are you doing, Al?
I just watch out my window and try to. Everyone in my neighborhood is very excited because it's a very brief moment in time that the orioles are passing through.
Oh, okay. I'm going to call you Al for the rest of the show today. Good job.
Hey, if you go in our town town Facebook page, every post is like, "Has anyone seen the orioles? Has anyone seen the orioles?" Everybody's waiting for them.
They're here. How was your weekend?
Honestly, it was like pretty relaxing. I literally, my daughter wanted to go shopping. I literally shopped till I dropped. By the end, I had so many bags I was carrying, my fingers turned purple. That's how many bags I had.
That is the sign of a good shopping trip, Jenny Andrews.
What about you, Liz? I saw you won a trophy.
Oh my God, I got to show you this. This is the funniest thing ever. So yeah, I officially have a 17-year-old. She was very, very busy, but we did get to celebrate with her a little bit. She had rehearsals all day. So while she was gone, I wasn't ignoring her on her birthday, but while she was gone on her birthday, if we could share the screen, John, I'm going to jump into Twitter. So it was her birthday, but she had rehearsals the entire time. There was a baseball fundraiser that I went to with a bunch of people, and I won the best dressed award and a giant bottle of bourbon.
Congratulations, no doubt. When I got that, I was out with some people, and I showed them. I said, "Look at what Liz won, best dressed," and no one was surprised. No one. They said, "Of course, it makes total sense that she would be the best dressed at the Lamont baseball fundraiser."
Well, it was hysterical. So everybody came in with all their stuff on, but I'm not a baseball mom. But I will tell you, I do stick out like a sore thumb. This hat was aggressive. And when I say aggressive, I mean the understatement of the year. But it wasn't mine. I was a last minute add to this because I didn't know what we were doing for my daughter's birthday. So I texted a friend saying, "Do you have any extra derby hats?" She just sent me colors. I was like, send the green over. So my son went and picked up the green hat. I mean, Jenny, when I say this hat stood up 3 feet on top of my head, so I'm 5'10" as it is. Okay. And then I have a hat that stands up 3 feet higher than everybody else in the bar.
Oh my gosh, that's awesome. So was it was like a derby themed party? Everyone had to wear a hat?
Yeah, everybody wore like sundresses and hats, and it was fun. It was a good time. Now the woman behind me looks like she's dressed normal, but everybody else was.
Well, I was gonna say, so Lily and I were out shopping, and you kept telling us like, "Oh, come to the fundraiser, We would have come. Like two mopes coming from our shopping day. We wouldn't have been ready. We wouldn't have been ready dressed for the derby party.
So, what's funny is like, that's why I'm so aggressively dressed, because I wasn't prepared until like 10 minutes before. I mean, that's my standard jumpsuit that I wear everywhere. That's why I went with the green hat. So I was like, oh, okay, hat. And when I got it, I was like, now I'm committed. I got to wear this.
I love it. Where are you going to keep that trophy?
Oh, I gotta put, you know what? I'm gonna put it on the desk behind me. Right now, it's on my dining room counter because to say that I was confused was the understatement of the year. So my husband and I, not baseball people, they're like, the guy comes up, he's like, excuse me, are you Liz Deerking? I was like, I am. He's like, you're about to win the best dressed award. Can you follow me? I was like, sure. So I go behind the bar. The guy's announcing it with a microphone. I was like, if I win, can I say a few words? And he's like, yes. So I grabbed the microphone and my husband looks over and he goes, oh no. He's like, she won an award and now she's got a microphone. This isn't going to end well.
So funny. So funny.
Yeah, it was a good time.
Looks like it. Looks like it.
It was fun. It was a lot of fun. But you know what else is a lot of fun, Jenny Andrews? And I do want to go beneath to tweets, but I just want to address this. Bob on Fire. We love it. This is what's a lot of fun too. We've got another big week of earnings.
Yes. Look at all those earnings. Palantir, HIMS. I forgot what O is, Overstock or something. Celsius, Datadog.
Yeah.
We got a lot. There's quite a few earnings. And we have a tweet asking about earnings double diagonals. So we can we've got lots of choices to look at double diagonals or diagonals for earnings.
Yeah, I'm going to go back to, here we go.
I think you've gone too far.
No, but I love this. So we were talking about the Steve Jones just posted that too, and that was something that I think that we did from the recap the other day, which is great. Okay, so then Frank the Great comes in with all of our economic calendars for the day, which is wonderful.
Frank, thinking about you. Hope your wife is back home and on the mend.
I know. I can't even believe the visual that he sent us of my leg. It's out of control.
Oh, okay, what's crazy? Now with Jack Tucker, we've got all these people doing the Jack Tucker. All these people following the trend.
Yes, Jack Tucker is a trendsetter. He's a trendsetter. I want to be Jack Tucker when I grow up. So there we go. But this is a new tweeter, I think. Iron Condor for the day collected 520 and looking to close for 310. Okay.
Nice.
Yeah, there you go. Okay, so Jack Tucker-esque. I like it. GTC Iron Condor. I want to see how wide they went. So they went, they're doing $100 wide. Isn't that right?
Oh, really? No.
Look at this. 55.90, 56.90.
Oh, the $100 wide on their shorts. Their shorts.
Yes.
So they put it in right on the open. They're in right on the open. You can see 6:30 a.m. So it must be 8:30, right? Right on the open.
Yeah.
And so that's right on the open. But their shorts are 90.65, so 30. So their shorts aren't that wide. The distance between their shorts are $100 wide.
I know. I can't wrap my brain around that.
Well, at 8:30.
You know what I'm saying? 55.90, 56.90.
Go back to that for a second. Is it the 0 DTE? Maybe it's not the 0 DTE.
Whoops, sorry. It is the 0, but maybe they've had it in for a while.
0 DTE, Iron Condor to open. You see sell to open, buy to open. They got filled at 520. So 55.90, 56.90. Yeah. And $25 wide.
That's not bad.
Wide. That's not bad.
The reason I was confused is congratulations on your film. Mine was not nearly as good as that.
But that was right at 8:30. I mean, you could see.
Yeah.
8:31.
8:31. And she's just translating 6:31 because we know they're in a different time zone. So that's good. Thank you very much, Permable. Love the handle, by the way, too. Okay. Now, last margin call. I hope you had a wonderful weekend. My question is, when structuring a double diagonal, especially during earnings season, are you targeting a sub 25 to 30 delta for your front expiry? Are you entering the trade already wanting to ride the back week month beyond front expiration? Okay, there's a lot to unpack there.
But we'll spend a chunk of the show today looking at earnings diagonals, talking about diagonals or durational diagonals. It could be a whole show dedicated to diagonals, Liz.
And we'll answer this question when we look at this. Are you entering the trade already wanting to ride the back week month strikes beyond front expiration? So we'll go into all that, right? Okay, and then here, they did another tranche, right? Permable?
Or is that closed? Closed for 310. Yeah.
Oh, good.
Closed it. Good. Nice.
Excellent. Okay, then we've got Eric, gorgeous day, already closed a 2 lot and working a 4 lot with 40% GTC and another pending 4 lot for some mini tranches. Everyone is inspired by Jack Tucker.
Look at all the SPX Iron Condor people.
Yeah, it's crazy. So we'll do that. I want to get into the earnings plays as well.
Okay. Mikey, morning. Happy Monday, ladies. Congratulations on the trophy, Liz. $100 in my pocket in SPX. You know what to do. So $100 already. So look at all these people who the SPX has been working out for so quickly. It's only 10 o'clock in the morning. We've got lots of winners already.
So I love what he does because he's got it butterflied off and then he's got a chance. So he's got $100, but there's a chance. So you're saying there's a chance of more. And I already did the blank for him, Ricky. I'll do it again. I like it. I like it a lot.
Yeah. Okay. So a big earnings today. Palantir is one that you have always been in. Palantir is something I've gotten questions from a couple people asking me, what should they do with their Palantir positions over earnings? Let's take a look. We do not have a position in Palantir.
So I just want to see, I'm pretty sure we have been waiting, sit patiently for Palantir's earnings. Oh no, hold on, PLTR. Yeah, we got out last week thinking we would wait on earnings, right? So we put bought back. Okay. Now, I will tell you, I have, and I'm going to pull up my strikes right now, so I'm not lying to you. I have a Palantir diagonal on right now. I just because I've been in it, and here are my strikes. My strikes are the short the 140. Oh, it's almost going to be right there. Yeah, and long the 122.
Okay, so here, when I'm looking at this, 122 to 140, you've got $18. It's $18 wide. And you're only paying $7.35 for it. So that's not bad. In my mind, you've got a lot of profit potential there. I know the 11-day has $8.75 in decay, but that's over 11 days. And you could see you got quite a bit from your short. I think almost $3. So that's
I did think it was $3. Now this trade is up $120 already. If I was setting this up now, I would probably still sell that same short, but buy. Oh, I'm sorry. I was like, why is it a credit? Yeah. But buy the 124. Just because.
So it's a little bit cheaper, a little less risk.
Yeah, and I mean that's how I set them up is I'm going to sell the let's just clear this out just for fun. So if you were going to do it fresh set of eyes, you sell at the expected move, which is still the 140. I mean you can do the 140, the 141, however you want to. And then you go right to the at the monies, and because you want to make it a little cheaper, I'm just going to pick the one that's just out of the money, right?
And then you got to buy it.
I keep putting it in backwards. There we go.
Hey, it's Monday. It's Monday. Yeah. You're still on your best dressed high.
I'm still in a high.
And it's Cinco de Mayo. The margarita started early.
Yeah, I've already been drinking.
You had the best dressed on Saturday. Yesterday was May the 4th be with you. Today is Cinco de Mayo. It's like it's a blur. Today's
the party never stops. Okay. So this is something that I have because I want to be bullish on Palantir. Now, Palantir is something that I like to have in my account. Take a look at this. This is something that has gone it did have a blip, but pretty much has been straight up for a while. I had this in for a friend of my son's, Paul, who really liked it at like about $8. So I've been very, very small in Palantir, but I've been riding this wave. So I'm going to keep the bullish diagonal, but I know our question was, what about a double diagonal?
Can you do me a favor, though, and pop out the side? Pop out the side and go to the company overview.
Sure.
This is something I've actually been looking at lately. At the top, overview.
Sorry, overview, yeah.
Overview and click the arrow down. I have actually been this year recently since the move. I've been looking more at like PE ratio and using that as a factor when I'm deciding, like, if I want to put on a bullish trade through earnings or just wait for earnings and get in after.
I have not. So what do you?
I have.
What's your economic assessment on this, economist? What would you be doing with this PE ratio?
I'm going to wait on Palantir. I'll wait till after earnings.
Why? Where?
Because it's too big. 657. I don't know. Me personally, it's just something I've been looking at.
What's your level? What level are you looking for?
30 and under.
30 and under.
Yeah.
Give me something with a PE ratio with 30 and under.
Like what did we just get into? I mean, almost everything we traded last week.
Well, give me an example. I'm just going to pop it in so we can like show what you're talking about.
Oh, okay. I mean, just go to like IBM or Apple or go anything really.
So Apple's got a 30. Okay.
Yeah.
So why is 30 your level?
Well, I just am not like it's just something I've been doing. You don't have to worry about it. It's just something I've been using and looking at before I get into.
No, I know. But on this show, I like to know what you're doing and what you're up to. I'd like to get into that little brain of yours. So what possessed you to go price PE ratio and why 30?
I just want to see if these, in my mind, the world we've been in, if things seem like Palantir, which has been up, is that justified? Is that move justified? I decided I'm going to wait and get in after earnings and not take that earnings risk on something like that. Certain products.
On something with a high PE ratio.
Yes. Meaning they're priced for like massive growth. They're priced for massive growth and they've already had massive growth. So I'm just going to wait and let earnings shake out and then get in.
I'm trying to think.
It's just been one of my, when I'm getting in on earnings, it's just been one of those things I've been looking at.
What's the one that Bitcoin?
That's it. MSTR.
Doesn't have a PE ratio. Weird.
Okay. So I just on something that's had such a crazy rally. Take a look at Marvell, because that's also something that, okay, and pop out the side there. That one is, it doesn't have it listed here. It doesn't have it listed here.
I know a lot. I mean, the PE ratio is something I've never looked at when putting an options trade on.
Well, and usually in companies, when you see their earnings per share are negative, they're going to have a high one, right? Because they're just like new growth companies. But it's just, if it's like super high, I've been just waiting till after.
This isn't a new company.
No, Marvell's not. And they still have negative earnings. And that's what surprised me with DraftKings, that DraftKings is, when are DraftKings earnings? Because it's surprising me that they're still negative.
I don't know when you turned into an economist. When did you start looking at the earnings per share?
Just lately, I've been just keeping more of an eye on it.
You're going back to your econ roots. This isn't something I've ever looked at for an options trade. I think maybe if you're looking for long term, if you're looking to do something longer term, it's good to look at. I don't know that it has anything, because we always say the earnings, and I'm just playing devil's advocate, Jenny. I mean, because I love your economy. I love economist Jenny, and that's what I'm going to call you for the rest of the day. But but to be fair, the earnings are the wild, wild west. Even if you have the news in front of you, even if they give you the earnings report, you don't know which direction the stock's going to go. Even with the earnings per share, I do think it's something to look at if you wanted a longer term position, for sure. But the earnings are kind of like the wild, wild west.
And so, new Jenny, when I sell puts in something, when I sell puts, what do I ask myself? Are you willing to get long 100 shares of this stock at your put strike minus your credit? And so for me, if I'm selling naked puts in something, I have to be willing to get long it at my put strike. And that's something that I'm using to help decide, am I willing to get long this at my put strike if I'm selling naked puts? I have shied away from diagonals. I don't have really any diagonals on right. Maybe I have one diagonal on right now. Right now, my portfolio is more just short puts.
I would agree. Mine is as well, with the exception of PLTR, because it's diagonal that when you look at it from this perspective, and we want to get into this for earnings. I want to answer the double diagonal question, because what you can do with diagonals is the ratchet. I mean, without for lack of a better term, if you have a diagonal on, you can follow it up, and that's what I've been doing. So, but that's one that I've stayed with. A lot of them I've kind of given up on, and I know we've talked about this before. For earnings last season, we had a lot of diagonals on, and now we kind of gave up on. You know what I mean?
Right. So we went through the bullish diagonal. Really, what we're looking for when we're setting up a diagonal is paying less than 50% the width. So if you're going to look at it to the downside, same thing, you'd go to the expected move, sell that and you're only getting, at the expected move, you're only getting $2 on the put, you're getting $3 on the call.
There's a lot of call skew here.
Yes, there definitely is. But you're paying about the same price, but it's not as wide, right? You've got 107, 117, so $16 wide to the downside.
$16 wide to the outside, you're still paying less than 50%, and that's what we're looking for. I will say it is easier to get less than 50% on a Monday of earnings than it will be on as you get farther along. Say you're on Thursday, you're like, wait, why is it almost 50%? Because you don't have time on your side with the one you're buying.
Because you're you've got 5 days in addition to the earnings move. You've got 5 days priced into that weekly option. So either one, they're not that bad. Now, what I would like, how I'm looking at diagonals, what I would say with these with earnings is they're a 50-50 bet, right? What you're paying is your risk in the trade. So if you're paying $600 with a chance of making $1,000, if it goes up, it's expected to move. It's a 50-50 bet. And if it goes the other way, you could be out your full 600. That's how.
If it goes the other way, you are out your full 600. I will tell you, the one thing that I do to thwart it, now I'm in the 11 day because it's kind of expensive. The one thing you can do to thwart being out all of it is move it out a couple weeks. If it's something you're long-term bullish in. And once again, Jenny, I haven't been doing a lot of these because, so here it's only 778, but you've got 2 weeks in between. This is a way that if it goes the opposite direction, you have a little bit of recourse because this 18-day will maintain some value minus a wheels fall off scenario.
Now, on Twitter, they asked about double diagonals. A double diagonal with either of these will only work if it doesn't move at all. And so if you're looking at a double diagonal, you need it to not move at all in order for that to work. And so, I would rather do something else. If you're playing for it to not move at all, I'd rather just do a strangler or an iron condor.
Yeah, so I'm just popping it in so we can talk through it. Here's a double diagonal to both sides. You're paying $13 for it. And that's kind of what we said. If you're doing a double diagonal, meaning the way that we set it up. The way that we set it up, there are lots of different things called diagonals, right? Where you're calendarizing a spread, that's a diagonal. But the way that we set it up, this is a double diagonal. And if it doesn't move at all, you'll make money, but you're paying so much. What you win on one, you might lose on the other.
You've got $16 in width on the put side. So if it goes beyond its expected move on the put side, that could be worth 16. And on the call side, you've got $24, $34, $17 wide on the call side, and you're paying almost 14. So if it goes up its expected move on the call side, you can make money either. It either has to not move at all and you get that decay of the weekly, or it blows it out of the park either side to make money on this. If it moves a little bit one way or the other, I think it would be a loser.
But either way, I do like the picking a direction instead of having a double diagonal on, because if you're playing for it not to move, right, if it moves it, like to your point, you can make like $400, $500 on either side, depending. But if you're playing for a non-move, I'd rather do something different.
Right, just like an iron condor or something.
Or even a calendar, like honestly.
But I guess if it blows it out one way or the other, this will make money. So sometimes we see a diagonal and you're paying too much for it that you wouldn't have that setup. You wouldn't have the setup where if it goes beyond its expected move one way or the other, you'd be locking in a loss. You wouldn't be locking in a profit.
Right. So do you want to do it in something else? Let's go back to Bob's list because HIMS. I don't know what O is. CELH, Datadog, CEG, and ADM. Let's take a look at him.
I do have an ADM. I do have an ADM position. It's one of my. It's one of my sell puts until I get put the stock because it has a high dividend. I think. Click the side and see what the dividend is here in ADM.
4.6%. 4.26%. Okay, so hold on. And they don't go X for a while though. There's no X dividend on the horizon.
So I just sell puts in here, close puts, aggressive puts until I get put the stock. I haven't gotten put the stock yet.
That's not bad.
No.
But I just want to see. But I just want to show double diagonals in a cheaper product because this will be something that's a little bit more manageable. It's $700. Now, if you're selling puts, I actually have been leaning towards puts for earnings because things have not been, I shouldn't say that, but so far we haven't had anything kind of blow it out of the water to the upside or the downside. So even to the downside, all my puts have been okay. Put spreads have been hit, but puts have been okay.
Right. The puts, you're getting further away. Put spreads, you're not as far. So.
Yeah. So here, but here, let's talk about that. Let's talk about a double diagonal here. Now you can make it a little bit cheaper, but I'm going to go how we would set it up. So you'd go to the expected move of the cycle on the, I'm going to try to get 40 cents. I'm going to try to get 95 cents. It's tight there, but that's fine. They're both about the same price, right? And then I'm going to go here and I'm going to buy the at the monies. So here you're paying $170 for, on the call side, you are $1.50 wide. You're paying over.
Yeah, which is how I think a lot of them would end up setting up, where you're paying more than the width. I think a double diagonal is just, it's not something we've ever done. It's kind of like a double calendar, where we say, what you would make on one, you'd lose on the other. You kind of have to pick a direction if you want. Now, I use
a direction on directional calendars. So I'm just going to kind of clarify this. These would be directional calendars, meaning you're going to buy strikes. So right. I'm at 44.5. and 49.5. So directional calendars, paying 20 cents.
No, you've got a one. You're paying, buying power is $1.20. So you've got a diagonal in there somehow. You don't have the same strike. Your call.
Okay. I've got it. It's 45. It's 45. Yeah. I gotta pull it up. Paying $1 for the double diagonal.
No, you've got to buy that one.
We're paying 40 cents for a double diagonal.
But usually what you would make on one, you'd lose on the other. If you make 20 cents on one, you lose 20 cents on the other. It's a scratch.
I'm sorry, double calendar.
Yeah,
but what we will say, this is directional double calendars, one to the upside, one to the downside. We do say if you're going to do a calendar, the at the money calendars, I have no problem doing that, where you're going to put them right at the money. If you're doing two, just separate them.
Right. And that, like, we'll do this for if we think it's not going to move on earnings. Now, when I say I don't use diagonals, I have not been doing too many diagonals for earnings, but I will use diagonals as a hedge to my portfolio. If I have short puts, I will put on bearish diagonals in triple Qs. So I will do that, or triple Qs or SPY or whatever. I'll use durational diagonals, and then those are different because those you're going further out in time. So
if you're going to put a durational diagonal, and I went to the 45 days, I'm going far for you.
Yeah, I don't go that far, but
okay. Lead me through what your durational diagonal would be.
Okay, so let's say you just go the 46 day and buy the 46 day. And honestly, for these, I'll go more in the money. I'll go more in the money on the, so if you go the 46 day, so it's not so much extrinsic value. Let's say you buy the 500 for $21.
Oops, sorry.
Buy that. Because it's $10 extrinsic value. Then go to like a 20-something day and try to get $5 in extrinsic value. So you're covering half your extrinsic value there. And you've got, I'll put these downside diagonals as just a hedge to all of my short puts.
Yeah, that's not a bad play. It's
a positive theta trade. Your width of this here, your width is like $37 and you're only paying $16.
Right. And then, but if it goes up, I mean, if this goes up and you don't manage it, you could lose $16.
You could lose $16. But yeah. You could lose $16, but you could roll up that put, or you've got a couple of rolls built in. You've got a little bit of time between the short and the long. Could move it out in time.
And that's just it. So, we kind of talk about this all the time. When you say the word diagonal, it could mean anything.
Yeah.
It really could. Like, this is a durational diagonal where she went in. And that's why a lot of times we set up those goofy names of things, because then we know exactly what strikes. You say diagonal, and I was like, in the money. All right. Now I know what you're doing. You're trying to get some of the extrinsic value, like 50% of the extrinsic value back with it.
Right.
But you can literally just diagonalize anything, and you can put your risk parameters wherever you want.
And I know at first you were going to go like May, June, but I know from experience, and from experience, those diagonals, if you have them too far out in time and it goes in your direction, you're not, let's say that spread was $30 wide and it goes your way, that's not worth $30 unless you're close enough to expiration.
Oh yeah, we know that. Diagonals are a slow bleed. Diagonals and calendars are a slow bleed, unless you're doing them with the directional move with like, I'm just going to use it because we were in.
With earnings, yes. When you're using the weekly, then they can be full profit right away. But if you're there's a fine line. If you're going out in time, you need to go far enough where you're collecting something for your short, but close enough where if you get that move, you're making some money on that trade.
Right. So if you're doing weekly short puts, that's why you're bringing your diagonal into a shorter term one instead of going farther out in time. Yeah. Otherwise, it's not a hedge to it.
Right.
Your puts are gone or managed before this even gets touched.
But this is what I've been using, doing those in triple Qs this year, and this is my best year P&L in triple Qs because we've had all those down moves, have those downside diagonals on, take them off.
Yeah, that's good.
Wait for the bounce back up and put them back on.
That's good. I want to take a look.
It's never going to make enough to cover all my losses if we have a huge down move in the market, but it's something.
But it's only $1,600 debit. It's all you could lose.
Yeah.
So it works out pretty well. Okay, so then is there anything we want to do? Oh, I did want to look at hymns because, okay, we're going to not do PLTR. I'll let you know how it goes. Hymns. This is a new product, isn't it? Ooh, can't touch it.
We got into this after the Super Bowl. Remember? We got into this after the Super Bowl.
This is one of our bigger losses on the year.
Yes, because we sold puts in here and then it really fell. Yeah, oh yeah. Or we were in it. I don't know what happened in it.
No. The Super Bowl, Jenny, the Super Bowl is the end of February, isn't it?
Oh,
We probably sold puts right there.
No, the Super Bowl is the beginning of February. So it's like always my dad's birthday. My dad's birthday is February 8th. It's always like his birthday weekend. So yeah, we got in it when it was on a rally and then got wiped out in hymns.
Got wiped out. Okay. By staying with it. Okay.
Now you would expect
this is something I'm not going to touch. This is something I said from the beginning. I'm not going to touch this with a 10-foot pole, but 23 million shares have traded. It's pretty liquid.
So if I want something on and I'm just taking a shot in there, then I would put on a weekly diagonal or just a long in the money option or something. If you just want to have a shot in here, but I'm not going to take the risk of a naked put in hymns right now.
Well, and that's what I was going to say. Take a look at this. Your buying power effect here is pretty high for a $33 product.
Yeah.
I mean, you could do put spreads. Do you know what else you could do? Well, it's a Monday, but I was going to say you can do the bat trade. I'm. If you want to do something at HIMS, please let me know because I'm gun shy in this product. I'm not a fan of it. I'm not a fan of the product. I'm not a fan of trading it.
We could just pass it up. There were other earnings too. What else besides what did we put in Palantir?
We didn't because it's something so like, and I love having a show with people like that with doing a show with you because you don't like PLTR, totally appreciate that. And I'm not a fan of HIMS. So kind of maybe we'll look at both of those after earnings to see what they do.
I just said, I kind of want to wait and then Palantir and put something on after earnings. It might shoot up, it might skyrocket on earnings and I'll miss it. But I just figure I'll wait and take my chances. I'm not in it right now. Now, I have had calls from people who have long stock in Palantir, and they're asking me what they should do with their long stock in Palantir. Can you look at a collar? Can you see how far away, if you're putting on a collar, it's tricky, and we don't make trade recommendations. But if friends are calling you and saying, what should I do with my stock in Palantir?
Just through earnings?
Mm-hmm.
If you're doing it just through earnings, you really can just color it at the expected move, but you're going to lose down the expected move.
Oh, but you're going to lose a ton. You're going to lose a ton to the downside.
Yeah, but my question is if I kind of know the P&L here, that'll protect you to a certain point. So here to 107 would be to the downside. So 107, this is like a legit thing to protect yourself down to.
If you want protection higher, would you ever look at the buffer or no? Because then you're still.
That's what I'm saying. So I know Palantir is high, but with the implied volatility, this is what like protection down to 107 when it's trading 123. If you look at that on that chart, that's not bad. Now you can always bring it in if you want to just protect your stock through earnings, but you have to be willing to sell it. You can always bring your collar in closer, or you could sell the 120.
Right, and then if it blows, the problem is if it blows through your call, then you're kind of out. Then you're capped. But then you're protecting yourself to 120. Do you ever think the buffer is better than the collar?
So when I am long stock, and I'm not, like I said, in Palantir, I've ratcheted it up. So I'm willing to give up. That's what I love about options. I'm willing to give up whatever the price of that is. I'm willing to give up $600 to say that I think that it's still going up. That's what I've got on right now because I've got the upside ratio spread. But if I had the stock, which I did in DraftKings, and sometimes this comes back to bite me, I'll do the biggest, widest, baddest ratio spread that I can find, let me see, to protect my stock. And collect nothing, or even pay a little bit for it.
And that's what
sometimes.
If I have XYZ in my XYZ stock, I did the widest ratio spread I could do, and I paid for it. I paid $1 for it to protect my stock in XYZ. And guess what happened?
Oh, and it does.
I got like extra long XYZ. Now I'm extra long XYZ.
And it does, but XYZ, why I said nothing has blown itself out. XYZ has blown itself out. But if you take a look at this, it's pretty good. Where are we paying? I'm buying one. Hold on. Buying one, selling two. So I'm paying 46 cents for this. It brings your break even. So that's something that I will do sometimes, because if it goes down, you can make some money. But to your point, if it goes down too far, you're double long.
But I do like that as a little bit of a protection, especially if it's something you don't mind if you get a little longer, because here you would get longer at what price, at what level?
So here, and it's very expensive to do, but you get long 103.
103. So, me personally, I think I'd rather do something like that or the buffer rather than the collar.
So the buffer, and I'll just put it in just because just to show how this works. So the buffer trade is buying a wide debit spread. So I'm going to buy the 123 and sell.
Get $3, maybe the 110.
So you're gonna. Well, then you're not going to get pretty far up. Oh, I guess you can get $5 up here.
Yeah,
so
$5.
We're paying $5.40. So I can sell the 131. That should work. It's not.
Bring it up, toggle it up or up a little.
There we go. There we go. Okay.
But I guess that's not much different.
This only brings your protection down to one. Then you're long again at 110. I'm sorry, 111. Then you're double long at 111. I kind of like the ratio spread, which brings you double long at 103.
I think so. I think when you have stock, when you have stock and you've written it up for so long and you have a big profit on it, for me, the choices are A, close the stock and turn it into a diagonal or a zebra, close it and turn it into something like that, or find a way to protect it on earnings with a trade like that big wide ratio spread or something. Now, a lot of people don't want to close the stock because they want to hold it long enough for tax purposes. So I get it. But,
so I will tell you, closing it or putting on the diagonal where you're going to risk so much, sell this, buy this, hold on, I'm buying it. It's very similar to putting on a collar. Because you're paying whatever you're paying.
Because you're paying.
You have whatever you're paying, that's the risk you have in it anyway. And that's what you have here. You have the risk from 23 down to 15. So you have $8 in risk. So if you pay $8 for the diagonal and it goes down, you would lose $8 anyway. They're all kind of versions of the same trade. Right. Protection is hard, and insurance is hard to buy when you're trying to protect something. And things are expensive. It's very hard to buy your insurance now with a 63 rank in something you want to protect.
And Palantir is a tricky one because if you look at the chart, it's run up from, how long has it been since it was like $10?
Oh, right here. August.
Uh-huh.
Yeah. Which is crazy. But yeah, no, that's what I said. I love PLTR. It's one of my favorite stocks, one of my favorite products.
I like it, and I've been in and out of it many times. I just don't have anything in it right now, and I just decided I'll wait till after earnings. But could I miss out on that upside diagonal? Could make $1,800 if we have a huge move up.
Yeah, and like I said, I feel like I'm very similar to the people that are in your camp, except I don't have the stock. Like, I'm not waiting for any tax purposes, but I've ratcheted it up so much in PLTR that I'm willing to say I want to continue the ride, and if the ride falls, I'm willing to give up X amount, and that's what I have in right now.
Yeah.
Okay, do we want to sell anything else? Let's look at more earnings trades, and then I'm going to refresh this too. So we're not going to do HIMS. Let's take a look at O. What is O? Is that overstock?
I think so.
No, Realty.
That's weird, isn't it? I guess overstock was like OSTK.
Yeah. Realty Income Corporation.
I feel like overstock's going to go the way of Wayfair. Have you looked at Wayfair lately?
No.
It's like down to the depths of. Okay, yeah, go to the chart and look at Wayfair. From what was it? From if you go further out in time, it used to be much higher price. Even go a little bit back further. I thought it was almost 100 or so. Maybe just right around 100. Now it's $30.
Oh, look at this. But this was 2022.
Yeah.
Oh, is this a pandemic, darling, though? Did this rise the phoenix from the ashes in 2020? Yes, it did. That's a pandemic, darling, because everybody had to order from things, right?
But it's only $30 now. Let's take a look at their PE. What's the PE ratio of Wayfair? I'm kidding. I'm not going to make you look at these anymore.
This is the dumbest. I was like, economist
And
Jenny.
you think their earnings are still negative.
Yeah. Yes, they are, Jenny Andrews.
last
Yes, they
earnings.
are.
Their last
Yes, they
earnings
are,
were negative.
economist Jenny Andrews.
Hey.
She's going back to her roots in the econ. Ooh.
Latest picture of Paula in
Not gonna lie,
rehab.
her toes look fantastic, and this is a better picture than we saw the first time. So thank you very much. Look at
Yeah.
Sadie. Wait, they let Sadie into the hospital?
Oh, she's in rehab. She's in a rehab facility. Well, that's nice. They let
Okay,
Sadie
good.
in.
Okay, good.
All right.
And then PLTR strangle sold 100, 150. Let's take a look at it for our tweeter.
100, 150. You're getting pretty far. And for $4, 100.
Well, look at that. So if you're getting $1 on the put, that means you're getting $3 on the call, but you're not.
150. Wait, wasn't he getting $4? Go, okay, take a look at his strike.
I would be closing this thing.
Yeah, right. 100, unless he's further out in time.
That's a real probability. Let's do that. Let's see.
But that would make me nervous too. Palantir makes me a little bit nervous.
I'm telling you, the call side is what would make me nervous on this trade. But I know nothing.
Yeah. Right. No, I agree. I mean, who knows what this is going to do on earnings?
No.
Maybe it won't even move at all. Maybe it won't even move. Maybe after all this like hoopla and worry, maybe it won't even move. How much is the calendar?
The calendar they're usually pretty cheap, but you got to keep in mind, this holds up a lot of buying power. I'm going to do this side just because it'll make me feel better. 124, 113. Let's pop it in.
Or if you want to be slightly bullish, shift it up a little bit.
I mean, I don't want to be slightly bullish. I think if it moves, it's going to move. So you know what I mean? We don't know anything. This is the saying we don't know if it's going anywhere. I'm going to ship this so we're in, so we have something in there. This is the same as if we sold like a strangle or something against it. We'll make $20 here if it doesn't move.
Well, no, if it doesn't move at all, we'll have a long call for next week.
Yeah.
I mean, this is a baby trade. We're in Palantir and only risking $100.
Yes. Oh, take a look. I'm going to flip this upside down so we can take a look at our upside down orders. I know that's the U-wall, that's the butterfly. We leave that. SoFi we're 30% and Snap is 37% and a sold put. We already got it out in time, but we're up $50. SoFi we're already out in time as well. I just want to see these winners. Just assessing. And I'm going to put in
put in GTCs.
Okay, GTC in for Snap. And a GTC is a good till cancel order, and I'm going to put 50% in here for GTC.
Economist Jenny, thanks, Liz. I'm going to put that on my badge. We're making our badges for something. I'm going to put that on my badge.
Economist Jenny. Going back to your roots, you were the econ major, right?
Yeah.
Oh my gosh, I was studying with my daughter yesterday because she's got her AP whatever, AP2.
Oh yeah, the AP tests are all this week.
Yeah, they're all this week. She's got her AP2 calc test. And this is what she said to me yesterday. And I mean, honestly, I was like, said no one ever. She's like, I freaking love calculus. I was like, what is wrong with you?
Great. She's going to be a perfect engineer or math major, whatever she wants to do. Great.
But I have not seen this enthusiasm out of a child and ever. And then so she's got these flashcards that she gives to me to see if she's right. I was like, I don't know.
Maybe you should give her Jacob's number. Maybe you should hook her up with Jacob. They could have a nice conversation. Or Julia.
I need Jacob to do the flashcards with her. So I was like, I don't exactly know what's happening there. But we're filled in PLTR. Okay. So,
you know what? Good for her that she loves math.
She loves math. Loves it.
Great. I'm happy for her. She's going to have a much easier time getting the job than like Lily, who wants to go to school for poli-sci.
No, she wants to be an attorney. She'll get She wants to be an attorney. She's going to be great. Not Annabelle, Lily. Lily's going to be great.
What if she doesn't? What if she just finishes poli-sci and is like, yeah, now what am I going to do? I don't want to be an attorney. Let me try to find a job.
Tom Sosnoff was a political science major.
Oh, yeah. That's right.
One Tom Sosnoff, political science major. He's doing all right. He's doing okay. I mean, if she turns out like him, it's okay. I also want to look at Datadog. And we are going to put something in. Not in Datadog, but one of these. Datadog is only 105. take a look at the chart. Down has been up as high as 160. It's got a $2.9 million. Economist Jenny, PE of 194. What say you?
I'm waiting until after earnings.
So you could wait until after earnings. I just want to see.
Call me Tony Batista. Didn't Tony get on that bandwagon for a while of just like waiting till after earnings before he was selling his naked options?
I'm telling you, and that guy from Market Wizards is still in the back of my head. He would wait till earnings, and if it was up, then he would get in and take the risk off every single day. So he would go to sleep at night with no risk on.
Yeah.
That's all he did, and I loved it. I thought that was fun. But and it's fun reading those because I love when everybody finds their own way.
And okay, here, let's talk about this. It's a totally different, and this is a mental problem, a mental hurdle for traders to get over. So I had big losses during the down move. I've clawed my way back, and I'm almost at P&L scratch on the year. Clawed my way back from all those big losses. So I'm more in protective mode where I'm like, oh my gosh, great. I'm so glad I got all my money back. Where I'm more in protective mode than if I were killing it and my P&L was amazing, I might be slinging more trades. But I'm more in protective mode right now.
Yeah, I kind of agree. And your mentality can swing back and forth while you're doing stuff like this.
Right, and our trading is different. If we're making a ton of money, we're just throwing more trades on. We don't even care. We're just like more trades, right?
Yeah, it's true. That is true.
So
it does go with
my current state of mind. I'm a little bit
defense. That's your state of mind. I'm only laughing because we were talking about this yesterday too. So Annabelle's going to play this weekend, which we don't have to talk about. But for some odd reason, she is convinced the linebacker who is going to the Air Force Academy in like 3 weeks to audition for the play, and he got the lead. So he's always doing these things to the girls whenever he's like, they don't break. So he like picked up one of them and ran off the stage the other day. So and they're all kind of scared of him. So I was like,
oh, that's fun that he's in the play.
This is the greatest thing I've ever seen. Okay.
I'm glad he's in it because I don't know why I thought he didn't get the part.
No, he got the lead.
Oh, good.
Yeah,
good.
He got the lead. He's actually really good. But his mom calls me and she's like, what is happening? It is so unorganized. Jake usually doesn't work like this. And I just literally like poured myself a drink. I was like, first time theater mom. It all comes together in the end.
This is totally High School Musical all over again. Basketball player turned thespian.
Well, and that's what I was telling him. So at the Derby party, I got introduced to everybody as the one who talked him into doing this because it was kind of me and Annabelle did it together. And I was like, but this is the stuff that Disney movies are made of.
Yeah. Haven't they ever seen High School Musical?
They haven't because he's a football player. So yeah, it's pretty funny. I wanted to show, speaking of like consistent trading, Jenny and I both, you and I looked at this morning. Now, this was a rising star that you can go back and watch, and I loved that they did this. They were putting on the CL trade for every Monday, Wednesday, and Friday. So the Monday, the one you put on Friday would have come off today, and then here's the Monday where you're selling just, no, I think he was naked. I want to say it was $20 to $20.
His were naked options, but we've done spreads, like $1 wide. So I think this morning mine was the 59.60. But it doesn't look as good now. Let me see what strikes I have. Do you remember your strikes?
I can look at my strikes because I've got mine.
I'm pulling mine up. I put this on this morning.
Okay, but I just want to put it on as if it wasn't. So 59.60.
I'm just trying to see if the vol came in that much in a very short amount of time. So in CL, my strikes were the 54.53 put spread and the 59.60 call spread for 19 cents. 54.53 put spread, 59.60 call spread. And it was 19 cents this morning. So, and it's only 16 cents now. That's how much the vols come in an hour. I put this was like an hour ago we were on the phone, Liz.
Yeah. Mine's up quite a bit already.
I think it had a little spike in vol on the down move in CL. Because if you go to the chart, like, it had see that blip.
Well, this was a bigger move. Wait, what date is this? What date does this say? The 2nd. Yeah, because it's open at night, right? So yesterday was Sunday the 2nd, and it had a big move.
Right.
So $2 yesterday.
So I think this morning on the vol was a little bit higher, and it's already starting to come in.
Yeah.
So I don't know.
No, I mean, I don't know that we're going to put this on. If we're going to do this, we have to do it every single time. You can't just put this one on and be like, oh, this is the one I'm doing.
Yeah, it's just hard that this was like $190 an hour.
No, I don't think we're going to do it. But take a look at this. So we talk all the time. You can translate everything. They all kind of mesh together. We talk about SPX 0 DTE. We talk about how if you're doing it around 9 o'clock, that's fine. Well, this is the 2-day. This is going to decay pretty quickly as well. So if you look at it on like the life cycle of the trade, it's almost as if you did it a quarter of the way before. You know what I mean? It's a bigger time frame because it's only 2 days.
Well, and again, it's on the heels of having a bigger move in oil over, last night to this morning, pop and vol. And if that didn't happen, I wouldn't even be surprised that this is only 16 cents. And we would be bringing it in closer to the expected move.
Yeah. But that's usually what he does. I want to say he was 20 delta 20 naked options.
I think he was naked options and he would get 10 cents, 10 cents. He was getting, I thought, $200 on naked options, 10 cents, 10 cents.
So you're getting pretty far if you're doing that. So you're going to go to the 11 delta and the 10 cents to the downside is pretty far down. Hold on.
Right. Here's $200, but and every Monday, Wednesday, Friday, but these are naked CL options, and that's too big. You could, I don't know what it would be an MCL. But I like the idea of having $10 wide, $800 in risk. If we take a full loss on it, we take a full loss.
Well, MCL doesn't have the same cycles. It's weeklies. I mean, there's a couple built in there because you have the certain things, but it's not the Monday, Wednesday, Friday like CL has. And we do have a position in MCL where we just sold puts. And they are up a little bit, but not enough. I mean, I glanced at them today. We're up 20%. We're up 20%.
Right. Not enough. But, I don't know.
So my SPX just closed again.
Good.
So the SPX that we've been talking about as well is that same Jacob study, which I love. Now, granted,
you and like 3 other tweeters today. Well, I mean, you saw we had all those tweeters who were putting it on today.
Yeah, but they're bigger than me. They're looking for Jack Tucker 40%. I looked for 25%.
25% is still a lot.
But per
if
Jacob
you get
study,
$10, you're getting $250 in a matter of an hour or two.
Yeah. Mm-hmm.
Because you put it on around 9.
Yes.
And it's 11, so it's 10:52. It's like not even 2 hours, and you got 25%.
And just hit again. I will tell you. So I know, do as I say, not as I do. Because on Friday when I put it on, I took a ton of heat, and when I was supposed to close it, I was like, I'm closing this thing. Left it for the entire day, and when I came back, I was like, whatever. If it's a full loss, it's a full loss, which I know is a terrible mentality, but that's where I was at. When I came back at the end of the day, I made $100 on it. But by the skin of my teeth, I made $100 because I collected almost 13. Do you know what I mean? So I got assigned on the one side.
But it's $30 wide, so it had a decent amount of risk. But at noon, I remember we were talking about this. At noon, it was a $600 loss, and we both said like, I wouldn't want to take a $600 loss. And so it worked out leaving it. The only reason we say close at noon, that was Jacob's study. But again, we know the rules, we have the tools, and we can choose to follow them or break them. Neither one of us thought taking a $600 loss was a good idea.
I hope whoever is tagging this show says, we know the rules, we have the tools.
And we can choose to break them.
I love it. That's how we're going to start. That's how we're going to open the show. We know the rules, we have the tools, and we can choose to break them.
Forget trade small, trade often at the end of the show. Wait till the ending today, Liz.
That's funny. I like it. Okay, I'm going to go back, make sure we got to everybody in tweets, and then I'm going to make sure we have okay, we do. This is me, by the way, Steve. I'm Liz. Based on your recommendation, I've been watching Words of Wisdom. It's really good. That's the podcast that I'll be on. So, yeah, Steve, I will be on the Words of Wisdom podcast in June. That's how long it's going to take to edit.
June.
That's how long it's going to take them to edit my material.
You better look amazing if they're spending 3 months editing that piece.
No kidding. But so he bulk interviewed everybody. So I think he's got a year's worth of content within a 2-week time period. He went on tour all over. He's from London. He went on tour all over the United States. He stopped in like 5 different locations. So on the day that I was interviewed, I think he interviewed like 7 people, but he went on a 2 or 3 week tour. So they got a full year's worth of weekly content.
I can't wait till they come out.
Yeah, me neither. So but thank you. Yes, Steve. He's really good. He's very nice, very calm, and he's interviewing traders from all over. Most of them are from.
You had him as a guest on the show when I was out of town.
I did, and he was great. But he's interviewing most of the people from the Market Wizards book. So it's a lot. It's all over the place. It's not just about derivatives traders. He's pretty good. A lot of the guys he's got are the ones that are like, I made $75 million in 2 weeks, and you're just like, what? And then he breaks it down for you. So it's good.
All right, and Frank, piece, good vibes. Oh, this is coming from YouTube. Can I do a calendar on AMD? Earnings are tomorrow. I believe it's going to be a beat. Okay, let's go to AMD. If I think it's going to be a beat in AMD, then I might look at a diagonal or a short put or something.
It doesn't matter. It doesn't matter if it's a beat or not a beat, because I've watched this and I've heard them beat estimates and the stock tanks.
Yes. So, but a calendar, if you're bullish and you put on a calendar and it goes too far through your calendar, you could lose on the calendar. So take a look at how much is the diagonal in AMD?
The diagonal in AMD to the upside would be
selling the expected move and then buying the at the money, $4, and it's $9 wide. That's about what we would expect.
That's not bad. It isn't bad. So, but I think to their point, if they're trying to do a calendar and you think it's going to beat, you're going to do an upside calendar, which is going to be way cheaper. So if it does go too far, you lose. I'm just going to pick 30 delta, right? There we go. And then you buy the exact same strike. So you could put 70 cents into this too. There are.
Right. It's just like a very low risk trade. If AMD goes really high, you could be out the 70 cents, but I can't imagine it go too far beyond this to really be out that 70 cents. If it goes up, and the one decays, your long could be worth. You can take a look at the longs and minus the vol. Maybe your long will be.
I don't think you have to think too far into this. If it goes up here, you're going to lose. If it goes up to this, you'll make a little bit of money. A little bit of money. Yeah, because of the decay.
But it's a low cost, right? The calendars are a low cost way to be in. But if I was really bullish, I would think of either putting in that diagonal on for $4 or maybe selling a put. I do sell puts in AMD. How much do you get on the weekly puts at the expected move?
So at the expected move, you'll get $1. I can go to 91.
Yeah, I don't mind $1 on those.
You're putting up 1,000. So I've been preferring puts. No, you're not getting that much money, right? So I think to your point, I think puts are more defensive. Puts are more defensive than diagonals, because this means it can go all the way down to basically 90, 91 without you losing any money. So I think it's more defensive. Now, last year, like you said, when we were, zinging it before this big crash, it was diagonal city because we were playing with, the house's money. And that is, you will make more money on a diagonal than you will on selling puts. But I have been selling puts on earnings.
I think Coin has earnings this week too.
But let's sell puts. I'm just going to get very conservative.
But I think they're not today. They're not today, right?
No, AMDs. I'm in AMD. I'm just like, let's just sell a put in AMD. We'll sell the 90 put in AMD.
And when are their earnings? Are they tomorrow?
Today. AMD is today.
No. They're not. You're mixing it up with a Archer Daniel Midland. You're mixing it up with ADM.
I am. Thank you. So I don't know if they have. Wait, hold on.
Jack Tucker. Hopefully you're in and out.
Yeah. Yeah, he's in and out.
In and out.
Wait a minute. Was it AMD? Let me look. Yeah, you're right. When are AMD's earnings?
He said this week. So
tomorrow.
May 6th, tomorrow.
Tomorrow, because today's Cinco de Mayo. So we'll put that on tomorrow, right?
Yeah. I mean, you could put it on today. It's fine. You could throw it in.
I mean, honestly, it'll give us something to do tomorrow from the trading floor, because we're live from the Seaboat tomorrow.
Oh, and Tuesdays, Wednesdays. Steve, what did Steve write? He wrote, Oh, I am sorry. It wasn't Liz who
please.
mentioned it.
I can call Jenny all the time.
Some of his early podcasts are so. However, lately many of his podcasts are great. And then we know the rules, we have the tools, and we can choose to break them.
Jenny,
yes, Frank.
I like it. We know the rules, we have the tools, and we can choose to break them. This is so fun. All right, Jenny, it is 11 o'clock. We are out of time for the day. It's the fastest hour of the show, done and dusted.
Everyone have a fun and safe Cinco de Mayo. Remember, we know the rules, we have the tools, and we can choose to break them.
See you tomorrow, everybody.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with the one and only Ryan Grace. It is Crypto Monday. Nick is gallivanting around, I assume, an airport in Arizona, coming back.
I was going to say, where the hell is Nick?
Yeah, where the hell is Nick, right? How dare he miss this show?
Arizona, what is he, golfing?
I think he did golf a couple times, but I believe it was his mom's birthday.
Nice.
So that's a good son, flying out to Arizona for the birthday weekend.
Absolutely, a little pre-Mother's Day action.
Yeah. So yeah, he is out today, coming back. He'll be back tomorrow, but Just like the crypto markets, so this show must go on.
That's right. Never sleeps.
Exactly. Seen a little movement today, down 3K in the Bitcoin futures. Rest of the market's kind of flat. I mean, we haven't really seen nearly as much volatility as we had a couple of weeks ago, but some things are still moving. Actually, Bitcoin, Ethereum leading the charge to the downside. Bitcoin down 3%, Ethereum down 2.5% almost. Crude oil can't catch a bid. Corn, wheat selling off pretty aggressively here. Everything else kind of within 1% except for live cattle and gold. Gold picking a bid here. What do you make of this thing?
Yeah, nice bounce off of the low end of kind of the trading range that it had been in when you go back to gold on Friday. So if you got long there, you're feeling pretty good. Mike, I don't think the environment that we're in has changed too much. We obviously had a ton of volatility at the beginning of April, tariff-induced volatility, a lot of headline risk throughout the month. And I think you've seen into May here a bit of, I don't know if you want to call it a dead cat bounce, but I don't think anything has really changed structurally. We'll see what the Fed has to say here. I don't think there's any cut that's expected in terms of Fed funds probabilities. Check me if I'm off there. But the last time I checked at the Fed Watch, it looked like we're not expecting a cut.
Yeah, 95% chance that we stay where we're at.
So we'll see what they have to say. But I don't think the environment has changed very much. This is one in which, we're going to continue to experience a weaker dollar. You've seen the front end of the yield curve move lower. The thing that concerns me is the move in oil. That doesn't exactly scream growth or inflation. And at times, inflation has kind of been that boogeyman. But I think you want to see an environment in which growth and inflation are expanding, not one in which they're collapsing. And so a little concerned still with the move here in oil prices. But I think when you go back to crypto, you're likely in that environment where you're going to chop around quite a bit. We've got the expected moves we'll talk through in a second. But until we get a little bit of clarity from the Fed and maybe more so some clarity as to what's next for tariffs, we've got that 90-day pause, but we are running out of time. So until then, I think you're going to chop around in Bitcoin, but it has been trading a little bit better when you look across the crypto market versus how it was at the beginning of April.
Yeah, definitely. And even in that big macro sell-off, when we talk about the equities and the E-minis, NASDAQ, a lot of the pain was really the Mag 7 stocks. I mean, you saw Bitcoin take a little bit of a hit here, but there was a period of time where it was just kind of chopping in that 80K range. It wasn't really like collapsing in that same sense. So yeah, Bitcoin up at 94. I mean, it's down 3K, but it's still at 94. It's had a nice rally back to the upside here. But over the past week and a half, it's been in that 94 to 98 range. Hasn't really been able to move outside of that, but I would expect that it will eventually, given the implied and realized volatility that we see.
Yeah, I think the price momentum in terms of how I follow it or track it is certainly in Bitcoin's favor right now. It's not the same setup everywhere in the market, and we'll point that out in just a moment. But I will mention that volatility is really at the lows in there. So I think you're going to see this continue to trend higher, but at least in the short term, but it's going to be choppy along the way.
Yeah, looking at 25-day in the Bitcoin futures, $8,400 range to the upside or downside. And you're seeing a little bit more implied volatility in these cycles, but still, like you said, 5%, a 5 IV rank is obviously very low. So we're kind of setting the low, or almost setting the low, in terms of current implied volatility. So could be an opportunity to get some longer term options on if you're bullish. If you're hedging to the downside, it's cheap to do. So yeah, we will see. But yeah, Wednesday we've got the Fed decision, May 7th, 1:30 Central. Jay Powell takes the stand. But at 1 p.m. Central, the decision will be released. So again, 95% chance that we stay at 425, 450. There is a slight chance. 4% is not nothing. I feel like we've come to this week, this Jay Powell week before, and it's been at 99% on Monday or Tuesday. So they're still pricing in a little bit of probability, but I think they are trying to avoid surprises in this environment, and that would certainly be a surprise.
I would think so, yeah. And you're not seeing much of a probability priced in for the following FOMC meeting either. Still about a 70% chance for June that we stay at 425 to 450. How are you trading it? You have any new trades or any positions you put on since last week or to start this week?
I have not for the Fed announcement. I wouldn't be surprised to see kind of today's move be replicated tomorrow. I mean, I feel like the last Fed announcement, it was the exact same thing where Monday, Tuesday, it was just a grind of nothing. And then big movement based on what's said and what the sentiment is there. But I have been trading IBIT pretty aggressively. I made an adjustment in there. IBIT is super liquid. It's a way to get exposure to Bitcoin price change, but kind of in an equity way. 53.37 right now, super affordable. But IV rank in here is low as well. But with that said, I mean, 50% IV is low for Bitcoin, but it's pretty high for anything else. Like if you were to look at any other $50 product that you can trade, you're going to get paid a lot for taking risk in there in IBIT compared to a lot of other products that are around $50. But I'm sitting on a 55.60 strangle in June. This is the year-long trade that I'll have on the entire year. Started with a strangle, turned into a straddle, added a call ratio, turned into a butterfly. Basically, I just don't want to have any upside risk here.
Okay.
So moved it to the 55.60 strangle in June. I currently have $1,400 in premium collected, and it's the beginning of May. So
very nice.
I feel really good about this position, considering break evens to the downside are at 40 and 75 to the upside. So huge range just because I'm continuously collecting that premium. And that's a nice thing about a product like this is, you know, if you want to be exposed to Bitcoin in a options way, I would look no further than IBIT.
Also, like these volatility levels just for buying upside call spreads or even just upside calls, kind of taking a little bit of a flyer. But again, we are at those lows in volatility. So you get that move. You don't necessarily need this to be in the money, as you know, at that point in time. You just need that volatility expansion.
Yeah. And that's the beautiful thing about these products is that they're very similar to volatility products. It's when they're moving to the upside, especially in an aggressive way, implied volatility increases, which increases extrinsic value. And like Ryan said, like you don't need it to go deep in the money to be super profitable. If you get the move and the IV boost, it's going to be a nice return for sure. Okay, we have a link in the YouTube chat to give Ryan and company some feedback. Do you want to talk a little bit more about that?
Yeah, we've been running, I guess what you'll call a UX survey. There's 5 or 6 or so questions there. It takes literally just a couple of minutes. Appreciate everybody that has responded so far. We sent an email out. We included this in the Tasty Crypto Next to Orange Saturday morning email newsletter. That's a mouthful. We sent a couple emails. So really, again, appreciate everybody that's responded so far. I think we had 90 or so respondents. Tons of great feedback, quantitative information, as well as a lot of qualitative stuff in there too. So if you have a couple of minutes, want to tell us about your experience with crypto, with Tasty Trade, with Tasty Crypto, the broader offering at Tasty, what you'd like to see, content, features, you name it, please hit that link in the chat and help us out. And all that's going to go into what we do next. So really excited to see the feedback that we've received already, because there's a lot of things that we can just go off of and some features that we'll start to build immediately.
Awesome. Beautiful. So yeah, join us on the YouTube channel. Just pop over to Tasty Live. You'll see that link to the feedback form pinned to the top of the YouTube chat. But yeah, the markets are moving. We got a lot more stuff to talk about. Should we pop over to the slides?
Yeah, let's do that.
Little market update here. Lovely. Bitcoin update May 5th. Cinco de Mayo.
Are you ready?
I think so. I was like, what are we having for lunch? And we were like, obviously Mexican. I was like, well, that makes a lot of sense. Does make a lot of sense.
I'm excited.
Yeah.
Mexican food here at Tasty Trade, Tasty Live is one of my favorite days for lunch.
Yeah. I think it's 5 Rabanitos.
Ooh, that's a good spot.
Yeah. Strong offering.
Hopefully there's some left when we get off the show.
Yeah.
You know, they get here at 10:30 sometimes. So.
Yeah, you never know.
But yeah, let's do the crypto Bitcoin market update here. Got a few slides that we prepared. Start off with our performance dashboard. As Mike mentioned, not a lot going on at the time that we put this together. You're a little bit lower now, but kind of trading sideways. You've pulled back off the 97, so it feels like a little bit of a dip here, but we've been on a nice run over the last, really over the last month or so. You got Bitcoin up 12%, back in the green year to date, but volatility has come down. A couple things that I want to point out here. Bitcoin has been an outlier. I think that's where you've seen a lot of the flows with the ETFs, certainly. There isn't much that's outperformed Bitcoin year to date. And when you look at price momentum, you look at the exponential moving averages in there that we derive some signals from, it's back to bullish. And I feel pretty comfortable personally trading within that implied move on a weekly basis, buying the dip, so to speak. Ethereum has been a lot different. And as much as I'm a fan of Ethereum, I have a position myself, so trying to pump my bags, I suppose, feels better certainly at 1,800 than at 1,400. But this is one that just has not traded as well, not nearly as well. Obviously, when you look at Ethereum down almost 50% against Bitcoin year to date. But we did just get, as we've moved into May, we did get a bearish signal on the monthly, which is really the last thing that you want to see. I don't want to shy away from that. Certainly, again, an investor in Ethereum, but you can't ignore the fact that momentum in there has been pretty bearish, to say the least. And so this is something where you could get a little bit of chop here. I think you have to look at some of those shorter term timeframes now to get the initial, the next move, I suppose. But structurally, we are seeing this continue to kind of break down. Just want to call that out there.
What do you think is, if you were to see Ethereum get back to 3K, 4K, like, do you think that's going to be, it's going to require some kind of catalyst and change? Or do you think if Bitcoin moves up to, let's say, 105, 110, Ethereum would follow suit just because of the nature of the space?
Yeah, I think eventually if you get that larger move in Bitcoin, and it could get you to where for some time you still have Bitcoin dominance at 70%, we're at about 65% right now. I think that Bitcoin will, if the price outperforms in the short term, it pulls everything else higher and people rotate kind of further out onto the risk curve, as we like to talk about. So you'll see things like Solana, Ethereum, XRP, Doge, et cetera. Everything starts to do a bit better. But on a relative basis, Bitcoin has been outperforming. So I think that certainly will help. But it's certainly, it's not at these prices. It's definitely, like you mentioned, well above 100,000. I think there could be some developments on the ETF front. I think there could be some developments on the staking front. If you're able to offer as a financial services company ETH staking, if the ETFs are able to pass through staking rewards in the form of a dividend, that's a lot more interesting. I think that's definitely bullish and beneficial for ETH. I think there is a bit going on in terms of real world assets and, kind of legacy financial institutions that are building on Ethereum. And that hasn't gotten as much attention as I think is warranted. Maybe that's kept the price under pressure. But it's largely been a story of new capital flow into Bitcoin. Maybe that is the gateway. But that's what it's been. And you've seen that, when you look at Bitcoin versus Solana, you look at Bitcoin versus ETH, or really any other token that we have up here. I guess XRP is up 2% year to date versus BTC. But I think until you see that rotation in the cycle, and maybe that's going to be on the back of a change in, a further kind of acceleration of monetary policy or looser monetary policy, maybe more clarity, less uncertainty in financial markets, or maybe it's just on the regulatory front. So there's a handful of catalysts, but until you really get those, I don't see ETH outperforming. It doesn't mean that it's going to continue to go lower here. I just think, and I wrote about this over the weekend and midweek last week, that you want to stick with what's working until you get some signals that you should start to rotate. And it's just been a tough trade to, not even go short Bitcoin and long ETH when you look at that ratio, but to buy the dip in ETH, unless you're buying those really big swings, 20%, 15% a week, it's been a tough trade. And so just Bitcoin has been what's been working. And I think you stick with that until, again, you get those signals that you should rotate.
Yeah, I think that makes a lot of sense. And with the continued dominance in Bitcoin, especially with newer investors and traders coming into the space, trying to handpick smaller coins or smaller ideas that are popping off, I think Bitcoin, with as much that is already invested in the product, speaks to maybe some more stability in there, at least to the downside, I would say.
Yeah, at least for now, until you get that move where it kind of indicates we're off to the races. And I think you just look at Bitcoin market cap dominance as an indicator of that to start with. And it just hasn't rolled over. It's been very, very strong, as we'll see.
Yeah.
So if we jump to the next slide, just continuing to look at a handful of the tokens that are offered through tastytrade and Zero Hash. Again, year to date versus BTC. Find me something, anything that is in the green. We had XRP on the last screen, but there's just not very much. Volatility, whether it's implied or realized, has come in quite a bit. A lot of these tokens that at times can trade well above 100% realized vol on a 30-day basis, all back into the 70s or 80s. So make note of that. Shiba Inu has gone from bullish to neutral on a daily basis here. Same thing with Aptos. So maybe seeing the beginnings of a possible breakdown there. But as we've pointed out for what feels like months now, Bitcoin has been that outlier, certainly from the price performance perspective, but as well as these momentum signals. It really didn't break down like we saw across the rest of the board. So next slide here, a couple other metrics or ratios that we're going to look at in terms of relative performance. There's Bitcoin market cap dominance at the top, 65%, multi-year high. ETH has traded a little bit better in the very short term against Bitcoin, and Solana has traded a little bit worse versus both Bitcoin and ETH. But again, when we look at the multi-month trends in there, it's been Solana over ETH and Bitcoin over really everything, as we've talked about. You can see that when you price Doge in Bitcoin as well. It hasn't been that just hasn't been a place that you've wanted to be outside of that pop we got kind of end of the year, beginning of the year.
Do you look at these time frames? Like the 3-month kind of gives you the broader picture and understanding of just how dominant Bitcoin's been, but do you look at like the 1 week or the 1 month and look for some kind of percentage or some kind of relatively large move to be like, okay, this feels like this is getting targeted for some selling pressure here. Maybe I jump in and take the other side. Yeah,
absolutely. I want to pay attention to 3-month performance and the weekly and monthly price momentum to get a sense of the trend. I think with assets like this, especially when it's moving to the upside, it's hard to short. You really don't want to get in front of that. And at times, certainly, though it can reverse very quickly, it's tough to step in right away and buy the dip when you have such a strong trend. Or when you're trying to compare, Bitcoin or ETH versus a handful of other potential opportunities that you could get into, I think it helps to look at it from this perspective on a relative basis. But short term, yeah, absolutely. When you see that something's been smashed down, and we know that the weekly moves can be large, it could be 10%, 10+%. But when you get into territory where it's like, okay, that's quite a move relative to what we typically observe characteristically, then maybe, it gets your attention. I think the other way that you look at this too is you kind of just look at how it all evolves or unfolds over these different time frames. So if I know that the trend is bullish or bearish, then I can just zoom in like anything else and understand, okay, are we starting to see that transition from a 4 to 6 hour period to a daily, to now it's showing up in a weekly, and all of a sudden your 1 month, you're watching it as you've gone from down 10% to now back to neutral, back to positive. All right, now I'm going to buy any dip in there. I just want to trade with that trend.
Yeah, totally makes sense. But yeah, I think this is super important to look at, especially if you're trying to pinpoint new trade ideas in weekly, monthly timeframes. This really helps highlight those.
Yeah, what has my attention here, Mike, just when you think about similar sets or how you might look at this, so I just have a couple more notes for you as we're still on this slide here. So while I'm going to talk out of both sides of my mouth for a second. So when we go back to the performance dashboard, we just got a very slow moving monthly signal that Ethereum is bearish. That said, what we have seen in the short term, and I suppose it just depends on kind of how you trade personally with your own time frames, but in the short term, we've seen ETH BTC ratio go from bearish to neutral, and we've seen Solana versus Bitcoin go from bullish to neutral, and Solana versus ETH go from bullish to neutral. So Solana, priced in Bitcoin or priced in ETH, is trading lower, and ETH priced in Bitcoin is trading higher. I look at those as almost the same thing. That said, it's against the backdrop of, Ethereum looks pretty bearish. So maybe I'll eat my words there and you quickly get some sort of reversal on those monthlies. But that very slow moving, longer time frame, again, has continued to show signs of breaking down.
Yeah, I think, and that's natural when you see a move go from, or a price go from 4,000 to under 2,000 in 3 months, 4 months.
Didn't take very long.
Yeah. But with that said, from the beginning of April through all the mayhem, ETH hit a low of 1400, and it spiked up to 16, kind of shopped around there, and now we're at 18. So it is, over the last month, it actually has come up quite a bit, and it's stabilized up there. So
it has. Yeah. So, yeah, to your point, we'll see. But again, I think you stick with what's working right here for now, which has been Bitcoin.
100%.
Next slide I've got for you is just a quick look at implied volatility expected moves and realized vol expected moves as a proxy. So when we just look at Bitcoin and ETH implied vol, 3 month, 6 month, 1 year, the volatility ranks are very low, lower in Bitcoin than they are in ETH. Just be aware of that, because if you think that, you know, a $2,000 or $3,000 move at these prices is large, it's really not versus what we've seen this do in the past. Now, that doesn't mean that it's going to do that going forward. Maybe volatility continues to break down, and we'll be talking about an IBIT or BTC vol that's 40%. It might be 40% against something that's much higher in price, but until then, I think you still plan on this being, higher vol at some point. This is the low end of the range.
Yeah.
Looking at expected moves, still about a $6,000 move when we look at Bitcoin, 163 for ETH, 88 on the downside for Bitcoin at the time we put this together, 100 still within reach, just under $2,000 on the upside of that 1 week, 1 standard deviation move for ETH. And then you can see we've got SWI up there as well. That's another one that's has kind of been bullish trend, and on a relative basis here in the last month, you'll see has done a lot better versus Bitcoin. So it is one outlier. So we'll put that one on the screen. That's available through Tasty Trade as well. 60-cent expected move, pretty high, north of 100% in terms of realized vol over the last 30 days. Looking for $4 to about $2.84 on the downside.
Yeah, that thing has gone up quite dramatically over the last month or so. SWI.
Yeah, it's had a very quick reversal, and this is one where, it can look very bearish, and did for some times. You had those signals, and then boom, all of a sudden you're right back in that bullish territory. So maybe that happens for ETH going back to it, but yeah, these things can obviously move pretty quickly.
Yeah, I think that's the nice thing about this space is you have so many people focused on it, and they're all focused on it in almost the same mediums. So like you think of Reddit and all the subculture of this, and it's like if something happens, people start to realize that it's happening, and then people start to pile onto that same idea, which is why volatility increases when you get moves to the upside and not necessarily the other way around.
Yeah, it's very reflexive in nature, and I think it's certainly much smaller in terms of the amount of money that's in the space, so it can really feed on itself versus what we might see with traditional equities. We have narratives at times, and I know we've had meme stocks that have done some crazy things previously, but in no way it's the same as to what you see in crypto.
Yeah, 100%.
Next slide we've got here is just a quick look at relative performance. So again, the theme should be pretty obvious by now. I'm sticking with Bitcoin. It's been what's been working until, again, we get some indication from the market that anything has changed. But here we have a view of relative performance on a year-to-date basis, looking at XRP, Solana, ETH, and Doge. And Bitcoin is down year-to-date here, down just about 1%, at least on this when we ran this number. And so you can see everything else against it. You've just done worse, unfortunately.
And this is, par for the course. It's when a lot of people are piling into similar assets and kind of forgetting the others, it's just going to add to that downside pressure.
Next slide we've got here are some of the biggest gainers over the last month. So even though we've had a pullback here over the last week, looking at this on a 1 month basis, SWI, Solana, Bitcoin Cash, and Aave, all looking pretty good here, and these are of the tokens that are offered through Tasty Trade through Zero Hash. So SWI up 52%, and then you want to compare that again always to the benchmark. Great, that stock did well, but how did the S&P or the NASDAQ do? How did Bitcoin do versus any of these altcoins or vice versa? SWI up 41%, Solana, Bitcoin Cash, and Aave all outperforming slightly when we look at the returns against Bitcoin over the last month.
Love it.
I think we got just a couple more, and then we'll go wherever you want, my friend. The next slide here is our cross-asset correlations. I will note that we have seen a little bit of a decoupling over the short term. So if you look at the last few weeks in here, the positive correlation that we observed previously was extremely strong. And you saw the same thing with the inverse correlation to volatility. So everything was moving together on those vol spikes. Since volatility has come in a little bit, we've got a VIX closer to 20 versus 30 or 40. You've seen that correlation between crypto or Bitcoin and the rest of the market kind of break down a little bit. A little bit of a short-term inverse correlation between gold and BTC. You know, we saw gold pull back and then BTC rallied a little bit versus just the strength that was observed in gold previously. So you've got a very short-term kind of slight inverse correlation there. But we'll point out that this is not necessarily moving in lockstep with equities as it was previously.
And I think that it's really interesting to see the decoupling of the gold correlation here. And I think it's interesting when you think of, you know, people referring to Bitcoin as digital gold, right? And then you see when the equity markets are really bad, you tend to see the markets going down, gold going up. We have seen historically Bitcoin going up with gold against the equity markets going down. Do you think there's kind of like a layer one is, okay, Bitcoin's going to move up if the Nasdaq's moving up in like a lower vol environment or like a contango standard environment. But if things are really, really bad, maybe people are taking their money out of the equity space, moving it into gold and digital gold and Bitcoin. Do you think there's something to that could be feeding on that?
I do. I think it's over an intermediate to longer term time frame. And I think, you know, there's some real kind of factors driving gold versus Bitcoin. And I think that's de-dollarization. You look at, you know, some reports coming out of China of how much gold they're buying, how much gold Russia is buying. You have other countries that are looking at dollar collateral and maybe diversifying away from it. If that's a theme that's ongoing or persists over longer time frames, then I think gold and Bitcoin go in the same direction. Maybe not every single day, not perfectly correlated, but it's up and to the right, given that force. You have the scarcity component to Bitcoin as well, and it's truly a global asset in the same way that gold is, but this is truly a global digital asset, which maybe makes it a little bit easier to move around, certainly, and maybe a little bit more accessible. So I think if that's what's driving flows into gold, Bitcoin benefits. That said, you know, it's very unique in that, you know, it's going to benefit, I think, from lower interest rates in the same way that gold is basically expressing an interest rate view. It's going to benefit from a lower dollar value, which speaks to, you know, what we're talking about or possibly seeing some signs of moving away from dollar-based collateral, though in no way am I calling for the end of the dollar or anything like that. I think if you just see a broadening diversification and this becomes a more accepted form of collateral in a kind of shifting or evolving financial system, then Bitcoin moves higher, gold moves higher as well. But in the short term, there's no getting around the fact that this does, as you mentioned, you know, when volatility spikes, it trades just like any other high beta risk asset. And so it's going to benefit from those same kind of macro environments too, where Bitcoin's going to do well as long as you aren't just seeing this kind of breakdown in growth and inflation. And that's what we started to see going back to February. The tariffs sprayed fuel onto the fire, but this was something that was already underway prior to that. And that's what matters most. It's easy to get distracted and lost in the headlines at times. But Bitcoin, crypto is going to do well in an environment where tech stocks do well in the short term. But if you look at this as the long-term investment, what's the thesis? What's the theory? It is the debasement of fiat currency. And it's also, you know, de-dollarization. Both of those factors should benefit gold and Bitcoin.
Yeah, totally. And when you think about it in the sense of printing cash and infusing it into an economy, nothing else changes with Bitcoin. You know, there's still 21 million Bitcoin, and that number doesn't change. So if there's more currency in the environment, then the price of Bitcoin will inherently go up in that sense.
Absolutely. And I would argue that in that same environment that you're describing, Apple stock goes a lot higher, NVIDIA, equities, assets go higher. And this happens to be a very high beta asset.
Yeah. I actually just saw, I don't know if you've seen this, but it stopped me in my tracks last night. I had the game on, the hockey game, and I got my first targeted Coinbase ad. And the Coinbase ad wasn't like, do whatever you want on Coinbase. It started with like, this is all the Bitcoin in the world. It fits in this box. And then it zooms out and it's like, if you look at all the US dollars that were printed over the last 10 years, that would fit in this box. And if you look even further, all the money we've ever printed in the US system is in this box. And it just shows how small the total number of Bitcoin is relative to all the cash we've printed. And I was like, this is such a bullish commercial for Bitcoin specifically, but it was through Coinbase. I was just like, kind of taken aback by it. Have you seen that?
I haven't seen that one. I've seen some of their ads around like a new system, which is intriguing to me, but I haven't seen the kind of this is the scarcity element to it.
Absolutely. I was like, wow, this is full-blown bullish Bitcoin advertisement.
Yeah. Yeah, I guess, I mean, I don't know if I think it's a good thing.
Yeah.
At this stage in terms of adoption, sometimes you're like, okay, is this a bubble? I don't believe that when it comes to Bitcoin here. It is interesting to see that, I guess, sales pitch from Coinbase. So it's not about, hey, come trade with us because our fees are X, Y, or Z. It's, have you thought about the long-term prospects of this asset in your portfolio, whether you buy it through us or not? That's interesting.
Yeah. Yeah, I'll have to pull it up. I'll find it and I'll tweet it out later today.
And Andrew Cortado here, you could say the same thing about gold in the chat. I agree. I think that's absolutely right.
Yeah. Yeah. Couple of headlines. Is that the last one?
Yeah, a couple of headlines for you here, Mike. So again, why is ETH trading poorly? Why isn't everything else ripping higher on this Bitcoin bounce? Bitcoin just sucks up the flows. I think it's going to continue to do that. People have referred to it as a black hole. So you live by the sword, die by the sword. We've reported on or mentioned more so those outflows, and you obviously see that in the price action. Well, you're seeing the opposite here: $2 billion in fund flows last week, $5.5 billion in the last 3 weeks. Additionally, came out that the SEC has not delayed the Litecoin ETF approval, which is counter to what we've seen at times in some of the other ETFs. So analysts are now assigning a higher probability of a Litecoin ETF approval. And then, by the way, Strategy now holds well over 500,000 Bitcoin. Small percentage of the overall supply, but I think well in excess of like 40 billion or so.
Yeah, it's insane. And they had earnings, the earnings call last week, and every time something happens in the Bitcoin world, you see Michael Saylor on Twitter, you hear him tweeting out, he's on CNBC, whatever. I didn't think that their earnings report would pull a lot of press, but they missed earnings per share. Like it's just a company that owns Bitcoin.
Yeah, it's just a fund at this stage.
Yeah, but it was comical because they missed earnings per share by they had negative $16 earnings per share, and they missed estimates by I think like 82,000%. And that just became the meme of Twitter. Like if you look up MSTR earnings on Twitter, that's all that comes up is just memes about how much they missed by. But yeah, I mean, when you look at the actual calculation of earnings per share, Strategy is not going to produce any good number at all. I mean, they hold Bitcoin, that's the whole thing, but still seeing it come up from the lows. I mean, it was at 250, 225, now it's hovering around 380. And 380 was actually the last time we saw it there was in the beginning of the year when we had that nice pump there. So we'll see.
Yeah, would love to see, and the same thing with Bitcoin here, right? We're excited. It feels good after the last month of volatility that we've gone through. You get Bitcoin trading back to 97 and then a quick pullback. I mean, that is the resistance area, to use that term here. It needs to push above that. You need to find buyers above 100 again, and it needs to maintain that. Same thing with Strategy here, MicroStrategy, whatever we call it, 380. Otherwise, it's just been a good trade, and just watch what price action does and follow suit. Don't fight it necessarily.
Yeah, and this is another. It's higher priced. It's $380, so you can't really do anything you want in here. But this is another one where if you're bullish on crypto and you want leverage, like you can go and get yourself some shares in this, or you can trade the options. But I would do it the same way I would trade IBIT options. If you're IBIT's different a little bit because I'm selling a strangle in there and I have risk on both sides. but I'm just going to keep shifting that risk higher if Bitcoin continues to go higher. But MicroStrategy, like 20 IV rank, 86% IV in June, 100% IV in the rest of the months. If you're looking for upside, you can buy these options cheaper than you could have a couple months ago. So.
Yes, sir.
Yeah.
That's all I've got for slides here.
Lovely,
today,
lovely.
my friend.
On that phone over there, can you decline that software update? I don't know if you see it.
Yeah,
there we go. Yeah, perfect. And if you can pull up the Tasty Crypto app, that'd be glorious. All right, I am gonna pop over to the YouTube channel here. Got some questions. Mr. Mike, can Ryan talk to the tweet I saw about a supposed refund of Ethereum gas fees when 2.0 comes out or comes online? Is there anything to that?
I don't know. I haven't seen anything. I don't know exactly what that means. It doesn't work like that exactly. I would have to see the tweet.
Like, what was the tweet?
The other thing that I'd say, this is not necessarily true for what this is. I haven't seen it, but there's just so much that is a scam or a fraud, or so you just it's right. It's the internet, I guess. Maybe it got worse. I don't know, but yeah, in crypto Twitter, crypto X specifically, you have to kind of second guess some stuff like that. I don't know. Without the details, I don't think that would be Ethereum. Maybe Ethereum Classic. I really have no idea.
Yeah. If it seems odd, maybe do a little digging before you enter your credit card and social security number.
Right. Like, I mean, if you just think about, okay, I need to pay a gas fee to interact with this network. That gas fee is, how the economy works in order to validate transactions on the network. It's an incentive. It's how the whole thing works. So then who's giving the gas fee back would be my question. I don't know. That's just how I would start to think about it. So I'm guessing it's not a thing, but I don't know. I'll have to take a look.
There's always scammers out there. Always scammers. But yeah, these days I'm getting Illinois tollway texts. You get these? Where it's like, you have an overdue balance of 35 cents. We need your credit card information now. It's like, how is this even being sent out? Like,
your Amazon package is missing. Call us.
We can't deliver your UPS package, even though it's through a different provider. Insane.
Dan on the Tasty Crypto team here says, I think he's talking about the new Ethereum improvement proposal. I honestly haven't looked at it that closely, so don't know. So maybe there is something where a portion of the fee, if it's in excess of an amount, is returned. I don't know. There we go. Dan's hooking it up in the chat.
Love it.
Yeah.
Look at that.
See, this is a full service show right here, man.
Love to see it.
You know, you get, because obviously I don't know what I'm talking about, so you get the real support in there from the chat.
Philip's looking at, or needs to start looking at, ADA, Cardano, he says. Anything interesting there? What's your take on this?
I don't own it. Its volatility pops off substantially at times, but I don't own Cardano or ADA. I'm like, my positions are concentrated for the most part in Bitcoin, Solana, Ethereum, have some SWI. There's just so much to keep track of. So I've got bits and pieces in random memes and shit like that. BitTensor, Tau, some of what's happening with decentralized intelligence, AI, blockchain, the convergence of the whole thing. That's very interesting to me, but don't own any Cardano. I mean, it's a smart contract platform. There's a lot of those. It's kind of it's a larger market cap, certainly. But it's not something I've ever used. Haven't really ever been that close to.
Fair enough. Theta Collector. What's a good strategy for IBIT if you're bullish on it over the next 3 months specifically? I'm thinking of selling a put and buying a call spread. Could totally do that. That's what we call the cycle bull. Anytime you finance an upside product or an upside trade there. So I have this 55-60 strangle. I keep saying, if we get a move to the upside, I'm just going to shift my risk. So what that really means is instead of rolling the put up to the 60 strike, I'll literally just shift the whole thing up. So if IBIT goes from 53 to 60, I will literally buy back the 55-60 strangle and roll it to a 60-65 strangle for a scratch. So sometimes it's not about collecting extrinsic value and keeping the same strikes. Sometimes it's about like, where do you want your risk? And I want 0 upside risk. I would rather have a downside basis at 60 than starting to take on upside risk on a short call that's in the money. Like, I just don't want that.
Yeah. I completely agree with you. And that's one reason why I don't even really want to buy call spreads in there. I know maybe that sounds crazy because, certainly you want to increase your probability of profit at times. You want to reduce your cost basis. But what concerns me about that, right, is just we know how much volatility can move by in here. It's like you could do this in the same thing with the VIX where, okay, I'm very bullish. Volatility's at the lows. Those options are relatively cheap. Now, what I would be concerned about is that you just don't, you have that, you go out further in time, you're 90 days out or whatever, and you get that move and volatility explodes. We go from 45, 50% and you're back at like 80%, even for a moment. I'm not sure you're going to get much, you're going to be able to extract a ton of value out of that spread. I mean, I guess it all depends on where the price is at that time.
Yeah.
But that's the thing that would concern me is just we know how rich those tails can get when you see that upside move and you get that volatility expansion. That's just, I guess, how I would think about it. I personally would like to do the wheel strategy in there.
Yeah.
So sell a put at a strike out of the money, collect the premium for it. If it's in the money, take assignment of the stock, or in this case, the ETF, sell the call option against it. But personally, I just want to be long. If I'm playing, for that vol expansion, I just want to be long those upside calls because the vols are cheap.
Yeah. And it's very similar to volatility product in the sense that if you cap your upside from the get-go and you get that move to the upside, it's going to prevent your spread from trading at full value to a pretty strong degree, just because even if the spread goes completely in the money and it's a 10-point wide spread, if that's paired with an IV increase, it's going to be trading for like $4, $5 at a max. So I agree with Ryan. I think when you look at the way that these products are structured, it kind of goes against the whole like always have something spread off with upside risk, because if you know that a naked long call is going to appreciate in value if the product moves up, just because the Black-Scholes model looks at the current price of the product, then you look at implied volatility increasing on the way up, you don't necessarily want to have a hedge to the upside, at least from the beginning. You could throw on some calls, and if you get that pop, you could then turn it into a spread for free. And you'll be able to do that. I mean, you'll be able to make a really wide spread, because if that vol pop also means more call skew, then you can sell those really far out of the money options and literally have a spread on for free. I have this on the screen here. This is another one I like for anytime you want to have upside gamma, but have a high probability trade. You could sell a put and use that credit to buy a call or buy 2 calls. So this is just an example where I'm selling a 53 put in the 100-day cycle. So this is like my core short put position. If there's a move to the downside, I can take shares of IBIT with a basis of 51. If not, I can have these near-term calls in the 46-day cycle. Shorter term, they'll be decaying against the total trade pretty aggressively if nothing happens. But if you get a pop in IBIT from 53 to 60, those $1.50 calls are going to be trading for $3-4. You could spread those off, or you could just sell out of them and use that credit to offset your risk in your 53 put. So I kind of like these types of things too, where you can get that theoretical gamma and you still have a neutral $200 profit range, where if nothing happens, you're still making money.
And if you get that move, then you can kind of step in and you've got another card to play.
Yeah, totally.
When I look at the 102-day duration in here, so IBIT options, August 15th, regular monthly in there, when you can see what we're talking about, if you have implied vol in your options chains display here, the vol doesn't really change. It's kind of, 55, 56 all the way up versus, you go into another stock, you might see across, $20, $30, there could be a 10 to 15% spread in implied volatility. Here, it's all just stuck at basically 55 to 60%. So again, if that's a cheap vol, I just want to own that volatility. You're not offsetting much in volatility terms when you're going out and selling something 10 points away. That's only 1% difference in implied vol.
Yeah, totally. So yeah, I think if you're comfortable with downside risk in here, unlimited downside risk in here, you could easily structure something like this. You can customize it however you want, but as long as you're collecting your credit, you have no risk in the middle, and you're accepting the downside risk there. But diagonal spreads are okay there too. But again, if you have a longer term short option and you get the pop, the diagonal spread is not going to come in. I would rather buy something like August and sell the 11-day against it and just keep rolling that 11-day to another 10-day. Like, you want to have that really short-term time frame so that if there is that pop, the near-term cycles will ignore it more than those longer-term cycles will.
Yep.
Let's see. How do you do your adjustments in iBit? So all of mine are on the follow page. So if you go to the follow page on Tasty, you can filter for my name and just search for iBit. But really, I'm just collecting credits along the way. Some of these small debits were me buying a wing to create a butterfly. But this is the nice thing about this high IV product. You can collect $2, $3 every time you roll. So I started with $5 and I now have $1,400. So it's been a really nice trade, and we'll see if we can keep it going. I think we'll be okay though.
We've got a great question here from Chad PM. What is a cheap or expensive volatility? You want to take this first, Mike? Or there's a few different directions that we can probably go in. I don't know if we're talking about a per strike vol or just high level 30-day implied volatility. When I look at that, it's just IV rank, or it's eyeing it up almost. Where is the implied vol versus where it's been on any time frame? If I look at the last year in Bitcoin, you have pretty liquid options markets outside the U.S. for Bitcoin and many other cryptocurrencies. You now have options on iBit. But when I look at the implied vol in Bitcoin, spot Bitcoin over the last year, got up almost to 70%. Let's call it, mid 60s or so. It's traded there at least 10 times. You're at what, 46, 44, 45, somewhere around there right now. So that's low, just given the range that it's been in. That's why we have that IV rank of 0.
Yeah.
And I think you probably just compare, a per strike volatility against where that is as well. So if we know that 30-day IV index or the monthly IV is 42, 45, whatever, but there's a strike that's trading at an 80 vol. Mm-hmm. Well, that's expensive, but that 80 vol strike is probably not going to pay you very much because it's going to be that far away, depending on the time frame. Yeah, well, I guess we could look at it. Well, so the 80 vol strike, there isn't even an 80 vol strike. So if I look at the August 15th expiration for iBit, going back to the ETF for a second, the 120 strike, you maybe can get filled, 17 cents, 18 cents. The bid is 16. So implied vol is 71.5%. We've been there on a 30-day annualized basis. We've been very close to it numerous times. So even though that 71 certainly is more expensive in volatility terms than the at the money, the option is obviously going to be cheaper in a nominal basis. But that 71.5% vol is still not a cheap vol.
Yeah. And, in other words, in any other product, when you have a product at 53 and you're looking at a 120 strike call, the fact that it is trading for $20, like in almost any other product, this would be trading for a penny or have 0 bid if the strikes were even available. But the fact that the strike is available tells you that this thing can and will move, and the implied vol per strike, you're almost always going to see this kind of smile or smirk where you have the increasing vol on out of the money option, simply because if you think about the nominal basis of this $6 option at the money, what does it take for this $6 option to turn into a $6,000 option? It takes a huge in the money move. So just 10xing. For this option, what does it take for this 16 cents to turn into $1.60? I would say a 2-day move in Bitcoin up 10 to 15K. This option, I think, would go from 16 cents to over $1.
Yeah, I want to sell way out of the money if I'm even going to sell call options, and normally want to sell this against the underlying position. So in this case, I want to do a covered call on iBit. I want to sell that vol when it's above 100% because you've seen that move. We know there's quite often a positive correlation between implied volatility and price in Bitcoin versus the inverse correlation we observe in equities. VIX goes up, equities are probably going down. Not the case here. But I want to sell, if I'm looking to just sell volatility in there, that higher volatility is at levels like well in excess of 100%.
Absolutely. And that can be a nice long-term strategy. If you own shares in IBIT and you wait for the pops in volatility, which are typically paired with upside moves, and literally you wait until that happens and you could sell this 120 strike for $1, like that's really you just selling pure implied volatility tail upside premium. Where if you own the shares and it gets up there, you're going to be fine regardless. But if you do it in like a 30-day cycle or 50-day cycle, it's going to take a lot for it to even get there. And if it doesn't and just chops around, that dollar premium goes back down to 17 cents.
Yep.
So on the other side of the coin, what is cheap or expensive vol? So like IBIT, Bitcoin, you're seeing low IV rank readings. IV rank is just looking at the past year, and it gives you a gauge or context around where implied volatility has been and what the current implied volatility is. So the fact that Bitcoin is on the lower end of the range means that the current implied volatilities in these options expirations are on the lower end of the range. If you look at something like TLT, so we get this question all the time, like TLT, IV ranks at 50, it's high IV, but then you look here at the actual implied volatility of these cycles and I see 19%. I don't care, like IV rank could be at 120. I'm not selling premium in a 19% IV product. But there's also another layer of complexity, like Brian mentioned the range of implied volatility. So if Bitcoin's at 50 and it was at 70, that's a pretty decent range where Bitcoin vol can expand to and then contract 20 percentage points. TLT, it's at 19 now, but like what is the range? Is the range between 17 and 21? And that's why it's at 19.
Great point. Yeah.
And it's like, even if you're selling premium, but you're only getting a 2 percentage point contraction to get you from 100 to 50, that's not really going to help you. But like these options are $1 and they're at the money. So it's just like, I don't want to use this capital in this way to pick up $1, take on all this risk and not get paid for it. In the sense of IBIT, you can sell premium even in a low vol environment. If you're selling near-term premium, you're still getting paid a lot to take that risk. So like $1.70 for 3 points out of the money, and you're in a 46-day cycle, and the price of this product is almost half of what TLT is. So there's a lot of layers, of course. Like we went around and kind of gave you an idea of all of it, but I think it depends on what strategy you're using, but it also really depends on how that product behaves when it moves to the downside and upside, and how implied volatility is projected to behave in the same way.
Yeah, because there's no world in which we would expect the volatility of TLT, something that's going to give you exposure to the long end of the U.S. Treasury yield curve or long-term Treasury bonds, 20 plus years, I think is what it is. We would never expect that to trade at the same volatility or to have the same realized volatility as Bitcoin. These are U.S. Treasury bonds. The other is a speculative cryptocurrency. And so I think realized vol matters too. And that's just one other layer that I'll throw out there. We quite often are going to measure implied vol versus itself, as we have here through this exercise with IBIT or with TLT. But you also want to understand where is the implied volatility relative to the underlying realized volatility over that same time frame. Because even if you have a situation where implied vol is cheap relative to itself over a time frame, it could still be expensive relative to realized volatility over that same time frame, right? If we see that, I don't know what you said, TLT was 19%?
Yeah.
Okay. So if the implied volatility of TLT is 19%, but the realized volatility is 5%, and we can measure that spread over time, we might argue then that, oh, well, actually, it's very expensive. It's in one of the higher percentiles that it's traded in when we measure the spread between implied and realized volatility. Another way to look at it or to think about it, and then when you look at something like gold, gold IV is arguably pretty high here versus where it has been, and you're getting much larger realized moves in gold prices as well.
Yeah, and that's a great point to bring up, because we get questions, product agnostic. We get questions like, this product is moving $10 a day, $15 a day. But then you look at implied volatility and you'll see like the 70-day cycle is projecting a 10-point range, but the product is moving $10 a day. And the question is like, should I sell a strangle now? It's like, I don't think so.
They want to buy vol.
Yeah, this is a situation where you're actually seeing realized vol exceed implied vol. That doesn't mean it's always going to be that way, and that doesn't mean if you set up a trade and you have the implied volatility range that you're capturing with that trade, and the product finally ends up chopping in that range, like that's fine. But when I see like an Apple that's moving $5 or $6 a day, but the 70-day range is $5, I don't want to step in front of that. I want to either take a step back and wait for something to calm down if I'm selling a strangle and trying to capture it, or I'm playing both sides and I'm trading it in and out in a directional way.
Absolutely.
Beautiful. Well, that is it for us.
I'm hungry.
Yeah. It's Cinco de Mayo. We have to celebrate by partaking in 5 rabanitos. But hopefully that segment was helpful. Good deep dive in implied volatility and Bitcoin products. IBIT definitely taking the world by storm in terms of the volume, share volume, options volume. Markets are basically penny wide. You love to see it. And it does, offer people a lot of ways to participate in Bitcoin and the change of Bitcoin price without directly purchasing Bitcoin and going that route. But yeah, one more time, we have the feedback link pinned to the top of the YouTube chat. So if you would be so kind as to fill that out, that would be great. If you want to sign up for the Tasty Crypto newsletter, it comes out every Saturday and Wednesday. You can head to tastycrypto.com and you can find that there on the homepage. But yeah, if you want to reach out to us on Twitter, I'm at Trader Mikey B. Ryan's at Ryan Fred Grace, and definitely give Tasty Crypto a follow. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hi, my name's Angeline Ong. I'm the newest member of the IGTV team. Well, I began my career at CNN Financial in London, covering everything from the financial markets to the European trading day. What I'm looking forward to working with IG is to be the best version of myself and to use all the skills that I have and help IG reach out to those clients out there who are, like me, looking to learn and are ambitious and willing to put themselves out there to learn more about a financial instrument they might not have ever used before. My philosophy is, if you're going to play, why don't you play big? Let's not settle. Let's try and learn more and become a real expert in the field that we are trading in. And that's what I hope to bring to IG in its strategy, in its content, and expand that across Asia, the US, and also Europe.
We are back. It is Monday, May 5th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, an exciting week ahead with the Fed due out on Wednesday.
Buckle up. This is a major inflection point and a little bit of a reflection of it today, seemingly in markets. Data goes this way, data goes that way, depending on which PMI provider you ask. But at least at the onset here, stocks looking like they're ready for a pause, like they don't want to commit ahead of this event risk.
Either up or down. Markets
That's
are coming in overnight. We're rebounding a little bit here, but 3 of the 4 indexes are still in the negative. Bonds are twisting. Perhaps the most notable development is what's happening in the commodity space, either from the oil or gold perspective. Oil very much up off the lows after a very dark open yesterday, down 4%. We have recovered some of that here. Dollar's still down across the board. But Ilya, we talked about that the services PMIs that have come out. The S&P Global one was I guess bad,
worse,
not great. The right, so
worse than the other one.
So pick and choose your fighter. I wanted to focus today on only one of them as we go to the slides here. The data today, it's not great, it's not terrible. Thinking in that Chernobyl 3.6 Röntgen's type of sense. The growth impulse here, as we focus on our services PMI, rather the ISM services PMI. Ilya, talk to me about this because this is the one that's a little bit more optimistic than the two. It's not terrible. Of course, it's a little bit better, but it's still not great. There's a read-through between both of these PMIs that trouble lurks ahead.
Well, that's right. And so I think the part that you really want to be looking at here is the interplay between the Fed's 2 mandates, and that is employment and prices. And if you look at employment here, it is now contracting. This is the largest employer in the U.S. economy, and we have been contracting for 2 consecutive months. So in that column there that says the trend, that is telling you how many months it's been either contracting or shrinking. So it's a binary thing. It's not a tracker of faster, slower. So you're looking here at 2 consecutive months now of employment in the most important place where it is to be found in the U.S. economy contracting. Meanwhile, if you look at the prices component, it is surging. And obviously, this is the 95th consecutive month that it's doing that. But that's what you want. You don't want deflation. But nevertheless, the pace here is absolutely off the charts. To put this in some sort of context, the previous time that we saw anything comparable to what we're looking at here, we'd have to go back to early 2023. So about, let's call it 60%, maybe 55% of the way down from the peaks in early 2022. So we've undone a very significant bit of progress on cooling inflation here. So yes, the overall story here is that the headline numbers are growth, and their growth by a greater extent than was anticipated. But also, business activity is cooler, employment is shrinking, the index measuring the length of time it takes to bring deliveries, that's growing. Inventories are building. We see that here. The same sort of inventory building that we've seen, of course, in spades, in the GDP numbers, in manufacturing. All of that seems to be spilling over.
It's the inventory build coupled with that collapse in imports, right? Like people are.
That's right.
They're stockpiling.
That's right.
But
the
growth
this is that GDP
slowing.
dynamic, right? Like, so when we saw GDP last week, what did we see? We saw the surge in imports and a jump in the investment component. Why the jump in the investment component? Inventory building. So all of this is telling you that there's a defensive posture in the sector looking forward. People have kind of dug themselves into their foxhole, as it were, and they're quietly shedding workers and raising prices. This is not the recipe for good things, considering how forward-looking this data is.
No, it's not a great mix, and I'm curious to see what the Fed says this Wednesday when they talk about the economy, because top-line growth obviously was bad. If we take a look at what's happening with growth estimates that are coming in, Atlanta Fed GDP now, which arguably more accurate than any of the other ones, even last quarter with their adjustments, right? Their gold import adjustment model was closer than the New York Fed or St. Louis Fed or anything else. They have downdrafted from 2.4% down to 1.1% in their GDP estimate for the second quarter. So already those are starting to come in right now.
Yeah.
And when we look at the Fed rate cut odds at the start of this week, the aggregate probability for a May cut is 2.38%. The odds of a June cut are only 28.9%. June cut's not even, that's not at that 50% mark, right? We go back to the late 90s. Anytime the market's priced in at least a 55% chance of a 25 basis point rate cut or rate hike, the Fed has delivered in that direction 100% of the time. We are so far below that threshold right now, it's not even in the territory where they would consider. I mean, the market's at 71% for a hold. So what's the Fed going to tell us this week that the market's going to like?
It goes deeper, as a matter of fact, because if you look at what has been happening with the based outlook for the rest of this year and going into next, we've basically reset to what was the Fed's baseline. So right now, through the end of next year, we're looking at 100 basis points exactly, which is, of course, exactly in line with what the Fed told us in both December and in March. Moreover, it is a significant unclenching from the 127 basis points that we had on the menu just last week. As a matter of fact, April 30th was the last time, so Wednesday of last week. Not exactly a long time ago. So the markets are seemingly reset for this Fed. They're waiting for the Fed to come out and tell them something. And ostensibly, they've seen a bad GDP number. They've seen a bunch of other data points to say maybe you all will finally do something here or not. Come on. Now is the time. We can clearly see that things are turning. And I think the clarity of the turning is in the break-even rates, as I've been talking about. The market is already telling you the net impact of what's going to happen here won't be more inflation, it'll be less. And that's with the knowledge that the tariffs are a one-off price jump. We can clearly see that in these PMIs. The price components are off the charts. So it's not like this is a surprising thing. It's that the markets are looking through the price shock and saying the demand drop will be worse and inflation will be net lower. They're screaming at the Fed, you have permission.
They're screaming at the Fed, you have permission to do this. The Fed is still not going to do it. They're a reactive group. They're always reactive. They're never.
That's right.
This has been the case with the price rise in 2022 and throughout 23 and 24. They're always fighting the last battle. They're not going to skate to where they think the puck is going to be, right? If they did, then they would have cut rates after SVB and Signature Bank went down, and instead they came out 3 weeks later and hiked. So they're going to look at the big macro numbers right now, and the macro numbers are showing you lower growth, more inflation. It's not exactly a mix that allows them to move right now. And because, quite frankly, the data themselves are incomplete. They're not exactly screaming recession either. You know, you don't have all the components there in place yet to say the Fed needs to actually act at this very moment. It's an emergency. Growth is off a cliff. We're teetering. We're getting there, but that's not how they operate. I think the story.
And frankly, the pressure from the White House that doesn't help. Obviously, they've let up some, but the optics for the Fed here is don't look like you're kowtowing. Protect your credibility.
That is very much indeed the case. Today's action is somewhat constrained. It's only a 0.36% move lower for the NASDAQ, 0.28% lower for the S&P, both hovering above their 1 week moving averages today as we get close to them and find a bounce. But they are inside days after all. So no real significant progress one way or the other. We find ourselves looking at a week where the Fed meets on Wednesday, and we did not have the luxury of hearing from Fed Chair Powell on Friday after the jobs report. So I think just contextualizing that with what Powell said the most recent time he spoke publicly, Ilya, he did speak extensively about how the Fed does not know what to do because there is no clarity here from the administration. They would like to treat this as a one-off price hike, as we've done a number of times here on this show and others. The Fed sees inflation is going up, tariffs ratchet up prices, and then they continue along their aforementioned path. And the Fed cares more about the decline in real output on the other side of that. So they're hesitant to hike, and they want to see where the economy lands to see if it's necessary to cut. But they can't cut up front because you're going to then feed that inflation beast that lurks around the corner, if only in a temporary sense. When does that inflation beast arrive and then depart? The Fed can't really game that out right now, is Powell's best description of the situation, at least the way I'm reading it. The Fed can't say the inflation is going to be here through the middle of the year and then subside by next year, and then we could start thinking about the cuts thereafter, because the form and function of these tariffs continues to evolve on a nearly daily basis. So the Fed's got to look at what's in front of it right now, and that's an economy that's seeing slower top-line growth, but core GDP still up, and the labor market's not exactly falling apart, but it is slowing. So they probably sit on their hands. Riders of Rohan are not coming over the hill with Gandalf this Wednesday.
No, decidedly not. And I think you're characterizing it exactly right. When Powell last spoke, this was March, and then, of course, going into this meeting, that there isn't one in April, that March update was basically, look, tariffs historically are a growth negative and an inflationary impulse. So we're going to write that in the SCP because that's what we think is going to happen, because that's the way it's happened before. But we don't know because these things are so fungible. So this is our best guess. We're not going to change the path of rates versus December because we don't know how to change it. We know that we need to move our goalposts on growth and inflation in the wrong direction, but in divergent directions. Higher inflation, lower growth. So we're just kind of sitting here in the middle of the spectrum going, we don't know. We'll see. And what the 90-day pause in reciprocal tariffs does is it just creates a new cliffhanger. So the Fed does not have clarity. We don't have clarity. The Fed doesn't have clarity. Probably the worst thing Powell could say here is, or even write in the statement collectively, is we expect a prolonged period of uncertainty as trade negotiations take time. And just leave it at that.
There are some encouraging signs in the price action, at least. We got to give the market credit where it's due. The low for the Russell today comes in at 2002.3. The 1 week moving average is 1998.9. Swing low that you have here from middle of March is 2002.3. That's today's exact low, 2002.3. So a pretty neat little, we're edging our way through resistance. We've pulled back a bit. We're catching some momentum, right? That's encouraging. We can look to that as encouraging. The same thing for the NASDAQ here. I just don't think it's encouraging enough.
No.
To justify new longs after what's been a historic streak. And as the data shows, we go into a stretch where the NASDAQ 1, 2, 3, 4, 5, 6, 7, 8, 9 days up in a row. You can look to the S&P because that's what all these stats are based around. But if you look to the S&P 500 and it's 9 days up in a row since World War II, 80% of the time that you see streaks like this, it's occurring in the midst of a bear market. So it's been great. I was certainly grateful for it to see my short put spread recover, and I was able to get out of basically break even. That was nice to being deep in the hole. And if I pressed it a little bit more, I'd still be up now if I had rolled it forward. That said, this Fed meeting on Wednesday does not seem like it brings about anything good. And it's different than what it was, during the inflation scare of the post-pandemic Russia-Ukraine supply chain reopening episode. Insofar as Powell telling us that the Fed couldn't cut rates was indicative of the fact that not just inflation was staying up, but that growth in the labor markets were a bit better than anticipated. Right, contextually.
Yeah.
Powell telling us right now that we can't cut rates is not because growth and the labor markets are holding up. It's because the inflation side of the equation is such a black box. So it's uncertainty for a bad reason, not uncertainty for a good reason, right?
Yes.
Right? Not being able to cut because growth is good is a pleasant surprise, not a problem, as I argued for years here with you, Ilya, right? Like, that's a good thing. We shouldn't be upset by that. Stocks may
Well,
be
that's right.
upset by that, but we should be happy ultimately. But now,
Yes. This is the other thing. This is almost through the looking glass, because if you look at then the implications, okay, let's quibble over whether the economy shrank or didn't shrink in the first quarter. What's the point? The point is it slowed aggressively versus the fourth. This is not debatable. That much is clear. Okay, we got a little bit of a warmer NFP number. Yeah, and the prior number was revised down by almost the exact amount of the headline beat to the single thousands. Okay, fine, let's quibble about that. But is there any question that the labor market has slowed? No. So the direction of travel here is very clear. Yes, of course, we're kind of going back and forth on individual indicators and individual numbers, and stock markets, as ever, like to go higher, so they find their catalysts where they can. Needless to say that we appeared to cancel a sovereign unraveling of the entire U.S.-led economic order. That's a positive. It's not surprising that the markets have reset April's panic. But they've only just done that. We are back to where they were consolidating after the growth scare began. But we haven't made progress beyond those levels. And the growth scare is only compounding. What is the Fed to do? They know they want to cut. They've wanted to cut since before any of this tariff drama was kicking off. That bias hasn't changed. But can they really say that they know what they're going to do here in June? No. So they miss a very important window for stage setting that might have set up the markets into all kinds of cheery thinking into mid-year. Now they have to get defensive, because the next viable opportunity for the Fed to talk to them about setting the case for cuts is June, because obviously the Fed's not going to cut out of the clear blue sky. That's not their MO.
No.
They're not going to let inflation expectations run away. So June is stage setting, and then maybe you see something in July, which is how the markets are currently configured. Now imagine growth deteriorates just a little bit more in that time. This doesn't look like a very healthy mix.
I will say the one thing that affords perhaps the market a little bit more cushioning this time around is that during the April episode, there was no opportunity for the Fed to come in unless they did so in an emergency fashion, because there was no meeting.
Yeah.
But we have meetings now, May, June, July. And I know it's the same thing, like we're doing them every 6 weeks, right? But like, just in terms of that psychology, there's no Fed meeting this month. So there's no one coming to save us. And if they were to do so, they'd have to be doing so in emergency fashion. That's the wrong signal. So at least now we're going to have the regular cadence of, we'll have the meeting, Fed officials will speak for 4 weeks, we'll go into a blackout window, we'll hear from them again, June, July, August. There's plenty of maneuvering that can be done on a regular basis without spooking anyone. And that hope, I think, that hope will help stick around for a little while. But the reality is that we could be looking at sluggish returns here. I personally find it fascinating that the market here is rallying up to the April 2nd high in the NASDAQ, the 618 retracement of the yearly high, yearly low range in the NASDAQ here, and is pausing. As we've covered with copper in recent weeks, really last week after the big pullback, struggling at the 618 is a signal, technically speaking, that you're not ready to declare the trend over. So in this case, the downtrend. Moving through the 618 would be moving through the inverse of phi, and that would say that the downtrend's over and a new uptrend has truly begun in the context of this market, and we're not quite ready to cross that threshold just yet ahead of the Fed this week. So fascinating little setup there. We can just pull this back on the S&P as well. Go to the 618. We're struggling right around that level, right below the April 2nd high as well. So look, risk to reward, Ilya. I know that you're already bearish, so this is not going to be... So put a smile on your face, I suppose. But if I've been long deltas, right? If I was someone who was in there on April 6th, 7th, 8th, selling puts, buying, getting long, and I've been riding this up, and I have a 9-day winning streak in my pocket, and short today's a little bit soft. This is probably the zone where it's good to adjust, to either take profit off the board entirely, maybe to set up a small short, hedge off some of your long delta exposure above 57.70 here in ES. Maybe just go short with a 100-point stop effectively, right? If you've been riding this up for 600, 700 points, the risk reward is better short than long. You're closer to the swing high than you are to the low. And have we categorically solved anything since April 2nd? I mean, maybe there are off ramps here. The IMF just said a few minutes ago that Scott Bessent has done a wonderful job calming markets down since the tariff announcement. So maybe there's institutional buy-in around the corner, Ilya.
Thank you, IMF.
But I mean, this is the point. This is the line in the sand now, technically speaking, for this rally. We have the thresholds here this week to cross for NASDAQ and S&P. And if we get through them, then what's really holding you back? Because the Fed will have given the market something to make it feel like the cushion is here and the Fed put is active.
If the Fed gives the market any sort of thread that says we've gotten closer, as opposed to just maintain a firm neutral, I think the market is going to want to grasp those straws. But that seems like the less likely scenario. From the Fed's perspective here, it seems like the path of least resistance is to say nothing of substance, because you still don't know. And if ever there was a time to be credible and not to speak loosely, this is it. The Fed is almost certainly walking on eggshells here. Not only around the White House, but also around everybody having previously kind of called out the Fed for extra activism. This is the kind of environment where the Fed's going to go, you know what? It is a thankless job here for us to jump out the window and do something even remotely proactive. No good deed goes unpunished when you do that. So, you know what? We're going to wait and we're going to see along with everybody else. That, in my mind, is the path of least resistance. If they,
for sure,
it's certainly possible that they decide to feel magnanimous with their own skin. But I don't see it.
Ilya, what sets up the interesting dynamic too, and I don't think we've discussed this a lot on air here, although it's just thought that I've had in my head, and I'm pretty sure I've seen others talk about it in recent weeks. But Trump coming down on the Fed so hard in September for their rate cut makes it like he was arguing in September, you shouldn't be cutting rates now. And now the argument is that he should be cutting rates now that he's president.
He's in office now. It's different.
Well, that's kind of so this isn't just like Powell pushing back on Trump because of what he said in recent weeks. This has been something that's been going on since before the election, with Trump telling Powell what to do and what not to do with policy. So it is a little
not
bit
unlike the assessment of the stock market. When it goes up, it's the Trump market. When it goes down, it's the Biden market.
Yes, and there is that helpful indicator on TradingView now for free to use. We
right.
see here the VIX is at 23.18 right now, up 50 cents here on the session. Volatility futures likewise this week. Probably looking at a bit of a floor here the next few days. I would imagine it's a little bit, I'll say, stickier around these levels as we go into the Fed meeting. Hard to see that vol's going to come back in. Just from my personal perspective, as we look at the calendar, very much like last week, where the first two trading days you kind of just bounce around and then you get your clarity as more information is revealed. It's a 27.5 IVR. And I suppose that's what makes this so difficult. Like, if I want to be bullish, should I be selling a put spread underneath recent swing lows as we gear up into the 618 plus April 2nd swing high resistance? I don't know. That feels like it's bad odds right now, and I'd have to give this a lot more than I'd like to, perhaps down to 54.50. So looking at the ES perspective, just trying to size up the risk to reward here, if we wanted to operate around that 54.50 swing low and give ourselves 50 points wide of it, so this retrains some intrinsic value, risking over 5 to make 1. That is not the kind of trade that I like. The probability of profit is a little bit beyond the threshold that I would even trade in, just because I like a little bit more upside convexity. So not loving it. The short side, however, is what's a little bit more intriguing, because if we talk about the move on the other side of 57.73
actually
and a quarter,
straight up buying puts with vol this cheap and looking at long put verticals would be my playbook. Now, obviously, I'm already in those at levels that are not as good as these. So be it. But if I was looking at this with fresh eyes, I'm not trying to sell premium. I'm just trying to straight up buy puts, keep it tight on my risk controls, and just look at the odds and say, you know what? To your point, the risk reward here is skewed.
Well, that's it. And if you just look at the selling a call spread, we talk about better risk to reward up against the recent high here, 57.73 and a quarter, giving yourself a little bit of breathing room on the other side, which only 27, 26 and 3/4 points. Maybe you want to bump it out a little bit more, but going 50 points wide, you can still get something in the neighborhood of 60 to 63% probability of profit. And in doing so, you're getting a risk to reward that's closer, 1-to-1. If you go a little bit further out to get higher pop, you're going to go for more of like a 3-to-2, which is fine depending upon what your preferences are. But you can stay within the confines technically of taking a lot less risk against resistance than you would be from selling puts. Ilya, the perspective that you offered, if you just wanted to go outright buy puts, or in this case, because we're using the futures, define risk at put spread, it flips. Right? Instead of 71% probability of profit or 74%, it's now 29, and it's 4-to-1, and it's 45 days out. So if you wanted to do this and just go out there and buy the puts, you could do it in a controlled risk fashion where you get a much higher convexity. Selling the call spread is one thing. If volatility goes up and the market goes down, this is going to gain money quicker, obviously. So it's just really depending upon your point of view here.
And it's a much better risk reward position. I mean, you're talking of, if it goes wrong, how bad do you feel considering the risk you're taking for your locked in upside?
Right. That's also, the part of this where if the market goes against us, if you're long the put spread, you're out for 500. If the market goes against you and you're short the call spread, you're out for 1,300. So depending upon how you want to structure it, given where we stand, there's a way to express the short delta view that's probably a little bit more cost effective one way or the other, depending upon what your goals are in the time frame you're operating around. Obviously, that was 45 in, 21 out type of mindset, but some people I know, a lot of people are trading a lot more short term these days. Ilya, before we turn the page to bonds, I just want to give a quick overview of the sector performance here. It's mostly garbage. Only 7 of the 25 sectors that we cover that I track are in the green. So that's 18 of the 25 are in the red. What's in the green? Gold miners, junior gold miners, regional banks. That's good. So we're not going to totally squash that. And so is retail. We can't complain there. But on the other end, energy is down, consumer discretionary is down, telecom's down, kind of usual suspects. The growthy stuff looks like it's struggling, although some defensive stuff is too with utilities. It's not great, not terrible. We'll stick with the theme of today's Futures Power Hour. I don't know if there's much to like here. Oil, though, is probably going to be the most interesting conversation once we turn to that, given the news, the comments from Iran, from OPEC+. Plus. It's a nice little stew we have going on here. We discussed the bond market, though, which after today's data, the PMI's not great, but again, not terrible and holding up perhaps a little bit more than people anticipated in some regard. So we're seeing that notes, bonds are struggling a bit, and oil making a comeback over the course of the session. That doesn't help either for notes and bonds. I'm not too incredulous about the positioning here because the whole trading modus operandi has been around sideways chop, if not for a slightly upside bias. So the sideways chop aspect is working. I also think a Fed that tells us that they can't cut this week is very good for the bond market. Hear me out for a quick second, Ilya, because it means that they're not going to fan inflation. And that means growth has to weaken more in the short term before they can actually act. So reduction in growth and inflation premiums as opposed to the reinflation What happened in September? The Fed cuts by 50, yields spike.
That's right.
So
That's right.
I will stay long bonds heading into this Fed meeting, given how I presume things will turn out.
I am taking different versions of the same sort of idea at this point. So I got out of the bonds last week, but I will be looking to reload. I think the thesis makes sense. I've started to kind of layer on complementary ideas. So last week I started buying the Aussie dollar. It looked like it was breaking out against USD, and obviously USD would weaken in this scenario. I've also started to sell, speaking of selling puts, in gold, because it seems to have made a pointed reversal over this
Today's
session
gold move
so far.
is beautiful. I have a lot to say about that in a little bit.
Yeah. So I'm with you thematically. I haven't expressed it in bonds yet, but I've started to buy yen. I've started to buy Aussie dollar last week. I added to my yen position today. So I'm with you on where I think this is going. I think that this will be the market hearing the Fed dragging their feet and going, all right, this is what we told you in April last year and May, and you were delaying then. And what did we do? We blew out the long end because we put a bunch more rate cuts downwind. I think that's exactly what you end up seeing as a consequence here.
Bonds now back into the 114 handle. It was just a few days ago that we were up in the 117s.
Mm-hmm.
Is the Trump put going to be tested again? Look, picking off the 111, 112, centering trades around the lows. It has worked in fits and starts. The question is, with momentum negative, is today the day to do it as we're creeping into the lows? Maybe you can get a better price. I'm going to be absolutely doing so. In fact, I think I'm going to put another bond trade on later tomorrow on the show because we'll let this continue to come back in.
Well, 114 is something of a pivot. It could hold here.
Yeah, well, I have enough exposure here in ZN, in ZB, but I think that's the play, right? Just what happened in September. Fed cuts, bond rates don't go down because they're fanning growth. They're fanning inflation. This is the opposite.
Yes.
That's not a tasty trade methodology. That's, Ilya, you and me being macro people for a long time.
That's right. That's right.
Having had to explain to people over the years, like, how come the central bank cut rates and the currency rallied? It's like, because they told you they're not going to cut rates anymore.
Right.
This is it. It's the end of the road. Like, the ship's turning around.
And this is the thing that those of us that are macro minded are constantly explaining to macro tourists. They go, well, macro doesn't work. Sometimes the central bank cuts and the currency rallies. And sometimes it's the opposite. Well, yeah, because we don't live in a world where you press the button and the macro vending machine spits out the soda of your choosing. Context matters. Why things happen matter. And speculative interest matters. Markets are discounting mechanisms. If something is already expected, then there is no reason for the markets to do anything on what is already baked in. So you do have to watch this stuff a little bit closer than just, higher oil is bad for markets. Well, maybe.
Not all
maybe
the time.
Not. It depends. Is it higher oil because demand is good? Or is it higher oil because Russia has invaded some place? What kind of higher oil is it? So,
like, higher oil,
this kind of stuff matters.
2021 was great. Like, the markets loved seeing higher oil throughout the early pandemic days because it signaled that economic growth was coming back.
That's right. That's right.
So it's just
it matters.
These
differences matter.
They're not hard and fast rules. The context that you find yourself in matters greatly, which is why the 10-year yield at 4.366% is in the midst of what you might consider to be the recent trading range around these levels, perhaps. We've been ping-ponging between 4.15 and 4.45 over the recent weeks, and you can kind of see how 10 years move in bands around similar levels over time if we were to scale back. So we just bounced near the 4.15 again, as we've done a number of times over the past 6 to 8 months. We had the brief April miscue, but forgetting that flash, most of the time it's been about 4.15%. So the ping pong is there. Choppy, range-bound action. Let's play a fun game, though, Ilya. Left shoulder, head, right shoulder. Maybe a pretty big inverse head and shoulders pattern coming in for the 10-year yield. That would be a nightmare because it means that much higher rates are coming around the corner, and I don't think anyone wants that. So an earnest defense, perhaps.
That would be an abject nightmare, yeah.
We say first blush, they'll defend the Trump put in TLT. I think they're going to have to give it a go on the second blush, too. And then it's probably that third time we start to really see a crack. But you mentioned gold earlier, which...
Yes.
I was early, but sometimes being early is better than not being in there at all. Gold price is moving up here today with what I find to be a beautiful bit of deja vu. Like Neo walking through the Matrix and seeing that black cat twice. Let's look at that Morningstar candlestick cluster here up against that 1 month moving average, right near former resistance becoming support. We've seen this movie before, Ilya. We saw this here at the start of April, and now here...
A great thinker once said, fool me twice, the point is you can't fool me again. I didn't buy it last time. I bought it this time.
So a few days ago, I flipped from short to back long because I'm going to kill myself if I, metaphorically speaking, right? Like, if having been such a big gold bull for the past year plus, like if this thing goes up another $500 and I'm short, I'm going to lose it. So I'd rather be long and lose money than be short and potentially lose money. That ego-driven decision, though.
My story of stock markets last year, I'm like, if this thing falls and I'm long, knowing that I want to be short, ooh. That's going to sting much more than any of these losses.
So we have the inside day Friday up against the 1 month today. We get this big green bar up 2.41% right now, 3322.30. I would posit that this is another one of those Morningstar candlestick clusters up against former resistance, now becomes support. Bulls are firmly in control above 3,200. We can look to a lower term time frame at that 4 hour mark to look at the downtrend.
Back into the digestion.
And yes, the area that we lost previously from like 32.75, we're now back in it.
That was my catalyst today. Once we broke back into that digestive range, I was selling puts in here. Because frankly, the vol is high enough.
60.2 IBR.
You know, you get basically you could structure, and I did very tasty methodology 46 days out, and you basically get 1-to-1 risk reward. So it's pretty much a no-brainer here to do it this way versus buying calls.
In GC, if you go, I'm in 51 days here, which that's the GC Q5 contract. So just a quick price check on the charts for the recent swing lows. Those will be higher than 32. Yeah, about 32.38, we'll call it. So we can slip below the 3,200 mark. If we really wanted to play it against the recent lows, $25 wide, now we got to clear some of this off. Too many. All right, so 32, 31.75. That's a 73% probability of profit, about a 3-to-1. That's not awful. If we wanted to play a little bit closer up, 70%, a little 2.5-to-1. I mean, there are put selling opportunities right now in the gold market, even though volatility is not near the highs that it was just a few weeks ago. You could just kind of see here on the lower term time frame that it's beginning to turn the corner and bounce up, and vol trending up with gold prices moving up has been the two-step that has gilded the path to higher prices. See what I did there? I like what's coming together here today. I felt like an idiot a few days ago for getting out the short early when I really was waiting for 3,200. I was impatient, but now the technical price action is as crisp as it gets, and we just saw this a month ago, so we got to roll the dice on long deltas right now.
Yeah, I mean, I'm long here now. I mean, I'm doing it by selling put verticals, but nevertheless, I'm looking for us to come back and revisit those highs north of 3,500 at this point, and then we'll see.
What world exists in which we're back above 3,500? Where are stocks?
Hopefully, where my puts would like for them to be.
You could tell that it's not like a super growth kind of day because you see that silver is up by 0.79%. And oh gosh, Ilya, it is an inside day.
It's bled through the range bottom too.
Yeah, where did we just hit resistance? 1 month moving average today. And then you mentioned range bottom. The past few sessions, you can kind of see when we punch up above 33, we try to hold 33 or so. And then
like
when
a
we
little
break,
axis there.
Yeah, we break down and we're not quite getting back through there today. On the time frame, that's a bearish outside engulfing bar or key reversal. We eclipsed the previous period high to close below the previous period low. So silver is not looking too hot right now, which I've been hanging on. I have not been rewarded for hanging on. I think this is going to be rolled at a loss, which kind of stinks, but that's what you got to do sometimes. It's a 22.1 IVR. So it's pretty cheap to keep long call exposure in there. Copper, on the other hand, again, kind of an axis you just said. There's an axis right around 4.5 to 4.6 in recent weeks and months. You can kind of see here. And so I still have my short put spread on the 4.4, 4.5. Working okay today because the gap opened higher, but it is a doji, is resistance at the 1 month. Like silver and all the other growth things in the market, not getting traction here at the start of this Fed week.
Yeah. It's very interesting the way all of this is lining up now. Because I think as you look at all of it together, you get a very clear sense that you're starting to angle into and the bonds aren't quite there yet, but the dollar has started moving, gold has started moving. You're starting to get this flavor of we are going to get a can kick here.
Yes.
And when we get a can kick, everybody sits back and goes, okay, did anything happen? Did anything change? We've got this 90-day cliffhanger on the reciprocal tariffs. Obviously, the markets are getting all kinds of up in arms in terms of what even the trade deals that ostensibly are being negotiated could mean, because just as an indicator, look at EWT. EWT is the Taiwan ETF. There has been a lot of talk about maybe part of a trade deal for Taiwan will be devaluing their currency. The currency is sinking. What you're seeing here in EWT is not Taiwanese stocks moving one way or another. What you're seeing is, of course, EWT is in dollar terms. It is an ETF in USD terms. And if you look at what the Taiwanese dollar is doing, it is ripping. Now, obviously, this is not the most liquid thing in the world, but obviously the speculative impulse here is off the charts. And it's because you're getting this rumor mill out there that they want to give the Trump administration a devaluation of the dollar against their local currency as part of a trade deal. So if this is the kind of thing that we're going to see, everybody's been talking the past week, oh, well, we're about to get some quick trade deals, and then there's an off-ramp. Yeah, you get 5-6 trade deals that create this kind of rapid revaluation of assets in an idiosyncratic way. You're going to create so much macro chaos for so many different corners of the market that these trade deals may not be such great news, well, even just by their existence.
Let me give a slightly different perspective on this as it pertains to gold.
Sure.
If all of these if all these countries are going to allow their currencies to be devalued as part of a trade deal, I don't know how that jives with the administration's stated goal. Revalued.
For the dollar to be devalued against them.
Well, do you want to hold now? All of a sudden, all these fiat assets that are in your reserves are potential negotiating chips that may have a dramatically different value overnight.
Yes.
I've said enough about gold for a lifetime, but I think we can move on to oil here, Ilya. We'll have plenty of time to talk about this on overtime later. Let's talk about oil's reversal. Oil had a very bad, rotten, no good open, with news that OPEC Plus is increasing its production for a second consecutive month by 411,000 barrels per day, continuing to try to take market share. Interestingly enough, if you look at price charts since the futures market opens, we are now positive on the day. That is a green candle down here, even though it's a gap open lower. We opened up at 56.76, so it's still a 1.82% loss. But we started to plumb the lows around early April, and thus far we're holding here. It's a 59.2 IVR. So with oil's big drop, volatility is actually lower today than it was on the close on Friday.
I'm so happy to have gotten out of my short last week. I saw it stalling at those previous closing lows and said, you know what? It's been a great short. Thank you very much. Good night. And I took it off.
Are you suggesting that today's reversal higher is indicative that OPEC is not going to lead to a significant depression in prices?
You know what OPEC is really bad at? OPEC is really bad at making crude cheaper, because you know what you don't generally want to be in the business of as a producer of oil? Selling cheap oil. You don't make much money that way. This is why OPEC has not been able to generate the kind of discipline they've needed when they wanted to boost production quota to actually get it done. They've been under producing their own targets basically since this entire grouping came together in 2014, the cartel plus their friendlies, this sort of OPEC plus thing. So the likelihood that they are really going to deliver on this is, in my mind, very low. They pledged to increase by 411,000 barrels per day as of June. Okay. Who are they going to get to do it? Who is going to say oil is down here in the mid 50s? Let's ramp up output and make less money. They have had tremendous challenges disciplining their membership to do this kind of thing before. I don't expect that any of this means anything.
Here's the reality, right? This is the story that you're told. The story that we're told is that it's very cheap for OPEC plus countries to produce oil, which is a half-truth. It's a half-truth because you can look at some of the extraction numbers for Kuwait or Libya and say $10 to $20 a barrel. Iran, $10 to $20 a barrel. Hell, Saudi Arabia, $10 to $20 a barrel. A lot of these countries don't have tax codes that are predicated on income taxes or property taxes or business taxes, right? They use the revenue from oil to feed their fiscal authority. And so when you're paying attention to the break-evens for a lot of these countries, you should be paying attention to the fiscal break-evens. And in a country like Iran, the fiscal break-even for oil is $80 a barrel. The fiscal break-even in Saudi Arabia as of 2024 was $96.20 a barrel. For Libya, it's $50. So some countries can produce oil at $10 or $20 or $30 a barrel. And so if it gets below the U.S. production break-even for existing wells of 49 to 53, on paper, that's fine. They could still produce profitably. But it doesn't serve the need that the governments have, which is they need higher oil prices for their fiscal finances. And so we talk about pumping all this oil, and that's a good story and everything, but we get much weaker than government funding levels across OPEC countries become more strained. If they're not already strained, they go into that territory where it's a net negative and it's problematic for the politics. So again, I know growth is bad, but I feel like $50 is a hard line in the sand. I'm going to treat it like that still. Personally, we only have 2 minutes here, Elliot, because we got to wrap this up shortly. So let's talk about those dollar struggles continuing here today. The yen was the top performer. It's off the board a little bit here. You see the same thing with the euro. It was up a little bit more. It's coming back in. It's not quite sell America. What do you take of this dollar action ahead of the Fed? Is the Fed not cutting this week going to help the greenback or hurt it?
I think it's going to hurt it because I think you go into a very regular kind of growth is slowing. The Fed is dragging their feet. They'll have to cut more later. That's good for gold. It's good for bonds. It's bad for dollars. You see a lot of pep, for example, in the Aussie dollar. You can see whereas the euro is still stuck inside its range, the Aussie cracked its range last week. And so I actually started buying it. So far, moderately okay. I also bought the pullback in the yen last week. I thought it was kind of comical how the yen came crashing down because the BOJ came out and said, well, we're not sure if we want to be hiking rates in this kind of an environment. All this tariff policy uncertainty, yada, yada, yada. And of course, to me, that was a good reason for the yen to go up, not down, because it is ultimately a creature of yields. It moves inversely of the 10-year note, basically. And so when you get that kind of opportunity, then you turn to the BOJ, you say, thank you. I appreciate the discount. I'll buy some now. And so I bought some yen. I bought some Aussie. The euro is kind of dragging its feet. I expect both the euro and the pound will find their way higher. The euro certainly has been attempting to get back into sort of the upper half of the consolidation. The pound has been a little bit more soggy. They have a rate decision this week as well. We'll see how that goes. No changes expected, but of course the conversation is what's going to be interesting, and how another central bank looks at what the U.S. is doing from the outside and says, well, how are we going to manage in this environment? Ultimately, I think what the Fed does is going to be dollar negative, and I'm looking to be a buyer of euros in addition to what I'm already starting to build in Aussie and yen. The pound, we'll see. It's been a little bit of a different animal, and the Canadian dollar is doing impressively well here. It's not really doing much of anything, and that's quite a feat considering how much event risk there is around it. Prime Minister Carney, which is interesting to say, if you've been following markets for the years that he was governor of the BOC and then governor of the Bank of England, now it's Prime Minister Carney. Yeah, he's due to meet with Donald Trump this week. He's naming his cabinet in a hurry. So lots of stuff going on in Canada. I'm looking at this one for a buying opportunity when it emerges.
Carney is going to be in D.C. tomorrow, meeting with President Trump at the White House.
Yeah.
So, talk about some event risk for the currency. 56.7 IVR right now in the Canadian dollar, top of the board, as it were. The vols in the currency market have come in. We didn't touch them earlier, but crypto, I suppose, if we want to talk currency, a little bit weaker. Bitcoin may be showing signs of a short-term top. Same thing for Ethereum, although Ethereum's, can I get the candle? That's how much of a dog it's been, Elia. It looks flat.
Yeah, you can't. It's just it's falling asleep.
What's next on the calendar for tomorrow? Balance of trade and IVPMI at Canada, plus the Carney meeting. So the Canadian dollar, EWC, very much in focus. Otherwise, U.S. data-wise, it is very light. I didn't mention earlier, we do have Treasury auctions out. The 3-year note auction today was pretty good. Stop through and a good bid-to-cover ratio that I saw at quick glance looked like it was above the 6-month average. Tomorrow, we have a 10-year note auction. And then on Thursday, we're going to get a 30-year bond auction. So Treasury is quite active this week. We're not going to have another 10-year note auction until Wednesday, June 11th. So this is the free and clear. Let's see how foreign demand holds up for our debt, given where we stand in the trade war. But we'll cover that tomorrow and Thursday because we're done here for today. You and I will be back later for overtime. Radigan's out. Mike Butler's in, so hope people can come back for that. Until then, though, good luck trading. For Ilya Spivak, I've been Chris Vecchio. We're taking a brief break here on Tasty Live. Up next, though, after those quick, short commercials, you'll have Dr. Jim Schultz from Theory to Practice.
the market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade.
It's option jive.
Tomas, that's right. It's time for a little bit of an option jive. We got Kai to bring it to us. What's up, Kai?
Not much. Happy Monday.
Happy Monday. Happy Cinco de Mayo to you, Kai.
What is that? Sorry, I don't speak Spanish.
See that? That's why it's not assimilating to America. You got to learn how to speak Spanish, okay?
A little bit.
It's time for tacos is what it means. Cinco de Mayo.
Okay. 8 a.m. in the morning?
That's right. That's what it means.
I had a breakfast taco this weekend. I got a guy makes the best damn breakfast tacos in Chicago. It's great.
It's Mexico's victory over the Second French Empire in 1862, but we celebrate it here.
Of course we do.
I never had tacos in the morning for some reason.
Breakfast tacos, quite delicious.
You never had a breakfast taco?
I think it's too heavy for me for breakfast.
Oh, let me go on a limb here. You prefer the breakfast of champions that Sosnoff likes, which is 4-day-old sushi.
I never had a sushi from a breakfast either. And by the way, I'm not Japanese.
That's horrible.
For you to think.
Well, what you got for us?
All right, so for last week, pretty much the main theme is the market rallies and the implied volatility decrease everywhere, most of the assets. So S&P rally another 2.9%, which is pretty significant again. We already recovered 67%, exactly 2/3 from the previous 20% market pullback. So
why is that number significant? 67%?
In less than a month, yes. Do you remember we had?
I'm going to say it's a standard deviation. That's all. I'm just giving you the standard deviation.
Oh, it is. This is pretty fast for a 20% market pullback. So yes. I have some data. It only happened 3 times. And
beautiful. Go to it. I'm sorry to interrupt you.
Good. At least you didn't use the term Fibonacci retracement.
That was my favorite. I started with those technical analysis. I studied the Fibonacci. I just couldn't understand from any perspective. So VIX VIX dropped to below 25 and trading in a very narrow range last week. So this is something we need to watch. Even though we rallied 6%, maybe 6% last week, and 2.9%, another 3%. Last week, total more than 10%. Definitely more than 10%. The VIX only dropped to 22. Last week, the VIX trading at between 22 and 25. Very, very narrow range, which means the market nerves still exist. We got to be careful to the downside. So for indices, 3% for SPY. Pretty much the others are very close, from 3% to 3.4%. So everything rallies up. Yeah.
Nice.
Okay.
All right. So next one, the expect move. Again, because the strong rally, the realized move is still larger than the expect move. The expect move 2.5%. Did we just broke like half of that, or even more than that, on day one, on Monday?
Last week, yeah.
It just keep rallying all the way up. So at the end of Friday, the expect move for this Friday is 117, so which is exactly 2%, because the VIX dropped to a 22, 23 handle. So let's see. I don't think 2% will hold this week.
So you're saying that
we're already down like a point. Like
I said that to you last week. I'm going to say it to you this week too. I agree with you.
Yeah, 2% is like nothing.
Mm-hmm.
Okay, so next slide. The IVR change. So equity market, bond, euro, gold, the implied volatility drops. The others in crude oil, natural gas, and Bitcoin, they actually increase, especially the crude oil, because crude oil dropped a lot, below 60 already, 58, 57. I didn't check the price this morning. And also natural gas, the price went up, so the implied volatility went up too.
Yeah, crude oil's down 93 cents. It's really made a nice comeback from last night. Natural gas has been, the last couple of days has been really strong.
Mm-hmm. So some major moves from different assets last week. The first one, next slide, definitely the next slide. Definitely the overall market. So S&P already rallied 2/3, exactly 67%. Only 3 occurrences happened before this one that dropped 20% in the past 20 years, and only one of them rallied more than 2/3 in the first 30 days. That's the beginning of 2009. The other 2 currencies is 2008 and 2020. They actually spend more time to rally up. The mean rally time is 62 days. So roughly 2 months to get back to 2/3 of the total pullback. This is actually pretty significant.
Sadnov, what do you think about that? We're back?
Like I said Friday, I think it's a good opportunity here. Feels like we came too far too quick. Yeah, I think it's a good short.
Okay. Makes sense. Next one is the crude oil. Crude oil back to, we actually dropped below 2022 level. So we came back to the level at 2021. This is definitely below 60 right now. So just try to show some big moves.
No change to pumps. No change to pumps.
No. Probably in Wisconsin, not here.
Yeah, probably.
Yeah. So the last one is gold. So this is I believe it's a 3-year total return from gold and silver. Compare the performance of gold and silver. Definitely gold outperforms silver. And in past 1 or 2 weeks, both dropped. The price both dropped. Gold actually dropped much faster than the silver. Gold dropped 7.5% and silver dropped roughly 5%, all based on the futures price. But the gold-silver ratio still trades above 100. Pretty much in the past 7 to 9 days, the gold-silver ratio trades between 99 and 100. So very, very tight. If you trade,
not making Tom happy.
How's your spread? It's actually better, right?
Yeah, I mean, it's wrapped around 100, like you said. Today, it's worse.
Yeah, exactly 100. Okay, so next slide. The top 10, top 5, and bottom 5 performs in SPY. The best one, STX, Louvre, Microsoft, Meta. Microsoft had a huge run last week, and PLTR. So bottom 5. SMCI has earnings this week. I believe it's Tuesday.
They already announced their earnings.
Oh, so last week. Yeah. Lilly had earnings last week. Qualcomm had earnings last week. This is probably the one you said you couldn't manage it, right? Because it was like up 8 or 9% on that day. Oh, down. Sorry. And UNH down 5%. One thing we can notice is that the most of these underlines, which already have the earnings, has low implied volatility rank right now. If you see the one that has 50-60% IVR, they probably have earnings this week or in the next couple of weeks.
Palantir's interesting because it has earnings today after the close. Or tomorrow morning.
Exactly. Yep.
You brought Love to mind. It's right back to $30 where my sister bought it. So, okay, good for you. I like Love.
Okay. Earnings review. So there are many large movers last week. We have Snapchat First Solar move roughly 10%, Microsoft up 8% on that day. Qualcomm up 9%. Lilly and your favorite Fuba. Is that how you pronounce it? Fuba.
Fupa. It's Fupa. You don't speak Spanish. Fupa. It's FUPA.
FUPA. Okay, down 16%. Did you trade FUPA? What's so funny?
Nothing. Nothing's funny.
Right. I don't know why, but okay.
You're doing good. Keep going.
Thank you. I'm hanging there.
Hanging in there.
Yeah. So the overall, we already have 1,400 companies announce the earnings so far. There are like more than 800 companies announced in the last week. Pretty much 1/3 of SPX, the company in the S&P 500, announced earnings last week. So pretty big week last week. Now we only 3 or 4 weeks into the earnings. Pretty much winners and losers are getting very close to 50%, 51 to 49%, and the average return is 0. We have more losers last week for sure.
So funny how that always comes out to be exactly 0.
Yeah, it's interesting. The market just balances itself. This week's earnings. Yeah, we do have the PLTR. We have your favorite brand again, Hims and Hers, today, and Ford. And we have a lot of chips company, AMD. Oh, we have a lot of EV company. Your favorite, Lucid tomorrow after close, and Rivian, ARM, whatever, Uber, Shopify, your favorite Crocs, Tom, and DraftKings, all these, Coinbase.
Oh, see that? Good job. I didn't even see that. Ford, which has been kind of slipping these days. You said it has earnings. It has earnings on after the close. You are 100% correct. I did not see that one. Thank you so much for bringing it to my attention. I appreciate it.
Ford. Ford? It's
now you. It's a $10 stock. We usually don't trade it, but still, I mean, other people do. And Hims is another one that I missed, $42. So you added to my list. I appreciate it, Kai.
Yeah, there's not.
So one quick question for you guys.
There's not a lot of
one quick question. So last month, while the price was decreasing, the Ford has dividend yield more than 10%. Right now, dropped to below 6%. Why is that? A lot of people buy Ford just like a month ago because the yield is 12% dividend. Right now it's 5.8% or so.
Yeah, and the stock really has. I mean, it rallied, but it hasn't rallied enough to change the dividend like that. They must have come up and lowered their dividend or something. I don't really know. I mean, a dividend can change. A dividend percentage can change.
Oh, for sure.
On a big stock move, obviously, but it hasn't had that significant of a move to change the dividend. I don't know. I'd have to research it, Kai, to give you the answer. My guess is that they changed the dividend. That would be my guess.
I don't know. I could check.
Yeah, but I'll check. Thanks, Kai. Appreciate your time. We'll take a quick 90-second break. We'll come back and catch the opening bell right after this. Let's Tasty Live. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With this market measure, even the S&P is down 40. So off the back under 23 for the first time since we've been open the last half an hour or so. Even the S&P is down 32.
Yeah. Nice little rally.
Nice little rally. A little sell-off in bonds, down 15 ticks, 114.14. They made a low of 114.11.
Yeah, Apple looks like crap today. Google, Microsoft, and Meta look pretty good.
Apple down 5. You are correct, Sosnoff. Upside help right now. You just mentioned it is Meta. Meta's higher. Reddit is higher, also by $1.60. Crowd is up $8.
Yeah. Don't know what to make of any of this.
I don't think we rally all the way back today, Saz. I'm going to put the kibosh on that.
Maybe not. UAL up $3, Uber up $1, UNH up a couple of bucks. Got a lot of stocks higher on my board. Crazy.
We do.
But the problem child still is gold. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. And let's see, what else do we got going on? What do we got going on this week? What's going on this week?
Well,
what do you mean? What's going on?
Any big events, Beth?
You're going out, I believe. Are you sharing that with the public?
No, that's just
okay.
That's a personal thing.
You're coming out, Sosnoff?
I'm coming out. Yes.
Great song.
What world to know?
No, pretty long, normal first week of May.
If I was coming out, just so you know, it'd be a little late.
I agree. It'd be a little
I think if you're going to come out, you better do it in your 20s or teens. I don't think you want to wait till you're in your late 60s. No.
Understood. Deep conversation right there.
Are you guys ready for Atlanta?
I mean, we're as ready as
Atlanta, I'm coming back, Sosnoff.
What?
Atlanta, I'm coming back. Been a long time since I've been in Atlanta.
And they thank you. I mean, we don't have any I don't know if we've made all our Atlanta, all the plans yet, but the show's ready to go.
May 30th, doors open at 8, Sosnoff. Show starts at 9. I'll make sure you're there on time.
We've tested the screens. We feel confident about our content. We're still working on Scott to give us the money. He's got to write a big check for this thing. No,
you got to reserve tickets too. If you want to reserve tickets, go to tastylive.com/events. Reserve your ticket today.
Yeah, we're gonna have a lot of fun at this event. But what the hell? I'm just looking at some different markets. We're gonna have a lot of fun at this event. It is, let's see, May 30th. What is that? We're about 3 weeks away. And no, it's May 5th. We're 3.5.
Today's the 5th, Sosnoff. We're 25 days away. You're close enough.
Yeah, let's call it 4 weeks. Doors open at 8 a.m., okay, which just means that Tony and I will be out there. We can chat it up with anybody about anything. We've got lots of stuff to, just to talk about with everybody.
If you throw out today, Sosnoff, we're exactly the same distance away from 3 weeks and 4 weeks. Don't worry. Amongst friends here, you can say whatever you want.
We are going to cover a lot of topics in a very short period of time at this event. We are going to trade, I think, just about everything. I mean, I don't think. Well, here, let's put it this way: nothing's off limits. I don't know. I don't know that we'll necessarily trade cash crypto or spot FX. By the time we come to this event, we will have launched Spot FX on the platform. I think it's coming out. I think it's coming out either later this week or next week. So that's kind of cool. But we won't trade things like, we're not going to do T-bills. We're not going to do Spot FX probably. We're not going to do spot crypto. But stocks, options, ETF options, index options, zero DT options, futures options, all that's on the table. And there's no, I love it. There's no strategy that's off limits. We can do something from a naked option to a pairs trade. If you're going to do a pairs trade today, I know you didn't watch the show last night, so this is a good question for you.
Sure.
I mentioned 4 pairs trades that I liked.
Okay.
What pairs, you didn't hear it, so what pairs trade would you like?
That I think you mentioned or that I would like?
No, don't think what I would mention. What do you like?
If I had intestinal fortitude, I would think the gold-silver trade is probably one of the best trades on the board.
Sell gold.
I don't have the intestinal fortitude.
Yeah, so just to
that
give
would be the one that I would look.
Just to give you an idea, I like that trade too. And if we were doing the show this morning, if this was Friday morning on May 30th and we were in Atlanta, we would probably be doing the gold-silver ratio right in front of you now because gold's up $80. Oh, it's up $88, and silver's up 28 cents. We'd definitely be doing the gold-silver ratio. That's one of the trades we'd make. One of the other trades we make, which I liked, I mentioned last night, was selling Microsoft, which is up 18 cents, and buying Apple, which is down 5.72. That's the second trade. Another trade that I mentioned, which we don't really do very often, but I thought it would be kind of fun, is to buy crude oil and sell natural gas. But I don't really. That trade scares me a little bit.
It's a Widowmaker type event. I know Widowmaker's nat gas intra-month, but they're two almost independent futures, in my opinion, to each other.
And we are bringing a futures expert with us, and we're bringing if we have questions like this, like about the Widowmaker, we can ask them. And then also, I like buying the Russell here and selling the NASDAQ or the S&Ps. Doesn't matter to me. Those are the ones I talked about last night. So those are all the kind of pairs trades that we do. If we're doing a futures options trade here, which, again, we're going to make them up the morning we do this, but we'll be prepared. If we're doing a futures options trade here, we may do everything from selling calls in the euro to selling puts in the Japanese yen. We may be doing strangles in crude oil this morning because it's up. We may sell a call spread in gold. These are all great things to watch because you learn from this stuff. And then if we're doing equities this morning, we might sell a put spread in Apple. Maybe we'll sell a put spread in bonds. Maybe we'll sell a naked put in bonds. Maybe we'll sell a naked put in notes. And then maybe we run right over and sell a call spread in Microsoft. We're going to do a lot of contrarian stuff. And so, or maybe we sell a naked call. Maybe we sell some futures. I have no idea, but we'll do everything. Nothing will be held back. So anyway, if you can make it to Atlanta on May 30th, that's the first show we're going to be doing in the U.S. We won't do another one until July in the U.S. In June, we'll be in London and Milan. We'll do the same show in London at Earth on June 20th. It's triple witching, the night of triple witching. And the cool thing is the markets closed the day before for Juneteenth. So we're going to have a really weird... So I was thinking about this. How did they do it when the last time to trade, is that going to be Thursday for Friday? Wednesday night for Friday morning? I don't ever remember this happening before.
Meaning because of Juneteenth and the market?
Yeah.
Is it, you're going to make me check a calendar here?
No. Don't check the calendar. Just tell me what you think happens. I think the last time you can trade is Wednesday night for Friday opening.
Because expiration's June 20th. The last time you could, I have to be able to check SPY. Let me do that just to take a look.
Okay. Anyway, it's gonna be a lot of fun.
The last time's gonna be Wednesday, Sadnoff.
So it's gonna be a lot of fun. It's gonna be a little different, but Tony and I will be in London at Earth. June 20th, and we're going to be doing the show at 6:00 at night.
That's going to, you bring up an interesting point there. That's going to keep premium bid.
Yeah.
Because you're going to have an extra day of whatever.
Yeah.
The premium's going to be fat the day before the 18th. On the close of the 18th, volatility will not go down. And maybe not for that whole week. I don't know.
Anyway, doors open at 5. The show starts at 6, which is noon here in Chicago. So it'll be the middle of the day. So we'll get plenty of stuff done. And then the following market day, which is the following Monday on June 23rd, we'll be in Milan at a place called Fabrique. And we'll be in Milan, Italy. And if you can make it to either one of those shows, it'd be awesome. If you're in the UK or you're anywhere in the EU, we'd love to see you. We get back to Chicago in July, and we'll be in Denver. The first show we do in Chicago will be the end of July. So it'll be 2 months between May and July. And we'll be... at the Summit Theater in Denver, and then we'll be in Chicago, San Francisco, New York, LA, Charlotte, and Austin, Texas. We wrap up the year, and you'll be able to sign up for all those shows coming up soon. Mike and Nikki and Katie, along with Ryan, will be in Washington, D.C., Seattle, Dallas, and San Diego. And then Dr. Jim going out on his own with no help. This scares the living crap out of us here in Chicago, but maybe I can find... he's going to need some help. He doesn't know how to turn the light. He doesn't know how to turn the lights on his own. But Dr. Jim will be in Boston, Massachusetts on July 13th.
I cannot believe who made that executive decision. It must have been JJ, because I know you would not set Dr. Jim up to fail like that.
It was my call, but he doesn't he likes to do the shows himself. And I understand.
I know, but he has to get there by himself. He has to dress himself. He has to get there on time by himself. He has to get breakfast by himself. These are all things he cannot do. He can do the show. I'm not worried about the show. Like, if we could helicopter him in to the show, then it would be perfect. I mean, I'm not worried about the show. The show's going to be great. Dr. Jim's a wonderful speaker. He's just not a good adult.
Boston, Detroit, and Tampa, those are his stomping grounds. So Dr. Jim's going to be doing his own thing in those cities.
Yes, he's been a fan of every one of those local teams as a local.
Anyway, that's kind of the story. And thanks for humoring us, listening, and hopefully you'll make it out to one of those shows so we can shake hands and say hi and do whatever. Let's do it, Beth. This is a really interesting piece that the research team put together today. And, you know, it's funny. When I read over this piece just, earlier today, I was thinking, okay, this could be a fun one. And it is. Can strangles bounce back after big drops? What do you think?
Sponsored by the CBOE, by the way. CBO, sorry. I'm going to have to say yes, Sadnov. I mean, just look at what happened here. But now I'm going to say, if you're being mechanical, it's going to be a much more of a gray area.
Okay, I'm going to make this easier for you because that's not a fair question.
Okay.
If you were to do a strangle in an equity or you do a strangle in an index, which has a greater chance of bouncing back? That's what I meant to say.
Oh, wow. I'm going to have to say the index, Osnoff, just because of the nature of how many stocks are in there. I'm going to have to say that. Now, please don't make me look bad and make this a trick question. And you already saw the answer. You would have answered it exactly the same way I did, and we're going to be wrong.
Let's go to the first slide.
Oh, God, he's slow playing me again. It's Taiwan all over again.
For 45 days to expiration, 16 Delta short SPY strangles, the probability of a turnaround drops to roughly 50% once the P&L has reached negative 50% of the initial credit or lower. That's what our definition of when you're down. So what is the turnaround probability for strangles with different types of underlyings after incurring the same amount of a loss? So once you're down in excess of 50% of the credit that you received, what are the chances of a turnaround? And then are contracts with more extreme P&L swings more or less likely to recover? And as Tony said, he said they're less likely to recover.
Oh, boy.
You can change your answer now.
No, I'm going to stick with what I had.
Okay. All right, let's go to the next slide.
You're amazing. What's your answer?
I already know the answer. We looked at SPY, Qs, Gold, Amazon, Apple, Google for 10 years. 16 Delta short strangles. And we looked when the position had a P&L less than 50% of the initial credit and has a P&L turnaround after incurring a loss. All right, let's go to the next slide. Here we go. So strangles with more volatile underlyings tend to have greater profit potential, but they also tend to have more volatile P&Ls, and they are more likely to have a negative P&L swing larger than 50% of the initial credit. For example, Apple strangles carry the highest large loss risk, while SPY carries the lowest, making the ETFs like SPYs and Qs generally safer than individual stocks. So you were right, Mr. Batista.
Yes.
What's interesting here is that when you look at Apple, Gold, Amazon, QQQ, Google, and SPY, I never would have thought Apple has the most risk.
I wouldn't have either.
Of course, judging from today, I would say it does for sure. but I never would have guessed that. But it's significant compared to others. Apple at 22%, SPY at 13%. That's a pretty big difference. Let's go next slide. So when we analyze the profit rates and loss range, SPY offers the best risk-return profile with high profits, 74%, and the probability of low total losses, 5%, due to broad diversification. Apple demonstrated the riskiest with the highest probability of total loss, 10%, and the lowest profits. Gold showed strong profits with few losses, indicating more decisive outcomes. I have not had that experience in gold recently. But anyway, you can see right here, Apple clearly being the worst of all these stocks. 16 Delta Strangle, 45 days to expiration, closed prior to 21. And the probability of having a loss, a total loss, Apple obviously still the worst. Really surprising.
It is, agreed.
Let's go to the next slide. So more volatile underlyings, like individual stocks, also tend to have a lower probability of P&L turnaround after incurring a loss of 50%. This means that strangles are prone to larger negative P&L swings, are less likely to recover, and generally loss tolerances should be more conservative with more volatile underlyings. Essentially saying there's some stocks that are fairly unlikely to come back, while other ones, they may.
Makes sense. I'm assuming the ones with higher implied volatility.
The ones with higher implied volatility just don't come back as much as the ones with lower implied volatility.
That's correct.
Yep. Let's go to the next slide. It is important to note that this study is focused within the first half of a contract's duration, as opposed to the second half, when P&L swings are more dramatic. Holding a contract past 21 DT also gives a strangle more time to recover, so these probabilities will change significantly depending on management strategy. We covered everything in 21 days. Last slide, please. So here are really good takeaways. Strangles with more volatile underlyings, while they tend to deliver larger credits and greater profit potential, also tend to have more volatile P&Ls and larger negative P&L swings. Strangles that are prone to larger negative P&Ls are also less likely to recover and should generally have more conservative loss tolerances. All this totally true. However, you make 2 or 3 times as much money with the stocks that have more volatility. So especially this market, when we could trade stocks with 50 or 75% volatility when the S&P is 25, and you have 2 or 3 times the amount of money to make. So don't be just
don't be pigeonholed into this one study. Sure.
Well, don't be seduced into thinking that I shouldn't trade anything without volatility, because you make a lot more money with volatility, and you can trade smaller.
Sadna, being seduced by you was something I never thought I would hear from my own mouth. But I'm going to think about it. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with, oh, joy, somebody who can seduce me for sure. That's right. Your friend and mine, Mr. Scott Sheridan, really following these messages. Back in 90 seconds. He has a do not resuscitate. We'll be back in 90 seconds. Let's Tasty Live.
It's option. Jive.
Tomas, we are back, my friend. That's right. It's time for an option jive.
I'm watching.
The S&P is down 48, volatility up 60 cents, giving a little bit of weight to this market side, up to the downside.
Yeah. This is you ugly.
Oh, you had to say that. Now the down move's over.
Down moves over.
Sadna he ended it. He ended it, Saz. He ended it. That's it.
Hey, I tried. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending your Monday morning of going to be a full week of trading ahead. Let's take a look at our deltas here. I don't know, what's your gut say today? Rally back or?
Well, I thought we were going to continue going lower until you said we were ugly, and now we're going to rally. I mean, it's horrible what you just did to us.
Horrible. I'm going to roll down some calls now, so this should be the end of the down move.
That's what I'm thinking. You heard it for everybody, Sadnov. Why'd you do that? I should have just hit the bid here, and I didn't. Unbelievable. Ugh. So bad, Sadnov. So bad.
Well, I'm just gonna hit a few bids here and roll down some calls just to make you feel good about yourself.
Thank you. Appreciate it.
Yeah, let's just take one more look. I think I'm ready. All right, let's do this piece here. And it's a good one. Just roll down these calls. Perfect. Essential risk management for uncertain markets.
For uncertain markets and you.
Let me ask you a question. When is there ever a certain market?
Well, we have certain markets. Like today, the certain market is lower. And some other day, yesterday, we had a certain market that was higher. But we don't have markets that we know are certain for sure that what direction they're going to go in. You're 100% certain on that.
I've always got a kick out of this industry when people write about in financial media, when they write about markets are really uncertain now. Can you?
Well, I mean, you could say markets are more volatile. There's certainly times when markets are a little bit more volatile. We are above the volatility level right now.
Sure. I just want somebody to send me a text when they're certain. Okay, because I don't like the term uncertain. But essential risk management. Let's take a look. You could say essential risk management for highly volatile markets. That's fair.
Yep.
So far this year, the market's experienced unprecedented high volatility that we haven't seen for many years. With more uncertainty likely emerging in the coming weeks or months, traders need to understand and control some of the most important risks in this market. Let's think about this. What do you think the most important risks are?
What do I think the most important risks are for the market itself?
Yes.
I'm actually going to say low implied volatility is probably the complacency is probably the worst thing for the market. I don't know if it's going to be one of the things they touch on here. I think they're going from the other direction here.
Let's take a look and see where the team's going. Even though the S&P 500 has recovered 66% from the March-April correction low, option traders need to pay attention to the following risks, Mr. Batista. Directional risk, correlation risk, buying power and capital usage risk, and, of course, the scariest of all, the tail risk.
Yes.
Let's go to the next slide. We're going to throw a lot of information at you on this piece, so you better buckle down, get your helmet on. It's not too hard, but there's a lot of information here. Each position carries its own directional risk, which is quantified by delta. And we have it right on the platform. And you see, we highlighted here. There's lots of different, we show delta lots of different places. We show you your beta weighted delta on the top of the positions tab, on the top of the platform, no matter what. We also show your ETF delta every time you're making a trade on the trade bar at the bottom of the page. So traders can use more neutral strategies or risk-defined strategies to reduce each position's directional risk. But when you're putting on a trade, it will show you at the bottom of the page the trade delta in that particular stock, and it will show you the ETF adjusted delta, which is the SPY delta for that particular trade. It's a very cool feature. It's only on Tasty. Let's go to the next slide. An effective way to measure a whole portfolio's directional risk is by using the beta-weighted delta. And so if your portfolio is exposed to too many long or short deltas, you may need to make an adjustment according to market conditions and or your directional assumptions. So we show the actual delta, and then we show the beta weighted delta. And they're in multiple spots on the platform. I don't think there's another platform in the world that focuses as much on beta weighted delta or ETF delta as does Tasty. We convert all futures to ETF deltas. We convert all ETF deltas into SPY deltas. We give you the big picture view throughout the entire platform. Let's go to the next slide. So you can always see your directional risk. We also want to make everybody aware of and cognizant of their correlation risk, but it's hard for us. We can't really display correlation on the platform. It's not that easy to do, but we make everybody aware through our content, and we also have correlation throughout the platform as well on all our watch lists. So theoretically, a low or non-correlated portfolio can help weather through bad markets since the underlyings don't tend to move in the same direction. We have seen that many assets are moving with each other during the current market turmoil, and diversification becomes more critical now than ever. We have long focused from the beginning of Tasty Trade, Tasty Live until today on having non-correlated underlyings. And with the VIX, the higher the VIX goes, the more important having non-correlated underlyings is. When the VIX is very low, you can be less worried about it because stocks do the correlation for you. When the VIX is very high, stocks don't correlate. They all move to a correlation of 1. And we showed you kind of right here how tightly correlated everything is when volatility gets high. If you see above 40, we highlight it in orange. And look how high the correlations are relative to when it's above 20. We're above 20 right now. Let's go to the next slide. So when you see here, this is why balancing a portfolio with low or non-correlated assets, such as bonds and stocks or whatever it is, doesn't really matter, is highly recommended because you can see here that this is the bonds and stocks 3-month rolling correlation, and they go all over the place. And that's a good thing. They don't move together.
Yeah, it's a good thing.
Yeah, the whole key here is that they don't move together. When everything moves together, that's when you have problems. When they don't move together, that's the good thing. Let's go to the next slide. So the next one is your buying power reduction or your capital risk and optimizing. You know, the biggest issue we had on the sell-off in April and the big down move going into early May was, the big sell-off in late March going into early April was that it's very difficult in declining markets for people to allocate enough kind of dry powder or extra cash when you're trying to defend positions that are moving against you. So at the most optimal time to invest aggressively, you're actually playing the most defense because you're losing buying power in other places. So that makes this piece really important. The ideal range for capital allocation in an options portfolio is between 25 and 50% for an average size portfolio. For a bigger portfolio, it's going to be closer to, let's say, 25 or 30. For a smaller portfolio, it's going to be closer to, let's say, 60 to 75%. But in conservative conditions, that's it. Then we have a moderate, which is about 30% more. So that'd be like 37.5% to 65. And then we have aggressive, which is more like another 30% more. So let's call it 50 to 75. Okay, so we have conservative on the board, moderate, 30% higher, aggressive, 30% higher than that. Smaller accounts use more money, larger accounts use less.
Makes sense.
Let's go to the next slide. Also, the buying power reduction of existing positions may increase when they're under pressure. So many traders have experienced the surprising buying power expansion when volatility suddenly pops. If the portfolio is over-allocated during unfavorable market conditions, traders can find it challenging to maintain their desired positions, making it more difficult to defend against losses. Absolutely 100% true. And we just all experienced that in early April. Let's go to the next slide. So here's an example of a portfolio with an iron condor with an 85% pop. And we basically show how portfolio volatility varies. And then we used Monte Carlo simulations to demonstrate the volatility decreases as we reduce capital allocation, providing traders with an effective method to mitigate portfolio risk. So you can see the top line, which is portfolio allocation percentage, and then you can see how much the portfolio volatility drops with the when your allocation goes down. That's all we're saying. It's not
it makes sense.
It's not rocket science. Okay, you allocate less capital, and your portfolio volatility drops accordingly. Let's go to the next slide. Oh, the last one, tail risk. So, tail risk is something that on our platform we have CBAR, which will show you the kind of anything 5%, something happens when there's a 5% chance. But when you get to real tail risk, which is unquantifiable, like 3 standard deviations, which is 1% or greater than that, it's very hard. So when we start to think about tail risk, does it happen often? No. But when it does happen, you got to experience it again in early April. Multiple standard deviation movements can happen, and they significantly impact a portfolio. On average, there's a 5% chance of a move twice as large as expected. And these surprises are usually on the downside. Unfortunately, we've experienced multiple instances of this type of extremely large move in the past 45 days. And you can see here, we posted it on the screen. In the SPY and in the Qs, the mean rate of outliers is just about 5%. And the frequency of back-to-back outliers is 2.5%, 2.75%. That's high. Let's go to the next slide. So to reduce the likelihood of tail risk, traders can reduce the size of your positions. If you email Tony or myself and you say, hey, I'm in trouble, I need help, do you know what the first response you're going to get from us is? Almost always, it's to reduce the size of your position because that takes the pressure off.
You're 100% correct. As a matter of fact, we've answered that the last couple of days live on the show here the same exact way. Reduce size.
The utilize risk-defined strategies rather than undefined ones. Sure, going forward, but that's usually a little too late for helping with existing positions. And then consider longer duration positions. Yes, one of the things that you can do, we typically like to use that 45-day rule. But if you're in trouble and you want to roll out and down or roll out and up, however direction it is, to reduce your risk, if you roll out in time by like at least a month or 2 months, you can take off as much as 25 to 30% of your risk. And you can also adjust the strikes accordingly. So yeah, there is an opportunity in rolling out in time.
Most definitely. Good.
Next.
Well, that's the last thought, I believe. Good job out of the team. Good job out of you, Sadnov. Good job on us. We're right on the time.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler. It's Monday, so of course I got Josh Fabian in the house, and we're just sitting here watching paint dry, Josh.
Trying to keep my eyes open.
I mean, this is a quiet stock market.
This is boring, quiet.
But, I mean, it's probably well deserved, right? I mean, we can't.
Last week was a lot. Last week there was a lot.
Last several weeks.
Yeah. And now you're getting into summer, and I think by and large I think the worst of the volatility is probably over, and I think now everybody's waiting to see what do the tariffs actually mean, because I was reading something over the weekend talking about it takes about 30 to 40 days for shipments to reach our shores from China, when they send it via ship.
Yeah.
And then by the time you get the containers off the ships and you get them distributed throughout the country wherever they need to go, you're talking,
You're referring to the Port of LA.
Long
Beach. I think Long Beach is one of the
I think it is too. Yeah.
Nation.
So, any of the post-tariff issues like scarcity and things like that probably start showing up later this month. So I think right now everybody's just like, all right, well, let's just hold our breath and see what happens. So, how was your weekend? Start this off right.
See, we're on the same wavelength. I was about to do that as well. My weekend was good. Let's see. Friday, my wife and I went to dinner, and then we went to check out Sinners.
Where'd you go to dinner?
Place local near us. Nothing crazy or fancy. Okay. The nice thing about them is we got there. I think we had like 50 plus minutes to the movie. We got kind of in and out pretty fast. It was good.
Yeah. What did you think of the movie?
I had the short beef risotto.
Thanks. Now my day is complete.
What I think of the movie, I liked it a lot. First of all, I like the fact that as a director and actor, they seem to have a nice little pairing.
They definitely do.
That serves us in society well when we have a director and actor, just kind of same vision, and that's just kind of dope. So it was cool. It was funny to see him play two people.
I thought that was pretty amazing. Like, I didn't realize he did that.
I mean, I didn't realize that was the thing too. I thought that was pretty funny.
Yeah, that's got to be. I was thinking about it during the movie. How do you film that? Because there's so much dialogue between the brothers. Like that. I mean, they must have a stand-in.
I think they do actually. Yeah. No, they did. And I follow him, Michael B. Jordan, on Instagram, and I remember seeing this like a month or so ago, where he was talking. He did a little thing with his stand-in guy. Okay. So yeah, there is a stand-in. That's right. But yeah, still kind of interesting. I mean, I liked it. I liked it a lot. I try to, when something's really buzzy, I try to like, outside of seeing the preview, I really didn't know what I was walking into. Honestly, I knew it was somewhat of a thriller. I think anybody who knows that this movie exists knows it's a thriller, but I didn't really know much about it. I didn't know much about the plot and all that. So I found it fascinating. I mean, it was interesting.
Yeah, I didn't know much about it either before I saw it, and I was like, I thought it was great.
Yeah, I liked it a lot.
It was really, and the music
was packed.
Yeah, and the music was fantastic.
Yeah. Oh yeah.
Yeah, really liked the music.
What about that? We're not gonna. But what about the plot twist? The little twist at the end. The person who showed up.
At the very end after the credits. Yeah. They sort of left it open for a second one or something like that. Yeah.
Kind of cool.
Yeah.
It was good.
Cool.
What about you? How's your weekend?
It was good. Appreciate you texting me yesterday on my birthday. That was nice. You know.
Yes, it was your birthday.
Yeah,
I didn't know that.
Yes.
You didn't tell me. You didn't say my birthday.
Why should I have to tell you it's my birthday?
Well, how else am I going to find out it's your birthday?
You should just know these things.
How?
I know when yours is.
When's my birthday?
It's in my phone.
Yeah, right.
Exactly. I'll bet you anything it is.
Yeah, but you don't know. You didn't know off the top of your head.
No, but I'll get an alert on.
No idea.
I'll get an alert the day before so that I don't forget.
What was that? Your birthday was just so that's. I think I vaguely remember this. Your birthday is on the 4th.
Yeah, because I hate that.
Yeah. No, I get it. I get it. My birthday, it's every single year. Like every single year.
Everybody's birthday is every single year.
Be interesting to see
it's not
if it's going to come up this year. But the OJ situation happened on my birthday.
Okay.
Every year they bring it up.
Well, this is the
first year he'll be
30th
dead.
anniversary.
Well, we'll see.
Anniversary is dead.
Obviously, we'll see. If it gets brought up, but
thank you for the happy birthday in the chat.
Yeah, happy birthday, man.
Thank you.
What'd you do?
Nothing. Went to my mom's house. I think I told you.
Thank you.
I said yeah. So I think I told you that. So a few weeks back, my mom, last week, my mom reaches out to me. There's this wheelchair that I want to get, but it's really expensive. It's like it'll be like $10,000-$11,000, and I'm like, I don't know that I can justify this. And she's like, so she reaches out to me about a week ago. And she's like, that chair you want to get? I'm like, yeah. She's like, well, if you really want to get it, I could maybe do that for you. And I'm like,
that's nice.
Yeah. And I'm like, that's nice, Mom, but no, don't spend your money on that. That's like a lot of money to spend. Just it's okay. And I thought, I'm like, I bet you my mom's dating. I think like this has guilt written all over it, all over it. So yesterday, my mom says something about being asked out. And I'm like, I knew it. I knew it. That's why you offered to buy me that wheelchair. You felt guilty.
Let her deal with it, man. Let her enjoy it, man.
Nah, hey,
my parents
listen.
got divorced like a long time ago. So, I mean, I remember being a kid and my mom was dating. She's not going to like this, but she almost bit my head off one time because I was commenting on like somebody she was dating. I didn't like it. And she was like, stay out of it. And I was
like, I want my mom to be happy. Let me be very clear about that. I just like don't need to know about. Like, just when it's serious, you let me know. But yeah, all of a sudden offering up to 10 grand to purchase a chair for me, I'm like, yeah, there's something not right here.
Yeah.
Hey, Paul, I think your mic's open.
Yeah, mic's open, Paul. Somebody's mic's open.
Yeah.
Hot mic. The markets are up 9 days in a row.
Mm-hmm.
I still think with today, I still think there's a chance for 10. I feel like that's going to be a headline. I'd be shocked if it doesn't. But really, the biggest thing of the week is going to be the Fed meeting.
Yeah, for sure.
Clearly, I mean, in some regards, market seems to be a little bit quiet heading into that. We really haven't obviously heard from the Fed. The blackout window started this past weekend.
Mm-hmm. Listen, they can't do anything.
Mm-hmm.
I mean, you had a good jobs number last week. It was.
I didn't understand that move, by the way.
What?
That was a huge move to the upside on that.
Oh, on Friday?
Yeah, I really didn't get it. I really didn't get it.
I don't think it was jobs number related. There must have been more. There's more to it.
I think there was some kind of news that day too. I don't know. There was like rumors of some. I think the headline came out like China. We're willing to talk to China.
Oh yeah. They talked.
It's hard to keep up with these.
It's impossible to keep up with all of it. But
I think that was part of it.
Yeah, it definitely was. But the jobs number was solid. It was in line with. I mean, last year April was almost the exact same number. And you did have some revisions down from February and March, but the numbers are still solid. PCE numbers that came out, don't show things slowing down. You're not going to get, my point being, you're not getting a rate cut this week. And, but you got bonds down again, after getting up to like 117. Like, I don't know that you're getting a rate cut. I think the most likely month was, if I'm not mistaken, June or July.
June or July, one of the two.
Yeah. And I don't know that you're going to get it. I really don't.
I don't see how. Scramble everything. You're right. There was a talk of minerals deal as well.
Oh, that's right.
Again, you're absolutely right. Appreciate you mentioning that. At the same time, I think those are the dumbest headlines in the world. I just don't see how those are the headlines that move us almost up 2%. Like, it's just so dumb.
We got minerals. Minerals. It's their code.
I don't know. I don't get it. The biggest thing to me, it would seem right now, which I knew this was going to eventually get here, the 200-day moving average, not only in the SPX, but in a lot of different individual names, is the new level of resistance.
Yeah.
I do remember selling some call spreads and some names against there that, I only did it 5 wide. Those didn't work, at least as of now. But that's going to be the next thing. We're going to be hearing about this 200-day moving average situation.
It would be a shocker to break through that.
Might take
right away.
Times.
Yeah, right. I personally don't see it happening anytime soon. I think that we're going to get to it.
Well, again, it might be news related. I didn't think we were going to break through 5,500 so strong, but boy, did we ever.
Yeah, it's a fair point. I just think barring like the tariffs being ended, I can't imagine. What's the impetus to trade higher? What's the catalyst to that? What's the justification when you don't know? Earnings season is going well. So, but it's hindsight, right? Mm-hmm. Every company is issuing either 2 forecasts moving, for a recession or a stronger economy. It's just my point being that nobody really knows what's going to be going on in a couple of months. So how do you justify taking anything higher in that environment, and also at the same time lower? How do you justify that? I think we're looking at sideways trading, quite honestly.
Some sideways trading. I can see that as well. Again, it's been, so many different headlines. This is a name, Netflix, for example, that was moving on a headline earlier today. There was headlines about tariffs for foreign films. It's just there's constant headlines. It makes it difficult. I actually closed out a lot of positions over the last Friday. I hadn't even looked at this metric since Thursday, but the number of names above the 50-day moving average, look at that.
Yeah.
How much that climbed on Friday.
Yeah, that climbed a lot.
Now we're back above 50%. It's been a while since we've been there.
Yeah, we were at 30, 32 for the 50 and the 200-day, and
we haven't been there since February, basically around the time we dropped. So, that's another interesting tell, if you will. Hank from Baking Bad would be happy with the minerals deal.
That's all that made me laugh.
That's a good one, Grumpy Mike. Yeah, good. You know who looks a lot? You know Michael Chiklis? No? If you saw his face, he looks a lot like Hank. They do look similar.
Okay.
And and both of them kind of look like my brother Mike from. They all,
I'll take a look at that.
Yeah.
Hey, do you watch? Okay, so I want to come back to this terrorist on the foreign made movies for a second because I don't know anything about the movie industry, so I don't know how that is. It mean like if you like Mission Impossible? I'll just use that as an example because they filmed that overseas.
Yeah.
Is that included in that? Are you saying you want these movies not filmed on location? You want them filmed? I don't know the answers to this.
That's a good question. I didn't really look at the details of it.
Yeah, but do you watch foreign films like with subtitles and not like? I've noticed Netflix has a lot more movies like that.
I mean, not regularly, not as a regular habit.
Yeah, it's like I can watch one, but I can't do it all the time
because of the subtitles.
It's just you're just reading the whole movie. I mean, it's one thing. I have the subtitles on all the time for anything, but like at least I kind of understand English. But if I have to read the whole thing because the movie's in French or whatever, it's like it's just too taxing.
A lot of younger people like teens, 20-somethings. They prefer to watch movies. I'm not even talking about like foreign movies, like regular movies. They prefer to watch things with subtitles. I don't know if your kids do it.
Yeah, we do
like
it.
My older kids, everything they watch with subtitles. Especially my daughter, watches everything with subtitles.
Yeah, we started doing it because my son with the hearing loss, so that I didn't have to turn the TV up so loud that the neighbors hate me. And I was like, dude, just learn to read. But now I found that I rely on it too. It's
distracting for me.
Is it?
Yeah. I would rather. It causes me to focus on the movie more. You know what I mean? I also like quiet during movie. I also don't like to talk. And if you're going to talk, then let's pause it.
Yeah, I'm with you on that. I'm with you on that.
I may not be talking about somebody in my house, but
I laid into my kids for the same thing. I paused it.
This is pause and talk.
Looked at them. Do you know the movie's on?
You know what I mean?
See that the movie's on, right?
Because
then
if you don't, then what happens?
What? Wait, what just?
You
what
know
he just?
what I'm saying? No, man.
Exactly.
Dude, no.
Every time. Wait, what happened? What did he say?
No.
I don't know because somebody was talking.
Yeah, no, I don't want that. Let's just. If you want to talk, we'll pause
it.
Let's have a discussion. But let's try not to talk during the movie because guess what? Even all those little tiny things that you don't think you hear, you will hear if you just.
Yes. Write your question.
And that's part of the movie. You can't pause a movie when you're at the movies.
No.
You got to listen. And yeah, sure, it's louder, but.
Doesn't matter. It's distracting. Write your questions down.
Yeah.
Answer them after the movie.
Exactly. Yeah, man, I'll be honest with you. I don't like the market action more recently.
I prefer you lie to me, but
I'm just being honest. I don't like the market. That's why I closed.
Okay, you tell me why you don't like it, and I'll tell you why I don't like it.
Well, it started. Well, okay. What day was it? Let's go to ES. It started basically the day that we punched through 5,500 in the way that we did. So it must have been
love, but it's over now.
Yes.
That one escaped before I even had a chance to stop it.
You just said it right.
I had that lined up.
God, where did we close? What was the? I guess it was. Was it? No, it's Friday.
For you, is it a matter of too far, too fast?
That was a little bit part of it. But it was just. It was really this day. It was really on the 30th. The 30th was the day we came in. That's the day we had GDP and we were down fairly big.
Yeah.
On the open, about 80 plus handles or so. And then we closed that day up. It was also end of the month.
Yeah.
And then Thursday was another day where it seemed that we were supposed to trade sideways or maybe even possibly down. We end the day up. And then, of course, Friday. Now, along with that, all those couple of days, gold has fluctuated quite a bit. Gold has been this indicator, right? That has been an indicator of fear along with, obviously, the VIX itself. But the fact that gold has still remained sort of fairly strong throughout all of this, there really has been no real sell-off in gold with the market bouncing back. The fact that you have May VIX still trading over June, which is still trading over July. They're all ever so slightly, but still Market is still in backwardation, and all it takes is a real, strong sneeze for the market to catch a cold again.
Yep.
I don't know. Part of it is kind of far, kind of fast on not a whole lot of concrete news, if you will. It's just been, again, headlines in the opposite direction now. I feel like I could just wait for another big downturn and then deploy capital again. If I'm wrong, whatever.
I think a lot of things you said are the same things that concern me. First of all, I do think it's been too far too fast, because I don't know, the pricing drops were because of the tariffs, right? And it had to be based on something. You had to have some ideas to why you're taking price levels down to the levels you took them. So to turn around and come all the way back so quickly, when I know there's a lot of talk about deals, but I'd like to see a list of the countries that we're doing these deals with. The contraindicator, gold for sure. Like, why is that not pulling back? I mean, it did pull back, but it's leveled off quite a bit. And the other one that I have my eye on is oil. And we talked a little bit about that this morning. And I understand that supply is up, but when you get sub 60, and everybody has sort of a semi-different opinion, I personally believe sub 60 is when there's concern about the economy. I know a lot of people have 50 or even 40. And I know if you go back to when I first started on a desk back in oil was around in the 30s. I remember a bottle of water cost more than a gallon of gas.
A bottle of water costs more than a gallon?
Yeah, it was, gallon of gas was less than $1.
When was this?
Mid-90s.
Well, see, it's
like mid-90s.
So that was here? What's so funny? When I started paying attention to gas, also mid-90s, I was living in the South. Not to cut you off, but I want to get back to the story, but you remind me of gas. I lived in South Carolina, and at the time I was living in North Carolina and Charlotte, and the border's close. Border's like 20 minutes away to South Carolina. You could go over, like, say if gas costs $1.26 in North Carolina, you go over the border and it'll be like 89 cents. It's a big difference.
Yeah, it's a big difference.
So essentially, when you say that, I don't ever remember gas being. I mean, you lived here your whole life. I don't ever remember gas being lower than $2 since I've been.
It was sub $1. And I remember the guy that sat next to me on the trade desk. Every time he finished off a bottle of water, he'd keep the plastic, bottle. I couldn't come up with that word. That's part of getting older. And he'd say, we should just go to the gas station and fill these up because one day it's going to be more than $1. And I don't think that's how chemistry works. I'm not entirely sure, but I think there's probably a flaw with your system.
Yeah.
But the point being that it was so inexpensive at the time. It was so inexpensive at the time, and the economy was doing well. So it doesn't necessarily mean at $57 that we're going into recession. I get nervous when I see it sub 60. I think that's just like, okay, what else is going on?
No, I agree with you. It's actually one of those things too. Again, it's really weird because by saying what we're saying, it's suggesting that all of these prices should trade within a certain area. And I'm not trying to say that, but it is a little strange that there really hasn't been much. Like, I'm not saying oil should bounce back to 70, but it is a little weird that oil has not bounced back a little more than it has. Why isn't it trading around 65 or so,
Mm-hmm. Yeah.
And I do think you're right. I think this level of where oil has been trading and it's been receding back to this level, to me, feels like this is a bigger recession indicator. And it's weird to say this recession word because a lot of it, if we're close to a recession, most of it has been manufactured based off of, tariffs to some degree and mostly headlines.
Yeah.
So,
and add into that,
I guess all this to say, a lot of this doesn't make sense to me.
I was just going to say, then you add into it what bonds are doing here, in the last few days, going from 117 handle, 114, I don't remember the correlations of, was it oil that went down and then bonds, or was it bonds that went down? And I don't remember the exact order of how things sold off. But I do think you have to look at, what bonds are doing, and like, okay, now you're talking about like potentially higher interest rates, even though gas is down. It's like, to your point, nothing makes sense.
No, nothing makes sense. And yeah, to answer your question, which sold off first, I think looks like oil kind of sold off first, sold off on the 3rd. Bonds really had their big sell-off on the 7th, so that Monday. And obviously stocks really started, I guess their sell-off was also the 3rd. It was a couple of days in a row. So yeah, nothing really makes sense right now. And in order for me to make sense of it, I think I just need to watch from the sidelines for a bit and see how it goes.
I'm with you on that. I don't like the risk reward in either direction. We talked a few times when we were down, 5,400 or wherever, that we felt the risk was to the upside.
Yep.
You could get a rip your face off type rally.
Yep.
I don't see that upside risk like I did then. And I also don't see necessarily the downside. I can't make a strong case in my head. I can't develop, I can't convince myself how I'd like to trade this. So I think just sitting around and, to your point, let's see how this shakes out in the next month.
That's exactly it. Again, I do have a few trades on right now. I do have, nothing. The only trade that I love out of all the trades I have is my bond positions. They are iron condors. They are fairly out of the money, and they still have some value to them, and IVR is still kind of bid. But other than that, I kind of flipped a lot of the portfolio around, looked at different low IVR names that I was able to close out, low pop positions that I didn't feel like were much worth holding. And yeah, I don't have nearly as many positions as I did a week ago, if you will. So I'm just kind of chilling. Palantir has earnings.
Yes, they do. This one could be interesting.
Here's the stock chart. This is basically kind of going through a double bottom. And I didn't realize until the day, this thing basically traded. What was the high here? 125.41. It traded 16 cents short of a new high, or 17 cents short of a new high. Straddle is $17. Stock's trading 124. I am not trading it for earnings.
I'm not either.
I did have a short put spread in here for June. I think I closed it out. July might have been. I don't remember. I closed it out. I have nothing on. I'm not even doing one of my patented iron condors.
You're patented iron? Did you patent those?
Sorry, not iron condors. Calendar call spreads. Yeah.
It's patented
for earnings. Yeah.
Really?
I am the one who patented.
Really?
Calendar spreads for earnings. Yeah.
If you were going to trade it, I think I'm trading it to the
If this were 2 months ago and they would earnings, I would do the 150 call calendar for sure.
Yeah. Okay.
Yes.
I'm just looking at this and it does look like it wants to, I don't know. And this is one that doesn't necessarily fit in with the way I'm thinking about the economy. Whereas I'm a little skeptical about the health of the economy. This is a company that's could be in its heyday. It could be in its like Apple,
I do have a long-term position in here.
Yeah.
In my long-term account, I have nothing obviously in this account, but
so Palantir CEO is a low-key psychopath. That's great.
What's the difference between a low-key psychopath
and just a psychopath? I don't know. Okay. I mean,
I kind of agree with you. I think this is a company. It's interesting though. Remember what earlier this year there was this talk about a lot of their stuff being cut or what's.
Remember the last Jason Bourne movie? And they had the guy...
The one with Pamela, what's her name?
I don't
Wasn't
know.
her name in the movie? Pamela...
I don't know, but there was a social media company in it. And they were they're aggregating a ton of data for the government.
Yeah.
Palantir.
Yeah, for sure. Oh, yeah, no doubt. Yeah. Pamela Lundy? Pamela Lundy. Yeah. So
yeah, that was the character's name.
That was the lady's name, right?
Yeah, but she wasn't in the last one.
She wasn't?
Okay. No.
Did I see the last one? I don't know.
It was, what's the guy's name who was in The Fugitive? Tommy Lee Jones.
Tommy Lee Jones was in the last one?
Mm-hmm.
I don't know if I remember the last one. Did I not see
Stay with us as we do a Jason Bourne recap.
2016. I must have saw it. I don't remember that one.
Yeah. But to me, that's Palantir but they acknowledge it. Everybody knows that this is what they do, but that company kind of scares me.
As it should.
As intended.
As it should. Oh, I was wrong. No, it was 125.41. That was the high. Okay, about $1 away.
Yeah.
Yeah, I would normally do, a call calendar. Again, I mean, the front month is super bid. I just wouldn't be interested in selling earnings in here.
If anything, I'd sell it. I don't mind selling earnings if you do it on both sides, because I think you're going to stay in the expected range on most of these earnings. But
yeah, see, this is one I don't think you would under normal circumstances. Maybe you won't. I don't know. $17 is a pretty big move.
Mm-hmm.
I think it could happen though.
Yeah, Pamela Landy, not Lundy. Idiot.
You repeated it, so shut up, punk.
I'm old. What's your excuse?
And I think it's funny that Scramble Everything corrected us, but I also love it because that's what's great about our audience.
Peg Bundy.
One more that I find interesting.
Okay, go ahead.
I mean, there's others. There's
Ford, Disney.
Yeah,
this
what,
week.
Disney?
Disney's on Wednesday. Yeah.
This week.
Which, I won't be here with you, and you won't be here with you either. But
okay, the other one, if you can not be juvenile, we can talk about it.
That's probably not.
It's Hims. Hims has earnings.
Hims has been up and
quite a bit, yeah,
and stayed up.
Yeah,
need to call the 800 number.
It's not anywhere near highs though. All-time highs. Is just up. That's all.
Yeah, no,
42.
We can't.
$8.17. $8.17. This is one that I would definitely do.
I can't. I'm just gonna make jokes. I can't help it. I feel them. They're like in the back of my throat right now. They're working their way out.
What? What?
Why? Exactly. See what I'm saying? I can't even help it. I just can't.
You know what though?
Many jokes.
We were sitting here earlier. I was looking at these calls, the 50 calls. They were 165 bid. All of a sudden now they're 180 bid.
Really?
Yeah. Yeah. I almost bought one earlier.
Did they get a new spokesperson or something that?
Well, they had the deal the other day. Again, they do a gang of stuff, but they do a gang of stuff. But remember last week there was news about keep it together. We gotta go.
We gotta go.
You know what? It's time to go, folks. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. We'll see you. See, this is what happens on a boring market day.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh.
He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Hey everybody, Tim Knight, and for the first time in 2 weeks, we've actually got some red on the screen. Nothing dramatic, down 0.25%, but I'll take it. It's a nice relief. We are past the meat of the earnings season, of course. We've got dribbles and drabbles here and there. Palantir will be coming out this afternoon. And the Fed has their shindig on Wednesday. So there's a little going on this week, but fairly quiet day. let's jump into the charts. We begin with a spider. Now, there's going to be a general theme, and I'm seeing this all over the place. And I don't have an eloquent way to say this, so I'll just do my best. The theme is there might be still room to run without completely dashing all bearish hopes, in as much as the peak from this high here, the late March 25, 26, that peak is still intact. So right now, on the whole, we are below last Friday's high. We're a little bit weak right now. It could still keep going up. And I don't want it to, but if it does keep going up, the only real failure comes if and when we cross above the dashed line that are drawn all over the place. So I'm still not getting aggressive. For my own self, my commitment level is about 78%. And all I mean by that is like, how much cash am I using, and how much margin am I using? So I'm using 78% cash and 0 margin. So about half of if I was really going for it. I do not feel like going for it after the past couple of weeks. Plus, there is that risk of that pop higher. I really want to see this start to show clear signs of another top, another lower high. As it is now, is anybody's guess. Even minute to minute, it's like, oh, it's starting to weaken a little bit. No, it's not. It keeps doing that. So yeah, I'm staying cautious right now, 78%. And I want to really know that we've got some upside down V that's hammered itself out that we can count on as a stop loss level. As it is now, no, the stop loss level is way up in the late March peaks, and that's too far away from me. The diamonds have a little clarity here in as much as they're getting very, very close to their gap. The YM futures have been green most of the day as opposed to the incur, the ES, the RTY, all red. But the diamonds, their gap's at 415.97. A few minutes ago, I entered a big old short position on the diamonds with a stop at 416. Simple. Plain, simple, low risk. So, yeah. IWM, the small caps. Now, this is a great example of the kind of thing which I could convince myself to like really do an aggressive short on this, but I don't want to, because the level that it might cross that would show that it was a mistake it's a little high for my liking. I mean, strictly speaking, this red line up here is the real raise the white flag surrender for the bears, and that's a long way off. There's another medium important one down here, 203.33, which is this peak back on Liberation Day, April 2, before the poster board came out. So here again, we've got this white space here of risk, and then this big white space here of risk. I don't want to do it. As pretty as that topping pattern is from a much greater distance. It's like Dana Carvey's George Bush, not gonna do it, wouldn't be prudent. Here's the cubes, down big old 0.25%. That's really the most we can get these days. In this instance, the Friday peak was still below the peak of the 25th. I've dragged this line down, anchored to Friday's peak with the nascent hope that, that's all we go. But if we do cross above that, the real surrender level's up there at the 25th. But we'll keep it down here for now. And you can see, and this is pretty true across the board, we opened rather weak and are trading relatively strong right now. Yeah, we're still down a little bitty bit, but when we opened, we were down like 1%, and now we're down like 0.25%. So it has been fighting back all day. And speaking of fighting back, this was a big fight back. Netflix, our president, who keeps changing what he's going to tariff. I'm going to tariff this. Oh, no, I'm not. I'm going to tariff this. No, I'm not. I'm going to tariff this. No, I'm not. The latest one is movies, foreign movies, because, let's face it, with $37 trillion in debt and all the problems we've got, what it really boils down to is overseas movies. That's the heart of the problem. So we're getting our arms around those big issues, and we're going to tax, the next remains of the day, the sequel of that. Get those Ivory Merchant films out. And so Netflix freaked out because it's like production outside the U.S. can have 100% tariff. Netflix opened up really weak, but it seems, as you can tell, that the old credibility ain't so hot because it's been fighting back all day. Netflix is down, 1.4% in the face of what should be kind of wretched news, just below its lifetime high. Like I said, it's like the boy who cried tariff. So this morning it's like, oh my God, is it gonna? It's like, no, in 2 days he'll rescind it. Don't worry about it. So Netflix isn't too worried. XLF financials. Here we have, it is not super clear, this pattern, but I've anchored this to Friday's high. We've got this big peak here, and then a higher peak here, a lower peak here. I'm not going to favor this with a name. This is called a mess pattern. There's nothing here, but I am simply anchoring this to Friday's high just because I keep hoping against hope that last Friday's high was the end of this counter trend nonsense. A good example in the financial world of the kind of bounce we're seeing that might be exhausting itself is Bank of America BAC. This is simply anchored to the Liberation Day high, and we're very, very close to that. But these are all like maybes and couldas and so forth. It's my confidence in the clarity of this really took a hit the past couple of weeks, which is why instead of being 160% committed, I'm like over here holding my hat at 78%, kind of taking it safe, preserve the capital. Duolingo, which had a fantastic couple of months, is at a lifetime high again. This is up 1.5%, approaching $500. Guess we're all going to learn second languages now, but this has been a tremendous success story. A little bit of a upside down version, in contrast to that, is something which is weakening, which continues to be our friend Pepsi. And this is a big dome pattern, this multi-year top I pointed out some weeks ago. And it's nothing dramatic. This is they sell sugared water. It's not a big deal, but it's slowly working its way lower. And so this is another positive step for the Pepsi bears out there. So far, so good. Now, with all the red on the screen, our old friend gold is at it again. It's having a great day. Here's GLD, is up over 3%. That's cool. It's got some work to do, though, because the lifetime high was back here, back on the 22nd of April. It's got to conquer this 310.36 level to really prove itself. That was an island reversal gap. Longtime viewers know I'm a big fan of precious metals, gold in particular. I cheer its ascent. Maybe with the Fed's nonsense on Wednesday, it'll blast past those former lifetime highs and make a new lifetime high. But I'm not showing it to you today, but over and over again, I've shown that ratio chart of the all world equities divided by gold. And it's this massive top, which looks like it's ready to plunge into the oblivion, which means either gold's going to go up, equities are going to go down, or my favorite version, both. So that's the ratio chart at work. So gold, the front month's up almost $100 an ounce right now. So yay, gold. The miners are doing pretty good too, naturally. GDX is up around 3.5%. This isn't an island reversal gap, but it is a gap, though, at 50.02. That's got to be concrete as well. But hats off to the precious metals out there. One thing, as tough as the past couple of weeks has been for the bears, the one area, the one sector that continues to do well and has muscled through all this has been oil. And we got more good news over the weekend that they're going to ramp up production. OPEC's going to crank up production, so that's sent crude futures down immediately. And USO here is down 2.36%. So as you can see, in the face of surging equities, good old oil has been weakening away. And so we can see I am short XOP. So this is down about 1.4%. I've got this line anchored at 115.13. I violated that by 3 pennies on Friday. That's okay between friends. XLE down 1 2/3%. And good. And I've got some individual items which are doing nicely. We've talked about this one's not too dramatic, but BHP down more than 0.25%. COP, ConocoPhillips, a good day on this one, down 3 2/3% below this very nice topping pattern. Schlumberger down over 2%, like so. And one last one, FANG. You've heard that a lot. Diamondback Energy down about 2.33% under that right triangle pattern. So energy is going well. Bonds not doing so great. TLT, I haven't traded bonds in a long time, but with the Fed coming up, interest rates are going up and up and up. The politicians want Jerome to cut rates just because, not because it makes economic sense, because it makes for good political theater. I don't think it's going to happen, but bonds continue to weaken, as does XLU by a little bit. I don't trust this critter anymore. I've been burned by it too many times, but so long as it stays under 80.21, this looks prone to a slip as well. Over in Bitcoin land, a few $1,000s shaved off. This had a tremendous run, got to around 77,000, blasted all the way up to almost 98,000. Folks are talking about six figures again. Didn't happen. It turned tail a little bit. It's a messy pattern, but this overhead supply is still intact. Naturally, MicroStrategy, I got to train myself. It's just called strategy now, in spite of the ticker symbol. Strategy is down a bit more than 1%. But other public companies that have made kind of a stake in the ground as being like Bitcoin miners or tied closely to Bitcoin have not done nearly as well as Strategy has. Michael Saylor, here's Riot, for example, down today alone over 5%. And of course, as you can see, unlike Strategy, has not had the kind of performance. And then Marathon Digital Holdings down almost 9%, even though Bitcoin's not down that terribly. But anyway, the belle of the ball is going to be Palantir. Here we have it. I think on an intraday basis has sneaked over to lifetime highs. The PE ain't cheap. It's almost 700 on the PE, but things like this, it doesn't tend to matter. I have no position. I wouldn't dream of having a position in this myself, but I'll be watching with great interest because this is just one of those household name stocks that plays into the psyche of the market pretty strongly. But I know some of you do, so good luck out there. And as I say, the big event this week, Wednesday with the Fed. But good to see some red on the screen again, and I look forward to seeing you tomorrow. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for people that don't know Chicago, which is most of you, there's a train that runs in the northwest, and then it goes up to the northern suburbs and runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
You blew stop signs?
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs. Because you're above the law. Above the law.
So
that's so bad.
Only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt you.
streets that go east-west.
I don't go through red light, through stop. No, just stop signs you go through, not red light.
You go through the meters getting on the ramp on the highway. You don't believe in those. You say,
those are bullshit. You stop at those? Yeah, it's the law. You stop at those red lights on the highway. Yeah, it's the law. Oh my God!
It's so that
only people
a-holes like you,
tourists.
It's like a-holes like you,
right?
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic.
Oh my God!
It's the law.
It's only for tourists.
Beth, I need some help.
It's the same people that sit upstairs at restaurants. It should say that. I've got like 10 tickets.
Don't you notice that the cars around you slowing down? Like, that's what saves me, is like, I'll be up on like Ashland, because there's so many of those things on Ashland, and you notice the traffic around you.
I forgot one on Ashland. I only get them on
down.
Western and
The same phenomenon, Mr. Pedantic. Oh,
yeah.
Bat, how are you? Jeez Louise. You would not last 30 seconds in an improv class, because the whole premise of improv is like, instead of just shutting everything down immediately, is to be like, yes, and. So like, you know what? I'm going to agree with what you're saying, and I'm going to add on to this to further this conversation so it doesn't grind to a halt.
You know what's funny? As much as I like comedy, improv, like Second City Improv, doesn't do it for me.
Okay, of course it doesn't. Bat, how are you?
Do you think you could name one Taiwanese food?
Yeah, Thai food, I eat it all the time. You now learned that Thai food is short for Taiwanese food. Taiwan. Yes, look at you, Sas. I'm very proud of you.
And I want to ask our producer, John, something.
Yes.
John, can you help me here just for a quick second? Just because I don't want him to yell at me. John, have you ever had Taiwanese food before?
I've had Thai food, yes.
Taiwanese food is not Thai food.
Where's Thai food from?
Thailand. Thailand and Taiwan are not the same country. They're not even
Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What are you talking about?
Oh, hold on. Oh my God. Here he is. Jason, come here.
All right.
He is our Taiwanese source. When you say Taiwanese source, there's your Taiwanese source.
You're looking at him right here.
You're looking at him.
That's right.
I will take whatever Jason says. I will take it. If I'm wrong, I will apologize.
No,
I said to him, can you name one Taiwanese food? And he started laughing at me, thinking that it was Thai food.
You know, that's a common mistake, because the Thai part of Taiwan, people mix it up with Thai as.
Don't defend him.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify this.
No, you're not.
I owe you and your people an apology.
No, you're not. Hey, do you guys, you want to know what we're having for lunch today?
The velvet taco.
No, they switched. We're having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
Get the full scoop by checking out the archives at tastylive.com.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. Son of, I thought they had the last call around noon today. Even the S&Ps have only traded about 800,000 futures. Last Thursday and Friday we were more like 1.2 by this time in the day. Low volume day. NASDAQ down 60, but even the S&Ps almost looked like they were going to turn green. I'm really surprised on the heels of Apple down $6 or so that the market would get out of its own way. I didn't think that we would go unchanged today, but they're trying to make me a liar. The Dow was up almost 100 at one point. It's only up 6 right now, and the Russell is down 9. All four indices were lower this morning. Volatility has stayed bid. It's up 22 cents. I know you got the FOMC meeting on Wednesday and a couple others, but man, volatility staying bid up 22 cents. Bonds down 12 ticks to 114.17. Bitcoin didn't do too much today. It's been going sideways for most of the day, down $2,400. Oil down $1.21 after that initial sell-off last night. Didn't really do too much after coming back to $57. Been sitting there. Gold staged itself a little bit of a rally, about $20 or so. It was up around $80 when I left you this morning. It's up 101. That's a little over a 3% move to the upside. Silver's up 41 cents. That's only about a 1.25% move. Sad enough, we had a couple of movers today to the downside. You had Netflix down 15, but it looked a lot worse, right? Trade all the way down to 1,107. It's 1,140 right now, down 15. Tesla down 5 and change. Coin down 3. Amazon down almost 3. Starbucks, which is going out of business, down $2.67. On the upside, you got Costco up $8, UNH up $5 or $6, helping the Dow. Meta up 5 and change. Reddit up 5, back up to 118. Sosnoff. No, that's all I got. Palantir, Ford, and Hims for earnings. What do you think, Sosnoff, on a quiet Monday?
It sure is. Well, the first thing that jumps out to me is that there was a couple of pretty mixed markets, like Meta, Microsoft, Google. They were all strong today. Like Nvidia didn't go down. That's kind of like a lot of the big stocks. They kind of hung in there. So that's one observation. The other observation, like you kind of touched on it. First of all, let's talk commodities first. We'll start commodities, then work our way back.
Sure.
The bond market's been soft all day. It got about 10 ticks lower than here.
13 to be exact, but whatever.
13 to be exact. So it's come back. It's kind of like mid-range. I still like the bonds, but they're making it really hard. I bought a little bit today.
Doesn't the market always do that? I
know. It makes it so hard.
If you would have told me we were going to sell off 40, 50 handles on the opening today,
I know.
I would have thought after the run-up that we had in the market over the last 2 weeks or so that we would muster a little bit more than 50 handles on even the S&P. Then we would probably finish the day, soft as opposed to
a decent down move. Yeah.
Down move.
The bond market, I got a little long today in bonds. That's about it. In gold, when I woke up this morning, my first trade was to roll calls down, roll puts up in gold, and it was up 82. It's up 102 right now. So it's moved $20 today, but that hasn't been good. That's the worst loser on the board.
An expected move for a day or two, well, for a day or so, is really only around 25-ish handles on gold. So when it moves $100, that's moving like a week's worth of gold in a day.
It's crazy how gold's been moving. It's kind of crazy. And it's been my nemesis throughout this entire move, both the gold silver pairs trade, ratio spread, and also short strangles in gold, both in GLD and GC. It has not worked. And it's hard when you're chasing them up 100, even if they go down 100 tomorrow. It doesn't help you.
No, you don't get it back.
No, you don't get it back. You lose more money. You need it to sit here for a little bit. And I don't know if it's going to do that. In the rest of the commodity world, not much today. Last night when we got on air, crude oil was down 250 or 220. It's down 120. It's been here all day, so nothing there. And nat gas, everything else, nothing really to write home about. The stock indexes today, NASDAQ was strongest the Dow was the strongest of the group, and the Russell didn't even look that bad, and then NASDAQ almost came all the way back. The S&Ps were only down 3 at one point, and now they're down 19. But I don't consider this much of anything. Like you said, this is a true non-event. After being up for 10 straight days, going down 20 handles is literally nothing. It should scare the shorts more than the longs.
Yeah, totally agree.
Yeah, and then if I look any stock, the only stock I feel like that was a little, out of balance today, it was the continuation of the sell-off in Apple. We bought some Apple this morning. I've been reluctant to buy any more, but I think I'm just going to buy some right now, just before the close. I don't know why, just because I'm just averaging down because I didn't buy that much earlier. So I don't usually average down. It's very, very rare for me, but to buy a little bit here, I was going to say I got a partial, but now I got filled. So that's the lowest I bought it all day. I know it traded in the 8 handle, 198, but whatever.
Yeah, it's 199.39 is where you bought it.
Yeah, my average price today is around 201. So we'll see. But I also sold some puts in there and made some money, so it worked out. So a little bit better than that.
Half the amount of volume that you would see in Nvidia.
Yeah,
Usually
half.
there's around
Yep.
3 million options. There's like 1.4. Tesla's in the threes is 1.6. So relatively light.
Nvidia and Tesla are the two biggest option trading stocks except for SPYs, and but SPYs are an index, so an ETF index. So Nvidia volume way down today, basically it's unchanged the whole day, and Tesla's been down like between $3 and $6 all day long. It hasn't really moved. Those stocks are both really quiet. I did make some trades today though. I stepped up a little bit in Palantir.
Yeah, I know. I noticed. I saw a couple of tranches coming through on the follow page. Do tell. What do you think here, Palantir? Stock's unchanged right now. It looks like it has about $16 expected move over the next 4 days.
Yeah. So a couple of things to mention about Palantir. The premium in there is it actually went down. So like sometimes they bid up premium into the close, especially on a slow day. Today, it's not the case. So the trades we made earlier today, because you never know. Like there's some days it goes against you, some days it goes for you. Today it went for us. So I have some May and June positions on. I'll tell you exactly what I have on. And some are junky, some are a little meatier, but there's not that much going on. Let me see this. What do I got? Okay. So in May, I have with
11 days to go.
In May, with 11 days to go, the first position I have on, I'm short this is a really wide strangle. The 180 calls.
Oh, Lordy.
Yeah. Oh, Lordy. Those are way out there. The 180 calls and the 82
guy like you,
and a half.
Can I guess? 83 puts.
82 and a half puts.
God, so close.
Yeah.
I don't know how you walk down the street. I mean, honestly, I don't know how you could walk down the street.
Okay. So that I have on. I also did in June. I have a bunch of positions. In June, I have a very wide strangle and I have a narrow strangle. I have the 95 puts. What do I say? Sorry. Let me do this. Clear.
95 puts. I mean, that's way too close for a guy like you.
In June, here's what I have. I gave you the wrong thing. In June, I'm short the 75 puts and the 185 calls. And I am short.
Is that just because they didn't have the 190s?
Uh-huh. And I am short the 95 puts and the 165 calls.
95 puts and 165 calls. You better check yourself before you wreck yourself on that one. I mean, you're getting a little bit meaty there for a guy like you. You got $8.40 in credit for the whole thing.
Yeah, I'm all over the place, but all of it's on at good prices because I did it all earlier in the day when
and volatility contracted. No help to you for sure.
Yeah. Nothing to do with me. So I'm short a $6 strangle, a $2, and what is this? A $6 strangle, a $3 strangle, and a $1 strangle.
Beautiful.
And I got a bunch of them on. I did way too many. So I think my exposure in PLTR is a huge up move, which I just don't see it, but who knows?
When you say your exposure, you're saying that's where you think you get into the most trouble.
Yeah, well, I mean, I know this sounds weird, but I mean, it wouldn't be the worst thing in the world if I had to buy PLTR at like, $70. Like I could see that.
You say that now.
I do. I say that now. Right.
Right.
But anyway, that's kind of what I did. And I didn't look at Ford.
You did not?
I did not.
Okay.
So Ford is down 17 cents. It's trading for 10.10. The reason I didn't look at it was because
Ford is trading $10 and it's down 17 cents and has expected move of 4 days of 53 cents versus the stock we just looked at a moment ago that has a $16 expected move. So you either have to have your head examined to trade Ford or you have a directional bias. There's no other reason to trade Ford. Zero zilch reason to trade Ford. I'm trying to beg you to trade Ford right now. That's why I'm just doing it.
No, if I was going to trade Ford, I'd sell the 10 puts at 40 cents or 41 cents, 40 cents.
Oh, please don't, because those people who are bullish on Ford will thank you by not if you don't sell them.
I mean, that's all I would do in there is sell some 10 puts. But is it worth the risk? What's the expected move for it?
53 cents for 4 days, 10 cents a day. Let's say maybe 25 cents for tomorrow, 8 cents for the other days.
That's a tough one.
How about we go to HIMS? You want to look at HIMS? I know you didn't look at that.
I don't like HIMS.
Hear me out. Hear me out. $42 stock, over 100% implied volatility in just about every month that you can look at. Stock's kind of mid-range. If you're looking to, not to spend a lot of capital and look for a big bang for your buck, HIMS is your man. HIMS got an $8 expected move, half of Palantir's move for the next 4 days. Markets are okay too.
They're better than they've been, but I got
better than they've been. I'll put you right.
I got stuck in a HIMS trade about 3 or 4 months ago before it was actually trading a lot, and I could not get a market to get out of there, so it left a bad taste. So I'm going to pass on HIMS because I just didn't like it. What was the other stock? There was one other stock, wasn't there? No.
I don't blame you. Palantir, Ford, HIMS. My Taiwanese sources also tell me that Race and Duck, DUK.
What's Duck?
I don't know what Duck is.
Neither do I. Is it Duck Duck Goat? Duck Duck Goose?
Duke Energy.
Oh, Duke Energy. I forgot about Duke Energy. I used to trade that like 150 years ago. Duke Energy, DUK, you're right. Yep. I totally forgot about that.
Down 73 cents, Ivy rank of 45. It's got a $3 expected move over the next 11 days. No need to be there either.
I haven't traded Duke Energy in 30 years.
And you're not going to start today.
I'm not starting today, but it's been 30 years. Mm-hmm. When I first got in this business 40 years ago, I made a trade in Duke Energy. I remember I either sold puts or bought the stock. I don't remember what it was, but it might have been the last time I traded Duke Energy. I think we traded it one time on the trading floor, but I can't remember the reason behind it.
I don't remember the reason behind it either.
I think it traded on the SIBO. Maybe it didn't. If it didn't, then I never traded it. I don't remember. But anyway, I kind of don't think I've traded Duke Energy for 30 years. So I'm going to pass on Duke Energy. HIMS, I'm going to pass. I like Palantir a little better as a trading vehicle. Plus, I just watched a YouTube video of their CEO fighting with somebody in the crowd. It was pretty good. Fighting with a heckler. It was kind of entertaining, so I enjoyed it. So it's top of mind for me right now.
That's good. That's good.
Yeah, I don't know if you've ever seen it. It's a good one. But yeah. Anyway, so nice little sell off here at the end of the day. I mean, did not see down 30 after they had rallied all the way back today.
Yeah, I mean, it's a good 15, 18 handle sell-off. Yeah, I'll give you that. On a walk up. I mean, they just walked up all day long. I mean, they killed you with kindness. Yeah,
we bought the bonds this morning at 18, right? Mm-hmm. So we can scratch those right now. It's been a challenge.
Been a challenge, my boy. It's been a challenge.
It's been a challenge in the bond market today. But like I said, we bought them at 18 this morning, and so I think if I can sell them at 20, I can make those 2 ticks, and I can say I did something positive today. We also sold some 113 puts. We also sold some 113 puts in bonds, and I'm going to buy those back. We sold them at 151. They're 141 right now. So We'll take 10 ticks in there and consider bond trading today to be a golden nugget miracle.
Good job out of you.
Yeah, that's all I got going for me. that's the best I got going for me. Thank you so much. All right, I'll go. All right, I'm out of the bonds, so it worked on a daily for a daily.
But a little scalpy scoop.
Well, I made in the bonds what I lost in Apple, so it's a wash. I kind of think I should buy more Apple here just on the close. Not that I think they're necessarily they're closing so weak they might get a little uglier this afternoon or tomorrow morning.
Now, when you say buy Apple, we usually trade options. I mean, why are you just going to the stock today? Ivy rank at 34 is okay, not bad.
Yeah, I actually sold. I scalped which were these puts? The 185 puts today in June. I sold. Let me tell you exactly. I scalped these puts. I sold them at 415 and bought them back at 350.
Good scalp.
Yeah, the 185 puts. They're 410. Well, they're basically 410 mid price. I would sell them. They're 410 bid. I would sell them again at 415 rather than buy stock. But yeah, you could do either.
Okay, just want to make sure which one you're doing. That's all.
Yeah, yeah, you could do either. I mean, these puts. You're right. The Apple puts do move around a lot, and like I said, I did scalp them today. Now I'm in again. Now you see, you just took me down.
Even the S&P down 37, also taking you down.
So rather than buying stock, I sold more puts in Apple. But we'll see.
Now, for argument's sakes, just work with me here for a minute. Let's just use small denominations. You buy 100 shares of Apple, it's 100 deltas.
Right.
Do you do kind of the equivalent size puts, 4 or 5 puts, 3 puts, or do you do one put?
So the 185 puts have a delta of 25, let's say. So
you do 4 or 5 of those per 100
a 5
shares?
lot of puts. If I was buying 100 shares, I would do a 5 lot of puts. It's 125 deltas. It's the same thing.
Got it.
I mean, you do 4, but I would do 5. If I would do 5 to every 100 shares.
Because you're an overperformer like that. I got it.
Because I'm an overperformer. Yes.
Understood.
I'm a scary overperformer. Yes, I think.
Scary overperformer the way you are. That's right.
I think very logically that way. Yeah, I need Palantir. Well, they just no, not really. I was going to say they sucked a little premium out, but really what they did in Palantir was just knock it down about $1. I mean, the stock's had a monster rally.
The stock has had a monster rally. I mean, I would say it's inside of its, recent move. If the stock had never had a downtick, but the stock has never had a downtick, so it's trading near its highs.
I mean,
$123 and change. I mean, in during that debacle, it got down to 66 in April.
Yeah.
It's doubled. It's doubled basically.
Yeah, 66 is crazy, but I could easily, after stocks have had monster moves like Palantir has, my preference is not to necessarily get shorted, but it's more like to play it for like a really small pullback, so like I kind of feel like the stock has been strong, so I feel like they're going to have good numbers, but they're going to disappoint. So like the stock might pull back, $5 or $10, but that's all.
A lot of call skew still in Palantir.
I mean, my God. Yeah.
Equal distance calls versus puts is almost like $2.
Yeah, that's why I said there's a ton of call skew because everybody's scared of the upside in there.
I know, but I said it intelligently and threw out a number there about how much more. You just made a blanket silly statement. I actually added some context to it.
Of course you did. I did. Mm-hmm. I should have explained that.
Yeah, yes. You should have. Maybe you'll learn something.
Yeah. Let's see. What else do we got going on here today? What else?
Even the S&P is 860 some odd thousand, Sazov, but not even going to get to 1 million today.
Yeah, and you know what else is weird today? When was the last time you saw SPOOs down 37? And what do you think the VIX one day is doing? I know the VIX is up today. It's up 99 cents. But what do you think don't look. VIX one day.
I wouldn't know where it closed, and I wouldn't know where
it closed at 20. It closed at 20.
Well, I would say it was up. You're going to trick me, and it's probably down, but I would say it's up because /VX is up.
Right.
We're lower on the market.
Right.
I would say one day is higher.
It's down 360, down 20% today.
Yeah, and that down here. Hold on, now I'm gonna look now. Yeah, down 360, down 20% is actually 18%. Down near, not at its lows, but close enough.
Yeah, I just think there's a message in there that this market's not, like it's almost saying this is the best you got to the bears.
Oh my God! Close all watertight doors. He's
No,
done it again.
I'm bearish.
Oh,
I'm
Magoo,
bearish.
you've done it again.
I want the market to go down. I'm bearish.
Oh boy.
But I'm not a confident bear right now.
What are you, a timid bear? What are you?
I'm a timid bear, yes.
Timid bear.
I'm short deltas and long Apple. How's that for a horrible trade?
Not a good one today.
I'm short gold, long Apple, and a little bit short the market. I need a little help on long bonds.
You need a little reversal of today.
I need a little help from like, one of the option gods. Not all of them, just one of them. I need one of them.
You're not going to get no help from earnings today, so this is going to be
no. I could have some help. I could have help from earnings. I have a pretty big position in Palantir. It could be good.
Oh, yeah. I don't mean the market's not going to get any directional bias from the earnings, is what I should have.
Oh yeah.
I spoke Sosnoff there for a moment. Don't listen to what I'm saying. Listen to what I'm thinking. I should have been a lot more clear. I'm sorry. I'm saying the market's not.
If Ford blows the doors off, you're right. If Ford and Hims blow the doors off, the market's not going to care. if Hims goes up to the moon, okay, and Ford just kills it, and goes up $1, yeah, the market's not going to care. I mean, Ford would literally have to double.
Yes, it would.
Yeah, and I don't even know what Hims would have.
You got less than a minute. You got all your ducks in order here.
I don't have any ducks. Yeah, I don't have any. Yeah, everything's in order here. There's nothing. I think this market's gonna. I think if you think today's bad, I think tomorrow and Wednesday until the Fed chirps up, unless there's some earnings tomorrow, I don't think you're going to see much of anything.
Volatility trading near its highs on the close. Even the S&P's 20 handles off of their lows. NASDAQ is
30 handles off their lows. We were down 5. We were down 5 or down 35.
Lows for the day. Lows for the day are 56.55, and we're trading 72. That's 20 handles off
their low. I'm sorry. I thought.
Sorry. Traders of 40 years, when they talk about the low, they're talking about the low of the day. They're not talking about the low of the last 5 minutes of the show that we're doing. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the overtime boys.
It's the medicine.
When they talk about lows, they mean the lows.
It's the medicine. Sorry.
It's the medicine. Peace.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hi, my name's Angeline Ong. I'm the newest member of the IGTV team. Well, I began my career at CNN Financial in London, covering everything from the financial markets to the European trading day. What I'm looking forward to working with IG is to be the best version of myself and to use all the skills that I have and help IG reach out to those clients out there who are, like me, looking to learn and are ambitious and willing to put themselves out there to learn more about a financial instrument they might not have ever used before. My philosophy is, if you're going to play, why don't you play big? Let's not settle. Let's try and learn more and become a real expert in the field that we are trading in. And that's what I hope to bring to IG in its strategy, in its content, and expand that across Asia, the US, and also Europe.
beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just go.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy.
Yeah.
Like we drive like
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Stocks oscillate and a little bit weaker. It's Monday, May 5th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Mike Butler in Chicago, sitting in for Dylan Radigan today. We're here with you for the next hour as we take you through the futures market close, 5 Eastern. If you're on the website, on the platform, Tasty Trade, tastylive.com, welcome. Thanks for joining us. Come over to YouTube. Tell us what you're trading today. Tell us what you think of this action, whether or not we're out of the woods. Certainly an interesting day for stocks. Lots of different tariff headlines. Mike, the movie industry apparently is facing a 100% tariff. So we can kiss goodbye Squid Game Season 3.
Perfect.
We find ourselves looking at a week where Donald Trump himself says that he has no plans to talk with Xi Jinping. So sentiment a bit softer here on Monday in what is a FOMC week. Fed meets this Wednesday. Market's not expecting much of anything. But we shake out today with a twist in the bond market. We see gold prices surging higher by more than 3%. What a nice turn of events that is. Crude prices gap open lower by 4% and cover about half their losses. Likewise, the dollar's still down across the board. Mike, you're new here. It's the start of the Fed week. How does one Mike Butler look at today's price action in context of what's to come?
I would expect the same thing tomorrow. No more than a 40-point range and just chop until Wednesday, until the actual decision is out. I feel like this exact same thing happened last decision where Monday and Tuesday was like a 20-point range, and then we finally moved Wednesday, Thursday, Friday. But yeah, 95% chance that we stay where we're at 425, 450. 5% chance that we get a 25 basis point cut, which is higher than normal, I would say. I feel like normally by the time we arrive at Monday of a Fed week, it's at 99% for the decision. What do you think? You think that 4% is real, or you think it's definitely going to be 425, 450?
Ilya, do you have any
probably a
bridges to sell?
function of it's probably a function of just fuzz in the markets and spreads. I don't think it means anything at all. I think it's pretty much a foregone conclusion that nothing happens here.
Fair.
At least as far as changing the rate itself. Now, then, of course, there's the statement and my favorite part, the press conference.
And what color tie he's wearing, because that does play a role.
He's wearing purple.
And that sets the press conference on firm footing or not. We'll see.
Mm-hmm.
Ilya, you mentioned
if Powell
that
comes out without a tie, by the way,
that'd be crazy.
Oh,
that's it. Hide your kids, hide your wife.
Yeah, casual Powell. I can't even imagine a world. I can't even imagine that. Period. Like Powell kicking back,
forget
drinking a
Tansuit
beer.
Obama.
Yeah.
Forget Tansuit Obama.
Tylus Powell.
Yeah.
That's
can't see it.
Now,
Ilya,
next level of complication, air tie Powell.
Ilya, you mentioned that there's this pullback. There's this pullback in the cut odds here for this week. We're going to zero out the 4%, but there's been a real dramatic turn in cut odds here over the past few sessions. If it started last Thursday, continues Friday with the non-farm payroll
Wednesday,
report.
Thursday was the peak.
What does this tell us about what the Fed is likely to do or say or not say when they meet on Wednesday, keeping in mind that this Wednesday is a report or a meeting rather where we don't get a new summary of economic projections. Those are released March, June, September, and December.
Right. So this is shaping up to be a kind of reset in Fed funds pricing, where the markets essentially say, right, so they told us 100 basis points in December. They reiterated 100 basis points in March. It's 100 basis points. That's baked into the markets now over the course of this year and next. The markets are a little bit more urgent looking in the way that they want the easing to be delivered. The Fed has a 50-50 split in their forecasting. The markets are 69 basis points this year, 31 next year, so they want more cuts sooner, as it were. But the upshot is the markets don't really see any kind of recipe here for the Fed to get out in front of whatever's coming. And that's probably not good news for risk sentiment. But from sort of the rates pricing perspective, the markets are looking at this and going, yeah, we're not going to get anything here. They're not ready to tell us anything new.
Mike, before we get to the Fed on Wednesday, we have a few earnings reports. I didn't see the Palantir numbers yet, but there's Palantir, there's AMD, even on Wednesday morning, Novo Nordisk, Uber, Walt Disney. Any of these earnings reports catch your attention? Because it feels like the broader markets, as you said, lots of chop and churn the next few days. So if people are looking for some action, they may have to turn to the earnings calendar prior to Wednesday.
Yeah, and that's kind of how we've operated in low vol environments. We pay a lot more attention to these earnings reports, but Palantir is chopping around. It looks like it's down a point. I don't know if it's moving, so I don't know if it's out yet officially, but I know we have an AMD earnings preview on the News and Insights tab on tastylive.com. I'll put a link in the YouTube chat right now for that. We've got a Disney one coming out if it's not out already, and then a Uber one coming out. Uber is interesting because Uber, if you look at the timeline from when the E-minis and NASDAQ and everything started selling off with the tariff implications, Uber has kind of avoided that, and they're actually all trading at almost all-time highs right now. A lot of people are thinking that autonomous drivers are closer than we think, which is scary for me because I don't see myself getting into a car and looking at the front and seeing a mannequin with a taxi hat on talking to me, you know?
Right. If it was like a mannequin, like a bicycle or a rickshaw, I'd be okay with it, but not a sedan.
Yeah.
At this point, increasingly around here in San Francisco, there's nobody in that front seat because the car drives itself.
Perfect.
Oh, well, look at you, fancy.
I feel like they should put someone in, put a mannequin up there. At least
It's the Mike Butler Jobs program. You get a taxi cab attendant. Someone offers you mints, changes the radio.
Yeah.
Right?
It's not the world's worst idea.
Mike, you mentioned Palantir moving around here after hours. Earnings are out. They met their EPS at 13 cents. We see here revenues slightly higher, $884 million versus $862 million expected. Their commercial revenues in the U.S. are $255 million, which is noteworthy because it's a 71% year-over-year growth rate. 39% increase in customers. They're guiding higher for 2Q at $936 million versus $899 million for revenues. And their fiscal 2025 outlook has been up to $3.9 billion versus an estimate of $3. $0.75 billion. So Palantir, a little bit softer here after hours. It's one of the names that's certainly on the docket. Mike, you were mentioning Uber, though. I didn't have a chance to bring up that chart here. Obviously not something that we talk about a lot here, Ilya, and I have my own personal gripes with the company. It's not because of my own rating or anything. I just think that they don't pay their drivers enough. But Mike, it's approaching all-time highs right now. Is this tariff-free? I mean, I feel like if people are traveling less for business or pleasure, it's probably not immune. But you think there's a bigger story in here. You think that there's a story about automated driving that, someone like Elon Musk has been promising us for the better part of a decade. Waymo exists in San Francisco, and Uber is looking to on-ramp that technology sooner than later.
Yeah, I think if you remove like you said, drivers not being paid enough, but if you get rid of the driver itself, that could be good for shareholders. But in the light of
happy thoughts.
Yeah,
you say it with like a question mark. Like,
yeah, I mean, in the light of
for other people.
Yeah, right. Being recession proof. I mean, I use Uber and Lyft. Like, I have a car, so I don't really need to use Uber and Lyft all that often. But I also live in Chicago, where if I really wanted to get around, I can public trans anywhere. I can take a bus. I can take a train. That's not necessarily true for cities that don't have that, or at least as built up as something like Chicago. So Uber and Lyft are still cheaper than owning a car, paying for gas, paying for insurance, hitting the monthly car payments. So I don't know. I think it'll be around. It's just a matter of whether there will be someone driving us in the future or a mannequin. I'm going to really push for that mannequin idea.
One interesting thing, actually, to this point, S&P Global came up with their revised service sector PMIs today. And there were some interesting tidbits here inside the report.
Before you get there, Ford is also out with their earnings report. They beat on their EPS. 14 cents versus an estimated loss of 4.3 cents. But they do announce, and revenues are up, Blue's up, EBIT's up, right? So good numbers. But the tariff adjustment, they're seeing that there's a $2.5 billion tariff impact. They're going to be able to recoup $1 billion of those costs. They are hereby suspending their fiscal year forecast due to the tariff uncertainty moving forward. So net projecting a $1.5 billion hit thanks to the tariffs. It's lower than some of their counterparts. GM is up over $3 billion, but in any event, share prices down here. Another company suspending guidance, the market not treating it fairly, even though everyone kind of knows it's coming.
Well, in a sense, actually, this is perfect because obviously we're talking about Uber, a user of cars, and here we have Ford, a maker of cars. This captures nicely the messaging from those PMIs I was just mentioning. Here's a quote from Chris Williamson, the chief business economist at S&P Global. In that report, he writes, higher prices paid for imports due to tariffs are also driving up service sector firms' costs, as opposed to just manufacturing, feeding through to higher prices, notably in consumer-facing industries such as restaurants and hotels. In other words, if you make the inputs for service providers more expensive, and you can go ahead and put Uber there in the same category of client-facing service providers. If you increase their input costs, you're going to increase their costs. And if you increase their costs, you're going to increase the prices to consumers. So enjoy that.
No, thank you. Look at the broader index levels today. S&P 500 off by 0.71%. Ilya, it's a touch softer than when you and I were talking today on Futures Power Hour when it was sitting at closer to 56.90 or so. A little bit of weakness. It's not significant, but a little bit of weakness here into the close. It's still an inside day. So I suppose to Mike's point, he's saying expecting more of the same that we had today for tomorrow. That comports with what you and I were suggesting a few hours ago, which is that ahead of the Fed, it's such a gravity well of attention. People like to keep capital, set aside so that they can trade after the event. The volume here today is minimal. We don't cross a million contracts traded. Forget at the halfway mark for futures power hour. We can't get there through the end of the session. So it's exceedingly light trading today. It's a little bit of an inside day. You don't really make too much of that on a technical basis. Ilya, do you still feel, as you did midday today, and I already know the answer for this, but we need content. Do you feel like it's a better short?
I'll say it again, boss.
do you feel like it's a better short here than a long, given how far we've traveled and, even though we just broke the streak of 9 straight days?
It is. And I think, I don't think it's pretty clear. I got into this fading it much earlier than was advantageous. Let's say it that way. But I remain unbowed here, as it were, because that area you're showing us here marks a full reset of basically the Liberation Day gap in the S&P. In other words, we have our hair on fire moment in April, where for a second there it looks like the reciprocal tariffs are so disastrous that what they're going to do is basically blow up the treasury bond market and the dollar. Because what they do is they essentially amputate the U.S. out of the global trading system. And if you did that, then you rob that system and the global economy of basically its risk-free asset, the treasury bond, and its unit of commercial exchange, the dollar. So, needless to say, the markets have a conniption. We very quickly step away from the brink there as people sort of come to the realization that you can't extricate these assets from the global financial system, and the administration has a pain point where if you reach a certain degree of chaos in the bond market in particular, they'll back away. And so we seem to have gone the full ride in April and come all the way back. But where have we come back to? The range where we settled after the growth spook in mid to late February and into mid-March. So we're just back to regular recession fears now, not existential crisis, meltdown of capitalism type of price action, just regular old growth, slowdown, and recession. And so, has that story changed? No. In fact, we just saw the ISM and those S&P global PMI numbers this morning, painting from different angles, but telling us the same thing. The U.S. economy is basically at a standstill, all in. S&P Global was a little bit rosier on manufacturing, worse on services. ISM was a little bit rosier on services, more downbeat on manufacturing. They both land at about the same, which is PMIs at basically neutral, nothing, standstill, which is a huge reversal from the very buoyant growth we saw last year. And certainly comports with what we saw in the first quarter GDP data last week, even when you take all of the tariff weirdness out of it. So we're in a situation here where risk is very much on the downside, and the risk reward is too. If you're wrong here betting short, you're wrong quickly, because you have very clear lines of resistance at the top of this congestion range from March in front of you. It's close by. You get over that, okay, it's going higher. Get out of the way. You're wrong fast. But if this is the retracement and now we get into the next leg of a more orderly bear market, then you have all kinds of downside here.
Mike, every day the CBOE, or CBO I should say, they send out a report about what's going on with volatility at the end of every session. The title of the report they just sent out was Option Market Signals Skepticism of Market Rebound. I thought this would be fascinating because it kind of speaks to what Ilya's been saying here. But in their cross-asset volatility overview, They note that implied volatilities fell across asset classes again last week as risk assets extended their rally, with the SPX index retracing its entire post-Liberation Day drop. The notable exception is oil. WTI 1-month implied volatility skewed over 7 points to 50.6% as oil prices slid to a 4-year low. Oil skew also steepened notably, with the 1-month 25 delta spread widening to 13.8%, exceeding the highs we saw immediately post-Liberation Day. The oil volatility market is signaling rising risk of global recession, while the equity and credit markets are extremely sanguine on such risk. Do you find that the equity market is a little bit complacent here with how volatility has evolved? It's sanguine on such risk in the short term?
Yeah, for sure. I mean, this was the first red day we saw in 2 weeks, 2 straight weeks, if I'm not mistaken, with the holiday at the end of April. But yeah, I was actually going to ask you guys what, for such an inside day, the continuous sell-off in oil really stands out to me. But from the equity standpoint, you would think that if all was fine and dandy, rallying from 4,800-ish to 5,600, almost a 1,000-point rally, that you would see volatility futures in contango. You would see them come out of the 20 handle range back to the teens. But we're not seeing that. We're still seeing backwardation from the K to the M contract. It's not substantial, but it's still there. And we're still in the low 20s all the way through the end of the year. So there's nothing on the volatility curve that tells me that we should just expect this rally to continue. I think we're still here for some chop and for a narrative to develop, because I feel like right now we're kind of in this, like Ilya said, we're in this range of like whichever direction we're going, we might see that continue. And if it's to the downside, we'll see volatility pop, of course. But yeah, what do you make of the oil market not being able to catch a bid?
I mean, Ilya, gold and oil and the dollar are existing in a completely different world than stocks right now. The dollar hasn't recovered. Gold's ripping again.
Yeah.
Oil's falling apart.
I think oil is a particularly interesting one. So I was short oil for a few weeks, and I got out of that at the end of last week because it looked like we'd hit a level of support at former lows. Obviously, we gapped lower here at the start of this week, but we're not really making any sort of concerted progress on this down gap. In fact, if you look intraday here at oil, it's not looking anything like where it was at the lows. And in fact, on the day, it's sort of narrowly a rise relative to the open. It's down largely because of the gap at the weekly open here. If not for the gap, we'd be up on the day, albeit very modestly, but up nevertheless. I think we've kind of gotten to a weird place on oil where the story is clearly of demand destruction, clearly of weakness, but maybe this is sort of the flip side of the risk reward in stocks, where you don't have a lot of room on the downside relative to where that swing low is, just above 54. Not much room there to keep pressing this. Whereas if you corrected, let's say, in the direction of 64, lots more room there just to test the upside of the most recent swing. So I'm not in this market at the moment, but I would be somewhat reluctant to short it for now. Maybe we get something a little bit better in the second half of the week. Either we crack that low or we correct a little bit higher, maybe in the, let's say, in the direction of 60, 62, right where, Chris, you have that 21-day EMA. Maybe we get somewhere kind of in that area. Not because the EMA is there, but of course because there's a horizontal axis through the middle of that range running right there. And so maybe there is some sort of a sticking point there, and that's a better spot from which to trade. But the risk reward here seems a little off, and I think largely it's because who really believes OPEC Plus when they say they are going to discipline their members to cut output and get into the business of selling cheaper oil? What oil producer do you know is in the business of selling cheaper oil? That's not how they operate at all. They, in fact, are price takers and price followers, not price makers, much as they'd like to pretend otherwise. The U.S. is now the biggest producer by far, producing more petroleum products than Saudi and Russia combined. Mm-hmm. So who are they kidding? They haven't been able to build up market discipline around getting their membership to cut ever. So what we're going to have here, it looks like it was a gap because OPEC said, oh, we want to cut output over the weekend, but ultimately a move that goes nowhere because who believes them? So crude might correct a little here. I'm not ready to sell it again yet.
Mike, do you have any feelings on crude or any of the energy companies? Because despite the sharp sell-off in oil, energy companies are kind of holding up. It's not like Chevron or Exxon or Schlumberger are really taking it too hard on the chin, right? Schlumberger hasn't done anything for the better part of a month.
Yeah, actually, I pretty much am always in crude oil by way of a micro contract. So I just try and get long into these dips. Unfortunately, when I bought the initial dip, it was at like 66. So I have a micro crude contract at 66. But I've been using the crude futures larger contract to sell a call spread against it. I actually just closed that today for a successful hedge. I initially sold it for $220 and I bought it back for $20. So I secured a $200 hedge against the micro crude contract, which brings my basis down to 64. So I'm basically just going to hold it and see if we can get a little rally here. But if not, when I roll from the M to the N contract, I'll just throw on another spread around 64 and just try and bring the break even down with a short call spread in the bigger contract versus just holding the micro. But yeah, right now I don't have any other positions on in energy futures or energy products, but I did just close a live cattle contract call spread into this
name I haven't heard in a long time.
Yeah, it's basically just skyrocketed. Thomas put us on this one, and it was nice.
Of course he did.
Yeah.
Can I provide some interesting information that Tyson Foods came out with today? They had their Q2 earnings estimates. They said that ranchers can stop culling their herds moving forward. So that's obviously not something that's going to happen overnight because cows just don't grow overnight. They have gestation periods like other mammals. So we probably wouldn't see something longer term come into play just yet, but I think it's worth noting that there had been an intentional effort to dwindle the cattle herds here in the United States, and maybe that's a policy on the mega big agra level that's going to change sometime soon. So certainly like that piqued my interest today. Plus, more cow means cheaper steak prices. Because not in favor of that.
True.
Ilya, I would point out one thing. You were mentioning something with respect to oil, although it's now slipped my mind. So I suppose it's as good as ever. We're halfway here to... I was going to do the sector rotation, but I just saw a red flashing headline. Credit Suisse to pay $511 million for helping U.S. taxpayers hide over $4 billion overseas. It's a damn shame they went away. They were a real, they were a special shop. Energy sector is your leader to the downside today. Of the 25 ETFs that we track here on Futures Power Hour, only 3 were in the green. Yikes. GDXJ up 3.5%, 4% respectively. On the other end, oil down 2.41%, and IYE is off 1.82%. But even so, when you look around, forget the energy stuff or the commodities, XLY is off 1.06%. Not a huge loss, but it's a growthier name. XTL, SMH, lots of struggles in the names that we want to look at here. Ilya, I know that being bearish is something that you very much have your eye on the ball with right now, even if it's been a struggle here. I would point out to people, as I said yesterday on First Call, as I said here on Futures Power Hour today, we just saw 9 days in a row up in the S&P 500. You go back to World War II, and 80% of the time that you see rallies of 9 days in a row or more are occurring in bear markets. So it's been a really fun run. Probabilistically, do we think this is one of the 20% outcomes or one of the 80% outcomes? I know which way you're thinking.
Yes.
For the sake of the Fed meeting this week, though, let's get away from stocks, which may be looking at disappointment. Chew on the theory that a Fed rate cut is good or bad for the bond market for a second. What's the context here? Why should we be looking perhaps long bonds and then ultimately long gold perhaps, which I know you got on board with today?
I did. I think you almost certainly, if you look at the Fed funds pricing, don't get a move from the Fed on rates. That sets up an interesting calculus. If you look at where the markets are thereafter in terms of their baseline, nothing happens in June, but ostensibly that's the stage setting. So the Fed comes out in June, gives an updated summary of economic projections, says more about where it thinks inflation and growth are going, as well as rates, of course. And then in July, they move. Now, if that's the playbook, then there really isn't any added urgency in what the Fed is doing. And based on what the Fed told us back in March, you might surmise that they don't have a reason to, because their entire shtick has been, look, we know that historically tariffs are bad for growth and inflationary, but we don't know what's going to happen this time. And until we get definitive hard data that tells us whether we should be prioritizing employment or inflation, we can't do much of anything. So we're just giving you a repeat of what we said in December because we don't have anything new to add for you. This looks like it'll be a meeting about those kinds of things. And again, the markets want them to be a little bit more urgent. They want them to front load the rate cuts a little bit. Fed is probably not in a position to say anything like that because they don't have that hard data. NFP is a great dichotomy. GDP is a great dichotomy. GDP was negative, but strip out the front running of tariffs via building inventories and surging imports, and it's not so negative. It's not positive to the extent that it was last year. It's a slowdown, but it's not so negative. NFP, a little bit hotter than expected, but the prior month revised by almost the identical amount that this month beat forecasts. So is it good? Is it bad? Is it indifferent? From the Fed's perspective, they still don't have the kind of uniform clarity, and all of the squawking from the White House makes them, in my mind, reluctant to look like they're kowtowing, even though the president has sort of backed off a little. So they have every reason not to do anything any which way supportive of what the markets want, which is more stimulus. They're not going to be hawkish, but they're also not going to be any more dovish, most likely. And that probably means a rehash of what we saw in markets last year, when the Fed was resistant to cut going into the second quarter last year and through much of it, even as the markets were getting increasingly worried about growth, they started to put more cuts later downwind and said, oh, well, they're going to drag their feet, so they'll need to do more later. And that meant that the long end saw a good bit of strength as rates fell there much more aggressively than they did at the front end. You sort of set up that kind of dynamic here. You get a Fed that probably says, we don't know. See us in June. And the market goes, yeah, we do know, though. And you can tell because the the break-even inflation numbers are falling. So the markets have already given the Fed clearance to cut. But the Fed's not going to take it, it looks like. So you get to a place where the markets go, right, so now you're late, so you'll cut more later, and that's probably constructive for the likes of ZB and ZN.
Mike, do you have any strong feelings on rates here? 10-year yields up 20 basis points over the last 3 sessions.
My gut feeling is that this is going to be similar to last year, where they said, well, what do we have last year? Like 6 rate cuts or 7 rate cuts that were projected, and then we did not do that
at the start of the year.
No. And now, like the same thing this year. Like, what was the beginning? I think it was a similar thing. It was like 5 or 6 this year at the beginning.
No, so the markets actually started off very light this year. They were at just 50 basis points at the start of this year, all the way out to the end of next year. So the markets only had about half the rate cuts that the Fed thought they would need. The Fed was on the hawkish side of markets at the start of this year. Now they're basically, as of today, they're almost in perfect alignment.
Yeah.
It's just the markets want 3 this year, 1 next year. The Fed is saying, we'll give you 2 and 2.
Fair.
Yeah, what it makes it interesting is that you think that the Liberation Day tariff impact would be bad for growth. The market's actually pricing in, compared to where we were when the final, we get them on April 2nd after hours. So April 3rd is the first close. We open up with a greater chance of more rate cuts by the end of the year immediately after Liberation Day than we are right now. So the market's telling us that we're away from the panic about growth and an immediate slide into recession. Mike, there was a point earlier this year, April 7th, where we were pricing in basically 5 cuts. We're effectively back to 3 right now. At the end of the day, I think the big news is what happens to rates is going to be kind of an inverse reaction of what happened in September. Ilya, you and I mentioned this on Futures Power Hour, and I think you, me, and Tom and Pete were all in agreement yesterday on First Call, which is somewhat of a scary prospect, but I digress. The bond market in September got a 50 basis point rate cut, and then yields went up at the long end of the curve. And our immediate reaction that day and the immediate days thereafter was reflation. The market is looking at an economy with a 4% unemployment rate or so and a 2-handle on inflation and stocks near all-time highs. And so cutting rates in this environment is going to, if we're correct about reflation, it's going to push up yields. Now, of course, I didn't capitalize that on the bond side of the story. Got it right in gold and stocks, but bonds, we kept the long bond position on in September, October, much to the chagrin of the P&L in the portfolio. But that happened because the Fed was fanning the flames of growth and inflation with lower interest rates at a time when the economy was strong. So reflation comes in, bond yields go up, bond prices go down. The Fed keeping rates on hold this Wednesday at a time when the market is seeing inflation concerns percolate, it's probably good that the Fed's not going to cut for bonds. If they were to cut with these inflationary embers burning right now, you get that September scenario where all of a sudden the Fed's actions look reflationary. They're fanning the flames of inflation, as it were. And so you have to pump back an inflation premium at the long end of the curve. Likewise, I think there's an argument to be made that given, the executives meandering, or rather loitering around the Fed's privileges and authorities, trying to dictate policy outcome, if the Fed were to cut immediately, it would probably stoke speculation of loss of independence once more. Did the Fed do this
or
because
some such thing?
So the term premium can come back in a little bit too.
Yes.
So all of a sudden you have term premium inflating, you have growth inflation expectations inflating. So the Fed cuts, long end yields get blown out. I think the Fed is not going to do anything this week. I think that they're going to signal unease about doing anything in June because there's just not enough information thus far. And there's plenty of time for more data before that June meeting. We're going to get another non-farm payrolls. We're going to get 2 CPI reports, hopefully a trade deal or 2 along the way. So the Fed is going to act. They're going to need to wait to act. But with that background that the Fed can't do anything and the economy is kind of just going as it were, and what's happening with the Taiwanese dollar, of a potential currency devaluation to give the dollar some breathing room, if you want to call it the Mar-a-Lago Accord mindset, Gold's up 3% today. Woo!
Yeah.
Mike, Ilya and I talked about gold earlier, so I want to give you a chance to speak in here. What do you take about gold's action after reversing the losses at the end of last week? Bueller?
I don't think he heard you addressing him directly. I think there must have been.
I was addressing you, Butler.
Oh, me.
Yeah, I already spoke to Ilya today.
I thought you said Ilya. Okay.
No,
we went deep on this on Futures Power Hour earlier today. To which I'll say yes, I'm still long.
I was literally looking at the reference and I'm looking at Ilya, just like smiling. I'm like, are you gonna say? It actually is. It's fitting that I am currently the Bueller of the situation that was shot in Chicago. Let me first start by saying I need to praise the gold gods for the move last week, because I had a short GDX position on, and I had I initially had a gold broke wing butterfly with calls on the upside. And on one of these sell-offs, I bought in the risk, and I created a free butterfly wrapped around 3,200 for $100 credit. It was literally a 10-point wide. It was 30. I think it was 32.10, 32.20, 32.30. Let me double check. Sorry, it was a 3,200, 32.10, 32.20. And into the sell-off last week, where we basically touched 32.10. Yeah, 32.09 was the low on May 1st. I was able to sell out of that for 60 cents additional premium. And I took that as a gift from the gold gods. So this is a nice reversal today, but we talked about this before. Like, you shouldn't be surprised to see a little bit of a pullback, even if the momentum continues to the upside, just given the magnitude of the move recently. So I closed all those shorts into that sell-off, and now I have no position on. But nice to see a little rebound here for the perpetual bulls in gold.
Yes, it is. I think today's action is, Ilya, still very encouraging as we go into the close. You're up around 2.4% when you and I were speaking earlier, and now we're sitting up closer to 3%.
Broke back into that range, and that was a nice little indicator for me today, as I was saying earlier. It topped, then established a little consolidation range, then tried to break out, and then couldn't stick it. And as it moved back up, it retested the underside of that range, had a moment of pause to think about what it wants to do with itself, and then broke back in. So it essentially undid a breakout. And that, for me, was emblematic. It showed me that basically there wasn't conviction in the bearish case. And so I sold some puts here today.
Yeah, the 32.75 level, I was buying against that last week when we got that 2-hour chart. If we go over to the 2-hour chart, you'll see that we had the evening star cluster up here, and then we had the morning star cluster down here against that 32.75. And I said, looks good to me. Wrong.
Yeah.
But I was willing to ride it out down to 3,200 or so, because when we look at the chart, we could see here that you had former highs back at the beginning of April come back into that place. So what happens here now the last three sessions, deja vu, we see here at the start of April, a morning star candlestick pattern, 3-candlestick pattern up against the former swing highs in February, poking back above that 1-month moving average. And that is the springboard that sent us up to new all-time highs. Here we go again. Morningstar candlestick cluster against that 1-month moving average against the former highs that we had in April. Former resistance turned support. I think gold looks great here right now. And the interesting dynamic, Ilya, that you touched on briefly earlier when you brought up the ETF EWT because of what's happening with Taiwanese equities, but also more importantly the Taiwanese dollar. There's discussion around potentially revaluing the Taiwanese dollar versus the U.S. dollar at appreciation as part of these trade deals, right?
Depreciating the U.S. dollar. This is key here, right? Because a lot of the fire and fury out of the Trump administration is, of course, trade deficits, and a lot of that conversation is not just tariff barriers, but also currency barriers and accusations of currency manipulation, fair or unfair. You be the judge. But the overall story seems to be that maybe what Taiwan is going to try to give the U.S. in a trade pact is a stronger Taiwanese dollar, that is a weaker U.S. dollar that essentially makes the Trump administration feel as though they've made U.S. goods more competitive, which, again, debatable, but that seems to be the thinking.
That seems to be the thinking. Mike, if you're a foreign central bank and you have a lot of dollars on your balance sheet and there's rumors of a trade deal coming down the pipeline that the Trump administration wants the value of the dollar to go down, and you're going to be holding these green pieces of paper that the administration is trying to engineer weaker, do you feel like you want to hold dollars on your balance sheet, or you think it's worth to put some of those dollars into gold to ride out the storm? I know what I'd be doing.
I also know what you'd be doing. So
did the framing help?
Yeah. Speaking of this, I was talking about this today with Ryan. I had Ryan on from Tasty Crypto on OTC Live today, and we were talking about crypto and everything. But yesterday I saw a Coinbase commercial, and it had to be brand new because I'd never seen it before, and it was so strongly not worded, but like framed in the sense of, basically all fiat currencies are going to zero and you should buy Bitcoin. Like that was literally, it was like, here's a box of 21 million Bitcoin. And then it zoomed out and it was like, if you look at all the currency that's printed by the US, this is what that looks like. And then it zoomed out again and it's like, if you were to look at all the currency that was printed in the last 10 years, it looks like this. And it makes the Bitcoin box look so small. And it really speaks, there you go. It speaks to...
My God, this makes me want to buy dollars and I'm on the other side of this market.
Yeah.
Damn.
So I was like, did you see this? It must be brand new. I was like, am I getting targeted here? But it's really kind of timely because of all the things that are going on. There you go. Wow.
Those are all of our... You see that? Those are all of our exports.
Yeah.
That's what we export to the rest of the world.
Yeah, that was a wild commercial there. God. But yeah, I think people are starting to...
How am I supposed to be short dollars now?
Well, actually, let me turn this back on you. I think this is interesting because traditionally, gold, like when I started learning about investing, it was flight to safety, flight to quality, gold, silver. When the market's going down, you invest in these things. Do you attribute the continued run-up in gold to people just becoming smarter about currency valuations and actually realizing like, maybe this is something I should be focusing on more seriously, speaking to Bitcoin, digital gold, and physical gold?
No, I don't think so at all. I think the idea that gold is some kind of a haven was just wrong. And it's the kind of shorthand that market watchers use a lot in the kind of what Tom would call the public. But that was always wrong. That was never the case. What gold is a foil for paper currency, because it is obviously a representation of physical value, and it is a foil for interest rates because it yields nothing. So when interest rates go down, in particular when the interplay between nominal yields and inflation expectations give you negative real yields, it actually becomes more advantageous to store value in gold because it has a real interest rate of 0, but that's better than a negative real interest rate. And what then happens is you get periods of gold strength that are essentially a mirror image of what ends up happening to the dollar as a consequence of yields, as a consequence of expectations for rate cuts. So you get this perception of gold as a haven because the same kinds of things go up when you expect for there to be some sort of economic turmoil that is bonds and gold, and the same things go down, it's not because gold is safe. It's because it's a function of yields, and it's a function of the dollar. And so when the central bank, in particular, of course, the Fed, is expected to cut, dollar weakens, bonds go up, usually. So it's, in my mind, a misunderstanding of what gold is fundamentally and has always been. Let's go back to 2022. All year, gold and stocks fell together. Why? Because the Fed was raising rates. It was about rates. It's always about rates for gold, ultimately. So I think when you look at this kind of surge in gold, what you're looking at is almost like a war premium. Gold surged when it did, when we saw the response to Russia's invasion of Ukraine. It does have some kind of a, I don't know what's going on, fog of war bid episodically. And I think we've seen it have that here around the trade war and all of the uncertainty. When people don't have any better ideas, they go, you know what, the fog is too thick. We can't see that far. Buy gold.
I'd rather
when
own
it
a
comes to
shiny rock.
yields and the currency. And obviously April was very much that story. If we
Gold's
now go
outperformed the
to a
S&P
regular
since 2000. For what it's worth. Gold has outperformed the S&P 500 since
that's right.
The year 2000.
Well, where have we been biased on rates?
The last 2 years higher.
Only the last few years, and gold had a terrible.
Gold's gone vertical when rates have gone up since.
But not since the rates have gone higher. Gold was not going vertical when the bias was to hike. In fact, all of 2022 it was falling with stocks. So it's come back since the conversation has become cuts again. And obviously in April had a little bit of extra juice to it around these kind of sell America, hair on fire concerns, which clearly have now washed out of the market. And we're sort of back to regular recession. Notice, by the way, bonds have unclenched but haven't done the full reversal. Neither has gold. The dollar has barely recovered at all. It's been mainly in stocks.
Well, I mean, that's the whole point of that.
And it's because rate cuts are coming.
Well, that's the whole point of that CME note today, right? Or the SIBO note today, is that you're looking at a market where, yes, equity vols come in, credits come in, but if you look at commodities and you look at currency, there's still a great deal of distress that's factored into the system. Mike, you were talking about Bitcoin before, if only to touch on this, as gold looks like it's bottoming. Bitcoin kind of filled the gap while gold was pulling back last week. We have a morning star candlestick cluster in gold. We have an evening star candlestick cluster here in Bitcoin futures. And so you talk about a sentiment top with that commercial, Mike. Maybe this caters to a little bit of a short-term pullback towards breakout levels around 90,000, 9150, where the 1 month moving averages. I'm still very constructive on crypto in this environment. I feel like something fundamentally broke within the system in recent months, where dollar flows are not, well, capital flows are not moving into the US dollar. They're not moving into US assets though that they once were. And to that end, there are people that are going to reach for alternatives. The fact that the dollar can't rally while other things are trying to recover, while
not a good sign.
Rate differentials are moving in its favor on a day like today, not exactly blowing the lid off the door. Guys,
but you wouldn't say this is because of an existential crisis. You would say it's because just the dollar is weakening on relative yield grounds.
Perhaps. Something did happen over the weekend, though, that obviously draws our attention. He's not exactly our kind of tasty trader, but he is a pretty damn good investor, and that's one Mr. Warren Buffett. Mike, he's announcing his retirement after perhaps one of the greatest runs ever for anything ever. Warren Buffett, from the start of his career until the end of last year, 1964 to 2024, returned 5,502,284%. Over that same time frame, the S&P 500 returned 39,054%. But what really drew my interest is not the power of compounding, which Einstein referred to as like the eighth wonder of the world. It's the fact that he did so with get a keen eye for stock selection, just to underscore how difficult this is to be a stock picker and why trading mechanically around volatility and technical setups, right? This is, as a trader, not an investor, this is why we stick to that as opposed to stock picking. Warren Buffett, from 2016 onward, when he takes his significant stake in Apple, Buffett returns 174% over that time horizon versus the S&P 500's 168%. If Apple didn't get into Buffett's portfolio at Berkshire, Berkshire would have returned 155% over that same time frame compared to the S&P 500's 168%. So a single stock set the difference between Buffett outperforming the market and underperforming the market. And that's really the reason why we rely on mechanics here as traders as opposed to longer-term investors. Stock picking is very difficult. The best guy who ever did it was one stock away from underperforming the market basically over the past decade. So, Mike, as we go into the close here, we have these big events this week. The earnings, they're not so much. We went through all the big tech earnings already. But we have this FOMC meeting this week. For newer traders out there that are listening in, they're drawn to tastylive because there's a lot of market activity recently. What's your number one piece of advice for how you stay mechanical and avoid being emotional during times like these?
The number one thing I can say is trade smaller than you think you want to trade. Because really the whole name of the game is being able to trade in the long run. Like you need to be able to generate whatever your trade idea is, regardless of your probability of profit or what you're doing. You have to be able to withstand any and all variance, and you can't do that if you're trading too large, especially when you're tested in times like this. And I think another thing to consider is just you have to have the mindset of realizing that what we saw in April of this year and what we saw in August of last year, it will continue to happen. It's just the story that changes. The market will always be volatile. Even if the VIX is low, there's going to be things that happen where it pops back up. And your first defensive maneuver is to be trading small enough to be able to absorb that when you can't see it coming. So that's the number one thing that I can say.
Well said. With that, overtime is out of time for this Monday, May 5th, 2025. We'll be back tomorrow, same time, same place. As always, right after first call, 4 p.m. Last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco, Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. After a brief break, Ilya's sticking around. He's up next. Macro Money.
See you there, everybody.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for the people that don't know Chicago, which is most of you, there's a train that runs in the northwest, and then it goes up to the northern suburbs and runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
Blue stop sign.
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
that's so bad.
Only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt you.
streets that go east-west.
I don't go through red light, through stop.
No, just stop signs you go through, not red
You
light.
go through the meters getting on the ramp on the highway. You don't believe in those. You
Oh
should
no,
know.
those are bullshit. You stop at those?
Yeah, it's the law.
You stop at those red lights on the highway?
Yeah, it's the law.
Oh my God!
It's so that
people
a-holes like you,
tourists.
It's like a-holes like you,
right?
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic.
Oh my God! It's
the law.
It's only for tourists.
Beth, I need some help.
It's the same people that sit upstairs at restaurants. It should say that. I've got like 10 tickets.
Don't you notice that the cars around you slowing down? Like, that's what saves me, is like, I'll be up on like Ashland, because there's so many of those things on Ashland, and you notice the traffic around you.
I forgot one on Ashland. I only get them on
down.
Western and Irving.
The same phenomenon, Mr. Pedantic. Oh,
yeah.
God. Bat, how are you? Jeez Louise, you would not last 30 seconds in an improv class, because the whole premise of improv is like, instead of just shutting everything down immediately, is to be like, yes, and. So like, you know what? I'm going to agree with what you're saying, and I'm going to add on to this to further this conversation so it doesn't...
People mix it up with title as...
Don't defend him.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify this.
No, you're not.
I owe you and your people an apology.
No, you're not. Hey, do you guys...
I appreciate it.
You want to know what we're having for lunch today?
The Velvet Taco.
No, they switched it. We're having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
Get the full scoop by checking out the archives at tastylive.com.
Financial markets are hovering in an uneasy state after another blistering rally last week as all eyes turn to central banks and whether they are going to bail the markets out of their weird, strange moment here as they digest what happened last time but look uneasy about what may come just yet. This is Macro Money. I'm Ilias Spivak, head of Global Macro here at Tasty Live. And we're going to unpack here what happened with the markets last week, and then take a look at what's coming this week, because we do have another meaty dose of macro risk on the docket here, and does look like the markets are going to want to hear things from them. And we'll see what that is and why. But first, let's take a quick glance at what the markets did with last week's price action. We can see stocks continued to recover, up 2.9% on the S&P, up 3.4% on the NASDAQ. This time around, though, the bond market takes it a little bit on the chin. Yields come higher, which of course means bonds get sold off, and that happens across the curve, up 1.8% on the 2-year rate, up 1.3% on the 10-year rate, so bonds lower across maturities here. Gold in a little bit as well, down 1.7%, though it is rebounding here at the start of the week. That seems to comport with stock markets being a little bit brighter. The dollar manages to hold up a little bit better, up 0.7% against the euro. It nevertheless takes a back step against the yen. The yen manages a narrow increase even with a whack from the Bank of Japan last week, but ultimately not a whole lot of movement there. The overall story last week seemingly of continued edging back from the brink. April began with a very strong bias to sell stocks and bonds and the dollar after so-called Liberation Day, when the White House announced what it called reciprocal tariffs, but which amounted essentially to a kind of surgical carving out, almost amputation style, of the U.S. from the global trading system, and creating significant uncertainty around what the global trading order would look like, because of course the U.S. dollar is the quintessential currency of global commerce. In fact, the Bank of International Settlements most recently estimates that it is 88% of global monetary transactions. This is not because the U.S. does that much business with the rest of the world. It is only a quarter of global GDP, but it is because the dollar is so ubiquitous. Likewise, the U.S. Treasury is also ubiquitous as the risk-free asset for most global finance. And this is, in fact, a function of the trade deficit in large part. That trade deficit means that foreigners selling stuff to American consumers, since they sell it in dollars, end up with a big pile of dollars in their hands. And while they could repatriate those dollars back into their country by converting it into their own domestic currency, what that would do, of course, is pull the value of the dollar lower. And that would mean that those very same consumers that buy their stuff, those same U.S. consumers, they would lose purchasing power. And that isn't exactly a great business model, making your consumers lose purchasing power when you need them to keep consuming. And so the depth of U.S. financial markets in many ways reflects those exporters recycling their dollar profits back into dollar assets, into U.S. financial markets and the dollar, keeping the dollar strong, but also bringing down borrowing costs for U.S. consumers and the government. So in part, the reason that we've had, for example, relatively cheap housing loans and relatively cheap auto loans compared with, say, most of Europe, is because U.S. borrowing costs have reflected this inflow of dollar-based capital that has made for incredibly deep, incredibly liquid U.S. financial markets. And what that has done is, of course, benefited all Americans, but it has also made those assets, the U.S. Treasury bond and the dollar, inextricable from the global financial system. So when the administration moved to rupture the trade links that feed this system, there was, of course, a kind of hair-on-fire concern that the entire architecture of the dollar and U.S. Treasuries based financial order was on the chopping block. Now, the markets have since unclenched because the administration has softened its rhetoric and because seemingly people have come to the right conclusion that the dollar is so ubiquitous and so indispensable for lack of an alternative that even with all this chaos, it is still the pillar of last resort, as it were. And so what we've seen is a kind of unclenching in stock markets, a kind of unclenching to some extent in bond markets, though last week got a little bit spicier in relative terms. We're well off the panic lows in April. And now the question becomes that of more normal cyclical type of nature, where the markets back away from a more rabid concern about the architecture of global finance as a whole and settle more on the somewhat more pedestrian issue of global recession. And the idea that if there is, in fact, a U.S. slowdown underway, then that leaves the global economy without very much to stand on. And in that sense, we got some very interesting data at the start of this week, again, by way of stage setting. Here is the latest on S&P Global PMIs. As ever, these are done where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. What you find here with the revised set of numbers for April, we got manufacturing last week and updates on services just earlier today. These numbers were worse than expected. And what we find is that between manufacturing and services, the former at 50.2, the latter at 50.8, we've arrived at a composite at 50.6, appropriately enough. So hugging that center line down to essentially neutral, down to barely any growth at all, almost standstill. Compare that with where we were at the end of last year, looking at the strongest growth rates since back here in early 2022. So close to a 3-year high at the end of last year, now more like the weakest growth in 17 months. And this is really the upshot of where we are. We get the ISM services numbers today, and so we round out that PMI survey. Again, same logic. 50 is the center line, and all the same rules apply. You get a slightly better view on services here, 51.6 versus 50.8 for S&P Global. But of course, last week, the view on manufacturing was a little bit worse. So diverging in the opposite direction, 48.7, a second consecutive month of contraction, and at a faster rate for manufacturing here, whereas ask S&P Global, and they think that services are a little bit weaker, but manufacturing is a little bit stronger, 50.2, so just barely eking out some positive growth. And so take all this together and you land somewhere near 50, and so near neutral for S&P Global. And take a look here, and you're at, let's call it 49 over here and 52 here, so you're kind of in the same space, somewhere around 50, maybe a little bit higher. So you get different kinds of surveys and different kinds of granular considerations here, but you can clearly see the same story in both. Here you have a slowdown over the past several months since the beginning of this year. Both services and manufacturing are heading lower. Here you get the same thing since the beginning of the year. And so with all of this, the story seems essentially to be one and the same all around. And that is, since the middle of last year, going all the way back to May, June or so, the story has been a strong U.S. economy and weakening performance for both the Eurozone and China. Why the Eurozone and China? Why are we singling these out? Why are these the top three economies? Well, as we've said many a time here, the architecture of the global economy is such that 58% of GDP is just three economies. The US, as we mentioned, a quarter of the whole there, and that's the largest single piece. The Eurozone at 15%, and China at 17%. That 58% together is already the lion's share of global GDP before we get into the realization that the remaining 42%, the rest of world here, are mainly vendors that rely on the large three to feed them demand. So think Canada and Mexico with the US, or Central and Nordic Europe with the Eurozone. Think most of the world's major commodity producers in South America or Africa, and of course, most of Southeast Asia and East Asia for China. There's a lot to be said here for the influence of these three being even greater than their surface level 58% share implies. And so, taken together, you then have a situation for the entire second half of last year where the U.S. seems to be the only game in town. Growth here is accelerating, and we can see why. Here we can very clearly see it's mostly thanks to the service sector, while China and the Eurozone flounder, and we can see that in this divergence of the manufacturing sector on the U.S. side, because, of course, the lion's share of U.S. services demand is fed by domestic firms. Whereas if it were goods demand, that's where imports are. And of course, this helps explain why the U.S. can be strong without spillover into a very obvious export market for U.S. consumers, China. China doesn't get that spillover because that demand isn't in the goods space, hence the anemic manufacturing. It's mainly services demand that keeps the U.S. Economy so strong, which is how that demand stays domestic and doesn't spill over very much to boost global growth. And so you get this lopsided setup where if the U.S. were to slow, the global economy wouldn't have very much of a leg to stand on because the other two engines of growth are clearly misfiring. Well, here's where we are currently. The U.S. is doing exactly what you don't want to see, and that is converging downward on the standstill you now have on display in both China and the Eurozone. Now, we haven't gotten the S&P Global update for Chinese numbers yet to have a like-for-like comparison. The expectation is it'll be 50.5, but we did get the numbers out of officialdom in China, the CFLP PMI numbers, and they pointed to the standstill that we're expecting to see here. So it really wouldn't be much of a stretch or much of a shock to envision that outcome. And of course, with all of these PMI numbers now in the low 50s, the global economy as a whole appears to be grinding to a halt. With that, of course, comes the event risk that is front of mind this week. Monetary policy announcements from, first and foremost, of course, the Fed, and later the Bank of England. We'll start with the Fed here. We can see the evolution of these yield curves over the past several meetings this year, the January and the March. We can see here, and then this is the current curve. So we can see there's not really rate cuts on the menu until we get to July. So somewhere between July and September is when the markets are looking for the first cut. Now, obviously, these are the prices implied in the contracts, and if you were to really adjust them for the date of the meeting, there is no meeting in August, but if you were to adjust them here, and the meeting is relatively later in July, then you would expect the July number not to fully reflect it yet, but the adjusted upshot to show, in fact, that you do have a cut there, and indeed, the meeting is on July 30th, so right at the end of the month, and the probability that you have a rate cut there, basically 75% at this point. So as you look then at what happens, you arrive at the conclusion that this is where you begin. So you can see by the end of the year, you're essentially looking at 3 rate cuts on the menu. And if you look at the overall total here, it's about 70 basis points for this year, 31 for next. And so the market's in total at 100 basis points through the end of next year, which incidentally is pretty much in line with where Fed thinking is. Markets are a little bit more urgent. The Fed said in March, 50 basis points for this year, 50 basis points next. Here it's 3 and 1 with more stimulus front-loaded. The message from the Fed seemingly that they continue to sit on their hands and that they're waiting for hard data to tell them exactly whether they should be prioritizing employment, that is, the weakening in the business cycle that we're already seeing, or inflation, because they're concerned that significant tariff hikes, by the way, they've already gone up 5-fold, the tariffs, versus where they were before. That's even with the reprieve in April on reciprocal tariffs above 10%. That's because the average tariff for the U.S. before this latest move in April was 2%. Now, with the new baseline of 10, that's 5 times greater, the Fed has reckoned that that is likely to be something that lifts prices, but they're not sure if it'll lift inflation expectations, which would be the problematic bit if it started to feed another inflationary spiral. The evidence at this point suggests that actually the markets expect inflation to be down in 5 years' time, and that's because whatever economic downturn is being engineered by this policy will overwhelm with demand weakness any upward pressure on prices because of the tariffs themselves. And so the markets are already looking through the upward price adjustment and to the negative growth consequences and the downward price adjustment therein. Hence why they're looking for a little bit more urgency. But the Fed has signaled it wants very clear, hard data to tell them to start cutting. And of course, to suggest that they need to be doing anything other than moving very gradually and slowly. And it doesn't look like they've received that evidence here, both in kind of a mixed bag jobs report and a mixed bag GDP report last week. So from the Fed's perspective here, there's probably not a reason to accelerate things. And from the market's perspective, clearly they would have preferred a more dovish take, hence what falling inflation expectations are suggesting, and of course, the greater urgency in the pricing here. So perhaps the Fed setting up to disappoint investors with what they ultimately signal. And then thereafter, the Bank of England due for a cut. That cut is all the way baked in here for May, down from 4.5 to 4.25%. And then we see that there's a further 70 basis points or so in the outlook, such that you can see from 450 now to 355 in December, you've had a 70 basis point shift here, or in this part of the curve after this cut this week. So in all, you're looking at about 1%, almost 95 basis points priced in for this year. And of course, with this cut, basically a foregone conclusion, you can see the remainder of the year has 70 basis points in cuts. So another 3 almost fully baked in. And then for next year, about a 50-50 shot for yet another cut, giving us a cumulative 83 basis points after this week's move. Now, that's already very dovish. And so the markets are perhaps hoping to get a little bit more intent, a little bit more guidance suggesting the central bank is ready to provide support, because if in fact we are in some sort of a global recession scenario, then it is the world's central banks that will need to lean in, with of course the Fed chief among them, but other central banks very much still on the hook to offer policy support. And so with the view from the Fed probably inconclusive, and the Bank of England already looking so dovish in its intent that there's probably little room to do much more. They, after all, also face a global tariff regime that's becoming less clear and less predictable, which is likely, again, to drive up costs and contribute to inflationary pressure. The story across these two central banks may well be that the global economy is slowing, but central banks are in no great hurry to do any more than what is already on the menu. That the incremental dollar of policy support or the incremental rate cut in an easing cycle is not forthcoming near term. That the markets are not going to get from central banks any more conviction to come and rescue global growth than is already priced in. And since the data seems to have suggested that the threat to global growth is rising, not cooling, hence this dynamic right here, and of course the most recent numbers out of the U.S. at standstill being kind of the the most critical part of this equation, then you get into a place where, first and foremost, risk sentiment might find it difficult to keep building. Secondly, rate cuts might need to enter into the back end of the curve to reflect that central banks, and especially the Fed, delaying things now will mean they have to do more later. And tellingly enough, if we look at where we are on the S&P 500 in that context, as we can see, we've come off those April panic lows, just above 4,800 on the S&P, and very tellingly reverted right back to where that Liberation Day gap gave us the initial starting point for the sovereign kerfuffle, as it were, that we've just lived through. So the markets have essentially reset back to where they were right here. And how did they get here? Well, they started to come down from about mid to late February into mid-March around growth concerns, as the PMI data started to show that fiscal volatility in the U.S. was becoming a dampener on business and consumer confidence, and that this then was putting the brakes on economic activity and driving the U.S. economy to slow. If we are going to get a message from these central banks this week that suggests, yes, that slowdown is there and we're not ready to do anything about it, well, then perhaps we just get back after whatever this anomaly was to our regularly scheduled programming. And that looks like this. With that in mind, we're going to be breaking all of this down this week in more granular detail. Macro Money is here Monday through Thursday, right after Overtime, a show I co-host with Dylan Ranigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also on with Chris for Futures Power Hour Mondays and Fridays, on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money's back tomorrow.
World of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
if you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go wherever the opportunity is.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, of course, Katie McGarrigle. Katie, welcome back.
Thank you.
I know you couldn't wait to get back in here after the weekend, and here we are.
Knocking down the door,
Yeah.
kind of.
How was your weekend?
It's good. What did I do? Didn't do a whole lot. My dad was in town dog sitting.
Nice.
Spent a little bit of time with him. Took him to Aberdeen. He's a big fan of Aberdeen Tap.
So am I.
Yep.
So am I.
Yeah, it's a great spot for anybody that's in the Chicago area. Good food. I like their Southwest chicken wrap.
Great chicken wings as well.
Good wings. So I saw him. Watched The Last of Us. Had the normal Sunday scaries
Okay.
as one gets.
Just general anxiety or alcohol-induced anxiety?
Just general anxiety.
Okay, yeah.
So if anybody has any, ways to prevent Sunday scaries, sound off in the chat.
Yeah, what's up, chat?
What up, chat?
If you're not in the chat, go over to YouTube, Tasty Live's channel, to be exact, and type something crazy in there.
Yeah.
Gregor, V-Dub, Katie, I just ordered your book.
I don't have a book. So maybe Julia?
Julia has a book.
The smarter brunette at Tasty Trade. It's definitely Julia.
Oh, don't sell yourself short. If you wrote a book, people would buy it too. Yeah.
Thanks.
Yeah.
I don't know what I'd write it about, but I'll have to workshop that in my free time. What did you get into this weekend?
I didn't do anything.
That's the move sometimes.
Yeah.
Especially when it's crappy out.
Cleaned my place.
I did a little of that on Saturday as well.
Yeah, exciting stuff.
Yeah.
Yeah.
Nothing.
Did you trade any crypto this weekend, Katie?
I did not. I offloaded a little bit with what we kind of saw last week, like a little bit more strength coming into Bitcoin. I offloaded a teeny tiny bit of my Bitcoin position, but.
See, I thought when you use the term offload, to me, you have like a container ship sized position, and you're offloading.
No, it was more like I just took some pennies, like boop, boop, boop.
Okay.
More like that.
Okay.
Did
it's like a little
you?
profit up there around 97 or so.
Yeah.
Nice trade.
Thanks. What did you do?
I didn't trade anything over the weekend. I bought a little bit of ETH when it pushed underneath 1,800 earlier today. I just keep throwing good money after bad. We'll talk about that in just a second, but didn't really trade over the weekend, though I have been more focused recently on BitTensor. TAO, Tau is the symbol. It's not on the Tasty Trade platform yet, but we're going to work on adding to that list of tokens.
Yeah.
So I traded a little bit in there over the weekend, but no, I haven't done too much here, though we've been chopping around.
Yeah, I mean, and to your point, like there's just been a lot of new ads to the crypto offering at Tasty Trade over the last couple of months. And I don't think you guys have any plans of stopping. So
No, we're hoping to add another 4 tokens this week and then continuing to expand that list. So you can see the new list up here. Previously, you go back just a few months ago, there were only 4 tokens that are available to trade. That was Bitcoin, Bitcoin Cash, Litecoin, and Ethereum. We've added Doge, we've added Solana, XRP, SWI. I could keep going, but I won't.
XRP is having a moment.
It is. It is. When you look at some of our data, it's become a lot more popular recently. You've certainly followed it in the news. I think we talked about that to some extent with Hidden Road, with what they're trying to do with their stablecoin and trying to bring all these institutions to their ecosystem. Certainly benefiting from that. But one of the tokens that you can trade now through Tasty Trade, through Zero Hash, you can see the list right up here on the screen. And if you don't have crypto trading enabled, you want to trade it in your Tasty Trade brokerage account, really trade everything in one place. That's what I like about it personally.
Yeah.
You've got crypto, you've got stocks, options, futures, whatever else is coming down the
Options.
pipeline. Futures, options.
I feel like you're the crypto champion of the firm, and I'm like the futures options champion of the firm.
Oh yeah. I haven't traded any futures options in a while, though. I did come in. I came in long some gold today, so I'm patting myself on the back there.
Okay, I've got a free butterfly in there right now, and I've been short perpetually for probably 18 months. So
You can always flip it over and go long.
well, as soon as I do, we're collapsing. So maybe
You let me know when you're ready. Okay. Yeah.
Yeah,
I'll be unloading, offloading.
I will be the reverse indicator.
But yeah, if you want to trade this alongside everything else at Tasty Trade, you just have to enable crypto trading on your account. You can do that within the settings section here. So you log into your account, or you can do that on the platform if you don't have it enabled. Cash or margin accounts, individual accounts, you'll see that button. Just quickly click that. It'll take you to the page, and then you'll be able to get started trading crypto if you want to.
Yeah. Sounds great. So yeah, that's all I did. Very curious to kind of hear what your thoughts are, especially since, I think our last couple of conversations, we've been towards the lower end of the range. And then last week, we obviously, as you mentioned, kind of started to nibble in those like upper 90s again in Bitcoin. So where is your head at?
Yeah, let's jump into the slides here. Let's talk about what's moving, Katie.
What is moving? That is like an unflattering picture of me. Like I look like a thumb, just saying. But what happened to the photos that we took? We took some updated ones. We need to get those into rotation.
Yeah, we do. We need to reload here. I appear a bit confused per usual. Let's talk about what's moving. Here's our performance dashboard. I updated this in the morning. We're not too far off of these spot prices. I've got Bitcoin on the Tasty platform right now at 94.5, 94.1, chopping around here today. I guess my takeaway recently has been to stick with what's working.
Sure.
So you'll see here, and this has been the case for a few weeks now, if not the last month really, Bitcoin's been resilient. It's not the same as most altcoins. It's not to say that there aren't opportunities in those, but Bitcoin is in its own category. And you quite often see that reflected in its performance. That's what's been apparent recently. So you look at the price momentum, it's been bullish in there. The volatility didn't explode when you saw risk assets really jump off a cliff earlier in the month. And so while I'm tempted at times to try to buy dips, I told you how I'm throwing good money after bad, seemingly, in ETH, and I'm finding other opportunities at times for trades. I think when I look at that long term, kind of buy the dip, this is an environment in which I want to be long Bitcoin, probably leaning a little bit more heavily on that than I am in something like memes or even Solana at this point. Translated, trading that implied volatility, one standard deviation. Everything here is telling me that, I still want to be in Bitcoin market cap dominance over everything else. We haven't seen that rotation into other tokens, which I think you will see, but it's probably after we've seen Bitcoin go up a bit more here.
Yeah, makes total sense. And I feel like, to your point, like there's starting to be more chatter around like regulatory clarity and like what plans kind of look like. So maybe we'll kind of continue to see some of that, as you said.
Yeah, volatility has come in here quite a bit. So that's one thing I'll point out, that the IV rank for Bitcoin is basically at 0.
Yeah.
ETH is low as well. And then realized volatilities, because we don't have options markets that we trade for Solana, for XRP, or others. So we go off of a 30-day realized volatility. We annualize that vol, and we've come down back into the 70s, kind of mid-80s for some of these tokens. That's relevant. It might look high, but it's low versus the 120% or 200% that we've seen some of these trade at times. So not necessarily trying to caution anyone, just be aware that some of these moves that you're seeing are pretty low. Volatility is pretty low in there versus what they can do. It doesn't mean that they will do that, but moving, 1% or 0.5%, 1% to 2% per day is a pretty small move versus what we've seen.
Yeah. It's just so interesting, like, when you say that, because when I'm on the show with Mike and Nick, as you often are as well, weren't you on today?
I was, yeah.
Like, if I'm ever presenting a currency trade, and then I go and I'm saying, yeah, I'm seeing, I want like a little bit of a pullback in the euro or something like that. And then I have to go and tell people, and I like look at the implied volatilities on the platform, and they are always like single digits, if not very low, like teens, more or less. It's just wild that, I guess it's all relative to your point. Like,
This is on that other end of the spectrum.
exactly, like where I'm like, 15 is like really high implied vol for the euro,
Which it is. I mean, for a currency, right, that is extremely
Right.
high volatility.
Right, but 70 is just like, it's not yawning activity for Bitcoin and some of these other coins, but it's low relative to, like what you said, 100, 200 realized vol.
Absolutely. Yeah. So just be aware that they can explode higher in volatility terms, not that they necessarily will. That said, quite often, you see those volatility explosions or the expansion there when you get that big up move. That's how we get that plus 200% volatility because these things are screaming higher, or they can at times. So that's a quick look at our performance dashboard, wrapped around 94,000 here, a little bit of a pullback. This is what I think people should pay attention to. That trend in there, the 3-month price performance has still been deeply negative for most tokens outside of Bitcoin. Bitcoin down 7% in the last 3 months. Year to date, though, flat. But everything else versus Bitcoin has just really underperformed. That's what I mean, again, by for now, and this will change. It could change as early as this week. But for now, I'm mostly focused on trading Bitcoin.
So what do you, go back and what do you think the catalysts will be for some of that rotation?
Partially, it'll just be price across the space. I think when you see people make money, let's say the gateway is Bitcoin, or you've seen big fund flows into those ETFs. Once you get to a certain point, people are going to look for a relative outperformance in other areas, or look for those laggards like you do in the markets in any other capacity. So I think, let's just arbitrarily throw out some numbers. Let's say Bitcoin runs from 95 here, and if we think that this is at $100,000, it's a 50% realized volatility. Annualized, that's 150 to 50 is your one standard deviation range. Big move, but let's say it pushes up towards 150. At some point, I think that people are going to look for other opportunities. And it's not to say that you won't see other tokens run in the meantime, but if you don't see that resulting performance in ETH, in Solana, I think eventually people just say, okay, wait, is this going to play catch up here? There might be a reason to take some profits over here and then get into any one of these tokens that is going to have a much smaller market cap, given the idea is that they're all positively correlated.
Right.
Maybe there's an environment in which Bitcoin completely detaches from the performance of the rest of the market. I don't think that's something we're going to see. Still very, very small in the grand scheme of things when you think about the size of the asset class. We just recently got back to 3 trillion. We've been higher before, but it's just not that big when you think about the size of gold or the commodity markets, for example. And so I think there's still room for others to run, even if Bitcoin does march higher. I don't necessarily think, and could be proven wrong here, but there's a world in which you see, Bitcoin go to 200,000 and ETH is stuck at 2,000, or Solana stuck at 200. Maybe Bitcoin market cap dominance would be at almost all-time highs. I don't think that's the case. So I think you could see a little bit of that. And then I just think you need, a macro environment that's a bit more conducive to capital flowing into these highly volatile assets.
Yeah, that's what I was going to ask you, because I was looking at information from the SIBO today. I get their reports from time to time, and they talked a lot about, the explosion in zero-day options, which is no shock to anybody that's been in the markets for the last 5-6 years since they've gone live. But one of the things that they called out is obviously with the volatility we've seen in April, there's been a pullback in retail investor trading of them, of course. So when you say we just got back to 3 trillion in Bitcoin, is that due to what we kind of saw in April?
So we came off of, I don't know exactly what I can go and look at. So not just with Bitcoin, but you look at the whole space. What's the total market cap of crypto assets? And I might be able to pull that up really
I guess that's the better question is, with the volatility we've seen across the market as a whole, did people dial back in April?
Oh, absolutely.
Yeah.
Yeah. I mean, you saw, a pullback in some of these tokens where maybe not so much just in April, but really where this started to materialize was in February, beginning of February. You saw a lot of this start to sell off. You had monster moves in ETH, for example, and you're still down, what do we have up here on the screen? Still down year to date. In ETH, 47%, down 37% in the last 3 months. So this happened before April. It was fuel on the fire there. But yeah, we saw some meme coins, AI agents, other areas of the market draw down 60, 70, 80% in some cases.
Right.
Bitcoin had a 30% pullback, which is quite normal, I guess. You know, when you look at this historically within bull markets, what are the corrections you should come to expect? Well, those corrections are 100% within the realm of 20 to 30% down. That happens quite frequently. We just got that. It's encouraging that the price action is, trading in a little bit more bullish fashion here, back up to 94, 95. But you absolutely saw, what happened in other markets spill over into crypto.
Right.
So I think you need to get to a point again where, okay, what pushes Bitcoin to that higher level, and then what pushes people further out on the risk curve? It's probably, a bit more certainty around trade. With the tariff situation, so we have a bit of a pause and some things were kind of walked back from the beginning of April. I think you need some clarity out of the Federal Reserve. Right now, they apparently are on hold. And you need some clarity out of the economic data as well. We've come out of just recently reports where you can see that slowing in GDP. You can see a little bit of that slowdown and certainly in inflation as well. That was starting to get priced into the markets, which are going to front run this data. That was starting to get priced in back in February, in March. And so we need to get out of that environment, one that's more conducive to taking risk, one in which the Mag 7 and tech stocks do well. I think crypto will do well. But in the meantime, lower interest rates and the weaker dollar are certainly presenting a decent setup for Bitcoin.
Sure. Yeah. Fair enough. What else is on your mind? Anything are you knowing that, is there anything that you would think about in, some of the corresponding ETFs, or do you want to talk through some of these other coins?
Yeah, I guess a couple things that stand out to me. I mean, it's hard to ignore SWE's performance recently, up 52% in the last month or so on a relative basis here versus Bitcoin up 41%. So there have been some recent pockets of outperformance over the last month. I still think, you're kind of going to go into this overweight BTC, but this is on my mind, SWE. I think you're going to see, or, you're starting to see some signs of the reemergence of that AI narrative, the coupling of AI and blockchain technology or decentralized intelligence. So I mentioned Tau earlier, a couple other tokens that are on my radar. Render, this is one that you can get through the Tasty Crypto wallet. I also think that things like Virtuals token, some of these agent platforms, you go back to AI16Z,
right.
You're kind of seeing signs that a lot of these have probably bottomed. Doesn't mean that they're just going to launch higher, but you're seeing some growth spurts there. So that's another area of the market that I've been paying attention to. But yeah, it's really just trying to trade, some of the pullbacks in Bitcoin and the other tokens, but being aware of where that's going to go or could go, I should say. So here's your one standard deviation moves on the weekly.
Yeah. Okay. So we've got 88,000 as the low, more or less, in Bitcoin, and 100K back on the high end of the range. Okay, nice. And then you said you layered into some ETH when it was under 1,800 today?
Yeah, I couldn't help myself. I just bought a little bit for a second. But yeah, that's one where you just haven't really seen that stair step higher in the expected move. You haven't seen the same trading in terms of price action that you've seen in Bitcoin, where what we've seen in Bitcoin is that implied volatility move. The volatility has come in a little bit, so you have a smaller move, but it's implied a range of higher lows and higher highs throughout that process, where ETH, Solana, and others have really just been stuck chopping sideways. And I think you're going to see that chop continue for some time until, again, you get more of an awareness of the liquidity situation, of what monetary policy looks like going forward. It doesn't necessarily have to come out of the U.S. It's just that there's a lot of uncertainty right now that I think is holding back new money from participating in some of these different tokens.
Sure. But, something that I think is interesting that, again, I've talked about with you when we've done the show before is the idea that, especially if you have the trader mentality, it can be, I should say, different if you are going and looking through the investment lens. So knowing, if you're saying, yeah, sure, maybe there's more chop sideways, but if you have a longer term assumption that ETH or Solana or some other, coin that is listed might ultimately, bounce, why not? Like
Yeah,
nibble
absolutely.
on $100 or a couple, whatever your size is, so to speak.
Yeah, I mean, I think when you look around the market, there's decent evidence that a lot of these have probably put in the bottom. It doesn't mean that you won't revisit near that low. We'll see if this is true for equities or not. They're trading a bit better as well recently from that momentum perspective. But I think there's decent signs, ample evidence that, with Bitcoin, I keep wanting to use that with crypto interchangeably, but with Bitcoin specifically, low being in there about 74 or 75. The same thing with ETH, with Solana. It doesn't mean that they go straight up, but I think you probably have seen the worst of it. Anything going forward is likely going to be liquidity positive, Fed lowering rates, possibly monetizing. We'll see how that all plays out. All of these things on the margin should be positive for crypto.
Mm-hmm.
And I think, again, we've gotten out of kind of the worst of the tariff situation that drove volatility to those kind of extreme levels.
Yeah. So when you're doing and nibbling on your like crypto positions or like looking to like layer in a little bit more, are you, and knowing like you said that this one's kind of not necessarily been working out, are you putting it in as like all one transaction, $1 amount? Do you try to like layer in like with a couple of different prices? Like,
oh, I'll try to dollar
this
cost
level,
average in.
$50 to this?
Absolutely.
Okay.
Yeah, it's not like I'm sitting there and saying, okay, I've got $1,000 here that I'm going to put into a trade, or 10,000, or whatever your arbitrary value or amount is. I'm going to look at, okay, I want to be long this because the trend is bullish. This is the implied range, and I want to buy dips in that range. Knowing that it's not static, it's going to move around. It's possible that I never get to the bottom of the range, but maybe if the Bitcoin range is 88 to 100, I'm feeling a lot better given the momentum is positive in there or bullish. I might buy 90, 92, 93. But it's not firing everything you've got in one shot. It's knowing that, okay, now I have $1,000 that I want to allocate to this. Maybe I do it in tranches of $250.
Yeah.
But you're just dollar cost averaging in.
Sure. Makes sense. I've also noticed that, and we've talked about this a little bit, but more so probably Mike and Nick than you and I, but you're back on the follow page.
Yes, but I can't get it to work, so I haven't been able to post anything. So we're going to work out a technical bug. I'm not sure what's going on, but I am back on the follow page. Thanks
Okay.
for the shout out there, Katie.
Yeah, no, I just wanted to call it out and maybe apology. Maybe I front ran it while we were trying to troubleshoot you.
No. I tried to post something the other day and didn't work.
Well, we'll get a little
I
loud.
forgot about that. Yeah, right.
But I think it'll be, helpful to see that, like, especially when you look in the chat and people are, just talking about certain coins or have questions or anything like that. So drop your questions in the chat anytime you all want. But I'm looking forward to kind of seeing how you navigate both the crypto space as well as some of the ETFs, just the equity markets as a whole. So looking forward to having you.
Yeah, I mean, look, at these levels of implied volatility, they certainly can go lower, but the range in there for Bitcoin is probably about 40% or so to 70% on the upside when you look at implied vol over the last year. I'm just buying call options in IBIT.
Okay.
Like that sounds kind of silly, right? I know it goes against, we want to sell premium here at times. There's no premium to sell.
Yeah.
How
far out in time?
I'm going out, let me double check and see what my actual expiration is here. It was like 200 days. Yeah, 200 days, November 21st, so end of the year. Give myself enough time. I just think the upside volatility is really cheap. You need a massive delta move, but on any sort of upside move here, you're going to see volatility come back into the marketplace. So I think there's an interesting setup. It doesn't mean that it's going to work. It's a lower probability trade, but arguably upside call options, tails, whatever you want to call them, are arguably cheap. I mean, cheaper than they have been for some time.
Yeah. And like you're saying, like, I think sometimes, and especially given, like, I think what tastylive posted on social today, which was like Tom rating different trading trends, and YOLO options was one of them. But I think there's a time and a place for something like that when you're saying you see something cheap on the board, you want to participate in a defined risk way. You know what the trade-offs are in terms of like putting capital aside for either long periods of time or understanding that in some asset classes, like that bullish behavior will actually, reduce the volatility or the price of that option. You just have to know what the trade-offs are.
Yeah, and there might be ways to finance it in the meantime, right? I am also I was for a little while selling puts and just going to run the wheel strategy in there, though I never got assigned. So I was just selling cash secured puts or puts on margin in IBIT. But I don't really want to do that at these volatility levels either.
Okay.
So I'm comfortable with the small position that I have. I think I've got about $1,000 allocated to 3 different IBIT call options, and those strikes are 70, 85, and 90.
Okay.
And that's 200 days out. So it's a little bit of a lottery ticket. But in a world in which you absolutely see crypto prices explode, then I'm very excited to hold this position. Otherwise, it's it's just a trade like anything else.
Yeah. And I mean, to your point, like the 70s, the 85s, and the 90s, like, they're a little bit wide, but when you are just buying a single option, you can be a little bit pickier with your price.
Yeah, absolutely.
And I'm talking, when I say wide, I'm talking like 10 cents, 15 cents. So
yeah, the 85 is 6 cents wide.
Yeah.
Like you mentioned, the 70 is 15 cents wide right now.
Yeah. But if you look at the open interest, like clearly there's other people thinking the same thing.
Yeah.
So.
Yeah, this is a cheap way to get that exposure for maybe what's coming next.
Well, I might have to take a look at these because I currently in my portfolio do not have any IBIT. I was in a trade, I think it was like a crab trade with Nick, where I kind of rolled out a part of it and then covered the other bit on my own. So I'm in the market, as they say.
Well, volatility will probably go lower in the near term.
That's
but
okay.
Could present an opportunity. And given how much time you have here too, it's not like these options are going to go to zero in a week if the price doesn't go up.
For sure. And for me, and for those that maybe don't necessarily watch the show that me and Mike and Nick do, or you as well, my typical bread and butter risk tolerance, I like that $1,000 in spread width for a defined risk trade, maybe $1,500 in spread width, depending on, my conviction and or how many other trades I have on at the time. So if I am buying an out of the money 70 call in IBIT 200 days from now, $400 is in line with my other trade size. So it's not imbalancing anything else that I would necessarily be doing.
Makes sense.
Love it.
Well, that's going
to be back.
Yeah, thanks for coming on the show, Katie. That's going to do it for our show here today. If there's anything that we didn't cover, you have a question on, shoot us an email, support@tastycrypto.com, or just hit us up on Twitter. You can hit up me, Katie, or at Tasty Crypto on Twitter, on X. But that's going to do it for our show. We will be back on Wednesday. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Stephen and Lana, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content. And I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
you were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Hi, my name's Angeline Ong. I'm the newest member of the IGTV team. Well, I began my career at CNN Financial in London, covering everything from the financial markets to the European trading day. What I'm looking forward to working with IG is to be the best version of myself and to use all the skills that I have and help IG reach out to those clients out there who are, like me, looking to learn and are ambitious and willing to put themselves out there to learn more about a financial instrument they might not have ever used before. My philosophy is, if you're going to play, why don't you play big? Let's not settle. Let's try and learn more and become a real expert in the field that we are trading in. And that's what I hope to bring to IG in its strategy, in its content, and expand that across Asia, the US, and also Europe.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Oh, yeah, it's Monday, May 5th, everybody, or so they say, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast. A little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world, and I'm on one today. And a decent number of incentives to explore for the day. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, bing, right here on your screen, there's only one place you can do that, and that's over on Tasty Live YouTube channel. So head on over there, find the channel, find the video if you can, and jump in the chat. Subscribe to the chat first in order to see your comments, both appropriate and otherwise, on top of the screen. And just start banging your metacarpals, your phalanges, your skull even against your keyboard. Create random ass characters and spoof the Google algorithm into putting us in front of as many people as possible. Shout out to all of you already in the chat. I see you. I missed you. Grumpy Mike, what's up? Lone, Catan, Emmett, Mark, how are you? Victoria, Jay, Soul Train, and so many more. I would sit here, just shout you all out, but I'm contractually obligated to say something that could be interpreted as something of substance. Red on your screen is what they will say, I suppose. A little bit of red after what, 9 straight days? 9 straight days. Can you think of anything you've done for 9 straight days? 9 straight days of rally broken today, for whatever that means. That's such a silly thing, you know what I mean? When people start count, we count so many things in markets for no reason. You know, this is the 3rd time in the last 14 years on a Tuesday, on a after a full moon, where we've seen a down day. You know, we do all that weird stuff. It's like, this is not helpful. None of these numbers. None of these random ass numbers you're throwing at me are helpful in any way. Anyways, S&P 500 down 2/3 of 1%. The NASDAQ, a whole bunch of the same, down 2/3 of 1%. Brian got it. Brian got what I was. I wasn't going to say it, but you were thinking it, and you were right. Dow Jones down 0.25%. The Russell down 4/5 of 1%. So nothing doing across any of the majors on the day. But vol, you can make an argument, didn't stray too far. I mean, what are you going to do? With 0.2%, that is down. However, with VIX and volatility at 24, we should be, at least theoretically, experiencing 1.5% moves, or at least inside 1.5% moves, and outside 1.5% moves 2 out of every 3 days, or 1 out of every 3 days, excuse me. So technically, a contraction of volatility was probably in the cards for a day like today. But you just got the cash up to 23.64. Near-term VIX futures at 23.25. Let's get a beautiful look at that VIX term structure if we can. And guess what? It's still in backwardation. You know what we should start doing? We should start taking bets on how long the VIX curve is going to be in backwardation. There is no way to know this unless you see some date out in the future that you think is going to be in some way, shape, or form meaningful. Maybe that 90-day, coming to the end of this 90-day tariff pause, maybe that's a decent time frame or window to bet on. Maybe that's actually decent. I think the longest that we've seen in recent or modern history would have been 2011. And I think we were backwardated for something like 70 days. We can't make it all summer in backwardation, can we? He asks. Can we? Yeah, maybe I'll put together a running chart. Well, we'll start to count the days we're in backwardation, and that way you can throw out more meaningless numbers. People say, we just broke a 9-day rally in the S&P, and you can say, oh yeah, we've been in backwardation for 13 days. Then you can both stare at each other and then go, what do we do with this information? And the other one goes, nothing, it's not tradable. Sorry. But yeah, 24. It isn't it funny how 24 VIX all of a sudden seems manageable. You know what I mean? If I would ask you maybe 3 months ago, what would you pay for a 24 VIX world? You'd be like, oh, bro, give it to me, man. I'm tired of this. Pops to 18. Give me something of substance. Now here we are in backwardation at 24, and you're thinking things have kind of calmed down. I guess 24 volatility regime sounds or is inexpensive relative to a 40 VIX regime or relative to a spike to 60. Bonds, my babies, it got ugly. Daddy got lucky. Daddy got real lucky. I'm sorry, I'm referring to myself like that. I got a little lucky last week. I told you guys I was shorting the long end of the curve, very short-term trade at 117, though I felt it was a little bit of no man's land. So effectively, I flipped a coin last week, and it worked out. Just get lucky sometimes. We the long end of the curve headed down towards 114. And I closed it out at the tail end of last week. Why did I close it out? Just some of the commentary coming out of the administration and some of the commentary coming out of China. I was like, ooh, I'm kind of nervous of a bit more flattening here. Again, the general premise, the negotiation goes poorly. The negotiation with other countries, but in particular China, if that negotiation goes poorly, I see that as a steepening event, an event that could raise the long end and lower the short end. People expecting cuts imminently, given the financial ramifications of poor negotiation and tariffs that are left at their same level for a long period of time. You can see economic scarring and need some sort of response. And if you get the opposite, you get some sort of light in the negotiations tunnel. I thought you'd see the opposite, some flattening in the curve. I don't know if that's the right way to think about it or not, but that's my current mental model. So I closed it out on Friday. And a quick look at the curve. We didn't really, we came in. I don't know if it's the right mental model. We did come in a bit. So we were at 65 basis points, I think at peak. When we started to see a changing of the rhetoric of the U.S. administration, which then subsequently saw some easing of, I think, the Chinese rhetoric in turn. We've gone from 65 basis points. We got as low as 50 basis points at some point last week. Yeah, on Friday. Oh, I timed that pretty well. And then we've kind of bumped up a little bit. We're at 53 basis points. And this is between the 10 and the 2s. This has nothing to do with the 30-year, by the way, but it's a decent general proxy. Maybe we should start using the 5s and the 30s. So, the interesting thing I think about the curve is you're starting to see that short end. That short end is playing against, we've had this range, and I don't know, maybe my eyes are just picking patterns here because we've got a couple of curves on the screen, but it does seem we've established some sort of range here. 3.6 as our low end yields and effectively 5% as our high end yields. And that is where this market is playing inside of. Whether or not the short end gets all the way down to 3.6, can you imagine getting the Fed funds rate all the way down to 3.6? I don't know if they'll go that far. I don't know if they can go that far. Maybe we get to 4%. We see what's what. At least that's what the market is pricing. But 3.6 low end yields, you can see it here. That was effectively where the 2 years, where the 2 year was when we started to cut back in September. The high end is effectively where we were, I don't know, what was that, 3-4 weeks now back when we saw that temper tantrum in the long end of the curve. Post-Liberation Day, I cannot believe he called it that. I still can't believe he called it that. I can't figure out if that's genius level marketing or just the most narcissistic gaslighting attempt of all time. It's maybe a little bit of both. Speaking of cuts, my babies, real quick before we get into a little convo, a little back and forth. Yay, Alcatraz. Yeah. You know what's funny? You did it, not me. Okay, you got me going off this direction, Grumpy Mike. But like, what my original premise, I had this. I sat down a couple of years ago and I just was like, all right, what themes do I want to bet on what I thought was going to be likely continued wealth inequality. So I'm like, all right, if you just put 10 people on an island and 2 people have all this stuff, what would those 2 people need? I swear, there's kind of an exercise I went through. I was like, what would those 2 people need? And I was like, they would need guns to protect themselves from the other 8 because the 8 want their stuff. And they probably would need, like, best case scenario, you want like a jail. You want somewhere to throw those people for minor infractions so you don't have to deal with them trying to steal your stuff. So it was like this what's where the concept for, you know what, I should look at private prisons. And I never considered the idea of using an entire country like prisons as a service. I understood the idea of sort of moving from public prisons as a public service to a private service, but like El Salvador is effectively exporting prison services to the world. And then I was like, well, then when I hear stuff like we should reopen Alcatraz, I'm like, yep, I know where that's coming from. I totally understand where that's coming from. More on that later. But to the point, I'm sorry, I got a little distracted there. To the point here, interestingly enough, they've got a little hawkish here. They got a little hawkish. So we had a meeting June 18th, and for most of, I was call it the last couple of months, the cutting cycle has started in that June meeting. And now, given some commentary, numbers, and the like, they're actually voting, they're actually, the implied curve here in Fed funds futures are saying that might not happen, that there's only a 1 in 3 chance that they cut in mid-June, and instead it starts in July. What do you guys think about that? Do you think they need to start cutting earlier, sooner rather than later? You like June, or do you like waiting? It feels like this is what always happens, right? It feels like there's a moment where they probably should cut, they wait too long, and then they trip an event, and we get forced into a monetary and fiscal response. It seems like what always happens. Me personally, I do not think we should be cutting 4 times this year. To me, that sounds crazy. The other thing I did the tail end of last week was short the 2s. I never mess with the 2s, but we had this conversation, I believe it was on Thursday, and I said, you've got 4 cuts built into the curve. What would you bet? The over or the under? I could go to... What the hell? Paul fell asleep on the controls. Just kidding, man. I love you. I think that's his way of telling me, hey, spice things up a little bit, guy. You're getting a little boring, a little repetitive. If we've got 4 cuts priced into the curve, how do you bet against it? You could sell SOFR, or in my case, I just wanted to sell the 2 years outright. So I'm short a little 2-year. Let's see what you guys are saying. Wow, Catan says he says June. Get him going. Grumpy says June 2026. Here. how many people taking guesses? All right, you don't want to play this game. You're like, you know what? I'm here for your predictions. You're not getting mine. Yeah, I kind of like the under here, and I'm the short end of the curve for just a little bit. You know, if these came in, honestly, it's probably a decent area to probably close it. But for a while anyway, I'll keep it. I tend to agree. I think they've overdone it. I think eventually they're going to get forced to cut, and they're going to get forced to cut more than people expect. Are you kidding me? Paul? Oh, I see. Never mind. You ran the credits too. Paul literally just played me off like this is an award show. Wrap it up, B. So yeah, I'm at 4. I think we talked about this. I gave reasons why I think they could do either, why they could front load their cuts or why they could slow walk this. And I think where I landed last week was I think they're going to slow walk it. I think they'll play Mr. Magoo with any of the data. I think the reason they're pumping up the tariffs as the catalyst is it gives them the opportunity to sort of hide behind them. The reason, what's his name? The reason Jerome Powell dropped the transitory word that freaked everybody out is because he's giving everybody a heads up that, like, hey, even if we see, or we may see some warmer inflation numbers, but we're not going to act. And we're not going to act because we expect them to normalize. Didn't work out well the last time. I think this time, I think a lot of people actually agree. But the problem here, as I see it, is it's like that is the I don't know, I'm just crazy. But if we're in an economic war, okay, just go with me on this. Put your tinfoil hat on and just go with me. If we're in an economic Cold War, which I believe we are, then we are at our most vulnerable when inflation is on the rise or at its peak, and everyone sort of is now expecting it to roll over. So what's interesting about the last time inflation was rising, it looked like it was rolling over. People were sort of expecting or positioning for the fall of inflation. Then guess what happens? Russia invades Ukraine, and it becomes really, really problematic. And in a way, and it's just like it's like this accelerant. It's this huge problem because we are wearing this position we're wearing this inflation position. We need it to roll over, and the question becomes: do we open ourselves up again? If you see some sort of short-term inflation, or you see inflation and you don't do anything about it, do you open yourselves up to a vulnerability to economic attack? I don't know if that's the right model to think about this, and maybe this correlation is not causation. But I remember I was talking to my wife, and I was like, look, this is the most vulnerable time for America. And then, weeks later, Russia invades Ukraine. And it sort of seems like if we put ourselves in that position again, I don't want to be right this time around. All right, let me pause for a second. I'm just blasting through your guys' comments. My bad. Not even saying what's up to my friends. Not even acknowledging all the sick work you guys do. Honestly, your guys' comments have become part of the show. All right, let's see. What's up, Lucid? Welcome back, my friend. Soul Train says 9 straight days of losing at stocks since Liberation Day. 9 straight days. That means you lost them going up and down. Yeah, this is one of those times where you gotta have some conviction, because they're shaking everybody out. Need closed caption with sound off in class. Oh no. I feel sorry for anyone that has to read me via closed caption. That's like reading a Trump speech or something like that. It's really made to be heard, not to be read. I closed on my short vol this afternoon. Huge sigh of relief now. Congrats, Max. I know what that feels like. And you're just in time for the vol crush. You're just in time for them to crush us down to 18 and go back into contango. We can say oversold for months, Victor. Oversold in what terms? What can stay oversold? Do you think we're oversold right now? I agree with the statement in general, but Catan, I don't know what you're referring to. Alex Catan thinks Alex Karp was on that booger sugar. That's pretty funny. You think Alex Karp is a weird dude? What makes him weird? I mean, I think he's eccentric for sure. He's an interventionist, and I suppose you kind of have to be in that to run that type of business, unless you just have no principles and you're willing to sell for any reason. I don't know. I saw that conference of the speech he gave the other day when he dealt with that heckler. I say dealt with it, responded to a heckler. If you haven't seen it, it's pretty interesting. I like when people let the heckler speak and then try to respond. Because that's kind of what our whole thing is, right? I'm not a big fan of like somebody stands up, starts saying something, and then you throw them out. Like I prefer if you've got the mic, give them an audience, and then take control of the stage that you're on with the microphone. Say, all right, I let you say your piece. Let me respond. That person clearly wants to be heard. Make them feel heard. Give them a response directly. Ask them to take a seat. Stay for the rest, and then tell them you give them an audience at the end of the show. I think more people should do that, but they're sort of afraid of being confronted with their own ideas, I think. So I appreciate, regardless if I agreed with his point of view or not, I appreciated how he handled a moment of confrontation with an idea that ran contrary to his own. I get really disappointed when just people just go, they tug the ear, security comes, just drags the person out. I'm not down with that. You know what I mean? You're in a populist era for a reason. People are really pissed off and they want to tell you about it. And I think more people should have to sit there and take it. Or even better, grab the mic and respond in an open audience. Isn't that what this whole game is about? You got to be able to stand there and be more eloquent and get more people on your side. And if you can't do that with the microphone and the stage, then perhaps you're not on the wrong. You're on the wrong side of that issue. I'll do a couple more and then we'll get back on. We'll get Cruz in here. Adam Green says those two people need. It's like Powell is taunting Trump. Those two people need just one thing: religion that declares them the messengers of God, or capitalism, where they have the most capital. Fear of unknown is the operator. That's funny. All right, I'm gonna keep going here. But can you talk Buffett retiring and the future of Berkshire? I haven't thought much about the future. I don't really follow his business probably as deeply as I should, I guess. I don't know, maybe I should. I did listen to him, and there was a part of me that was like a little sad, There was a part of me that heard it in his voice. He sounded different this year. And it's probably time. And there was a bit of sadness that I had as I was listening to him speak this year. And it's but they have likely created a succession plan long ago. So I don't know. If I had to guess, I don't know that they'll deviate too wildly from what's made that business successful in the past. I think it's really hard. What's hard to replace, maybe it isn't the strategy. It's hard to replace the brand. It's hard to replace the brand of a Warren Buffett. The guy who lives in a, I don't know what, it's the nice house in Omaha, but, it's I don't know what it's worth now, but it's certainly not a multi-million-dollar mansion. And at one point, it was in the hundreds of thousands before we printed all this money. A nice place in Omaha, eating McDonald's every day. Horrible decision. I don't get that. But sort of the no frills brand, the folksy no frills brand, doesn't really exist anymore, right? All the people in finance, in money, and in technology, they want you to believe that they're super smart, they're super elite, they are cosmopolitan. And he was sort of this folksy brand from Omaha, Nebraska, who believed in sort of very simple cash flowing businesses until Apple. He was totally ruthless, but the general public didn't see that. And, it's the end of an era. It's a bit sad, but it's probably time. I haven't really thought about it much more than that, to be honest. Why do you think Warren Buffett hasn't bought back into the market, says Nicole? I want to be really careful about answering this question because I don't know what other people are thinking. But I'll answer it this way. I have a higher than normal percentage of cash, and I haven't bought back into the market materially. I took some bets at 5,000, at below 5,200, so 5,200, 5,000, and then 49-ish. I took some small bets that were short-term in nature, and those bets paid off. In hindsight, could I have found some assets that were probably attractive to buy at that level? Maybe. Probably. But I also think, I still think this is a very two-way trade. I think what's happening now is the people that panicked at 5,000, they're seeing a market that kind of got away from them. And then, so what happens is when you go, oh crap, I'm the one who panicked and either I sold or I didn't buy anything, and now the market's moving higher. You play the chasing game, right? Because you didn't buy 5,000 or 5,200, so 5,400, you go, oh shit, I gotta buy. And then you get them goosed for another couple hundred points, but you look around and you go, at 5,700, 5,800, are these things of value? And I still think the answer is probably no. I could be totally wrong, right? You get a couple of trade agreements, the tariffs get lifted, you've got to deal with probably a quarter and a half of bumpy data, but you're probably feeling okay. And then if inflation continues to come down, It gives the Fed an opening to cut, maybe not as early as people think, but later. And so I think you could see a world that starts to look rosier, and that could mean, who knows? That could mean 6,000, something in that ballpark. But to me, I go, if you started the year at 5,000, and I asked you what your upside was, if you said 5,700, it would probably, and I asked you, is that a good year given the risks that you're facing in the market? You'd probably say, yeah, probably. So I don't know. I just think in order to put money to work here, you have to either be afraid of how the U.S. is going to treat the purchasing power of the dollar, and you're just in it for protection against devaluation of currency, or you have to sort of believe that you've got relatively good value. And I just think for me, we haven't hit that yet. We haven't hit it yet. And maybe I'm just not fast enough. Maybe 4,900, maybe in that ballpark, 4,835 where we got to. Maybe that there were some interesting deals there, but I just wasn't fast enough to be ready to deploy enough money at that level. We weren't there fast enough. And then here's the other thing, man. You're getting paid. The really big difference about this market is you're getting paid 5% to take no risk. And I think, you're getting paid, you can get paid between 4 and 5% to take no risk. And so the average long run return of the S&P 500 it used to be 7%, but I think after all the massive gains over the last 5 years, something like that, now the average return probably is like 8, 9, 10% is probably what they use in school now. So let's even call it 10% and be aggressive. It's probably not, but let's just use 10 for easy math. You could get half of that with no risk. So how much risk would you take in a world where you can get half of the expected return of the S&P 500 taking almost no risk other than purchasing power? So, at some point, rates, they start to offer competition. If you're in a zero interest rate environment, which we were in for such a low period of time, or low interest rate environment, we never have to have that conversation. You never have a conversation of the risk-free rate being competitive enough to convince you to keep money away from equities. You especially don't think like that if you've been in an environment where 20% returns on an annual basis is the expectation, not the exception. And if we're going to a world where that normalizes a bit more, if 20% annual equity returns is not the expectation, but the exception, and recessions once every 7 years become normal as they were prior to GFC, then 4 to 5% in a riskless yield starts to look really interesting, I think. So yeah, I guess that's where I would go with it. Let's see, Jeremy, mark this down. Fed will not cut rates this year. I think that's possible. I think it's more likely no cuts this year than 4 cuts. I don't want to say that. Let me say the best case scenario for the Federal Reserve, I think, is that they open a path so that they don't cut. They don't have to cut. Jeremy, that's a bold call, man. Jeremy, somebody screenshot that. Jeremy Wallace. on Monday, May 5th, 5:42 p.m. Central Time. Mark this down. The Fed will not cut rates this year. And if we get to, not even the end of the year, bro, if we get to like September and that is still live, I'd like to replay this clip. Catan, that's the truest thing ever said. We are not the only country that will experience a higher term premium, folks. Correct. Jesus, correct. Everybody. The central banks are pretending, at least for now, that they've left the game for buying debt. I would say, yeah. Which means these governments now have got to sell these pieces of paper into the open market. And they've got to do that now where their debt and debt trajectories are already massive. And it is possible to get back on better footing, but you got to go through this world of pain to get there. And whether you take moderate pain, whether you take more aggressive pain, that's up to the powers that be. But selling this stuff into the open market without central banks, the help of central banks, that is going to be expensive. Who wants this stuff? But again, I could argue when people were trying to explain, I remember having a conversation in an office with a guy who I deeply respect, and him trying to explain to me, I think rates at the time were like negative 50 basis points. We had negative real rates. And he was trying to explain to me why he didn't want to buy risk assets at the time, why he wanted to buy bonds. And I just, sometimes I come at this as a very simple-minded child, explain this like I'm 5 years old. And buying a negative yielding asset, a riskless negative yield, I just could not wrap my head around why that was an attractive prospect. But there were people out there doing it. And so I suppose, markets can operate in a way that I can't conceptualize. Not I suppose, I'm sure that's correct. But I don't see how term premiums got to go up throughout the world. I completely agree with Catan. This should not be surprising. One of the more interesting things that was said today, while I'm on the topic, came from Treasury Secretary Scott Bessent, who said in some remarks today, because he gave some spicy, juicy jewels he dropped today. One of the things he said, U.S. Treasury Secretary Bessent, the way to cut deficit smartly is to bring it down by 100 basis points to GDP each year. Why is that interesting? It's interesting because they're now sort of giving actual numbers. They're putting a lot of color around what was, I think they called it strategic uncertainty when we started this whole thing. And week by week by week, they're starting to color in their playbook a little bit more for the marketplace. How aggressive, what should we expect in terms of the budget, the deficit, trade agreements. Week by week, they're sort of dripping out their strategy a bit more to the marketplace. So I found that to be a little juicy tidbit. Victor, how are you buying treasuries to get the 5% through Tasty? Yes. There's two options. I talked about this last week. I think everything matured. I don't think I have any treasuries right at this very moment. But there's two ways to do it. Well, that's not true. In my Tasty account at this very moment. But there's two ways I do it through Treasury Direct, which is the U.S. Treasury's website, which is absolute hot garbage. The technology is like 20 years old. Or directly through Tasty. I prefer doing it through Tasty because I get some credit for the buying power. So I can hold the money in my Tasty account, it yields in the Tasty account, and I get some credit for the buying power of the treasury asset. That's my preference. Direct 1 month or 4.3%, exactly. What are bank rates right now? What are cash rates at banks? Are they still on the floor? I guess I haven't even checked, because I got so used to a bank not paying anything like it should because it's a bank and that's how they make their money. So I got so used to just going around the bank and not expecting them to pay me for the cash that I haven't checked it in so damn long. Because that was always the risk, right? Post SVB, that everyone was just going to go straight to the treasury, take money out of banks. Grumpy Mike says, Bessent put out a number. Trump will say something different tomorrow. Lutnick will say something that contradicts them both. And then here comes Navarro. It's funny, but it doesn't quite work that way. I think Bessent is... I have not seen Bessent get contradicted yet by Trump. I think him, Lutnick, and Navarro have different points of view. They also have different jobs. So if you had a team of people, and those three people are, I think, have three different jobs, and sometimes their point of views come in conflict. I see, like some leaders are consensus builders. Like a Jerome Powell, right? If you look at the amount of dissent on the Federal Reserve in the decisions that we've made under Jerome Powell's leadership, in particular past the pandemic, I think, what's his name? Jim Bianco. Sorry about that. Jim Bianco put out actual statistics around the amount of dissents on the Federal Reserve since Jerome Powell's been chair. There's very little dissent, which means he sort of leads by consensus. He's a consensus builder. I'm not apologizing for this. I'm just telling you what I see with my own observation. And why am I trying to observe these things? Because observing them as objectively as possible will determine how I make bets. And I want to try to be as objective about these things as possible. So this is what I observe. I observe that Trump is not really a consensus builder when it comes to leadership. He's one of two people. If he's dealing with people who he gives the benefit of the doubt, who he believes are strong, then he lets those people have their own opinions, and then they float trial balloons in the public and allows him to see which one of those ideas are popular or unpopular. So he walks back the unpopular opinions. It has nothing to do with the individual, and he lets the team of people who he believes are strong talk openly about their opinions. Weak people, or those that he deems as weaker players, he keeps them under his thumb a bit more, contradicts them often, and that being contradicted sort of keeps them from making very aggressive statements without checking in. So that's my observation. And so when I think they contradict each other at times, I don't think it's some grand plan or some 3D chess type thing that's being played out, but I do think he tries to use it to his benefit. If Lutnick says one thing, Navarro says another, and Bessent says something else, he's kind of judging which one of those three things is more popular to the public. But that makes it, the downside to that is there's very little certainty that comes out of the White House. There's very little certainty. So you kind of got to put the pieces of the puzzle together. I was thinking about this actually before the show, real quick. I don't know if this is, some of you guys are going to like this little detour I take, some of you may not. But I was thinking about this before the show. I remember just a few years ago when the U.S. administration, for the most part, right, they're going to give you a set of promises. They're not going to be big promises. They're very small. You kind of knew what you were going to get out of the U.S. administration. And then when it came to monetary policy, the Fed would put out these pieces of paper, and they weren't trying to play this game with the marketplace, or the game that they were playing was fairly well understood. And it was easy. It was really, really easy. When you really think back to like what the world was, maybe like prior to, I don't know, 2019, I guess, it was really, really easy. And I feel like we're in this world now where you have to do so much more work. You have to do so much more work to try to understand what's happening, what pieces are being moved, and for what purpose, what pieces are on the board that may be moved, and how monetary policy and fiscal policy and geopolitics and foreign policy, how all this stuff is mixing together. And for the macro people, I think they love it because they get to sort of express a value proposition that they've been unable to express for a very long time when you just had cheap money and people that could go out and just tell narratives about equities, and that was the game. You didn't have to do anything. And now we're in this world where you have to work to figure out what's going on. Nobody's telling you what's going on. And if there are people telling you, it's very often colored through a political bias. So it's hard to get sort of an objective view of the landscape because everybody's so sort of dug in. There's a lot of sunk cost, put it this way. If you were an opponent of Donald Trump, you have sunk cost in the opinions that you've expressed in displeasure that it almost becomes impossible to celebrate anything that goes well. It becomes impossible for you to even see when things are going well. And then on the flip side, those that have sort of hitched their wagon to the MAGA movement or the Trump movement, they've got a ton of sunk costs too. It becomes really hard for them to see any issues with the way policy is being executed. And so I just find ourselves in a very interesting point in time where it's almost impossible to get an objective lay of the land, and you have to do a ton of work yourself. And I think for those people that can remain objective and that have a decent logic, this is an interesting period of time. If you are used to getting the playbook given to you by some piece of paper from like Morgan Stanley or something like this, or the 5 o'clock news tells you what to expect from monetary policy and it's right, that period is over, man. It's long gone. If only Besant spoke. If only Besant spoke, people wouldn't be freaking out. McNutty, I agree with that, actually. But the problem is in my personal opinion, you need Navarro. In order to maintain trust with the single actor in Besant, you need the Navarros and the Lutnicks. You kind of need a scapegoat. You need somebody to go out there. I'll say it this way. When I worked at a certain firm, there were days when the markets would be down 2%, okay? And we'd get a call from media, okay? One guy was a gangster. He would go on, he would take those calls, rain, sleet, snow, or shine. It didn't matter what the market was doing. he would take the call and go on and help retail traders, in particular through volatility. A lot of other people beyond that one person would not go on when markets were down. So markets would be down like 2 or 3%. And no one would want it. And that's how I got my start. People go, hey, the market's down like 3% today. Nobody wants this opportunity. Do you want to go take it? And I was like, oh, shit. Okay. And that's how you started to see me on television, because a bunch of people didn't want to go talk about markets in volatility. Ironic when you think about it now. It's actually probably the best time to go. But anyways, that's kind of like, you need one of those people to go out there and talk about the bad news in order to keep the golden goose looking good. If you catch my drift. Though I do think Navarro definitely makes a bunch of unforced errors out of ideology and passion. Or that's, I'm doing him a generous interpretation. You could say ignorance on the other end of the spectrum. Bitcoin at 95. Who would have thought, baby? Kicking myself a little bit for closing out some of this Bitcoin position, but just happy to have some exposure to the upside here as we're getting back to 100,000 and nobody talking about it. Maybe they are. He literally spoke on CNBC like 3 hours ago. Yes, Drew, he did. I think he was on CNBC, Bloomberg. He did a little run. But Bitcoin at 95, some part of me knows that when we get to 100, I should probably close the little exposure that I have left. I would really like to put some like deep out of the money upside exposure in Bitcoin for the end of this summer. I really would, but there's no efficient way to do it. You know? Like, one, in the futures, you can't really go out very far. And you lose a ton of slippage on these things. MBT is not so bad, but I don't think the same problem with the options. And they're smaller. Can only go 50 days out. IBIT, I just don't like this product yet. I like, give me something like the SPY, that tracks 1-to-1. I hate these products that don't track mathematically. I really do hate them. Yeah, if you were going to put a upside, I want to put a super cheap upside bet on in Bitcoin for like late summer. Give me a good product. Like SPY, 1 to 100. Why can't all products be like that? Like USO to crude oil. Give me a GLD to gold. SLV to silver. None of the TLT to, I guess it's not really bonds. It's like an average 20-year maturity, but just give me simple ETFs. Super liquid. Change all this stuff and just go 1 to 10. Or 1 to 100. 1 to 1,000, depending on what we're trading. Uptick says Ryan is long calls and IBIT 200 DTE. Yeah, I want some end of the year upside in Bitcoin. Why? For two reasons. I see this working. I see Bitcoin working at the extremes of both ends of the distribution. So on one end of the distribution, the right tail, I see If you get, and again, I'm talking about the ends of the distribution. I'm not saying this is what I expect to happen, but on the right tail of the distribution, you get a bunch of trade deals. You get China that sort of plays nice. You see a relaxation of tariffs. Not that they go away, but they're probably somewhere like where the market expected them, sub 10% or below. You get a resolution in the Ukraine war. You get a resolution with Iran. You get some sort of resolution in Gaza, or working towards a resolution. I think that one might be the furthest away, unfortunately. But a lot of these things happen. You could start seeing, you get the tax cuts, and a sort of a straightforward budget that people can now start to plan against. You could start seeing a really, because the next quarter is probably going to be a lull, right? All the data is going to be a lull. And so just on base effects alone, on building on top of what that could mean, you could get a really interesting back half of the year. So that's right distribution, where all the things go right. They go well. The left side of the distribution is things go horribly wrong, right? You trip credit, the basis trade blows up, the carry trade blows up, some new thing, some new esoteric risk, some super leverage trade that nobody even is talking about right now. Private equity blows up, corporate real estate blows up. You get another SVB or bank run, like anything on the left side of the distribution where credit gets tripped. Things that we know, like gray swans, things that we don't know, like black swans. Well, in that situation, you get forced to do what we've always done. And then you could see a world where that puts a bid in Bitcoin as well. So a play in Bitcoin, for me, it's a hedge of a wide distribution curve, and the wider distribution curve hitting. I think what's the worst case scenario for Bitcoin is probably things stall out a bit, nothing escalates, nothing de-escalates, or very few things de-escalate. You get somewhat positive direction in policy, but in a broader sense, things feel a bit stuck. Or economy starts slowing down, but not slow enough for anyone to get fearful about credit. I think in both of those scenarios, inside the distribution curve, this asset becomes not very exciting. Yeah, so I'm sort of interested in it for that reason. I should talk to Ryan again. If he's got some crazy upside long calls, I want to know why. He said 70, 80, 90 out of the money calls, 200 DTE. I really like that. I really, really like it. And it's kind of the idea that I was thinking. IBIT is probably the only thing you can go into, not get your eyeballs ripped out or be over levered. But I don't love that product. IVR is 24, so I guess the right time to start buying calls in it. Yeah, maybe. But its vol isn't the same though, is it? Is Bitcoin vol in the 45s right now? I haven't looked at it in a while. That'd be crazy. Let's keep going. Gold finally found some footing. That didn't last long, did it, people? We ate off of it, which is good. The question becomes, yeah, they didn't give us much of a discount in the miners to buy either. I suppose my first thought, maybe Barrick, my first thought was, did any of the miners get cheap enough to reestablish a new position? And the answer is probably largely not. I guess Barrick Gold, so GOLD is not too bad. Not too bad. Some of the stuff had a nice discount off highs. I don't know if it got cheap enough. That's sort of in the eye of the beholder. There's nothing that stands out as an obvious. Let's check the miners, the mining ETFs. Not really here either. They just don't want to sell these things. And good on them. These things are criminally underowned. Go ask a friend if they own a gold miner stock. See what they say. Now go ask them if they own upside Tesla calls. See what they say. I bet you'll find more people that own GME and AMC stock still, bag holders on all that stuff. I bet you'll find more bag holders on that trade than people that own gold miner stocks, just anecdotally. Vic was a gangster, says Nicole. I appreciate that. For some reason, you know what's wild? You know that saying, what was it? I was born in the darkness. What's that whole quote? I was born in the darkness. You were merely something, something. That's sort of how I feel about volatility. High vol regimes are my absolute favorite to trade and my favorite to talk about. Low vol regimes, I hate them, and I'm actually I don't think I provide a lot of value in them. Like what you need in a low volatility regime is you just need a knucklehead that keeps telling you to buy highs and sell higher. You need that knucklehead guy. So I don't provide a lot of value in that world, and I know that about myself. But when vol goes crazy, everyone's freaking out, and I'm kind of guy that says, all right, take it easy, tell me what happened. It's like when my kids come up to me like emotional, they just got into an argument or something like that, like, all right, let's sort this out, let's fix the problem, then let's find the opportunities here. And so it's sort of funny to me that I've talked to producers who have said this as well. Like when vol spikes, you can't find anybody to come on these shows and talk, which is hilarious. Because that's, in theory, if you were trying to make a career for yourself talking about markets, you probably want to make it a habit to go on television and make decent calls when vol's crazy high. Because one, you'll differentiate yourself, and two, it always, I won't say always, but like you have sort of a Federal Reserve backstop against the crazy outcomes. All right, let's talk silver a little bit. I'm still waiting on this bad boy to pump to the upside. Crazy upside MSTR calls are very expensive. Yeah, I saw Canadian Jennifer, I think on Twitter, put out some interesting work on why she was getting aggressive in MicroStrategy. Or it's not, I guess it's strategy now. What a mistake to try to rebrand that company right now. I'm still playing upside, out of the money upside silver calls here, silver call spreads. Why? It's because I think people are buying up gold as a monetary asset. I think the spread between the monetary asset of gold and the industrial usage of silver is wide because people are nervous about growth, and rightfully so. But if people are going to take equity risk here and they're slowly taking some Russell risk over like S&P and NASDAQ, that's what's called the broadening out of the rally, and what typically will come with that, if the market believes it, you can get maybe perhaps a bit of a silver catch up here. And so I'm still long silver, even after that $3 rip. Crude oil, to me, this is the most fascinating trade. It's like people are punishing crude oil just because the administration needs it. You know what I mean? It's like the Patriots trade to punish crude oil. It doesn't matter what happens. Sell crude oil, sell it. Got down to 54 and change. And the lower this thing goes, the more pressure it puts on Russia. In a deal in Ukraine. So two things are working for the administration right now in Ukraine. One, the minerals deal, getting that in hand gives you the opportunity then to turn around and stop being the administration is trying to pretend like they're sort of this neutral arbiter of peace. But in reality, it's like, give us the minerals. Give us the minerals and then we'll help you. That's kind of what that was. That's my read anyway. And then on the other end, you need a lower crude oil price in order to put some economic pressure on Russia. Which is the craziest thing, The craziest thing is sort of believing that embargoing 10% of the world's oil supply was going to in some way help us, How we make these decisions, and you can't say it in public. At the time, if you say anything about how that's a horrible idea, how people need oil, someone is going to buy it, and they might buy it at a discount, but they are going to buy it. And the only person that's hurt is everyone else who's removing supply, and their energy costs are going to go up. But if you said that at the time when you announced these sanctions, people are like, you can't say it because there's this like herd mentality of people right now in the zeitgeist. They go, you're a Putin's puppet. And you're like, I bet you couldn't draw out a simple supply and demand curve right now if your life depended on it. And you're calling me a Putin's puppet because you don't understand simple economic concepts. But anyways, I digress. That was a real strange time in human history. So the question is, I think we'll round out here. What do you do with risk, or what am I doing with risk? It's really, really hard for me right now to fight this feeling of FOMO, and want to play the next 100 points to the upside, because I could totally see people. They just weren't positioned. They weren't positioned well for positive change. They were positioned well because people extrapolate out linearly, right? It's recency bias. It's the news I'm hearing now is negative, so let me extrapolate more negative news into the future. So because people are freaking out about tariffs, we're going straight to the Great Depression. It's like, okay, yeah, maybe, but maybe that's not the way things work. And so people, I think, were under positioned for positive change or positive developments, and you've seen a lot of that. But I think at the moment when people are going to feel comfortable actually deploying risk into the market, the price is not going to be attractive. I would argue 5,700 is not that attractive. I think at 58 and above, it's depending on what we see from a lot of the data here. Some things have been better than expected, right? The jobs report was better than expected. That has a big reason, or has a lot to do with the Federal Reserve, people changing their expectations on the cut trajectory. The data this morning was not terrific, at least on PMIs. I think the ISM was better than expected. So we've gotten better than expected news, The world is not instantly falling apart. And And I think what do we got? This was supposed to be the week that your grocery stores are starting to go empty, right? That's not going to happen. And I just think people were very, very underprepared for positive change, which is unfortunate. And now one of two things is happening. Either you're a professional player, you can't afford to underperform, and you got turned into a chaser, or you're on the retail side and you got freaked out by people talking about the end of days, and you didn't get to participate at all in the last, what was that, 900-point rally? Insane when you think about it. 900 points in 4 weeks. And now, guess what happens? You don't get any of those people freaking out on TV or on the internet. Your Twitter feed turns bullish. Your YouTube feed turns bullish. But the price no longer supports an incremental dollar into that theory or into that thesis anymore. That's a long way of saying I'm neutral. I've hedged my portfolio deltas down to effectively flat. And I'm going to get burnt if the next 400 points is to the upside, then that's the wrong move. I'm not going to get hurt, but it's opportunity cost. I'm going to pay opportunity cost to the market. But if the 9-day rally we just saw, if this breaking of that now starts, okay, they've chased them as far as they're going to go. Now let's find the real price, maybe at 5,400, something like this, 5,500. Then hedging up is going to look like a great move, and I'm going to save myself a couple hundred points to the downside. So that's where I'm leaning. But hedging is not really hedging. It's really just taking a directional opinion, you know? And it's only hedging if you are right about the move. So that's where I'm at. I'm effectively hedged up on a lot of my portfolio delta. I have some bets. My bets right now, I'm short the ZTs. I have a little straggler put, a downside put in ZB, but it's like nothing, which I'll probably remove pretty soon. So I'm going to end up being flat. I had a little straggler like M short gold position, which needs to get closed out. I mean, it's tiny. I think it's like an MGC contract. It's the last of a handful of stuff that I had on. So I close out of the GC shorts, close out of a lot of the MGC shorts. I have short upside calls in gold. I'm short the 3,500s with something else bought behind it. I have upside calls in silver. And those are all the bets. Not a ton, but more than usual. Grumpy Mike says tariffs are so last month. It will be until they escalate again. And if they don't escalate, then I'll be wrong. But the more interesting thing to me is when they escalate, in my mind, when they escalate, whether or not the market is going to read through that. Because I could very easily see the next escalation is you escalate to de-escalate. That's kind of a strategy in war. And I think clearly they're going to confirm the talks soon. And I think that might start the beginning of the peak in optimism here. And then you get the actual negotiation. And I think once you start negotiating, you get escalation. There isn't this kumbaya, this dance. There's clearly a dance here that on the U.S. side, our administration is trying to paint them as needing to cave, and the Chinese side is doing the exact same thing. They're playing to their own domestic audiences in order to open up a pathway for them to just confirm talks without either side looking like they caved. To me, that's what's happening. It's a interesting, funny little political dance that they're doing right now. And when they get done with the stupid formality dance, it's like this weird little mating dance that we have to watch them do until they finally pick up the phone, confirm talks, and then start working on the terms of trade. But when that happens, and if they escalate to try to get certain points in the negotiation, is the market going to try to look through that? That's the more interesting point than whether or not they'll escalate, because I do think they will. Let me read here. Have not been to the grocery store in a couple of weeks. Can't say the shelves are full or empty. Schrodinger's groceries. That was really clever. That was really clever. All right, everybody. I think that's going to do it for me. If you want, do me a favor. You can follow me on social media. I am on X and X only. Technically, I'm on IG, but it's private, and I haven't accepted anybody in years because all I'm doing is sharing videos of my kids. So Twitter's the only place I rock. So you can find me at Victor Jones. The Owen Jones is 0 because I like to be difficult. Let me ask you guys, what's the best social platform? I want to ask you that question before I get out of here. My wife and I had a bit of I don't want to say an argument, but a debate over this. And I said, hands down, Twitter is the greatest social platform that has ever been made, and it is still currently the best platform. I said all the other stuff is like least common denominator. It doesn't take a lot to take a duck face selfie, but just, you'll have to excuse me if I don't think that's particularly interesting to engage with. So I'm not super, Instagram's not really my jam, and I'm not even on TikTok. I've never opened an account. I'm not on the thing. Because I some part of me still believes in the idea of nuance, and I don't know that I can get that in 6-second clips of people dancing. So to me, Twitter's hands down. I think it takes a lot to sit down and put some words on a piece of paper. And I tell my son this all the time. I said, I don't know, I'm dragging this out, my apologies, but I tell him all the time, both of my kids, not to use their hands to solve their problems. Use your words. Your words can change the world. And I think at some level, a platform that emphasizes the usage of words, man, we need that back. We should force everybody on Twitter and then put an age restriction on all the other platforms. If the only thing kids could do is write, if the only thing the kids had access to, only social media kids had access to until they were 18, had no video, no pictures, only writing. You could only express your ideas through writing. Do you think the world will be a better place in 20 years or a worse place? I think it'd be slightly better. You can follow me on Twitter at Victor Jones. The Owen Jones is 0 because I like to be difficult. You can send me an email if you have something more personal or you'd like a one-on-one audience at victor.jones@tastylive.com. And do us a favor, subscribe to the channel. And I will see you back here tomorrow. Ilya Spivak on deck for tomorrow, I believe. We haven't switched it. So Ilya Spivak on deck for tomorrow. I'll see you back here same time, same place, same great network, only on Tasty Live. Peace.